Friday. The dynamic across your sectors on Friday was travel and leisure and luxury on the upside, and on the downside was energy. You're going to see a reversal of that today, at least partially. FTSE 100 futures then, a little bit of support coming through from the energy sector. Expected futures pointing lower by just 0.4% compared to other indexes, lower by 1.5% on DAX futures, pointing to losses of 365 points. Anna, what are the individual names that you're focused on?
Yeah, well, we've got a host of sectors to watch, haven't we? And a host of individual names. Airlines will certainly be in the mix, energy stocks in the mix, and both of those, because, of course, we've seen a big move in oil prices, up by 6% on the WTI price, up by 5% on Brent. So we watch that. UniCredit and Commerzbank, after UniCredit has been pretty critical of Commerzbank's management, and it looks we're looking closer to UniCredit coming up with some sort of offer, perhaps, for Commerzbank, and so maybe that's what the market will move around. Interesting, we're getting some lines from Iran then, Guy. The Iranian president says war is in no one's interest, also saying that diplomatic avenues should be used to reduce tension. We did see US futures spike a little higher, although they've retreated once again, so we'll watch those dynamics.
Does that mean the Iranians are going to the talks? I don't know. We need confirmation of that. Anyway, let's deal with the here and now. This is what we are seeing at the moment as we watch the European markets open. The FTSE 100 is maybe more insulated, and as a result of which we see it in and out of positive and negative territory. We're up by 0.1%. We were expecting it to be down a little bit more than that, so there we go. We're turning into the red right now. Stock 600 is down by around 0.7%. Continental markets are expected to be down by over 1% this morning. We'll see what happens when the CAC 40 opens. The DAX, the AEX, and the IBEX the IBEX is down by 1.22%. The CAC's down by 1.32%. The AEX is interesting. What does the tech story look like in Europe this morning? What read is it taking from all of this? Can the tech story be isolated? Can it ignore what's happening in the Gulf? That's certainly been the narrative of late. But this kind of momentum shock that we've seen over the last 2 weeks, is it going to run into the sand today? I don't know. It's been huge, and there's still potentially a lot of CTA buying out there. The hedges are still chasing and can re-leverage. How much dry powder is there? Anyway, the early indications are at the moment that Europe is kind of reversing what we saw at the back end of last week, but no more than that. We're down by stock 600, a nice, neat 1%, Tom.
Yeah, that inversion that we're seeing versus the Friday session is there on the sector basis as well. But travel and leisure, that had been the best performing sector, currently the worst performing, down 1.8%. Energy had been the worst performing sector on Friday. Now it's the best performing sector. Not a big surprise given the moves higher that we've seen in Brent and WTI. So energy is up 1.9% as a sector, followed by utilities and telecoms. 3 sectors in Europe just in positive territory, just 3 sectors with energy at the top of the list. Every other sector in negative territory, with the biggest losses coming through right now for travel and leisure. Banks, tech as well. You were talking about this guy. Tech as a sector is down 1.6%. Anna?
Yes, it's a bit of a reversal of Friday, but not a full reversal of Friday. Does that tell us anything about the underlying level of hope that markets want to cling to? If airlines went up 5% and now they're dropping 3%, and banks... energy companies were the opposite of that on Friday's session. We haven't reversed all of the optimism that we saw on Friday, which I suppose is the glass half full way of describing what we're seeing this morning, the European markets.
Is that because there's still momentum in some of these kind of more momentum trades? Very hard to say that. More momentum trades. The CTAs are still buying. The hedge funds are still re-leveraging. The volatility is there for them to be able to take on more risk. Is that something that kind of offsets some of the newfound concern around what is happening in the Gulf? I don't know, but it's been a very strong story over the last 2 weeks.
Yeah, absolutely. Let us get another perspective on all of this. Joining us for some deeper analysis of what's going on equity markets, Sebastian Redler, Head of European Equity Strategy at Bank of America Global Research. Sebastian, good to see you. Thank you for joining us. What do you make of the price action at the moment? What is it telling you about what equity markets are pricing in and assuming will happen?
I think you said, Anna, clinging on to hope, and I think that's a very good summary. I think if you take a slightly broader perspective, what has happened over the last 4 years is that we've been showered with negative and scary headlines, and they've never translated into weaker global growth momentum. And markets think they have learned that is the way to go. The only way to outperform, to perform well, is to ignore the scary headlines, not to be positioned for macro weakness. And I think the only question right now is, will we, in response to all these disturbances and all this disruption, will we get what we haven't gotten for the last 4 years, which is weaker global growth momentum, demand destruction in response to these energy shortages that are piling up in the system.
So no growth momentum slowdown is what we're pinning our hopes on. Do we not just say, we haven't got it yet and it could still come? I mean, it depends how long the Strait is closed for, I suppose.
It depends whether you ask me what I think will happen or what the markets are pricing. Right now, and I've just come back from a US marketing trip, the number one thing we've discussed is risk premium in equity markets and credit markets are at a 20-year low, which is an astonishing fact. So what the market is effectively saying is this is the least risky macro environment that you've seen for the last 20 years. And what the market is saying, because risk premia are very, very sensitive to global growth momentum, markets are saying there's a 90% probability that this will not lead to weaker growth momentum. And we have to judge, is this a correct assessment of where we stand?
Is that an easier argument to make in the United States than Europe?
I think it's far easier to think the US will be isolated, but what we're talking about is global growth momentum. Global growth momentum is US, Europe, and Asia, or US, Europe, and China. So on a net basis, will growth hold up as it did after the Fed tightening in 2022, as it did after the growth shock, after the trade shock in 2025? And the market is saying, we've learned our lesson. We are not betting on macro weakness until we've seen it. But now look at the global PMI, which is the best gauge for where we are. Sharpest monthly drop in March that we've seen since 2021. And the market is saying, that's the full extent of it. We have a ceasefire now. This was just a little sentiment shock. And I'm saying is, look back over the last 50 years, not the last 5 years. When you get a large energy shock that is not reversed quickly, it leads to demand destruction. This is how markets work. High prices destroy demand. And the market is saying, I'm not so sure. I want to see the evidence.
The market's also going, we've got tech, so why do we need to worry about that?
Exactly.
Tech's looking great. Tech doesn't slow down. The build-out's there. Tech's fantastic. But forget everything else.
That is a little bit the story of 2022 and 25. You had downward pressure from basically supply disruptions, offset by very powerful demand boosters. And the market is saying 90% probability that the demand boosters we now have, some US fiscal stimulus, wealth effect in the US, and the AI investment boom, it's enough to offset the demand destruction. And whoever's active in markets has to judge, is this too optimistic or is that an accurate assessment?
What do you think?
I think it's far too optimistic. I think there will be demand destruction, and I'm positioned for risk premium to go wider. Risk premium at a 20-year low at the current juncture with all the risks we're facing is the wrong probability distribution. Maybe there is a good case outcome, but it's not a 90%.
What are you most pessimistic about across the equity space?
So I think equity should be lower. I think cyclicals versus defensives in Europe, because they're very, very sensitive to risk premium, at a 30-year high. And it's very hard to justify. You have to price some risks. You have to price some risks that things go wrong with all the pressures that we're facing. So I'd be underweight cyclicals versus defensives, and especially the cyclicals that are very stretched, that are still banks. And now a cheeky positioning is also to be underweight. Everybody's turning their head. No.
Cheeky on the show.
Got your attention.
Is to be short the AI enablers, the AI, because they are the very cyclical names like semis, like mining. They're at a multi-year high relative to the market. If you map them against global growth momentum, they're saying from here, global PMIs will go up by 4, 5, 6 points. And I think that is highly unlikely in the current juncture. And then a very big discussion that we had with clients in the US and Canada is is the AI investment boom on autopilot? Can it just continue regardless of what happens in the economy? But you're a very energy-intensive technology.
Yeah.
You're very dependent on funding conditions. So I'm betting effectively that growth momentum for the first time in 4 years will take a hit. There will be demand destruction, and the very cyclical part of the spectrum will not escape, even if you're connected to a very attractive structural story.
That is a cheeky call on the AI.
That's what we're here to do. We're
short semis, yeah.
Short semis, short mining, short banks, long consumer staples, which are at a 15-year low. Nobody wants to look at them.
Long consumer staples,
yeah.
In the US and Europe.
In Europe. In the US, they actually did surge at the start of the year.
Yeah.
Plus, I'm not making the US calls. That's the job of our US calls. I'm looking at European sectors, and I have a picture where the defensive hiding places that protect you against downside risks are in the gutter. Nobody's interested because nothing could possibly go wrong. And all the very racy stuff is flying. And I'm saying this is a cyclical system that is priced for zero cyclicality. That doesn't sound quite right.
So if we're looking for a slowdown in growth momentum then, Sebastian, if that's what you're looking to actually come through. So we're going to get PMIs from lots of parts of the world this week, aren't we? I'm just looking at the Eurozone expectation. I mean, the April number, and this is April, so this is factoring in quite a lot of this of the war. We're expected to still stay in expansion territory on the composite PMI for the Eurozone. Does that make sense?
So we're looking at the new orders. They already dipped out of expansion territory in March. We dropped by 2 points to 49. If I look at the projections from a Euro area economist, European economists, they're effectively saying you will get a domestic demand slowdown that is in line with what you saw in 2022. And again, I can tell you from the feedback from the US investors, everybody's amazed how little Europe has done to protect itself against this energy dependency. They got a big wake-up call in 2022.
Yep.
Now we're 4 years on. What have you done to defend yourself? And the energy dependency is effectively the same. So European economists are saying there will be damage, there will be a slowdown in domestic demand growth. That would be consistent with PMIs down another 4 points after the 2-point drop that we saw in March.
Sure, Bloomberg New Energy Finance were telling us that there's a lot more renewables, or at least gas only sets the price on many fewer occasions now than it used to.
Okay, and then we'll see whether, who's... And whenever you stress the system, you never quite know what breaks beforehand. Our European economists think there will be a sharp slowdown in domestic demand. And I can also tell you the assessment from basically the global investor base is there was a lot of optimism about Europe at the start of the year, German fiscal stimulus and so on. It's completely gone.
Let's talk about the flow show. CTAs, hedges, re-leveraging. Yeah. The market has a momentum of its own at the moment. Yeah. I don't know what that's based on, but everybody's scared of these sort of V-shaped recoveries. Yeah. We keep getting these kind of really sharp bounce backs. Are we going to leave that world? Because everybody expects when you get to the kind of near-term bottom that you need to flood back in with liquidity and trade it.
In my mind, this positioning, these kind of flows are a strict function of the underlying growth momentum. As long as growth is strong, earnings are being upgraded, everybody wants to buy the dip. And there's a whole generation of traders who has been brought up with the idea every dip has to be bought because we have this super resilient global macro environment. And the most fun part of our conversations with clients over the past week during this marketing trip is to say, what is the right historical analogy? Is it 2022? You get a supply shock, demand stays strong, and you get inflation?
Yep.
Or is it 2025 where you get a supply shock with a trade war, nothing happens to growth and nothing happens to inflation? And I'm saying is the current juncture has a lot of parallels with 2007, 2008. And remember, you had a lot, because you have zero jobs growth in the US, you've got cracks in the credit structure, you've got a massive energy spike. Remember, in 2008, oil prices went to $150. And what happened in the run-up to this, you had a lot of macro resilience, there were a lot of risk on the environment, on the horizon, but people were ignoring the risk because the environment had been so stable. And only when growth started to weaken, basically did risk premium come up. And I think there was demand destruction back then, and I think it's a better playbook for what's likely going to happen now. And the moment you get the demand destruction, the moment growth is weaker, then all these flows are going to start to dry up.
I feel so much better now. Sebastian, nice to see you. Sebastian Redler, Head of European Equity Strategy, joining us from Bank of America Global Research. Okay, let's take a look at where we are right now. This is the picture with some of the single stocks that we keep an eye on just to work out what is happening at the center of gravity here in Europe. Defense stocks are down, tech is down, ASML is rolling over a little bit. Has had a decent run, but as you can see, across the piece, we are seeing losses. It's I need to double check. I think there's quite a lot of XDs in the market, so I'm not going to point fingers at any single stock this morning. And
Nestle.
Nestle is XD. That's quite a big drop for Nestle to not be XD. Okay, let's figure out what else is happening. Chloe Melly, what do you got on the oil trade?
Good morning, Guy. As expected, we are seeing oil companies move higher today after a very chaotic weekend in the Middle East. We had the U.S. Navy seizing an Iranian ship, but then also Iran reimposing controls in the Strait of Hormuz. So we are looking at further potential disruptions to global energy markets, global energy supplies, and of course, that is benefiting those oil majors today. And we are green across the screen for BP, Shell, and all of those names today. On the flip side, of course, airlines and travel stocks are definitely in the red today. Of course, those higher oil prices mean higher fuel costs, and increasingly the airline and travel industry is worried about potential fuel shortages, especially as we get now into this very important, crucial summer travel season. And so we are down quite significantly across all of those airline and travel names today. Moving on to UniCredit, which is stepping up its pursuit of Commerzbank, and we are down for UniCredit this morning. It has been quite critical of Commerzbank, saying that it is overvalued relative to fundamentals and has a story of operating underperformance. And so it seems that it is laying the groundwork for this takeover, but there's potentially little appetite for it, and we're down quite a lot this morning, although Commerzbank is a little bit up. And finally, plus 500, the trading platform listed in the UK, seeing quite a good day today, up about 2% after boosting its profit and revenue forecast and saying it is really benefiting from a rapidly expanding addressable market. And so we are up quite nicely this morning for that company.
Chloe Melly, thank you very much indeed on some of the stocks on the move this Monday. Coming up, oil and gas prices then jumping, as we've been discussing, as the US Navy seizes that Iranian ship. We're going to have more next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys,
buckle up.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. 17 minutes into a session that is once again pricing a higher oil price, up by 4.9% on Brent. So we're off earlier highs in Brent, which maybe is limiting the downside for European markets right now. We are seeing the stock 600 down by 0.8%. The FTSE a bit cushioned from that because of the energy names that are present there. The DAX down by just over 1%. US futures pointing lower, but only by 0.5% on E-minis then, Tom.
Let's check back in on the oil price then. You're seeing Brent up 4.8% at $94 a barrel, $88 a barrel on WTI, up 5.4%. So higher, but not completely offsetting the fall in prices that we saw by the close of Friday. Of course, a very volatile weekend after the US Navy seized an Iranian ship during a chaotic weekend that saw Tehran firing at vessels and reimposing controls in the Strait of Hormuz. For more, we're joined by a Middle East energy reporter, Anthony Paola. Anthony, what is your assessment currently of the energy markets and what we're seeing in terms of the Straits of Hormuz?
Good morning, Tom. Yeah, I mean, it's all over the place in terms of oil. So we did see, of course, on Friday, that massive sell-off after both the U.S. and Iran on Friday afternoon, really at the close of trading Gulf time, said that the Strait of Hormuz was reopened. There was a lot of skepticism, even from the get-go around that, whether that was going to be lasting, and it didn't last. Less than 24 hours. They were back to closing the strait. So we've seen, of course, oil jump back up today, but then lose a little bit of steam in early trading. And we're still not at the levels where we were prior to the ceasefire. So we can see that the market is really buying into this idea of the ceasefire and, kind of trying to take that positive view of the fact that there are supposed to be talks coming up tomorrow into Wednesday in Pakistan. So really taking that view that potentially there's some positivity there to get the ceasefire continued and to stop the hostilities. But as I said, there was a lot of skepticism already Friday about the Iranian announcement saying that the strait was open, but people still had to coordinate with the Iranian authorities, which for a lot of the Gulf producers here means, it's not open, effectively not open. They want to have free passage with vessels going in and out. So what's happened really is that we've seen that trickle of vessels that have been going through slow to an even smaller trickle of vessel over the weekend because the Iranian ships that had been going out, Iran had been sending its own oil out on tankers. Those vessels are now targets of the U.S. blockade. And so we did see the U.S. even stop a cargo ship going to Iran. So Iran's been cut off. The U.S. says that other vessels are free to go, but they've got to run that gauntlet first of going through Iran. And Iran did turn back some vessels over the weekend. So it's been real confusion and chaos. As you said, there's been gunfire. There have been pronouncements. There have been the Iranian Navy warning vessels to turn around and not go through. So it's been massive confusion as ship owners really tried to gauge, could they go through? Was it safe? Did they have permission? And from which side? And so that's why we're in this real kind of mess in the oil markets with people really scratching their heads, energy not reaching the markets, but still that positivity around the potential for the continuation of that ceasefire.
So how critical are the talks? If the talks happen, that positivity continues. If they don't happen, what's the response?
Yeah, as you say, even those talks are in doubt right now because the the Iranians came out and said that they wouldn't go to Pakistan as long as that U.S. blockade was there. So lots of kind of maximalist demands being made from both sides, even just to start the talks. U.S. had initially said that they wanted Hormuz open before they would go to talks. Now the Iranians are saying they want the U.S. blockade lifted, which doesn't look like that's going to happen ahead of that. So the U.S. is already ready to send J.D. Vance, Steve Witkoff, and Jared Kushner there. The Iranians are on the fence. So those talks really do need to go ahead in order to get some progress here, in order for them to kind of bank the progress that they've already made in the previous talks, and to keep markets calm, because if we don't see that, then we just add more to the confusion of what is going to happen. The ceasefire is going to expire. Is there going to be a resumption of violence, an active conflict? So those will be the questions that people will be asking if those talks don't go ahead, or if we don't see another deadline, another timeline scheduled. So we'll need to see really some progress on that to keep this kind of relative calm that we have in markets. I say relative to the situation that we're in now. So that's really where we're at. We need to see some progress for oil markets to stay where we are now.
Right. I mean, we've heard from the Iranian president just in the last half hour then, Anthony, saying while standing firm against threats, all rational and diplomatic avenues should be used to reduce tensions. Does that make us think that Iran wants to talk and will be at the talks tomorrow, or is it too early to draw that conclusion?
Well, it adds to the question that a lot of people are asking is who's in charge in Iran? So we have seen different pronouncements come out, particularly from the president there. You remember earlier on in the war, he said they weren't going to attack Gulf countries. And then later that afternoon, we saw Gulf countries attacked. So the questions there really are who's in charge. We've seen lots of comments from Ghalibaf, who a lot of people will say is quite close to the Supreme Leader, also potentially backed by the IRGC, which is the military leadership there. So the questions really go around who's in charge and is the U.S. talking to the right people? And when we see these kind of comments on social media, do they really carry weight? Plus, there's that kind of Iranian strategy of making people ask themselves, what's the situation? You know, giving a little bit and then pulling it back. So that's part of their negotiating strategy as well, too. So I think we can see that both sides are fully negotiating and trying to play their positions to the strongest point.
Anthony, thank you very much indeed for the update. Anthony DePaola, our Middle East energy reporter. Let's turn our attention to what is happening in the UK. UK assets kind of holding steady this morning. Keir Starmer is preparing for a showdown with the senior official that he sacked recently over the appointment of Peter Mandelson as US ambassador. The UK Prime Minister will make a statement to Parliament today, we think, to address this row over the vetting of Peter Mandelson. Bloomberg UK politics and economy reporter Joe Mays joins us now. What happened over the weekend? How important is today's appearance?
Yes, over the weekend we saw some cabinet ministers, David Lammy, Liz Kendall, coming out in support of the Prime Minister and really backing his account that Ollie Robbins, the senior official in the Foreign Office who Starmer fired, should have shared information about Mandelson's vetting to Keir Starmer to avoid the Prime Minister giving what looks like misleading statements to Parliament when he said due process had been followed. We also saw a senior Labour peer, Maurice Glasman, come out and say the Prime Minister should step down. And also we saw Number 10 come out and give a kind of a missive to say that they did not think it was illegal for Ollie Robbins to share information about the Mandelson vetting to the Prime Minister, because that's really the account we've been having from Robbins, that it would have been out of order really to share that information because it's meant to be done confidentially by the civil service. So that's where it stands really. We're waiting to see the Prime Minister this afternoon. I'm sure we'll hear that full account from him saying that he did not receive the information he needed, and that's where we're at.
Yes, and Joe, just briefly, we've got local elections coming up in the UK. I wonder if the timing of that is going to have a bearing on how this plays out.
Yeah, I think so. I mean, if you think that the Prime Minister is in a vulnerable position, and clearly he is, and if you think this might be an episode that pushes him closer to an exit, yes, it might. But then there's, as you say, the May 7th local elections, which are seen as the bigger crunch point for Starmer in terms of the more likely moment where he might face some kind of leadership challenge, because we do expect Labour to perform poorly there. And that feels like the more likely moment where he could face that significant pressure, which could push him out. But clearly, this episode is not at all helpful, and Labour MPs are really sick of hearing about Peter Mandelson. I think Keir Starmer's sick of talking about him as well, but he has to because of these latest revelations.
Okay, Joe, thank you very much. Joe Mays joining us there on a story that does have the potential and has in the past moved bond markets, so we keep it in focus. When we come back, we'll be talking about FX. Miss Architecture will be with us. Barclays head of FX and EM macro strategy. So we'll certainly talk about Asia and how things are moving there on the FX front. This is Bloomberg.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Good morning, this is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is the opening trade. Happy Monday. We are 30 minutes into today's session. So yes, there is risk aversion across the equity markets in Europe today on the back of what seems like an escalation around the Straits of Hormuz, but possibly still conversations between the Iranians and the US. We'll see if that gets confirmed for Islamabad. Currently across the benchmark down 1%. You're seeing losses of 1.2% over in Germany, a drop of 93 points in the CAC 40 over in France, a little bit more stability in the FTSE 100 as a result of energy, which is your best performing sector. Currently down 0.5–10%. So you've got energy on the upside, and you've got travel and leisure as the biggest loser across your sectors the last time I checked. Guy, what are you seeing?
Bit of a reversal from what we saw last week. We are 5-1 in terms of losers versus winners. The losers are significantly in the ascendancy. The down kind of trend in this market definitely evidenced here. But what I think continues to be interesting is just the lack of volume in this market. And we saw that again, even as the markets were rallying, equities were rallying. It's not convincing once you look below the hood in terms of what's happening in terms of the number of stocks making 52-week highs, the volume that is driving this, where money is actually flowing. So I think that kind of holds up, but definitely a flip in terms of what we're seeing, winners versus losers. So let's talk about some of the winners versus losers. Let's give you some names. Unsurprisingly, what we are seeing today is some of the energy names coming to the fore. Shell bouncing back. Total is up pretty much the same sort of amount. What you're also seeing is some of the more safer trades from the point of view of the market. British American Tobacco up by 1.6% this morning as people look for maybe that staple story, maybe that defensive story in this market. Downside, what are we seeing this morning? You are seeing quite a few ex-dividends, so just be aware of that when you look at what we're looking at here. SAP, though, the software trade, unwinding from where we saw ourselves last week. SAP under pressure. UniCredit is XD today, ex-dividend, but you've also got the Commerzbank comments coming through, and that is another factor in terms of what potentially is pushing this stock lower. Are we getting closer to a bid? And the luxury trade also reversing some of the moves we saw towards the back end of last week. So the kind of the opposite, maybe, of the BAT trade. LVMH down by 2.31%. Anna.
Guy, let's get an update on some of the other news flow. And in fact, we start with some of the corporate news flow this morning. UniCredit says Commerzbank needs deep changes, citing the bank's, quote, story of operating underperformance and, quote, structural weaknesses. The CEO of UniCredit, Andrea Orcel, has been seeking to buy Commerzbank for nearly 2 years and recently presented a 35 billion euro takeover offer set to kick off next month. Commerzbank has consistently rebuffed his approaches, and it has said that talks between the two banks didn't lead to convergence in their views. Hungary's outgoing government has signalled it's ready to unblock the EU's 90 billion euros loan to Ukraine as soon as this week. The new leadership in Budapest kicked off intensive talks with Brussels to tap its own stalled funding, which the EU suspended due to corruption and rule of law concerns under the leadership of Viktor Orban. And the Wall Street Journal is reporting that the United Arab Emirates has begun talks with the US about a financial backstop in case the Iran war plunges the country into further crisis. According to the reporting, the UAE central bank governor raised the issue of a currency swap line with Federal Reserve and US Treasury officials in Washington last week. Tom.
Okay, let's get a perspective in terms of the FX space and how that is being impacted by what we're seeing out of the Middle East. President Donald Trump and Iranian officials offering disparate views then on the next stage of the war, with the ceasefire set to expire in the coming days. Tensions in the war ratcheting up, of course, over the weekend with confusion and confrontation in the Strait of Hormuz. For the latest from the Middle East, Bloomberg Horizons anchor Jemana Besechi is in Dubai. Jemana, we've been hearing just in the last few seconds some lines from the Iranians. What is the latest in terms of what they're saying about a potential meeting then in Islamabad for the second time?
Yeah, well, just a couple of minutes ago, we heard from the Iranian foreign minister spokesperson, and he said that no decision has been taken yet regarding the Iranian attendance at these potential Islamabad talks. Now, we know from the U.S. side that a delegation is planning on leaving the U.S. today, this evening, Monday night, to land in Islamabad on Tuesday morning. That once again will be led by the Vice President, J.D. Vance, alongside Steve Witkoff and Jared Kushner. So the same representatives that were present for the first round of talks. But again, from Iran, no commitment or firm commitments at this point. And you can say that the situation has sort of dramatically escalated over the course of the last 48 hours. From on Friday, what appeared to be good news, with President Trump even heralding the end of the war, thanking people in the region, thanking the Iranians for opening up the straits. Before all of that, sentiment nosedived by Saturday morning, with IRGC once again claiming that they should have a right of control over which vessels pass through the straits, and that they would continue to do so so long as the U.S. naval blockade was being implemented. And of course, this morning, the big news was that U.S. CENTCOM actually seized an Iranian-linked vessel, which has prompted the IRGC to say that they will issue their response in the next 24 hours. And it's unclear whether they mean a military response at this point or even pulling out of those negotiations. So where we are right now, the clock is ticking. As we know, that ceasefire expires Tuesday evening in U.S., Wednesday morning over here in the region. There's still plenty of items on the agenda to get through, and it's not just about the Strait. It's also about the fate of that enriched stockpile of uranium. President Trump telling one of our colleagues in Bloomberg on Friday that they had agreed to a full suspension of uranium enrichment over an indefinite horizon. That once again was countered by Iran, saying that no such a concession has been made. And so on the nuclear file, on the matter of proxies, on the matter of the Straits, still many, many items that need to be covered and bridged between the two sides. But first of all, we just need to see whether the Iranian delegation will actually show up to those talks in Islamabad. And at this point, we have no confirmation.
Okay, Bloomberg Horizons anchor Jemana Besechi with the latest out of the region. Jemana, thank you. The dollar, meanwhile, advancing against all G10 peers after tensions in the Middle East war increased over the weekend. Vital Kotecha, Barclays Asia FX and EM Macro Strategy Head, joins us in the studio now. Mittal, great to see you. Thanks for coming into the studio. What is the path of least resistance for the greenback at this point?
Yeah, thanks for having me on the show. Look, I think the dollar has, in our view, will continue to weaken in the next few months. But we get these bouts of rally when we get risk aversion flare up. We got the uncertainty around whether there's going to be a deal. Peace talks, we don't even know whether they're going to happen again this week or not. So we know the dollar still benefits from that sort of risk aversion trades. That said, if our base case of a de-escalation does occur and we do or continue de-escalation, we see some sort of move towards a peace deal and an off-ramp, then that should continue to put pressure on the dollar. One thing we are wary of is dollar positioning is fairly stretched according to our measures. The sentiment's still very, very strong, which means there could be more room if we do see dollar downside. For example, our forecast at the end of this quarter was euro-dollar 118, but clearly there's room for an overshoot if that sentiment, that positioning comes off too quickly. But this is a near-term view in the next few months. Ultimately, we still like the dollar from a perspective of relative growth, relative productivity, huge capex spending in the U.S., and ultimately U.S. asset market outperformance. We're not there yet, though.
So you don't buy into the view that the dollar is fundamentally long-term diminished in terms of its status and the desire to hold dollars on the back of fiscal expansion, on the back of the deficit, on the back of what we're seeing in the Fed. You don't buy that argument at this point?
Not necessarily. Look, I think there is clearly some shift or gradual shift away from the dollar. We see that in the FX reserves data globally. We see that in trade activity globally, but it's a very slow and gradual shift. There was obviously prior to the war a lot of talk about sell America.
Yeah.
It kind of manifested itself in hedge America, and we may move back to hedge America again after the war, where perhaps the dollar still has this kind of premium where it should be a lot stronger based on rate differentials, growth differentials, but isn't. And we think that that differential, that premium, currently is about 5%. So it's quite a big margin on the dollar index. So in a way, yes, there's some truth in terms of what you're saying from a long-term perspective, but the dollar has kind of started to price some of that in.
Could a petro-yuan replace a petrodollar?
Yeah, it's a great question. Look, I think the yuan or China has managed to sit out this war in almost a very positive way, that they've not been seen to make a lot of noise. Obviously, the Strait of Hormuz hurts China, closure of the Straits hurts China and Asia. But the yuan has remained fairly strong. We've seen the currency actually gradually strengthen in recent months. China's trade surplus is super strong, $1.2 trillion last year.
Yep.
And it's on for this year again for another strong surplus. Of course, if there's demand destruction globally because of the war, that's going to hurt Chinese exports. China will not want to see that. But for now, the yuan is holding up as a fairly good, safe haven, decorrelated currency, and still, in this environment, still has some positive prospects.
Can I just come back to that demand destruction story? Every time I look at the data, and I think it was some out this time last week, what it told me was that the Chinese economy still relies on the export story. How far, therefore, can the currency go if that export story is still so critical to sustaining the economy?
That's right. Look, exports is a massive driver of growth. We know that consumption is weak, and we know that housing market pressures are weighing on consumer activity. At the same time, there is some inflation, but that's being now caused by energy prices, a wrong sort of inflation. Yeah. And the government spending, we know government fiscal spending is not going to jump up this much this year. We saw that from the recent MPC session. So clearly, China's government is not going to add a lot of stimulus. So exports will drive growth. So to your point, the yuan can continue to strengthen as long as that export strength continues, and as long as exporters continue to convert a lot of these exporter proceeds. In the last month or so, that's slowed down. And that, I think, is one reason why the yuan is not strengthening as quickly at the moment. Also, China's going to be very wary about the trade-weighted, the CFETS trade-weighted index. That's been strengthening very sharply. They don't want a stronger trade-weighted currency to weigh on their exports performance.
Good to see you in the studio, Ms. Holt. So if we're thinking about the role that the Chinese currency might play in the global economy, and petro-yuan is one question that people are asking, I mean, how is China thinking about the managed status of its currency with all of that in mind?
Yeah, this is going to be an issue for China to become a petro-yuan in a way, right? Because it's commodities are still all priced in dollars, right? China is trading increasingly with the yuan, with its neighbors, with other countries, certainly through the Belt and Road, and is internationalizing in that way. But until China has a convertible capital account and a freely floating currency, which is quite a long way off, then it's unlikely that it's really going to ever take up that mantle as this sort of petro-yuan. But look, since the U.S. weaponized the dollar in 2018, many countries have been shifting gradually away from using the dollar from trade, commodities transactions. We've seen that across the board. So, that's probably still going to continue. So it's a gradual edging or ebbing away of the dollar's role in that sense. And the yuan is a currency that could benefit, but not dramatically unless
Okay.
it opens up.
Okay, so that's something to watch. In terms of the other currencies that you're covering then over in Asia, we've seen a couple of different dimensions to the way that the Middle East war is playing out. One of them is around rationing and scarcity of some commodities, and the other is around pricing in inflation and thinking about rate hikes. Do you think the market is expecting too much in terms of central bank response to the inflation push?
I think that's right. Our economists do not expect significant rate hikes in the region this year. In fact, we talk about China. China may even ease policy. We may see tightening, for example, in Malaysia around July. We may see a hike in Philippines earlier than that. But generally, look, Singapore last week tightened policy. But broadly, where markets are pricing, certainly for countries such as Korea and India, we think it's very overdone. We actually have trades on the rate space that play for receiving rates in these countries. So again, it does seem like markets are pricing a substantial second-round impact. Now, we can't rule out that risk, but Asia, as you mentioned, has price caps, subsidies, all sorts of regulations to dampen some of that second-round impact, which means it may end up as a fiscal cost rather than necessarily an inflation.
So the argument is that the inflation might not be as bad as feared, rather than saying there'll be inflation, but we've got to ignore it because the growth hit will be worse.
I think that's right. But the caveat to all of this is if there's oil price persistence, if oil prices remain, our base case as a house is $85 average oil this year for Brent. If it's around $100, then we start to worry about, prices or inflation or interest rates going up more than we're expecting.
The Journal's got a story this morning that the UAE's asked for a swap line from DC. You talked about the weaponization of the dollar earlier on. Are swap lines part of that, do you think? Swap lines, if there was a crisis, if we get a massive economic slowdown, are swap lines going to be as freely available, do you think, as they once were to those in Asia?
I think they probably still will be. I mean, the Fed will offer these swap lines, and there are a number of dollar swap lines globally. I don't necessarily think that's going to fade very quickly, and it doesn't necessarily change that view of a gradual or de-dollarization or gradual or the weaponization of dollar. Of course, yes, if the government influences, if the U.S. influences what swap lines can be given or not, that could be an issue, and we don't know that. But there's no reason to think at the moment. We haven't heard any sense that swap lines are going to be not given because the U.S. wants to weaponize the dollar, because it would have major repercussions for the financial system as well. If something does happen in any of these countries that wants a swap line and can't get hold of enough dollars, it will have massive impact globally.
How should we be thinking about the yen in an environment where increasingly markets are factoring in a Fed that's on hold and a BOJ that is seeing more push price inflation coming through as a result, largely as a result of energy, and a more sustained above target inflation story in Japan?
That's right. Look, the yen is one currency that's just really not benefited from this dollar weakness in recent weeks. Been stuck close to 160, even though there have been intervention concerns. If we get to 160 or above, we might see MOF, BOJ intervention. But I think the yen has been undermined by the fact that real rates in Japan are very low. The BOJ, we've actually pushed back our expectation of tightening from April to June. So the BOJ may not be in a hurry to tighten policy here. And
is that on growth concerns?
There is some concerns about growth and the impact of obviously the Middle Eastern crisis and the war, but at the same time, I think there is no real rush from the Bank of Japan. We saw that in recent comments from BOJ Governor Ueda. So it doesn't look like the yen strengthens quickly in that environment, but it has, it is notable that it hasn't really performed with other currencies and still remains fairly weak. And the other thing is perhaps it's also starting to be used as a funding currency. Carry trades for us still in an environment where volatility is coming lower, equities are moving higher, carry starts to look very interesting again. The yen is always a good funding currency.
Mittal, great to get your insights.
Thank you very much
for coming into the studio. Mittal Kotecha, Asia FX and Rate Strategy Head at Barclays. Coming up, the fight for talent in the hedge fund industry has reached new extremes, with hedge funders using maneuvers like gazumping to grab more money for themselves. We're going to tell you more about that story. It's our big take today. We'll bring you the details. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
Welcome back. This is the opening trade. Now, hedge funds are engaged in a cutthroat bidding war for top traders, often, quote, gazumping rivals by poaching employees who have already signed contracts elsewhere. This is the subject of our big take story this morning. So let's talk to our managing editor for EMEA Finance, Tom Metcalf, who has all the details of this big take. And we're going to maybe assume that people know what gazumping means, Tom, or maybe that'll be part of the answer to our first question.
It first.
Let Tom tell us, why is this happening? What is gazumping?
Gazumping, so it comes really from British real estate. So it's basically when someone has made an offer on a house, and then just before they're able to complete, it's a very long process, basically someone else will swoop in with a higher offer. And effectively that whole terminology is now being used in the world of hedge funds, just because some of these traders are so sought after that not only do their current employees basically implement very, very long gardening leaves, but basically other firms are then seeing that as an opportunity as they switch jobs, still on gardening leave. Can they swoop in and rather than go to rival firm A, they say, hey, come over to us for maybe it's more money, different role, all that kind of stuff.
Fantastic for the gardens. Who's winning and who's losing in this process?
So I think, as ever, it's like the biggest multi-strats probably have the most resources to be able to go after these people. I mean, I think everyone's a winner and a loser, right? Like if you really spent all your time trying to get someone, then it's going to be pretty devastating when you miss out on them. So ultimately, I guess the biggest winners are those traders who are being
and headhunters probably.
Well, yes, though we've even got an anecdote in that story that even headhunters can get gazumped, i.e. they've placed a trader, right? They're expecting that compensation, but if that trader doesn't join and instead gets gazumped, the recruiter gets gazumped on his fee as well. So lots of losers as well as winners. Yeah, no win, no fee.
I'm trying to think of how we go from gazumping hedge funds to potential deal making in the banking space. Orchel, I mean, is someone's going to come in and gazump Orchel as he tries to buy Commerzbank? What's going on? There's been more lines from Orchel. He's been quite punchy this morning.
Yeah, I think it's getting more aggressive, sort of heating up there between Commerzbank and UniCredit. So Orchel, UniCredit coming out today and basically laying out why they think it's a good idea for Commerzbank to be absorbed into UniCredit, and effectively saying Commerzbank is overvalued and has fundamental issues that are just not being recognised, which UniCredit, of course, can sort out. But I mean, to your segue, it's quite a good question. Is there a white knight out there, right? Because UniCredit have 30%. They've effectively, kind of got the lock on Commerzbank if there ever were to be a deal. And I think most people view that 30% really as a block in stake. So maybe UniCredit don't get it. That's still very much up in the air. But it's hard to imagine another bank coming in or there's just certainly a very narrow window for another bank to try and come in.
Yeah, from the German banking sector, or German pan-European, I should say, banking sector to the UK, we see reports elsewhere in media that there could be a meeting between Rachel Reeves and UK bank leaders, maybe to talk about what's going on in Iran and how banks can help with the cost of living, but I imagine there'll be a long agenda.
Yeah, well, exactly, yes. I think Iran is certainly the convenient message there, and it's basically like, where's the distress? How can, obviously, the government, but also, as ever, the lenders kind of help try and sort of mitigate this pain point. So that'll be quite interesting to see, and at the same time this week, I think there's also, at the Bank of England, various bank lenders, CEOs meeting to discuss what else, Anthropic's Mythos model, yes. So, the kind of potential threat posed by that.
Tom Metcalf, thank you very much indeed. Managing editor for EMEA Finance, with the details on the gazumping in the hedge fund industry and maybe what to expect as Chancellor Rachel Reeves is apparently set to report or set to meet with banking CEOs here in the UK later this week. Let's take a look at what else we're watching through this week. Monday, later today, Rio Tinto sales and revenue. We'll break those for you. Later tomorrow, we're going to get US retail sales. Also hearing from Fed Chair nominee Kevin Warsh. Of course, confirmation hearing. The market could be sensitive around that event. Wednesday, UK CPI, so inflation out of the UK after the inflation input, of course, of the conflict in the Middle East. Thursday, global flash PMIs, and on Friday, we're going to get UK retail sales as well. Let's bring in Bloomberg and Live's Skylar Montgomery coding right now for her take on the market action. Skylar, what just another head-whipping weekend. European stocks across the benchmark currently down 1.1%, future stateside down 0.6. What for you is the kind of key thing to focus in on at this point? How concerned are you or constructive?
Yeah, I think I'm just thinking of it as Friday never happened. In terms of, yes, we got this excitement over the Strait reopening, oil prices went down quite significantly, and then we found out the Strait wasn't actually open, but the market is still quite optimistic that a deal is coming somewhere down the line. So we're in this kind of awkward equilibrium where Brent prices are at 95. We're unlikely to see the impact of that in Q1 earnings. There are stories that are playing out that make sense in terms of growth will be stronger in the U.S. than it will be in Europe as a result of higher energy prices, but you're also seeing U.S. equities do well off the back of tech, and tech performing very strongly. And this, earnings season signals that we've had so far for the U.S. in particular in the banks is that growth when the war started was very strong. So if you looked at the banks, something that you should consider is loan loss provisions. And those are at very healthy levels in terms of they haven't risen, so there's not concern about more defaults going forward. Loans have actually risen for those big banks that have reported, but you're also, insulated if there is somewhat of a shock.
For now.
For now, yes.
How long's your time? How far forward are we looking here?
Yeah, this is the struggle, right? Because largely people look at 1 year ahead earnings expectations. And so those look okay because maybe you're looking through the shock. But I think, 1Q versus 2Q is a very different story. In the first quarter, you have a month of the impact of the war. Yeah. So you'll see, impacts on companies that are very affected. So energy companies, for example, should get a boost. But you won't see aggregate demand destruction, particularly in the U.S. because you have a strong starting point. So the longer it goes on, as you go into 2Q earnings, you should see more of that if energy prices stay elevated. And I am very concerned at that point, but I just think right now there's momentum behind it. You have this other story in the form of tech driving the market. And if you don't have anything on a negative side from an earnings perspective, you'll see that like U.S. over Europe equity outperformance, but you're not going to see kind of broad downside to the same extent.
I'll just mention that we're getting some headlines suggesting that there's been an earthquake just off Japan, and it's strong enough to shake buildings in Tokyo. Japan has issued a tsunami alert, so we keep that in mind. Lots of other things we're focused on this morning, this week, Skylar. Very briefly, Warsh, CPI, global PMIs.
Yes.
Which? Pick one.
I think Warsh, because that's happening tomorrow. It doesn't really change the calculus for the Fed over the next week, but
lots of questions.
But lots of questions, yes.
Okay, Skylar, we'll get to that tomorrow, perhaps. Skylar Montgomery-Koning from Bloomberg Markets Live team. That is it for the opening trade. European equity markets then unwinding the gains of Friday, down by 1.2%. US futures also slightly sluggish. The pulse is next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The U.S. seizes an Iranian ship as part of its blockade of the Strait of Hormuz, raising questions over a second round of talks in Pakistan. The UAE is said to seek a possible financial lifeline from the U.S. The Wall Street Journal reports that it may turn to the Chinese yuan if it runs out of dollars. Plus, the U.K. Prime Minister Keir Starmer is said to give his version of events surrounding the appointment of Peter Mandelson a day before the civil servant he sacked over the controversy. So there is a lot going on in the markets. Of course, there's quite a lot going on in news overall. If you look at stocks and bonds, they're falling. Look, oil is jumping, pushing U.S. stocks and treasuries lower after a pretty turbulent weekend in the Middle East. I cast doubt on the prospect for peace talks ahead of this looming ceasefire deadline. I'm looking at Brent rising above $95 a barrel as the U.S. Navy also carried out its first seizure of the Iranian vessel in the Strait of Hormuz. And then, look, the European markets map again. We're seeing quite a lot of pressure across the board with the FTSE down to 0.6%. That CAC 40 and the FTSE MIB down 1.2%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, tensions in the war, of course, ratcheting up over the weekend as the U.S. Navy seized an Iranian cargo ship in the Gulf of Oman. Now, it's the first such seizure in the U.S. blockade of the Strait of Hormuz. Trump and Iranian officials have offered differing views on the next stage of the war, with the 10-day ceasefire set to expire this week. Well, we're now joined by Bloomberg Horizons anchor Jumana Bersetchi. Jumana, what's the latest around the state of traffic in Hormuz?
Well, it's been a pretty dramatic weekend in terms of developments around the strait, Francine. There was a lot of optimism on Friday that perhaps the strait was going to be fully reopened again in reference to a post that the Iranian foreign minister put up, Abbas Araghchi, suggesting that they were going to open it to commercial vessels. And that prompted a response out of President Trump, thanking all parties involved. He even thanked Iran, but then also reiterated that the U.S. naval blockade was going to stay in place. And because of that, That did not go down well with the IRGC. And by Saturday morning, they had reaffirmed their right to control and restrict all of the vessels that were going through. There were reports of gunfire, allegedly, on 2 Indian vessels that were attempting to pass through the Strait. Many vessels also decided to abandon their journey. And then, of course, you wake up this morning with U.S. CENTCOM announcing that they had seized an Iranian-linked vessel after giving them 6 hours warning to abandon their own journey into the Strait of Hormuz. So we've gone from a situation whereby I think many people were optimistic on Friday that we were going to see the right steps in terms of a full reopening, but we are essentially back to a standstill. No vessels are going through, and we still have hundreds of ships abandoned and sitting, not abandoned, but still sitting in the Persian Gulf waiting to get, number one, approval to get through the Strait, and number two, the removal of the danger for them to do so. So at this point, there has not been progress at all in terms of the free passage of the Strait of Hormuz, through the Strait of Hormuz.
Jumana, will Iranian and U.S. officials meet in Islamabad?
Well, the plan is for the U.S. to send over their delegation to Islamabad as soon as this evening. We found out yesterday that the delegation will once again be led by the Vice President, J.D. Vance, alongside Steve Witkoff and Jared Kushner. They are set to leave the U.S. Monday night to land in Islamabad tomorrow. And indeed, Pakistani mediators have been trying very, very hard to get this next round of negotiations across the line, but the Iranians are not committing. And in fact, just about half an hour ago, we heard from the Foreign Ministry spokesperson. They said that no final decision has been made vis-a-vis attending those second round of negotiations. They think that the U.S. have not taken it, quote, seriously enough. This is a quote coming through from the Foreign Ministry. And then also, the IRGC have said that they plan to retaliate somehow to the U.S. seizure of this naval ship earlier in the morning. And so there are a couple of issues that are still at play that could derail or torpedo the progress on these discussions. Number one is the ongoing naval blockade around the Strait of Hormuz. And number two, still a lot of daylight on some of those key issues that we've been talking about, including the fate of that enriched uranium stockpile.
Jumana, thanks so much. Jumana Bersachi there from Bloomberg, of course, in the Middle East. Now, the UAE has reportedly begun talks with the U.S. about a financial backstop in case the Iran war plunges the country into further crisis. According to a report in the Wall Street Journal, the UAE central bank governor raised the idea of a currency swap line with Fed and U.S. Treasury officials during meetings in Washington last week. Well, we're now joined by Ziad Daoud, Chief Emerging Markets Economist at Bloomberg Economics. Ziad, thank you for joining us. So first of all, how astonishing is it that the UAE could run out of dollars?
I don't think the UAE is going to run out of dollars. First, let's remember that the UAE is an incredibly rich country, multiple sovereign wealth funds that are loaded with foreign assets, and central bank reserves that are close to $300 billion. Second, yes, there has been a war and it has affected the UAE, but oil exports from the UAE have not gone down to zero. They're down probably by about 60%, but with a 50% increase in prices, that offsets a lot of the volume losses. And third, only 2 weeks ago, the UAE signed its own currency swap agreement with Bahrain, providing Bahrain with loans. If a country was running out of dollars, I don't think it would have stepped in to help another country. My interpretation of the request from the UAE to the US is that it's not so much a call for help, but a call for confidence. It probably wants to join the list of countries that have a currency swap agreement with the Fed, like the UK, Japan, and Europe.
Ziad, again, it was reported that basically the UAE, according to the Wall Street Journal, kind of put an ultimatum, or at least, threatened the U.S. to go to China. I mean, are we talking about how much of, I guess, disadvantage or how much of a questioning is this of petrodollar?
If by petrodollar, I think we mean the sale of oil in currencies other than dollar, then I don't think that threat is completely credible. Let's remember that the UAE has deep links to the US dollar, not to the Chinese yuan. It has a currency pegged to the dollar, which means it has to maintain savings and reserves in dollars, not in currency. And we've talked about the sovereign wealth funds that it has. A lot of their investments are in the US. it's very hard to shift these from dollar assets in the US to another market that is as large and deep as the US. So I don't think a switch away from the petrodollars, as far as the UAE concerned, is likely.
Ziad, thanks so much. As always, Ziad Dawood, Chief Emerging Markets Economist at Bloomberg Economics. Now, for more on the story, we're joined by Dominic Bunning, Head of G10 FX Strategy at Nomura, and Jumana Salahin, Chief European Economist and Head of the Investment Strategy Group for Europe at Vanguard. So thank you both for joining us. Dominic, let's start with you on this Wall Street Journal reporting. I mean, this was a bit, for me, of a wake-up call this morning, and then Ziad, with all of his nuances, says, look, maybe, it's the situation is not as grave as that report suggests.
Yeah, look, I think FX strategists, we have a bit of a reputation. We like to be a bit excitable and say that everything's important. I'm a bit more with Ziad on this one. I think there's an interesting element to it. There's two sides you can take to it. Clearly, the UAE has a lot of reserves, a lot of capital, a lot of investment. So the net asset position is not an issue. The UAE running out of money is not an issue. I think the question is more, if you need to tap into some of those assets, do you really want to draw down on those investments? Or is this just a way of actually almost mutually beneficially not having to, say, sell your US Treasuries, sell some of your US assets? You can just borrow the dollars effectively in the near term and access that liquidity. So to me, it's more of a question about maybe some short-term liquidity, and that benefits the US. When you look at what's happened to US yields, pushing up towards the highs, we know the US Treasury doesn't like to see that happening, particularly at the back end of the curve. So, I think there's an element where this could work in both sides' favour to some extent, providing some liquidity, limiting the need to sell US assets. And so, yes, while the headline looks a bit shocking, I think deep down it's something a bit more about convenience.
Yeah, I mean, I spent, most of the week last week in Washington, Jumana, and one of the conversations, certainly from the State Department, people that wanted to talk under the condition of anonymity, was like, we need to make sure that, that Europe doesn't go to China, that Europe stays with us and firmly aligned in the US. Are some of these conversations happening between closed doors also amongst European nations?
Yeah, thank you. Yes, I was also in Washington last week as well, and I think you're right. The geopolitics of the situation is very complicated. Many people, it's not just US and Iran. There are other players involved. Yeah. We've mentioned some of them. And I think that's why, the negotiations and how the dynamics of it plays out. And like talking about the swap lines, that's actually quite standard, really, in times of crisis. It could be a risk management approach, as well as we heard from others, that just kind of getting that in play if it's needed. Because at the end of the day, in our base case scenario, we are assuming a moderate scenario where this could last 1 to 2 quarters with elevated oil prices. So I think that's really what we're thinking about.
Yeah, so what does that do to currencies? If we are talking, 1 or 2 quarters is a long time. I feel like the more immediate market participants think this can be over in 2 weeks.
Yeah, it's really fascinating, actually, because, you've almost been through a full cycle of reaction where the first 2 to 3 weeks of this conflict, FX was reacting pretty much solely to the oil price or to commodity prices. And then the last month, actually, we've started to shift back to what we might think are more traditional drivers in FX, actually. Yeah. What are central banks doing? How are they going to react? And this is one point we've been making to clients quite a lot, is a lot of people have gone back to 2022 and said it's the 2022 redux, exactly, follow the playbook, etc. And that worked for a bit, and I think that's fine. But what people forget, I think, in 2022, if you look at, say, the euro, the ECB started February 24th, 2022, with rates at minus 0.5. 6 months later, they'd raised rates to 0. At the same time, the Fed had raised rate nearly 250 basis points. So, the fact that this time around the ECB is looking like it's more likely to react to inflation pressures, that's more of a positive for the euro. And then beneath all of the surface, and I do think the story in the Wall Street Journal matters to this, there is an underlying sense, and we've seen this for the last year and a half, where there's just a little bit less confidence in the degree to which the dollar will perform. And we've seen that from all of the clients we speak to, basically around the world, in the Middle East, in Asia, across Europe. It's not happening at a rapid rate, but it's fairly consistent, fairly gradual, and that just sort of gradually undermines the degree to which the dollar can outperform.
Jumana, at the same time, a lot of people, have been worried, actually have been looking at 2022 from the ECB and said, well, look, they were late to the game then, and there's a worry that they try and readjust and actually act too quickly. Are you expecting a rate hike in April?
We're actually not expecting a rate hike in April. In fact, we're still sort of saying that they probably won't do anything this year. And that's really a balanced decision. And, will they act too late? We know that they announced their risk management framework last year, and they take into account exactly, what you were saying, Dominic, that they say, oh, if we don't raise, will we regret it? If we do raise, will we regret it? So that's basically the risk management approach, and they're very, very aware that they were scarred from 2022, but this time is not like 2022. There are many reasons why it's different.
Why do you think it's different? I mean, I know it's, last time we had underestimated, on face value, it's the same, right? It's a big energy shock. But were there, I guess, hang-ups from COVID in 2022 that we hadn't quite estimated?
There's a few differences. First of all, that was mainly a very much a European shock, right? So gas prices first, oil prices second. This time round, it's kind of different. But this time round, I think the idea is that if there's a will amongst the right people, this can end quite quickly. So it's much more geopolitically motivated. So the whole nature of the war is actually quite different. And I think that's why people, at the end of the day, the US would like to end this as other global leaders would. It's just a question of what's the path to that agreement.
Yeah, I just think one other difference as well to bear in mind versus 2022, we had at that point, basically rates were zero everywhere around the world, right? So you had a very stimulative monetary policy environment and actually quite a stimulative fiscal environment globally as well, and that kind of pent-up demand, all of that coming through at the same time against the backdrop of relatively constrained supply. This time around, there's a lot more diversification across, policy stances just at the outset. When you think about where the Fed is with rates maybe moderately restrictive, the BOE moderately restrictive, whereas the ECB probably more towards neutral, maybe some even would argue slightly accommodative. So you've got all these different central bank positions, different fiscal responses coming as well. The UK can't really do a lot fiscally. Europe has a bit more space maybe. And we think that's going to be something that really feeds into currency performance over the next, 3 to 6 months.
I mean, Dominic, what's your take on the Bank of England? Again, very complicated. It's a small open economy, extremely dependent on energy prices, and also the rate differential between ECB and the Bank of England. I'm not sure how you justify it today.
Yeah, I mean, I'm more on that camp that I think the BOE is more likely to gradually see rates come down, or if you're in a situation where rates need to go up, the ECB would hike a bit faster. Ultimately, when you look at the labour market in both economies, the UK labour market is nowhere near as tight as Europe. We've already seen some of the hawks, interestingly, at the BOE, and Megan Green made some interesting comments the other day. Andrew Bailey touched upon it as well. The labour market is not as strong as it was back then. Wage pressures are not coming through as strongly. We'll see tomorrow with the labour market data just how true that is. But sequentially, we're not seeing this really strong wage demand, in the UK. And I think that's something that limits the need for the BOE to react in a hawkish manner this time around.
I mean, overall, and as you say in your great notes, geopolitical shocks tend to have short-lived market impacts historically, but that's very true now. And given the enormity of actually this energy shock, I don't know whether markets are just trying to latch on to good news.
I think it's what we were talking about, that there is the hope that this is going to be short, it's going to end, it's temporary, and that's why markets are optimistic. However, that said, bond returns are down, equities are down. It's a bad time for investors. Some of the commodities, gold and silver, which we traditionally see in crisis time, rise or down. So from the investor point of view, there's nowhere to hide. So this is kind of worrying for the investor, but they are smaller moves.
Should we really start worrying about stagflation or stagflation risks?
I mean, we have got a stagflationary shock, and at the end of the day, we are seeing the stagflationary impact on the economy. In other words, inflation is up, and it's going to be up this year because no matter what, oil prices are high. There have been physical disruptions to oil, so this elevated price of oil is going to be there, and inflation is going to be there this year. And it is going to hit households, right? And there's nothing that a central bank can do it, given the lags in policy. You have to look through that. So inflation is up, growth is down because you've got less money to spend on other goods, so growth goes down. And that stagflationary shock, unfortunately, is bigger in Europe because we're an importer of energy.
Dominic, overall, I mean, what do you make of Asian currencies? Because again, it's quite striking. I mean, it was striking for me in Washington to really be reminded how much some of these economies are suffering because of the energy shock.
Yeah, I mean, it's similar to G10 in some respects. A very diverse or a differentiated approach we're taking. We really think the renminbi in China is well placed to benefit. Actually, we can talk a little bit about some of the underlying themes, long-term themes, but actually even more. Sorry, my earpiece is falling out.
That's never a good open on a Monday.
From a short-term perspective, we're seeing greater signs that inflows are coming back. We think there's still some room for the policymakers to allow a bit more strength. So, China, relatively big, isolated kind of economy in some respects. We think the renminbi renminbi can do quite well. Places like Thailand, India, much more exposed in terms of the fuel shock and potentially need to react a little bit differently. So I think there's, again, this real scope for diversification or differentiation when you look at each individual country, especially now we've had that first month of the shock. Everything kind of moved in a similar way. It was sort of a homogenous move. And now we're starting to see much greater signs that investors are saying, well, I actually think this economy can hold up okay. This central bank will do that. This central will do that. And you can allocate capital a little bit more differently in that sense.
Okay, thank you both for joining us. Dominic Bunning, head of G10 FX strategy at Nomura, and Jumana Salahin, a chief European economist and head of investment strategy group for Europe at Vanguard. Coming up, Bulgaria's former president sweeps to power, promising to wipe out corruption. We'll have plenty more on that next, and this is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, a former Bulgarian president who opposes military aid for Ukraine is on track to win the country's general election, while Rumen Radev says he plans to improve relations with Moscow.
I hope that we will develop practical relations with Russia based on mutual respect and equal treatment. This is our approach to Russia.
Let's get more from Maria Simenova, head of the Sofia office at the European Council on Foreign Relations. Maria, thank you so much for joining us. Does Europe now have its new Orban just a week after the original troublemaker was ousted from office?
Former President Rumen Radev has made a few comments during presidential campaigns, which became a bit softer during this parliamentary campaign. First of all, it's important to say that he's not a new political player on the Bulgarian political scene. He has been president since 2017, and therefore he had this platform from which to address the Bulgarian people. Because of those statements that he made opposing support for Ukraine and the famous one of Crimea being Russian, many fear that we might have a new Orban in Europe. It's important, though, to mention a few differences. Even though it's a big win for his newly created political party, he does not have, for now, absolute majority that would allow him to build whatever Viktor Orban built in more than a decade in Hungary, that allowed him to strongly oppose decisions within the European Union, mostly on Ukraine and sanctions against Russia. So for now, I think it's very early to say that there is a new Orban in Europe. I think he will still keep a modest course. The far right suffered big loss, but it's yet to see what kind of government he will form.
Maria, I mean, Redov has repeatedly, of course, opposed some of the sanctions against Russia. He's also been against aid to Ukraine. So, you know, how much does his win actually change completely Bulgaria's geopolitical stance?
I don't think that we are talking about a radical shift from Bulgarian geopolitical stance. The conversation about financial and military aid to Ukraine in Bulgaria has already been difficult. You know, when one has such conversation in not so rich country within the European Union, it's always difficult, like, for example, in Hungary or in Greece. So I think that the former president will depend a lot on the European Union precisely on the upcoming EU funds in the midst of economic crisis. And Bulgaria recently joined the Eurozone, but we also have high prices because of many other geopolitical factors and what is going on in the Middle East. So I think he will need to work and to cooperate with the European Union, with the European leaders. But also, I think as a former pilot, he's coming from the military, he will have a focus on strengthening defense capabilities, modernizing the army, and for this, he will also need to work with Europe.
And so do you think he can form actually a stable government that will last?
From what we are seeing right now, he does have a comfortable majority. Such result we haven't seen in more than a decade. It's a big win. Many smaller parties are out of the picture. They didn't pass the threshold. I must say that for the first time, the traditionally pro-Russian Bulgarian Socialist Party, the oldest party in Bulgaria, did not pass the threshold. At least we're talking about still not final results, but these are the expectations. So as of now, 5 parties are going to be part of the parliament. In comparison, we used to have 7, 8 in the past 7 snap elections since 2021. But again, votes are still being counted. But it's a big win. It's a big result. The difference between the first and the second is more than 30%.
Maria, when you look at some of the things that Redov was opposed to, one of them is the euro. Does that change anything for the currency?
He used to oppose the Eurozone, not exactly opposing the Eurozone itself, but he suggested, he put forward the idea of a referendum for Bulgaria joining the Eurozone. I think this is irreversible decision. I think what he bet on was the economic factor, the fact that prices are rising. But I think it's clear that prices are rising for reason outside of Bulgaria joining the Eurozone. So I think he will now have to focus on economic measures. And as I said, to do this, he will have to work with the European leaders and the EU.
Maria, thank you so much. Maria Simonova, there, head of the Sofia office at the European Council on Foreign Relations. Coming up, we discuss the latest developments in the Iran war with Hassan Al-Hassan from the International Institute for Strategic Studies. We'll not only talk about oil, but we'll also talk about the markets at large after what was a pretty fraught weekend for anyone trying to cross the Strait of Hormuz. Oil jumping, stocks, U.S. stocks and treasuries are lower after a pretty turbulent weekend in the Middle East, which really cast doubt on the prospects for peace talks ahead of this looming ceasefire deadline. More on that shortly, and this is Bloomberg.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And
I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The U.S. seizes an Iranian ship as part of its blockade of the Strait of Hormuz, raising questions over a second round of talks in Pakistan. The UAE is set to seek a possible financial lifeline from the U.S. The Wall Street Journal reports that it may turn to the Chinese yuan if it runs out of dollars. Plus, the UK Prime Minister Keir Starmer set to give his version of events surrounding the appointment of Peter Mandelson a day before the civil servant he sacked over the controversy. Well, Brent has erased Friday's losses after the U.S. Navy seized an Iranian ship in the Gulf of Oman. The continued standoff threatens to deepen the global energy crisis and, of course, undermines President Trump's prediction over the weekend of a quick end to the conflict. Well, for more, we're now joined by Will Kennedy, our EMEA News Director. Will, as always, thank you so much for joining us. Look, I mean, it's open, it's not open. It feels like we're back to being at standstill.
100%. Right now it's completely closed. We had quite a confusing and dramatic weekend. We'd started on Friday evening with the strait seemingly open after the words from the Iranian foreign minister and Trump, and then the Iranians dramatically changed their mind, fired on a ship reportedly, closed all traffic, and then today we've got the seizure of this Iranian ship by the US. So you've got both sides enforcing effective blockades on Hormuz, and right now there's almost no traffic at all going through the strait.
I mean, this one of my favorite functions on the Bloomberg terminal is getting map vessels go. So you have, you can see there's just no traffic there. How are energy markets responding? And I mean, traders, I guess, are just watching for the strait to reopen or not.
They are. We saw oil come down sharply on Friday. We've seen it come back up today, but we're not quite at where we were before Iran announced the opening of the strait. And I think that tells you why this is the key thing for oil traders and oil markets globally. Of course, the fact that we haven't seen a bigger increase today suggests that the expectation is still that we get some kind of resolution here. The thing we're looking at today is whether these talks in Islamabad, a second round of talks between Iran and the US, happen tomorrow. Trump has said he's ready to send Witkoff and perhaps Vance. The Iranians have not committed yet, but I think if those talks happen tomorrow, it will be a sign, and traders will probably continue to think that eventually this gets resolved.
Well, thank you so much, as ever, Will Kennedy there with the very latest on the Strait of Hormuz and the price of oil. Now, the Israeli military has told the residents of dozens of villages in South Lebanon not to return. Israel's defense minister says the military has been instructed to use full force in Lebanon if troops face any threats, even during the current ceasefire. Well, Bloomberg's Ann Williams joins us now from Jerusalem. You know, Dan, good morning. Is Lebanon ceasefire in trouble?
The Lebanon ceasefire appears to be holding. It's worth noting here that according to the small print of the ceasefire, specifically Clause 3, this was published by the U.S. State Department after Washington brokered that deal between Lebanon and Israel last week. Clause 3 stipulates that the Israelis can resort to military force in the event of a perceived threat from Hezbollah. So clearly, the Israelis are invoking that. The question is to what extent it might apply to the longer-term expressed desire of the Israelis to create a buffer zone just across their border on Lebanese soil, basically a scorched earth policy that would entail the destruction of frontline villages, homes there that they say have been used to conceal in the past Hezbollah gunmen, Hezbollah ambush positions, and the like, for a hoped-for on the part of Hezbollah or a planned October 7th style attack. The quote that you cited there is basically the Israeli defense minister reiterating that the Israelis believe their conduct is allowed by the ceasefire agreement, is tolerated by the ceasefire agreement. In the absence of anything opposing that from the Lebanese government, from the U.S. government, it would continue. It's worth noting, however, that the security zone, as it calls it, being created by Israel in occupied territory in southern Lebanon is reversible, according to Israel, in the event of peace, in the event of an end to the Hezbollah threat. The Israelis say they would allow back those hundreds of thousands of displaced Lebanese. One imagines, however, that when it comes to those frontline buildings, those frontline houses that are being demolished, those Lebanese villagers will not have homes to return to.
What are the Israelis saying about the wider ceasefire and U.S. peace talks with Iran?
The Israelis are waiting to see what Trump will say. Trump, the United States, that's the senior partner in this arrangement. This was clear from the outset. The Israelis, while really exercising a degree of military parity with their American allies during that war and waging a parallel second front against Hezbollah, an Iranian ally in Lebanon, when it comes to diplomacy, they really have to submit to what Trump wants. They don't have a place at the table. There are no direct contacts between Israel and Iran. Iran refuses to recognize Israel. Pakistan has yet to recognize Israel, so even as host country, it wouldn't be in any rush to admit Israelis to that negotiating table should the negotiations resume. The Israelis say they're willing to go back to war should that happen. They expect, according to credible Israeli media reports, that Trump, in the event that these talks do not resume in time tomorrow, that Trump will seek another extension to the ceasefire. However, should he carry through on his threats to resume the war, the Israelis would be there by his side. They say there is much yet to be done militarily in Iran to achieve the objectives they set out alongside the Americans.
Dan, thank you so much. As always, Bloomberg's Dan Williams in Jerusalem. Now let's discuss further what lies ahead for the Iran war and the conflict in Lebanon. Joining us now is Hassan Al-Hassan, Senior Fellow for Middle East Policy at the International Institute for Strategic Studies. Thank you for joining us, Hassan. How do you see the ceasefire holding or not?
Thank you for having me. I think at the moment it has held more or less, and clearly there have been multiple violations, including during the very first few days of the ceasefire, with Iran continuing to attack the Gulf states, but then the intensity of those violations seemed to go down. Now, obviously, the remarkable change during the ceasefire period has been the U.S.-imposed blockade on Iran. And I think that what that has done is that it imposed a cost on Iran for using its most important point of leverage here, being its ability to disrupt shipping through the Strait of Hormuz. I think both sides would prefer a good agreement over going back to fighting. Clearly, I think the course of the past few weeks has shown that neither side can achieve decisive victory. I think the Americans understand this very well, and the Iranians, I believe, understand this very well. So I think clearly they have already been to Islamabad to negotiate. There's another round of talks that is currently planned. The ceasefire has more or less held despite the U.S. blockade on Iran. And so I think both sides want to secure a good agreement that allows them to come out with the ability to claim some sort of victory. Now, the question is, would they prefer to go back to the fighting if they are unable, if they feel that they are unable to achieve a face-saving agreement. And that's the risk, is that they might prefer actually to fight over a bad agreement. But I think that they would prefer a good agreement over going back to war.
So, Hassan, what do you think the way forward for a lasting peace deal is? I mean, you can have ceasefires, but is there an off-ramp also from the U.S., given you could have a deal that's much worse than what was negotiated 10 years ago?
Most certainly. It depends on whose perspective, obviously, you're looking at this from. We know what the Iranian 10 list of demands are and what they involve. They're quite maximalist. The Iranians want to continue to have the right to enrich uranium. They're unlikely to give up, at least in principle, the right to enrich uranium, even if they agree on a freeze on uranium enrichment. They want U.S. forces to leave the region. They want comprehensive removal of sanctions. And they want recognition of a certain custodianship right or something to that effect vis-a-vis the Strait of Hormuz. In return, we also know what the U.S. wants, and I think it's clear that at the moment, the U.S. attention is on the fate of Iran's nuclear program. President Trump wants to secure a certain freeze on the enrichment of uranium within Iran. He wants assurances about the fate of the stockpile of uranium that Iran has, whether that stays within Iran and gets converted into another form that makes it difficult for Iran to weaponize in the future, or whether that uranium is shipped out of Iran. This will be left to the negotiations. But I think the real risk here, the real danger for the rest of the world, is that Trump essentially obtains assurances about Iran's nuclear program, but withdraws from the region, gives Iran comprehensive sanctions relief that we know Iran will use to rebuild its military arsenal, even before it engages in economic reconstruction. And essentially that leaves Iran with the ability to disrupt the shipping through the Strait of Hormuz, essentially at will, without the U.S. Really wanting to get involved. So we could end up with a worse deal that essentially only resolves the nuclear issue, but leaves everything else on the table for the region and the rest of the world to deal with.
Yeah, it's my understanding, speaking, through people, especially in Washington, that actually the most pressing issues right now is who's in charge of the Strait of Hormuz. So how will that be carved out?
That's right. I mean, initially, it seemed as though President Trump was floating the idea of recognizing Iranian rights over the Strait of Hormuz. He seemed to acknowledge the idea of Iran collecting tolls on passage. He even floated the idea of a U.S. and Iranian sort of joint venture in the Strait of Hormuz. I think we're no longer in that situation. The U.S. blockade of Iran, on the one hand, I think clearly shows that it's very difficult for the U.S. and Iran to carve a working relationship around the Strait. And I think there is zero Iranian trust of the Americans going forward and zero Iranian interest in working closely with the Americans on that issue. Now, I think for President Trump to be able to credibly claim that he has secured victory at the end of this negotiation, and I think this is an important dimension for him, he wants to look good, I think he would not be able to do so with credibility without having achieved an opening, a real opening of the Strait of Hormuz that essentially involves restoring freedom of navigation, Iran no longer engaging in any disruptive activity, and essentially clearly stating that the strait is open. Now, this doesn't solve the long-term problem. The long-term problem is that Iran, essentially, we could have a temporary resolution. The U.S. could lighten its military footprint. It could essentially withdraw from the region. We could have a period of calm, but Iran has already demonstrated that it can close and disrupt the Strait of Hormuz at short notice with minimal effort. And this is a point of leverage that Iran is likely to continue holding on for the foreseeable future.
Hassan, very quickly, with the little time that we have left, what is Iran's endgame? So I know this is about regime survival, but are they also trying to play to time as they have the midterm elections in 7 months in the U.S. that could also change the power of Congress?
So regime survival is the immediate and most pressing objective. Iran has shown that it can withstand a war against two of the most powerful militaries in the world, the U.S. and Israel. It has shown that it can close the Strait of Hormuz. It has shown that it can attack its neighbors, essentially with relative impunity. I think the end game for Iran here is that it needs to make the most out of this moment. It has the global economy, global energy security in a stranglehold. And what it wants to do is extract as many concessions from the US as it possibly can, so long as it has this leverage, so long as it has the US's attention, and essentially achieve some of its long-term and long-lasting objectives. The removal of US forces from the region, this is a massive long-term Iranian strategic objective. Obtaining long-lasting sanctions relief so that it can continue to have the financial and economic means to rebuild its military and rebuild its economy. And I think these are the lasting strategic objectives that Iran will try to get out of this moment and through the negotiations with President Trump, probably in exchange for some concessions and assurances around the nuclear program.
Hassan, thank you so much. Hassan Al-Hassan, Senior Fellow for Middle East Policy at the International Institute for Strategic Studies. Coming up, the UK Prime Minister Keir Starmer prepares for a parliamentary showdown over the security vetting of former ambassador to the US, Peter Mandelson. We'll have the full details next, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The Bank of England makes its next interest rate decision against the backdrop of conflict in the Middle East. Investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Our next decision is at the end of April. A lot will have happened.
Tune into Bloomberg for live market reaction and analysis from the studio and on the ground at the Bank of England. It all starts April 30th at noon on Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is a pulse. I'm Francine Lacqua here in London. Now, the UK Prime Minister is preparing for a showdown with the senior official he sacked over the appointment of Peter Mandelson as ambassador to the US. Keir Starmer will make a statement to Parliament today to address allegations about Mandelson's security vetting. Well, with us now is Jill Rutter, Senior Fellow at the Institute for Government and a former civil servant. Jill, thanks so much for joining us. I mean, this feels like a nightmare for Keir Starmer. I mean, what did he know? And I mean, I don't even know actually how he, what this shows.
It's quite interesting because I think what it shows is that the Prime Minister is prepared to move very quickly when he thinks he's in danger, and we've seen that a couple of times with very quick sackings of people. There are sort of a growing list of sacrificial victims over the Mandelson affair, which ultimately comes back to the first decision, which was the decision, despite lots of red flags being raised, despite advice from the National Security Advisor, despite advice from the Foreign Office that Mandelson wasn't a suitable appointment and other good candidates were available, to go ahead with that appointment. And everything that we see now flows, if you like, from that initial decision by Keir Starmer.
Is the problem that Keir Starmer, I mean, do you think that actually Keir Starmer would go against, you know, his own people and saying, like, this is not the ambassador you need? Or is it that he doesn't have a handle on his administration, on the people around him, and that he didn't even know about it?
Well, if we look at the timings, the Prime Minister had already announced Peter Mandelson's appointment in December, before Ollie Robinson even was in post as Permanent Secretary at FCDO. But they'd done one set of due diligence, which had raised a number of red flags, and the Prime Minister clearly thought, that's okay, I can live with those red flags. There was then the much more formal, deeper vetting process, and we'll find out much more when we see what Ollie Robbins says to the Foreign Affairs Committee tomorrow, when he gives evidence, if that, assuming that still happens, about why he thought it was okay to proceed with the appointment with appropriate mitigations in place. But I think what Ollie Robbins will have thought he's doing is what the Prime Minister wanted, that the Prime Minister very clearly, despite lots and lots of red flags sprouting all over the place about Mandelson's appointment, wanted him, had decided that was a risk worth taking. Ollie Robbins gets, something saying there are these problems. He puts in place what he then judges himself on his own authority are adequate mitigations, and then says on that basis we can clear Peter Mandelson, who's already in Washington doing the job. So it's a really difficult situation. And then there's the second question of why was the Prime Minister not alerted to this by Robbins or the Cabinet Secretary when he's answering questions after Mandelson's been sacked, when he's asking questions where he says due process was followed.
But is this common practice, that you don't inform the Prime Minister of something so grave?
It's a very odd case anyway, because if it was just an official who failed the vetting process, the sequencing is very odd. The fact that it's a political appointment is very odd. The fact you're appointing somebody with so many red flags, because it's falling in a sort of grey zone between being an official appointment and a political appointment. I think if anything's a mistake, it's a mistake that it was treated too much like an official appointment and not enough like a political appointment.
How weakened is Keir Starmer by this? Are we going to see a landslide in in some of the by-elections in a couple of weeks? And is it time for him to go?
I think we're always going to see really bad election results on May 7th. Whether this makes this much worse, we don't know. It was always going to be a question of whether Keir Starmer's leadership would come under question after that. I think this is just reminding people again of the problems that Keir Starmer got to earlier in the year and last September over this appointment, which, as you say, is a continuing nightmare. It just keeps on coming back to haunt him and raise questions over his judgment, why he thought it was a great appointment in the first place and so good to sort of ride roughshod over all this counter-advice, and then why he didn't seem to be super interested in what was going on. And there's the civil service. Remember that just after, just before Ollie Robbins became Permanent Secretary there, Keir Starmer made this speech saying, basically, the civil service gets in the way of things, they're blocking everything. I think this is possibly Ollie Robbins showing he was a bit of a can-do civil servant. Prime Minister wants this appointment. I've got it for him, despite, what could have been problems. Could the civil service have stood up and said, sorry, Prime Minister, you've announced this appointment, but actually we're telling you now it can't go ahead.
Jill, does the Prime Minister survive this? And again, I don't know what is his biggest fault, seeming weak, being weak, and can he get over this?
It's just adding another chapter in the continuing story of the problems of Keir Starmer in managing Downing Street, in actually being interested enough in what is going on around him, and also his willingness to sort of sacrifice people very, very quickly, which must make quite a lot of people wonder about whether it's actually worth taking the risk of working for him.
Jill, thank you so much. You've said it perfectly. Jill Rutter, Senior Fellow at the Institute for Government. Now, today's Bloomberg Big Take explores the phenomenon of the so-called gazumping by hedge funds, not for clients, but for traders. As a fight for talent has reached new extremes, who's footing the bill? Well, for more, we're joined by Bloomberg's managing editor for EMEA Finance, Tom Metcalf. Tom, great to see you. So why is this happening, and who are the winners and losers?
Yeah, I mean, it's basically an indication of just how much sort of competition there is for the really top traders here we're talking about, and just how hot that space is. So you think of the multi-strats, that's really where this is happening. And it's just an extraordinary job market out there, right? You know, these people are going on gardening leave, sometimes for, you know, years we're talking. And what that opens up for sort of competitors is, you know, there's lots of non-competes, but there is a moment when, while they're on gardening leave, no longer on the non-compete, and they can thus be sort of poached from their gardening leave to a totally different firm. So it's quite an extraordinary situation, and just goes to show it's a special sort of job market for this part of finance.
Yeah, I mean, gazumping is such a British word. I don't think many people know it, right? It's when you come in and basically just offer more for the same good. It used to be for houses, but now it's also for people and talent. Like, how does it work? Is it, you know, is it headhunters that find you, or are you still on the market if you're on gardening leave? Which is also so British.
Yeah, exactly. No, yeah, that whole word. It's definitely a global phenomenon. But yeah, as a Brit, I was like, oh yes, gazumping, of course. I remember that, at least, you know, in better days of the property market. But yeah, no, it's quite an interesting read, because I expect a lot of our maybe US readers will be going, what is gazumping? Read about it. Maybe it will catch on. But yeah, no, realistically, in terms of the sort of process, is very much, it might be firm-driven, it might be headhunter-driven. But yeah, effectively, it's obviously quite a hard thing to pull off, right? You need to know where these people are going, when this non-compete opens, when this window is. But yeah, it's fascinating because, you know, someone will be placing, for example, a trader at a firm, and be, you know, the headhunter will need them to go there to get their fee, and then they themselves might get gazumped as well. So lots of money involved. We're talking big figures. And
this is what, 15% more, 20% more?
I mean, it can be. I think it just depends on the situation, right? Or maybe the right firm, or, you know, different role. Yeah, or, you know, in one case we've seen someone offered more capital to sort of build out their team. So there's just a sign of how competitive it is. And I guess until someone's in the building for these jobs, you're never quite sure you've got them.
Never quite sure. Okay, so who else is never quite sure? So UniCredit has now urged Commerzbank, you know, to change basically. So Andrea Urchel, who wants, Commerzbank, who's the biggest shareholder, I feel like is going like full frontal. Yeah, it feels like it's sort of almost a new phase of this very long-running drama, right? It feels like maybe the gloves are a bit off. He is basically saying Commerzbank as a business, we're going to make it better. Its share price is way overinflated, and basically, you know, kind of we priced in the fact UniCredit will buy it. So it's a really interesting moment. We're expecting next month, you know, that offer to come through where he will inch over that 30%. And I think it's just a fascinating dynamic at the moment. You know, the sort of who's got the upper hand. Commerzbank obviously don't want this, and then seemingly Berlin as well. But how long will that last? I was going to ask actually, is this all about convincing the German government that this is a good deal, instead of going to other shareholders and saying, look, this is a bank that's undervalued? I think it's still more to the shareholders, this messaging. And, you know, for Urchel believers, this will all be kind of music to their ears, and basically reiterate what they know already. And I think that's the second stage, is, you know, which is the biggest thing, is the political resistance, right? Like, this is going on for so long, you do get a sense there's a little bit of softening, bit of kind of a reality check almost for folk in Berlin, where they're like, you know what, this problem isn't really going away, maybe we have to sort of come to the table. Tom, this started in September 2024. Why only publish the strategy now? Well, that's, I think, what Commerzbank is saying is, you know, there's been huge publicity around this, but in their words, you know, UniCredit have never really come with effectively a formal idea or plan. So that's been a big bone of contention. So my sense actually is Urchel released this in part because of that kind of quite public dressing down from Commerzbank, that we need an offer to look at, basically. Okay. Tom, thank you so much. As ever, Tom Metcalf there with the banking beat. Now, on tomorrow's program, we'll be speaking to the Chief Revenue Officer of the French startup Mistral AI. Catch that interview 9:45 a.m. London time tomorrow. Up next, it's Bloomberg Brief, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Now, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro?
It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know. What he doing? Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start the Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
In New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Tensions rising again. The U.S. Navy seizes an Iranian-flagged cargo ship as the Strait of Hormuz remains shut. Oil spikes back up, stock futures dip as the uncertainty around peace talks between Washington and Tehran grows. All this following record high for U.S. stocks at the close on Friday. $10 trillion in market cap set to report earnings this week. So let's take a look then. We'll start with oil as usual these days. Above 95 once again for Brent. Now we are still below 89 for WTI. That might be a bright spot, but look, still up more than 5% apiece for those oils and obviously all of the refining products associated with those oils. It looked like we were in the clear a little bit on Friday and we saw that big dip down. Well, now it's not clear about the status of those talks that are supposed to be starting tomorrow. It's also back on in terms of, you know, literally drones and strikes in the Strait of Hormuz with the U.S. seizing that Iran-flagged cargo ship. You're not seeing too much of a reaction in treasuries. That two-year yield up about 2 basis points. We also, of course, have the Senate confirmation hearing for Kevin Warsh this week. If we take a look at futures, we are lower, but we're coming off 12 days of gains for the NASDAQ 100, down about 0.5% in terms of futures here, and the dollar index up, but again, we are off our highs of the morning. So we'll see what rhetoric comes out in the next few hours and whether Iran actually has a response as to whether it's going to participate in those peace talks once again this week. Do keep an eye on the VIX, though. We're up substantially this morning. Let's get a look at some individual movers now. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Tensions have flared up once again in the Middle East over the weekend with this renewed disruption in the Strait of Hormuz. And that has, of course, led oil prices to jump. And we are therefore seeing all of those oil majors this morning move higher in a pre-market trading. The focus is now going to be on whether those two sides can come to the negotiating table as the ceasefire is expected to be ceasing very soon. Moving over to airlines and cruise lines, of course, this travel sector is struggling a little bit more weaker this morning, given those higher fuel costs, the prospect of fuel shortages as well, that is particularly concerning, given that we're now entering the very busy and usually very lucrative summer travel season. And finally, let's go over to TopBuild, because QXO is buying the insulation company TopBuild for $17 billion. This is a major acquisition in this building product space, and therefore we are seeing TopBuild rise almost 20% this morning in pre-market trading.
A nice gain this Monday morning. Chloe, thank you so much. That's Chloe Melly. She'll be back later in the hour. And coming up also this hour, more on this equity market and what we should be anticipating with RBC's Amy Wu-Silverman. But first, tensions ratcheting up after the U.S. Navy attacked and boarded an Iranian-flagged cargo ship in the Gulf of Oman. This coming as Washington and Tehran were set to meet for peace talks this week. The Iranian foreign minister saying earlier this morning, quote, "We have no plans for the next round of negotiations and no decision has been made in this regard." Let's get to our team coverage now with Jumana Bracetti in Dubai, Laura Davison in Hong Kong, and Ziad Daoud of Bloomberg Economics also in Dubai. Jumana, let me start with you. Just bring us up to speed on the events over the weekend that seem to have changed sentiment, at least in the markets.
Yeah, well, it's been quite a dramatic weekend. From Friday, things looking up. There was a lot of optimism in the air that maybe we're getting closer to a resolution, a full reopening, unconditional reopening of the Strait of Hormuz. President Trump was thanking everybody and really signaled that perhaps we were getting closer to the end of the war. But of course, by Saturday morning, things had changed. The U.S. once again reiterating that their naval blockade was going to stay in place, and IRGC responding that that was an unacceptable outcome for them, and therefore they in turn would continue to exercise their control over who gets to pass through the strait. There were reports of vessels turning around on Saturday morning, even gunshots fired at a couple of Iranian, I should say Indian ships trying to get through the straits as well. And then this morning, the main event obviously being that CENTCOM announced that they in turn had seized an Iranian-linked vessel. So dramatic escalation over the course of the weekend. It's fair to say no transit activities occurring now through the Strait of Hormuz. And at the same time, it leaves a lot of questions about the future and the fate of these Islamabad talks. The U.S. have said that they're sending a delegation. They're set to leave the U.S. this evening, led by J.D. Vance once again with Steve Witkoff and Jared Kushner. The Iranian side, we've heard from the foreign ministry spokesperson about an hour ago, and he was saying that no firm decision has been made. And from their perspective, the U.S., as long as the U.S. naval blockade is in place, then they will keep their blockade in place, and they will continue to exercise control over who passes through the straits. And clearly, Vonnie, that is a deal breaker too, because if you remember, one of the terms of the ceasefire agreement that was put in place 2 weeks ago was the reopening of the straits, and that has not happened. And then you have a whole slew of other issues where still the U.S. and Iran are very far apart. One final thing to bear in mind, the ceasefire does expire Tuesday evening U.S. time, Wednesday morning over here in the region, so the clock is ticking.
Yeah, Laura, let me ask you about that. What have U.S. officials been saying exactly? Because it seems like peace talks are about to happen, but you can't have peace talks unless parties are involved in them, right? It can't just be the U.S. traveling to Pakistan to hold peace talks with nobody. So what have we been hearing?
Yeah, we've been hearing a lot of mixed messages from the White House. The White House said that J.D. Vance, along with Steve Witkoff and Jared Kushner, are going to be heading to the region U.S. time Monday night. So we'll see what happens with that over the next 12 or 15 hours or so if they actually head over to Pakistan for talks, whatever that might be, whoever that might be with. But Trump has really continued to have this sort of, dovish but also hawkish, sort of mixed messaging. He says, on one hand, that he sees a deal with Iran as being close at hand, something that can come together quickly, but also we've seen him over the weekend return to these threats that if Iran does not make a deal, he will target power plants and bridges and all sorts of civilian infrastructure within the country. We've seen him, several times now come to the brink there and then pull back from those threats just ahead of a deadline. So that is the thing to watch as we head into the ceasefire expiring Tuesday night, Wednesday morning. Does Trump keep that hard line, or does he maintain those threats this time and actually unleash more military power? We heard from Pete Hegseth last week that the U.S. Military forces continue to amass in the region. Hegseth even used words like locked and loaded. So there's still an appetite from the U.S. side about using more military force. We'll see what sort of state of mind Trump is in as we head into the next 36, 48 hours.
So that's the diplomatic side of things, the game theory that's going on there. Ziad, let me come to you because we're seeing real economic consequences, and particularly for Gulf countries. What's the latest from the United Arab Emirates in terms of what it might need in the future?
Well, I think if you think about the regional economic impact, I think there are 8 countries that ring the Strait of Hormuz. 2 of them, as of March, we're exporting oil uninterrupted, Iran and Oman, and obviously that could change with the US blockade. 2 of them, the UAE and Saudi Arabia, were exporting only a fraction of the volume before compared to the pre-war level, but with higher oil prices, they're probably breaking even in terms of the revenue. 2 countries, Kuwait and Qatar, their exports have gone to near zero, but they're quite rich, so they're unlikely to get into a crisis after 1 or 2 or even many months of interruptions. 2 countries have their exports interrupted significantly, and they need the money desperately, and if they don't, they might get into crisis, and these are Bahrain and Iraq. So that's the state of the economies in the region around the Strait of Hormuz.
Now, the Wall Street Journal is reporting that the UAE has actually approached the US to discuss a potential currency swap line. What does that mean exactly, Ziad?
My interpretation of this is that this is probably a call for confidence rather than a call for help. Let's remember that the UAE is an incredibly wealthy country, both regionally and globally. It has multiple sovereign wealth funds that are loaded with foreign assets. It has central bank reserves that are near $300 billion. So it's a rich country to begin with. We talk about the war, and yes, it has affected the UAE militarily and economically, but exports have continued. And the volumes have gone down, but prices have gone up, so that offsets a lot of their losses. And third, let's remember that 2 weeks ago, the UAE stepped in to help another country in the region, that is Bahrain. It signed its own currency swap with Bahrain. Now, if a country is in trouble and running short on dollars, I don't think it would have stepped in to help another country only 2 weeks ago. So my interpretation of this is a call for confidence. The UAE wants to join the list of elite central banks around the world that have a currency swap agreement with the Federal Reserve rather than a call for help because it's running out of dollars.
Important context there, Ziad. Thank you so much. That is Ziad Daoud, and thanks to our team for the coverage, Jumana Bersechi in Dubai and Laura Davison in Hong Kong. Now to other top stories trending on the terminal this morning. UniCredit CEO Andrea Orcel criticizing Commerzbank's strategy as he steps up his bid to acquire the German bank. In a recent presentation, UniCredit said Commerzbank has, quote, structural weaknesses that are masked by financial tailwinds. Orcel's presentation comes just weeks before UniCredit's takeover offer is submitted to Commerzbank shareholders. Revolut CEO Nick Storonsky told Bloomberg's David Rubenstein that he plans to take the company public. He spoke in an upcoming episode of the David Rubenstein Show, Peer-to-Peer Conversations.
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is. So we're a bank, and then for the bank, it's super important to have trust. And then public companies are trusted more compared to private companies.
And you can catch the rest of that interview this Wednesday, that is April 22nd. Germany's sovereign wealth fund is dropping restrictions on investing in weapons manufacturers. The fund will be free to buy stocks and bonds issued by defense firms due to increased tensions in geopolitics and a boost in German defense spending. Allocations to companies that make controversial weapons will remain off limits. Coming up, we'll take a closer look at oil as prices spike once again on renewed geopolitical conflicts. This is Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
I don't know, that could happen later this year. That might not happen until next year. But prices have likely peaked, and they'll start going down. Certainly with a resolution of this conflict, you'll see prices go down. Prices across the board on energy prices will go down.
That was U.S. Energy Secretary Chris Wright speaking to CNN before renewed war tensions. Oil prices now gaining as President Trump announced the seizure of an Iranian-flagged ship in the Gulf of Oman. Retail gas prices hovering just above $4 now. Bloomberg's Will Kennedy joins us. Will, this idea that we've seen the peak, how can the Energy Secretary be so sure if we don't start getting, oil through the Strait of Hormuz, there's no declining in these pump prices anytime soon, is there?
That may be true, Vonnie, although in the US, prices of crude oil have not risen as fast as they have in other parts of the world. It's interesting, the price action this morning, actually. Clearly, we saw prices plunge on Friday when there was optimism about the Straits opening, and we had both Iran and President Trump saying the Straits were open. We have rallied this morning on the chaotic events in Hormuz over the weekend, but not that much, I think just over 5%. And I think that tells you, on balance, traders are still thinking that this is headed towards some kind of resolution sooner or later that allows cargoes to start leaving the Persian Gulf and for markets to begin to return to some kind of normality.
Yeah, how, though, does it end, Will? I mean, Iran did say that the Strait was open, but it sort of had a caveat in there that it was open to sort of Iran-friendly ships, right? It wasn't just for everybody, and also the fact that the US is blockading, quote unquote, now means that it's a sort of a standoff. So how do you see this resolving such that prices do actually go down at some point?
Well, that's a political question, Vonnie. As you say, what appears to have happened on Friday is that the Iranians said the Strait is open, and then Trump said, but our blockade remains in place, and perhaps reasonably the Iranians said, okay, well, you can't have it half open, so they decided to stop ships again. But we do expect perhaps more political talks. There's talks of meetings at a high level in Islamabad tomorrow, though it's not clear whether Iran will participate in that. But ultimately, this is a political question and relies on some kind of at least medium-term resolution between the US and Iran about the range of issues confronting the two countries. And when that happens, then the Strait will open and things will start to get back to normal. I think that traders' expectations are based on the fact that clearly Trump for some time has been looking for a resolution to this conflict and is very keen to get things back to normal. He's got an eye on the gasoline price, which you mentioned earlier, and I think that informs base case scenarios for people trying to understand and trade this oil market.
Yeah, absolutely. Will, we saw something like 17 ships that we know of, at least, transit the Strait over the weekend when it seemed like things were a little bit more all clear. How long and how many ships would we have to start seeing on a daily basis get through the Strait before we can start to clear some of this backlog?
Well, it depends on which ships. Clearly, the ones that matter to the markets are the ones that are laden with crude oil and oil products, and we need to see those move meaningfully. One VLCC, very large crude carrier, can carry 2 million barrels of oil. So, 5 of those a day, that's 10 million barrels a day. That's, equivalent to everything that's been knocked out. So it doesn't actually require a huge number of ships as long as it's the right ships. But to give you some context, in normal times, more than 100 ships of different types carrying oil, gas, fertilizer, containers, whatever it may be, are passing through the strait. So even when we've seen those trickles that you mentioned go through, we're still a very long way off normal service being resumed. But just get that oil through, and that will make a big, big difference.
Yeah, absolutely. All right, well, we'll see if those talks start to take place again this week. Will Kennedy, thank you so much. Coming up, UK Prime Minister Keir Starmer facing a showdown over the appointment of Peter Mandelson. That and a look at what else is making headlines in your front page news. That's next. This is Bloomberg.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the New York Times reporting Hamas officials say the group is ready to hand over some weapons, including automatic rifles, that belong to its police force. The Times says the step would be a remarkable concession, but one that falls well short of Israeli-US demands, which include full disarmament and demilitarization of Gaza. Next up, the Wall Street Journal is reporting ExxonMobil, Chevron, and other energy companies are speeding up their searches for new oil and gas prospects far away from the Middle East. Exxon has outlined a potential plan to pump up to $24 billion worth into Nigeria's deepwater oil fields. BP bought stakes in oil blocks off Namibia's coast, and Total has exploration deals with Turkey. And finally, on the Financial Times' front page, UK Prime Minister Keir Starmer is once again battling for his Downing Street future. Starmer is scheduled to speak before the House of Commons in a few hours. Bloomberg opinion columnist Rosa Prince joins us now from London with more on this particular story. So, Rosa, he has survived plenty of attempts to oust him. Will Keir Starmer be forced out this time?
You know, it's a little bit of a Groundhog Day here in London because, as you say, Keir Starmer keeps coming under threat. His own party is quite unhappy with him, mainly because he is so unpopular. The opinion polls show that he really isn't chiming with the public. But the issue, again, comes back to the same old problem, which is that there's no clear replacement for Starmer. There's no one figure in the Labour Party who his own MPs, who are the people who would anoint that successor, can agree on. So, yes, he's under more and more pressure. No, I don't think he's going to be going anywhere soon.
So what happens over the next couple of days in the Parliament, and what proceedings should we be watching out for, Rosa?
So this is yet again the long tail of the Jeffrey Epstein scandal. If you remember, Keir Starmer was very heavily criticised for appointing Peter Mandelson, Epstein's friend, to be UK ambassador to the US. He did this even though it was pretty well known about their friendship, and Mandelson had some other questionable aspects of his background. He'd been had to resign from the cabinet twice before. He had some business dealings with Russia and China that sort of raised some red flags. The latest kind of iteration of the scandal is it emerged last week that Mandelson had actually failed his vetting by the security services, who recommended that he not be sent to the US. Despite that, the Foreign Office cleared him to go ahead anyway. That's brought up a bit of a row between the politicians on one side and the civil service, the officials, on the other side. Keir Starmer is blaming the Foreign Office top official, Ollie Robbins, who he said should have told him about this. Ollie Robbins is saying, you know what, this was the process. I knew that you wanted Mandelson into the job, so I made that happen. Keir Starmer will be in the House of Commons this afternoon to explain his side of the story, and Ollie Robbins is due to go before a powerful committee of MPs, of legislators, tomorrow morning. So we've really got kind of 24 hours, 48 hours of high drama in Westminster to come.
Yeah, now, Rosa, markets probably looking through this for right now, at least. I mean, gilt yields definitely higher by 3 basis points across the board, but we're seeing that across Europe and frankly, the world, and that's more an Iran story. At what point would markets start to maybe be concerned, if that's the right word, that Keir Starmer would be on his way out?
You know, I think the markets do get a little jumpy when Keir Starmer's under threat, when it appears serious. As I've said, for all the same old reasons, Labour MPs don't seem ready to really kind of push the trigger on him. In the past, when it's looked like maybe they would be prepared to do that, then there have been some wobbles. I think there are concerns about who could follow him. Perhaps it would be someone a little more left-wing. Perhaps it would be someone not so dedicated to those fiscal rules of kind of keeping everything in square and not increasing borrowing. If someone like that looked like being a viable challenger to Keir Starmer, then I think you might see some upset. So far, that doesn't seem to be happening. Again, this might change. In a couple of weeks, we have midterm elections here where the Labour Party looks to be in trouble. If that kind of motivates Labour MPs to finally get rid of Keir Starmer, there could be some volatility.
Rosa Prince of Bloomberg Opinion, thank you so much. Do stay tuned. We're going to be speaking with Amy Wu Silverman next.
some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, you know, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content, and never the two shall meet. But there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. You know, stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Tensions rising again. The U.S. Navy seizing an Iranian-flagged cargo ship as the Strait of Hormuz remains shut. Oil spikes back up, stock futures dip as the uncertainty around peace talks between Washington and Tehran grows. All this following a record high close for U.S. stocks. $10 trillion in market cap set to report earnings this week. So let's take a look at those markets then, with Brent crude below $95 a barrel now, but still up 5%. WTI up almost 6%, but again, it is below $90 a barrel. So we're well off the elevation that we had been seeing, but nonetheless, we're directionally higher today. Yields are actually pretty calm. We're seeing that two-year yield even lower than earlier now. It's still up just under 2 basis points, but we're trading at 372.68 in a week where we're also going to be seeing a confirmation hearing for Kevin Warsh, potentially to the Fed chair position. If we look at futures, they are lower, but we're off our lows of the morning, and we're not pointing to a massive decline at the open. We are pointing to just a little bit of the froth coming off 12 days of gains for the NASDAQ 100. Of course, software stocks were up 14% just last week alone. And then some money going into the US dollar at the expense of other currencies. Interestingly, though, if you look at Bitcoin, it has turned around. It's back up again today. So there's a little bit of a mixture, it feels like, in market sentiment. Volume has been pretty low every day this month as well. Let's get to some individual movers, though. For that, we go to London and Chloe Malley. Chloe.
Good morning, Bonnie. Oil majors are doing pretty well in the green this morning after, of course, there's renewed tensions between the U.S. and Iran over the weekend, which have led oil prices to jump. So now the focus is really going to be on whether both sides can come to the negotiating table and agree to an extension of this ceasefire. And so oil prices jumping is quite good for those companies. But then for travel stocks, it is perhaps not so good. So we are seeing airlines and cruise lines move lower this morning on the back of that. Of course, they are facing higher fuel costs, but also the prospect of fuel shortages just as they come into a very busy and usually very lucrative summer travel season. And finally, psychedelic stocks are moving higher this morning after Trump signed an executive order to facilitate the access and the research around psychedelic drugs that are used to treat things like PTSD. And so we are seeing the sector rally on the back of this executive order this morning.
All right, Chloe, thank you so much. That is Chloe Malley in London. The VIX might be far off its highs, but long-term volatility remains elevated, with doubt persisting on peace talks and a looming ceasefire deadline. Joining us now is Amy Wu-Silverman, Head of Derivative Strategy at RBC Capital Markets. So, Amy, we're spiking again today on the VIX, but we're still well below 20. I mean, what is the VIX telling us these days? Is it a helpful signal of anything?
it still is, but obviously, given that we have these kind of weird dynamics, Vonnie, so for instance, we can actually get VIX going up when the stock market actually goes up. We call it spot up volatility up because sometimes you also get the right tail chase. I think investors have to keep things like that in mind. Look, when you psychologically get below that 20 handle, my joke is hedge when you can, not when you have to. If you have persistent worries, which I think many investors do, a lot of hedges just went on sale this past week.
What kind of hedges, Amy, if anyone hasn't been keeping track?
So prior to, I would say, the ceasefire talks, there was a lot of demand for downside hedges. They could be VIX calls, VIX call spreads. They could be call spreads and energy, so essentially playing for higher energy prices, or they can be something more straightforward, like puts on the S&P. Obviously, given the market sensitivity, we saw a lot of tactical hedging, so meaning people would place these hedges, but the minute we actually got the downdraft, they would remove them because investors have very short-term memory. You know, thinking about April 2nd of last year when there was a lot of whiplash, we indeed got that whiplash again. I would give investors institutionally the win this time because they were more well-positioned both for that downdraft as well as for the rip back up. Now we're getting a sale, of course, on the downside because volatility prices have come in. So if there are continued worries from institutional investors, it is a good time to place on those downside protection trades again.
Amy, you just mentioned something there that reminded me of a more recent experience. You said that investors were hedging for the right tail risk. Is FOMO back? I mean, are people very, very worried that they're going to miss out on another rip in this market?
Yeah, I think to some degree we've seen a lot of that play out. You know, someone asked me last year, last week, not last year, but wow, boy, does it feel like last year. You know, what happens if we do get that rip up, that up crash? And a lot of what we see is a chase to call options. So that's why sometimes you can actually get the volatility for the VIX rising at the same time the index price is rising because they're chasing that right tail, and the VIX is essentially agnostic to if the implied volatility is rising either from the calls or the puts. Now, one thing we're seeing, Vonnie, is that we haven't gotten to the part where there's skew inversion. And all I mean by that is that call option prices are actively on an absolute basis higher than put option prices. We haven't seen that the same way that we've seen in sort of the meme frenzy or some of the other crazes. But it's certainly something that we're watching for that could occur, particularly as we head to earnings season and things get a little bit more idiosyncratic.
Amy, is there a difference in who's protecting, you know, against the downside and who's protecting against any potential upside? Is it different clients, different parts of the market?
That's a really great question, and I think that's really important to think about right now because last year when you looked at who was doing what, it was much more the institutional investors, so your hedge funds, your asset managers, your pensions, being the one to do downside, while retail was the one who was buying the upside. What's been interesting is this round, this year, it has changed. So you actually saw more selling on the retail side and institutional investors placing that up crash. Again, I think short-term memory is very strong. People remembering what happened with the tariff whiplash. They don't want to be caught off sides. And then when you finally got the full momentum of the rally, last week, you did see other types of positioning, for instance, like CTAs or some investors who are more systematic also coming in when certain criteria are met in the market, both from the stock market side as well as from options.
It does happen to be the second busiest week of earnings season coming up, right? How much does that impact how people hedge, you know, and might this all change? Might positioning change completely in a week from now when we know a lot more?
It certainly could. That's what keeps options fun. I would say that, you know, things are about to get a lot more idiosyncratic. You're going to go see that dispersion again. You know, the paddling deck we keep talking about, Vonnie, from single stock volatility and index volatility probably start to spread. The other thing I would be watching for is there's been a big divergence in the volatility between Qs, the NASDAQ and tech-heavy names versus the S&P. A lot of that has to do with, you know, the potential fast-track IPO process of something like SpaceX, but also basically from a reversion of investors to Mag 7 trade. So that was to some degree left for the dead. Obviously, they're going to be much more in focus. AI is going to be in focus so long as Iran doesn't take all the air out of the room with headline risk.
Amy, when you look at the VIX curve, where is it most interesting right now? How far out are people looking in terms of at least the war and inflation concerns, elevated energy prices, and so on?
Yeah, another great question. So, what I would say is prior to that kind of big rally that we saw this past week, term structure was fairly steep and obviously just on an absolute basis a lot higher. It kind of indicated to you that while the near term was probably okay, people were still more worried about the longer tenor. So maybe 3 months out, 6 months out, as we get into the next slew of earnings, what that would say for the bleed in inflation, and then obviously midterms after that. What I would say now is, we've gotten this big digestion period where term structure has flattened to some degree because everything's come in. And I think that'll start to rejigger itself as we get into earnings and you start to get these single stock hits that have a lot of implication when management teams actually talk about if they are seeing any impact to the consumer from the energy shock that we've just had.
All right, Amy, it's always a fascinating conversation. Thank you so much for guiding us. Amy Wu-Silverman of RBC Capital Markets. Now to other top stories trending on the terminal this morning. UniCredit CEO Andrea Orcel criticizes Commerzbank's strategy as he steps up his bid to acquire the German bank. In a recent presentation, UniCredit said Commerzbank has structural weaknesses that are, quote, masked by financial tailwinds. Orcel's presentation comes just weeks before UniCredit's takeover offer is submitted to Commerzbank shareholders. QXO buying insulation company Top Build for about $17 billion. The deal would make QXO the second largest publicly traded building products distributor in North America. The transaction is expected to close in the third quarter of 2026. Former Bulgarian President Rumen Radev scored Bulgaria's most overwhelming election victory this century. Radev opposes sanctions on Russia and providing military aid for Ukraine.
Europe has fallen a victim to its own ambition to be a moral leader in a world without rules. So what Europe needs right now is, again, critical thinking, pragmatic actions, and good results, especially building a new security architecture.
All right, let's take a look at those markets then as we head into another Monday, another trading week. Oil up 5% for Brent and 5.6% for WTI, still below $90 a barrel, though we do have pump prices now at $4 a gallon plus. Gold down about 0.8%, still around the $4,800 mark. We are seeing Bitcoin rise today. Interestingly, it's kind of going in opposition to the trade that had been on previously. VIX up to 19.57, and we are seeing the dollar index rise as well, to the detriment of a currency like the yen, for example, which is trading at 158.95, the Canadian dollar at 136.92. Coming up, the ceasefire clock ticking as renewed tensions jeopardize the peace talks supposed to be set between the US and Iran. More on that next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
I assume that the Iranians will interpret the vice president not coming as a downgrading of this next round of talks, which could be the last round of talks for any time soon. And so they may pull back on their delegation, which I think it's going to be hard to get a deal done, at least a deal in principle, for that reason.
Prospects for those talks looking a little murky. The Iranian Foreign Ministry saying earlier this morning, quote, "We have no plans for the next round of negotiations and no decision has been made in this regard." This all coming after U.S. Navy attacked and seized an Iranian-flagged ship in the Gulf of Oman. Bloomberg's Kasia Klimashinska joins us now from Washington. Kasia, what do we know about what's actually being said behind the scenes? I mean, if peace talks are set, is it just the U.S. and Pakistan that are arranging this? Does Iran have any comment on the matter?
That's a very good question. We have less than 48 hours before this ceasefire, a very fragile ceasefire between the U.S. and Iran expires, and we don't even know whether there will be any talks. We think that the U.S. is still going. President Trump said that he is sending Steve Witkoff to Pakistan, but it's unclear whether Iran will send anyone. And anyway, there really isn't any area of agreement. The main area of disagreement is the Strait of Hormuz, where the U.S. enforced its blockade yesterday. As you mentioned, the U.S. seized an Iranian cargo tanker that didn't help. The U.S. is now in control of that tanker, and Iran is saying, well, if we cannot go through the strait, then nobody will be able to. So that's the major area of disagreement, which is pushing oil prices up this morning. But there are also other areas, such as, for example, the nuclear enrichment. President Trump said that Iran won't have any, and Iran didn't confirm that that's the case.
Yeah, and then you do see these little sort of escalations potentially to de-escalate, but at the same time, all of these moves, such as the U.S. seizing that Iranian-flagged tanker, I mean, they're very provocative, Kasia. Is the U.S. prepared to actually start some kind of kinetic warfare again?
That's a good question. I think we all want the answer to this, and President Trump has been kind of zigzagging on this. So on one hand, over the weekend, he reiterated his biggest threats against Iran, saying that if the country doesn't come to the table, then its power plants and its bridges will be destroyed. So that's a major attack, a major escalation on Iran's infrastructure if nothing happens before tomorrow. But on the other hand, even Trump has been saying that the situation looks good, that he is hopeful that this conflict will end soon. So I think the next 48 hours will be critical, and President Trump has a lot of meetings today. None of them are open to press yet, but I'm pretty sure we'll hear perhaps through additional Truth Socials.
Yeah, absolutely. Now, talk to us a little bit about the Gulf states, because the Wall Street Journal is reporting today that the United Arab Emirates has asked the U.S. about a financial lifeline, essentially. Not that it's in trouble now, but it's just sort of querying what might happen if it were to need a lifeline, right?
This is a very interesting report because it shows how the impact of this war is escalating beyond just, oil, gasoline, and jet fuel prices. This is one of the major players there in the Middle East starting to talk to the U.S. about a potential help. As you mentioned, the Wall Street Journal reported those conversations. They are very preliminary, and they happened here in Washington, D.C. last week just because everyone was here, every major finance minister and the head of a central bank for the IMF World Bank talks last week. So that's perhaps why the Emiratis took this situation and asked, hey, if we have any issues, if we run out of dollars, for example, would you be able to issue a swap lane, a currency swap lane, for example? So those are just early talks, just an idea, but it shows you the additional areas of concern for the players involved in this war.
Yeah, now, speaking of Washington, D.C., Kasia, we have a big hearing this week. What should we anticipate tomorrow out of D.C.?
Tomorrow, there will be the first hearing for President Trump's Fed chair nominee, Kevin Warsh. He will be before a Senate banking panel, and this will be the first time that we'll hear from him about what he thinks the central bank should do, given this uncertainty around gasoline prices and the broader economic situation. Both Republicans and Democrats on the panel said that they also want to discuss the independence of the central bank, with Democrats, of course, expressing their opposition to this candidate altogether. And it's not only the Democrats, there's also one Republican who thinks the process should not go through. This candidate should not be confirmed as long as there is an investigation, a criminal investigation that the Trump administration has against the current Fed chair and the cost of renovation of the Fed buildings.
Yeah, we're setting up for a big Tuesday. Kasia, thank you so much. Kasia Klimashinska in Washington, D.C. Let's get back to the Strait of Hormuz traffic. Practically a standstill with the latest tensions boosting oil prices. Now, Bloomberg's Julian Lee joins us. Julian, a few tankers got through at the weekend, I guess. It was a bright spot. Some tankers made a break for it. Can you bring us up to date with who's actually getting through and what the situation is?
Yes, hi, Bonnie. Very little is getting through. The US Navy has effectively stopped all Iranian-linked traffic through Hormuz, and Iran has effectively stopped almost everything else. So there's really almost nothing moving. We saw one supertanker of crude that actually made it through over the weekend. That's heading east with about 2 million barrels of oil. But that's really the only big oil tanker that's made it through now for probably coming up to at least a week. So we are still left with what Saudi Arabia can pump across to the Red Sea and export from there, and what the Emirates is able to pump to Fujairah and export from there. And other than that, almost everything that we would normally expect to come out of the Middle East is still bottled up.
Julian, with Brent at around $95 a barrel, is this a market that's pricing in, no traffic through the Strait of Hormuz for some time, and this is what price would be if that were to be the case? Or is this a market that's pricing in some kind of a resolution or a trickling starting back up soon?
I think it's a market at the moment that is hoping that there's going to be discussions on ending this and on opening up Hormuz. I think if the market were really looking at Hormuz staying as it is now, so effectively shut to everybody for weeks to come, then I think it will face continuing upward pressure. I mean, we saw prices significantly above $100 a barrel in the last couple of weeks. And I think if the market starts to believe that nothing will change, then we may well see oil moving in that direction again.
Julian, this seizing of the Iranian-flagged cargo ship, need to respond, or can they sort of let this pass?
I think that's a question for the Iranian regime and perhaps for the Republican Guard. I think that they will seek to do something, or they will claim that something is in retaliation for this. I doubt that they will let it pass with no response. I think that the problem that is faced at the moment is that the Iranians were expecting that if they opened up Hormuz, then the US would do the same. They feel that they haven't done so. And so that, I think, has given more leverage for those within Iran who don't want to see any kind of a peace deal, any kind of an agreement that would force them to give up their ambitions or their control of Hormuz. And I think that's part of the problem that we have at the moment, that there are perhaps competing views in Tehran, and those who don't want a solution may have the upper hand at the moment.
Julian, thank you so much. Julian Lee with all that context there for us. We appreciate it. Coming up, $10 trillion in market capitalization set to report earnings this week. We'll get you set up for your trading week next. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Now look at what's ahead this week. The Iran ceasefire agreement expires overnight on Tuesday. Plus, President Trump's Fed chair nominee, Kevin Warsh, heads to Capitol Hill for his confirmation hearing, also Tuesday. And then we get earnings from Tesla and Boeing on Wednesday and Intel on Thursday. A massive week for earnings. Let's take a look at how we're shaping up into the U.S. market session. We have crude oil higher, both Brent and WTI, up 5% plus apiece. Trading, though, below $90 a barrel still for WTI. That doesn't mean that the pump price is lower. It's still around $4 a gallon. Gold down about 0.8%, but we do have futures a little bit lower. Bitcoin as well is also rising today, so it's a little bit of an unusual market. That is it, though, for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The market wants to be positive.
This is a market that is ready to rip.
We are long the equity market. I'm comfortable with the way the market's behaving.
Heightened geopolitical risk, but also bullish markets. That is the prevailing mood right now.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, following a weekend of confusion, the US and Iran deadlocked, heading into this week's ceasefire deadline. Renewed tension through the Strait of Hormuz, sending oil prices higher and tapping the brakes on a stunning, record-breaking stock market run. Futures inching lower this morning.
Inching, the key word, and I think that that's a really important distinction, the idea that you see a 0.4% decline in futures after the best weekly gain on the S&P 500 going back to May of 2025. A question of just how much bad news this market is willing to shrug off. Yes, you're seeing a little bit of a retracement of what we saw on Friday, but in general, you are just so not seeing a significant response from bonds and from equities.
We do see the market moving on Friday. It was whipsaw, but the facts on the ground still this morning have not changed, and I would argue actually the tensions have gotten worse this weekend. We had the United States Navy fire upon and board an Iranian-flagged vessel. That have not happened since the start of this blockade. The IRGC says they're not allowing any vessels through, and then the ceasefire is going to end in 2 days. And at this moment, there's no confirmation, and I spoke to a Pakistani official earlier this morning, no confirmation just yet that the Iranians are showing up to Islamabad.
So let's talk about that deadline. That deadline is later on this week. What's more likely, an extension of the ceasefire or a resumption of hostilities? This market is leaning towards the former and not the latter.
They just expect there to be a resumption of hostilities. There still is a bit better than 60% chance, based into prediction markets, that this will all be tied up and you'll have an open Strait of Hormuz by the end of May, even though we are getting closer to a hot war. There was a great GIF online where it was saying, you know, open, closed, with the Strait of Hormuz, and that's kind of how it feels, and the market is just tuning it out.
The market's just not pricing an extended shock. Deutsche Bank put out a brilliant piece on that earlier on this morning. This market, the equity market, is anchored to the outlook for earnings from a handful of the biggest companies on the planet, and that's really driven this relief rally over the last several weeks.
Especially technology stocks, and suddenly people are coming around to feel like, oh my goodness, things look cheap now, given the fact that there was a 13-day retracement, so we can pile back in, given all of the investment that keeps on coming. It's not just the big tech names, though. We've seen better earnings from banks. We've heard better earnings from even consumer discretionary. So at what point does that get torpedoed by some of what we see? And right now, people are saying it's a pretty high bar. 3
weeks of 3% plus gains in this equity market. Futures this morning down just 0.4%. 0.5%. Coming up this hour, we'll catch up with Cameron Dawson of New Edge Wealth with stocks pulling back from all-time highs. Norman Rule of CSIS as the US seizes an Iranian ship. And Francisco Blanche of Bank of America on why oil prices are priced to perfection. We begin this hour with our top story. A weekend of tension in the Middle East casting down on planned peace talks. Our team coverage starts right now with Bloomberg's Tyler Kendall in Washington and Jumana Pasecci over in Dubai. Jumana, let's start with you. Just what broke down over the weekend?
Oh, a lot went down, John. I would say from a lot of optimism on Friday that perhaps we were nearing the end of this war and a potential breakthrough on the Strait of Hormuz, a full reopening of the Strait of Hormuz, things have significantly deteriorated, and not least because the IRGC are claiming so long as the U.S. naval blockade is in place, they will continue to effectively monitor and control who has right of passage through the Strait of Hormuz. Saturday morning, there was reported gunfire, gunshots being directed at some vessels that attempted to pass through. Other vessels decided to make the U-turn, not make or risk going through the strait. And then, of course, this morning, CENTCOM announcing that they had seized an Iranian-linked vessel after giving them 6 hours warning, a notice to turn around, which they didn't listen to. So when it comes to the strait, I think it's fair to say that not only is it still effectively shut, but it is still very dangerous for vessels looking to cross. And why is this relevant? Because we have a clock ticking. There is a countdown to the end of the ceasefire. It expires on Tuesday evening, which is Wednesday over here in the region. And you will recall that one of the terms of the ceasefire was a free and unconditional opening of the strait. That has not happened. And so far, the Iranian side are not committing to attend these Islamabad negotiations. We know that the U.S. are planning on sending a delegation. And even though there are murmurs coming through from state TV over the weekend that there had been some progress of sorts throughout the course of the negotiations over the last couple of weeks, there still remains a lot of differences between the two sides. And then they've also contested, on their part, that many of the assertions that President Trump put forward over the weekend, including that they had agreed to a suspension of their nuclear program and a complete abandonment of enrichment, they have said are not terms that they have agreed to. So when it comes to the strait, when it comes to nuclear ambitions, when it comes to the matter of proxies in the region, then finally that question of lifting sanctions and unfreezing assets, there's still a lot of question marks. But at this point, we just don't know if the Iranians are going to attend those Islamabad talks that are set to start tomorrow.
Tyler, let's build on that. It's critical. What are the prospects for a diplomatic breakthrough ahead of that ceasefire deadline?
Well, John, the White House maintains that diplomacy is still a viable option at this point. White House telling us that we are expecting Vice President J.D. Vance alongside Special Envoy Steve Witkoff and the president's son-in-law Jared Kushner to depart for Islamabad later tonight. But as Jumana just outlined, Iran at this point is wavering on whether or not it will send diplomats to another round of these peace talks. And the escalation this weekend is only further threatening to derail the process. But still, after everything we saw from the seizure of the tanker to Iran reimposing those restrictions in the Strait of Hormuz, President Trump still took to Truth Social and posted that he thinks that there is a path forward for progress. But he also reiterated importantly that the U.S. stands ready to target Iranian civilian infrastructure if a deal is not reached by tomorrow's deadline. We also heard from the Energy Secretary Christopher Wright, who reiterated that same message. But in an interview, John, over the weekend, he said that he does think that it is potential that we could see a breakthrough for a deal within the next few weeks. In his words, at this point, we're going to have to wait to see where this ultimately goes, because as we're discussing, we're also getting mixed signals from the other side. Iran's foreign minister at this point not committing to sending people, but we should point out on Iranian state TV, we heard from the country's president indicating that they also don't want to see a resumption to the fighting.
Bloomberg's Tyler Kendall alongside Jumana Pasecci. Tyler, Jumana, thank you. Let's build on this. The view on Wall Street looks like this. Cameron Dawson of New Edge Wealth writing, if you look through the narrative, the economic data, the breadth, there are plenty of things to like about this market. Cameron joins us now for more. Cameron, good morning.
Good morning.
That's a big question. What is there to like right now?
Yeah, I think it's two main things. One is leadership. There has been a very cyclical pro-risk on leadership that we've seen in this rally, which of course is encouraging things like equal weight discretionary versus staples outperforming, transports outperforming. You also like positioning, and we think that this has been the key reason why we've seen such a powerful rally. You went from being deeply underweight just a couple weeks ago to very rapidly back up to neutral, and that kind of buying power has really been the fuel for why we've seen markets move up so far so fast. I think some of that is now behind us, which means we're far more sensitive to incoming news, meaning we need good news in the Middle East in order for this to continue. But it certainly was a very powerful rally just because people got so very underweight back in the swoon in March.
It's hard to say we got good news over the weekend. No. We came into this week at all-time highs and a massive, powerful rally, and we're down just 0.4% on the S&P. What is the signal you take from the reaction this morning?
Yeah, it is very surprising that you're seeing such a muted reaction after you saw markets get so very overbought. So we think that there is still a lot of hope and optimism in this market, and based on the fact that you're still trading at 20 times forward earnings with 17% earnings growth priced in for this year. But I think it's important to note, so much of that earnings growth is coming from an incredibly small cohort of names. In the first quarter of this year, 50% of the earnings growth is coming from just two names, Micron and NVIDIA, which is absolutely incredible. And if you roll that forward to the entirety of 2026, an entire third of the earnings growth is coming from just those two names. So this is really a message about idiosyncratic growth coming from this market, not necessarily something that's much more broad-based.
And that's being reflected in the longest streak of gains for the NASDAQ going back to 1992. We're talking about 13 consecutive days. Do you think that that can last, given that a lot of the big tech names had not kept up even with this kind of trajectory for earnings growth?
So much of this rally lasting really depends on if valuations can get back up to their prior peaks. And I think you have to think about it in two major cohorts. The first one is the semiconductors. Semiconductors are very cyclical companies, meaning they trade with counter-cyclical multiples. You put the lowest multiple on the highest earnings. Earnings for the stocks are going to grow 100% this year. What's the right multiple to put on those earnings that are certainly going to slow in 2027? Then the question is with the Mag 7 names, which are such a large portion of the NASDAQ, you have there where you've seen a big deterioration in the free cash flow generation. Free cash flow for the last 2 years is down 30% for the Mag 7, while earnings are up 40%. So the question there is, are you really able to get back up to prior peak valuations for the Mag 7, given the fact that the quality of those earnings is so much worse than it was because of this CapEx?
It's refreshing to talk about this and not, what if it gets open? What if it gets closed? Which is essentially where people are at, and what does the central bank do? And ultimately, how much has the rally and the sort of relief that you've seen in markets get driven by the fact that central banks seem to have de-emphasized hiking in response to inflation coming from this conflict?
Falling bond market volatility is a really important driver of liquidity for markets. So the fact that you've seen the MOVE index come down as you've seen 10-year Treasury yields and 2-year Treasury yields moderate, given the fact that oil prices have moderated, have certainly been a boost for this market. I think at the end of the day, though, we are out of the era where we are getting good news cuts. We think that over the last 2 years, you've been in an environment where the Fed was able to cut rates because you were in a moderating inflation environment without having to see a concomitant deterioration in the employment side of things. But given the fact that inflation is likely to continue to run hotter than their target, it just suggests that the next rate cuts from the Fed likely have to come with sharper deterioration in the labor market, which just means that they're not as good news of cuts.
And what happens to consumer spending? Over the weekend, there was a poll, and about 2/3 of Americans are saying that higher gas prices have been a problem for them and their families. Does this mean there's going to be basically less spending for consumers have for discretionary goods?
If you look at the January and February real wage growth, it was nearly flat. And if you remove transportation payments, it was negative, which just suggests that there is absolutely zero room for consumers to be able to absorb higher prices. You also have a savings rate that's also very low, which just means that consumers are operating at a very razor-thin margin, so these higher oil prices are likely to weigh on spending. We get retail sales this week, and on the headline, they will look great because retail sales is a nominal number, but if you start stripping out autos and gas, it's likely for March that you're going to see more deterioration or much more of a slowdown simply because of that razor-thin margin that consumers have with both real wage growth as well as savings.
Cameron, it's always good to catch up. Thanks for being here. Cameron Dawson there of New Edge Wealth, looking ahead to retail sales a little bit later this week. Looking ahead to next week, we'll get some stunning earnings. Amazon, Microsoft, Meta, and Alphabet all coming up next Wednesday.
Key question for me, and I'm sure it's for you as well, a question here about just going forward, how much they're going to keep spending.
In just a moment, we'll have more on the war in the Middle East, and we'll get you up to speed on Norman Rule's latest views from CSIS, live from New York City. You're watching Bloomberg TV.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Let's just take a beat and check out this market. What a run we've seen over the last month or so. A 13-day stretch of gains on the NASDAQ 100, the longest since 2013. Your equity market this morning down just 0.4% on the S&P 500, on the NASDAQ down by 0.4%, on the Russell down by 0.8%. All three closing at all-time highs going into the weekend. And it's not just about semis anymore. Software having one of the best weeks we've seen in quite a while. Microsoft with the biggest weekly gain we've seen in some 10 years. For Microsoft, all of that into earnings for those big players a week away.
Yeah, and people have been saying, well, it's just that the likes of Microsoft have been so beaten up that their profits clearly outstrip people's expectations. Earnings are going to be really important because do we get a sense of how much they're willing to keep spending given the fact that you're getting investor pushback about some of the big CapEx plans? People are expecting an acceleration of spending into 2027. Can they do that if they aren't showing the same kind of earnings growth that they have in the past?
So the diplomatic effort on the brink of breaking down, and yet these are the moves. Equities down by just 0.4% on the S&P. In the commodity market, a rally of 4 to 5% on WTI and Brent. WTI at $88 a barrel, Brent crude at around $94.50. Under surveillance this morning, taking a stand against Iran.
We'll be talking about Iran later. We have very good conversations going on. It's working out very well. They got a little cute, as they have been doing for 47 years. Nobody ever took them on. We took them on. They wanted to close up the strait again, you know, as they've been doing for years. and they can't blackmail us. We're taking a tough stand. They've gotten away with murder for 47 years. They're not getting away with it anymore.
So here's the latest this morning. Tehran vowing to respond after the US seized an Iranian ship near the Strait of Hormuz. Norman Rule of CSIS writing neither side wants a full regional war this week, but neither is prepared to offer concessions that would allow the other to emerge as the clear victor in this struggle over the Strait. Norman joins us now for more. Norman, welcome to the program. That ceasefire deadline days away. In your opinion, and for you yourself right now, what are you focused on as we approach that deadline?
Well, although the Iranians have not yet confirmed that they will attend this evening, the fact that Vice President Vance and Jared Kushner and Steve Witkoff are still planning on attending indicates that the United States must have pretty good reason to believe that the talks will take place. That's no small thing. So the indications are that there will be talks. The United States must believe that the talks will be fruitful, or they would not have put in such a significant effort. This said, the last 72 hours have produced such a series of significant events in the region that it shows that the Strait of Hormuz itself will remain a focal point for not only the talks, but it is now part of the negotiations themselves. The Strait of Hormuz and actions there are pressure points for each side to use against the other.
Norm, is China putting pressure on Iran to open the Strait?
No country actually has a significant capability to influence Iran's decision-making. However, Iran does use China or Pakistan or sometimes Russia as a doorway to go into negotiations. For example, recall that China was a guarantor of the Saudi-Iran security agreement. That didn't work out very well, now did it? And China, in theory, could have pressured Iran to end this conflict some time ago. That hasn't happened. But in theory, China could be a doorway that Iran could use to enter into negotiations or shift its policies. And Iran might do that because it would see that as undercutting U.S. influence globally.
Norm, depending on what kind of Iran shows up to Tuesday, if they do show up to these talks, it's almost as if who's driving the narrative. You have the political figures like the foreign minister putting out tweets on Friday that he believes the Strait should be open, and then clearly a different posture from the IRGC. Who should we be paying attention to?
Well, let's take a look at that for a moment. Now, the foreign minister has no political base whatsoever. He is close to the Revolutionary Guard, and he would certainly not take any position to talks unless it had been approved by the Supreme Council for National Security, which is dominated by former Revolutionary Guard members and has always been taking positions that have been based on a consensus. So there is likely a situation where we've watched Iran undertake a situation over the weekend where they have, in essence, laid out a series of activities which have been meant to show they have a capability to open the strait if they wish. They can close it. They can use it as a pressure tool. But we shouldn't take Foreign Minister Arakchi as a power player in this world. Now, we should look at this Palibaf, who also is likely to show at the talk, as giving a speech this week in which he communicated to hardliners and the hardliner base saying, look, talks are just one more tool that we're using to push back as a deterrent against the West and the Americans. But he highlighted in the talks, we don't trust them, and we're doing this to obtain sanctions relief.
Norman, how can the U.S. negotiate with Iran if we don't have a sense of who holds the power in Iran?
I think we have a pretty good sense of who holds the power in Iran. It's a consensus view of hardliners who are generally sharing the same fabric of decision-making, and no one would show up to those talks unless they have a common position. But that doesn't mean the common position is going to be a position that is going to produce an agreement. Recall that when the talks took place with the original nuclear agreement in 2015, those talks also involved discussions in Tehran in which there were a variety of positions as hardliners and more pragmatic conservatives, as they were called, debated whether or not there should be an agreement. Indeed, that debate took place up until the very end of the talks, indeed into the last hours of the talks, as to whether or not that agreement was something that was in Iran's interest. So this is not something that is unusual in Iranian politics.
Norm, there's also a question, and Anne-Marie was alluding to this, about the power dynamics in the region. The U.S. has been hugely important in the region, has had a huge base there. I'm just wondering whether you see any of the influence shifting as Saudi Arabia has meetings and talks with Xi Jinping, when you see the UAE also following suit and talking about their relationship and considering maybe even tightening it going forward.
Well, the relationship with China has always been powerful on a commercial basis. We've seen China be the #1 trading partner with the region since about 2014. That's not going to change. However, we've also seen the United Arab Emirates and Saudi Arabia reinforce in recent weeks that their primary partner for strategic investments will remain the United States. And we've seen that this comes down to technology, this comes down to economic agreements. I think you should look at the Chinese commercial agreements with the United Arab Emirates and Saudi Arabia more as an example of these countries telling Iran, look, we have a better relationship with these countries and a more important relationship than you'll ever have. Don't think that we don't know it. And we're going to tell the world that this is the case as well.
Norm, then what do you make of the Wall Street Journal report about Emirati officials telling the United States that if the UAE runs short of dollars, they're going to look elsewhere, maybe to Beijing?
I'm sorry, could you repeat the question, please?
There was a Wall Street Journal report about how Emirati officials, when they were there for the IMF World Bank meetings, told the United States that they may need help in terms of a swap line. If they can't get U.S. dollars and they run low on U.S. dollars, they may look elsewhere for support, like to Beijing. What's your reaction to that?
Well, I'm not sure that's entirely the case. I think what we're looking at is that we're looking at stresses on the regional economy that go beyond the oil issue. We're looking at stresses that are becoming a financial stress as well. But we're seeing also that the United Arab Emirates has come to the United States. Its currency is pegged to the dollar. It's been a very stable currency for decades. And I think you're going to see that as a result of these talks that took place last week, this relationship becomes even tighter. And the United States will look to the United Arab Emirates to, in essence, maintain that relationship in a deeper fashion. But two things will come from this. I think you'll see the United States say to the Emirates, how do we build this relationship in terms of banking supervision regarding Iran? But at the same time, the Emirates will come to the United States and say, how soon are we going to end this conflict and open up the Strait of Hormuz? What does this mean? But I think you should look at the currency swap report in the Wall Street Journal as an indication that the United States and the region as a whole are going to stay close and are getting closer. My engagement with regional officials has reaffirmed this in recent weeks.
Hey, Norm, it's always good to get your reaction and your educated response on things. Thank you, sir. Norman Raw there of CSIS. I have to say, from my standpoint, seeing that report, it sounded less like a country in distress and more like a country offering a loyalty test to a key partner.
1,000%. This idea of saying, are you going to back us? Given the fact that reports have the UAE has plenty of cash. It's not as though they're actually running out of cash. Saying, are you willing to be our financial friend? And if you're not, we'll go to check to raise some renminbi. And that, I think, was sort of a warning shot at a time where they would like to see this end. And they would like to understand exactly how much leverage they have, given that their economy has arguably been affected the most.
If you are just joining us, welcome to the program. Headlines crossing the Bloomberg just moments ago that the Chinese leader held talks with the Saudi Crown Prince, according to a media report. The Chinese leader saying normal passage through the Strait of Hormuz should be maintained. China advocating for immediate comprehensive ceasefire, insisting on resolving disputes through diplomatic means. And we'll see if that diplomatic engagement continues going into that ceasefire deadline over the next few days. Coming up on the program, we'll catch up with Francisco Blanch of Bank of America on why oil markets are priced to perfection. Plus, Yahira drops by with your morning movers. Marvell shares rising on reports of a partnership with Google. That stock is up at a pre-market by 7.4%. From New York City this morning, good morning. You're watching Bloomberg TV.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Five-day winning streak on the S&P, 13-day winning stretch on the Nasdaq 100. Phenomenal. Equity futures down this morning by just 0.4% on the S&P. On the Nasdaq down by 0.4 also. On the S&P, this data from the team here at Bloomberg, more than half of the S&P 500's recent advance coming from just 7 companies: NVIDIA, Amazon, Microsoft, Broadcom, Alphabet, Meta, and Apple, taken together, adding roughly $4 trillion in market value in the matter of weeks.
So is concentration anxiety a good thing, a positive feature, or is it a bug? And ultimately, increasingly, people come on the show say it's a feature because these companies had gotten beaten up before and they're actually just having a recovery trade given their huge profitability. The earnings are going to be the tell, and you keep pointing to it. Next week, a key point when they come out and give a sense of what their cash flow is like ahead, as well as what their expenditure plans.
It's amazing how comfortable this market is with risk right now. Risk specifically coming out of the Middle East. Crude with a bounce, but not a material bounce. 4 to 5%, that's nothing, given the volatility we've seen over the last 2 months or so. Brent crude this morning at 94.51. WTI at 88.39, higher by a little more than 5%.
It's so amazing to see WTI crude below $90 a barrel right now. This is important for this administration. You can see how concerned consumers are when you look at some of the polling that's being done about the president, the handling of the war, and also their concern about inflation and gasoline prices. At the same time, when nothing is changing when it comes to the Strait of Hormuz, and I would really argue that this weekend, actually, we saw a lot more kinetic confrontation between Iranian vessels and the United States of America.
You know what's got a bit snoozy? The bond market, 2s, 10s, and 30s. Let's go with 10s. 10-year bond yields over the previous 3 weeks just edging lower. The 2-year just anchored around 370 to 380, which is basically where Fed funds is right now. This Fed won't be hiking anytime soon, not in a rush to cut either. And that seems to be the story going into the summer.
Yeah, Chris Waller, the Fed governor, on Friday put out a speech where he started to talk about how high the bar was for him to cut interest rates again, given the inflationary push from this recent oil price shock. To your point, not cutting rates, which perhaps is what's anchoring the 10-year Treasury yield. People aren't worried about runaway inflation. The credibility of the Fed right now, based on markets, appears to be intact.
The 10-year at 4.26. Let's get you some single names, some morning movers. With more, Yahira joins us now. Hey, Yahira.
Hi, John. That bounce in oil prices you were just discussing is lifting the U.S. energy sector, with names like Exxon up 1.4% as tensions with Iran escalate. The U.S. seizing that Iranian vessel over the weekend, and Iran threatening to retaliate are dashing hopes for peace talks as both sides seem at odds over those talks in Islamabad. And a clear casualty of this escalation are the travel stocks, the airline stocks, with names like United down 1.7% in the pre-market as jet fuel costs remain elevated. And this is an industry already in damage control mode. They've had to cut capacity and even entire routes. And the worry now is that this could drag on and hit demand. and profitability during the crucial summer travel season. And we end on shares of Marvell Technology. They are rising nearly 8% now in the pre-market on a report that it is teaming up with Google on new AI chips. This is really about Google challenging NVIDIA's dominance as Google doubles down on its own in-house chips and tries to reduce reliance on NVIDIA's GPUs. And Marvell, as a designer and producer of chips, could clearly benefit from that. John?
Yahara, thank you. Thanks for the update. More from Yahara later this hour. On our radar this morning, traffic through the Strait of Hormuz remaining at a standstill following the U.S. seizure of an Iranian cargo ship. The escalation casting doubt on whether the two nations will meet for peace talks tomorrow. Elsewhere, the president renewing the threats to attack civilian infrastructure in Iran. In a Truth Social post, the president vowing to, quote, knock out every single power plant and every single bridge if Tehran does not accept the U.S. deal. And finally, U.S. Energy Secretary Chris Wright saying gas prices may not dip below $3 until next year.
I don't know, that could happen later this year. That might not happen till next year. But prices have likely peaked, and they'll start going down. Certainly with a resolution of this conflict, you'll see prices go down. Prices across the board on energy prices will go down.
The national average for a gallon of gasoline remaining above $4, the highest price since August 22.
Yeah, and people point to the fact that Treasury Secretary Scott Bessent had said previously that the price of gasoline was likely to go down to that 3% level or even below by the summer. This is a political issue, and this is an issue of a calendar going into the midterm elections, and how much can this administration really fortify some of the support that they've seen in polls recently based on the ceasefire? Can they get oil prices down to 3%? We ask every single commodity strategist who comes on, and they just either say no comment or they just say no. And that ultimately is what a lot of people, at least in markets, seem to believe.
$3 a gallon is going to be really tough for this administration. It's not just what's going on in the Middle East and the Strait of Hormuz, but also it's peak driving season, where naturally and normally with the cyclical cycle of energy prices, you do see prices rise in the summer. So this is going to be a really hard time that they're trying to go to before the midterm elections. And once again, I mentioned this poll over the weekend, 2/3 of Americans are saying gasoline prices themselves are putting a lot of pressure on them and their families right now.
It's certainly a problem for confidence. Crude rising once again this morning, following a weekend of tension in the Middle East, culminating with the U.S. seizing an Iranian ship. Francisco Blanche of Bank of America writing the paper oil market is priced to perfection that ignores post-conflict energy economy realities. Francisco joins us now for more. Francisco, thanks for making time for us this morning. That line at the end there, the post-conflict energy economic realities, what are they that you don't think we quite appreciate?
Hey, John, great to see you again. Look, I think there is, number one, potentially a fair amount of refinery damage. Remember, about 1/3 of the traffic in oil markets through Hormuz is roughly petroleum products. So we're going to have a hard time restoring petroleum product flows, which means, you were talking about gasoline earlier. I do think that, gasoline is probably the least important product out of those being exported through Hormuz. Only 5% of seaborne gasoline globally flows through Hormuz, but there is other products like jet fuel or diesel, naphtha, that are much more reliant on that strait for supplies. Number two, there's also oil fields. There's many old oil fields in the Middle East that have had to be shut down in order to essentially contain the storage overflow, and that could be also a problem as we restart those. There's potentially pipeline damage, and then of course there is just unknotting the web of vessels which are tied up on both sides of the strait and need to be essentially reshuffled in a very meaningful way to restore flows. So I do think those are probably the biggest constraints on the oil side. And then on gas, there's a few others, as we know, because of the Iranian strike in Ras Laffan about 3 weeks ago.
Francisco, can we just sit on one product then, jet fuel? And can we talk about cushions that are available to some regions? How big is the cushion of available jet fuel in a place like Europe? I imagine it differs across from one country and one nation to the next. But in your opinion, for the region as a whole right now, how big is the cushion that they've got?
Well, we heard it from Fatih Birol last week. It was 6 weeks, so I guess now it's 5 weeks, which is why time is of the essence to restore flows and to restore refinery operations. across the entire Middle East, which frankly, I mean, counts on two countries, Iran and Saudi Arabia, have two of the largest global refining toolkits. So we need to see all those flows being restored. But yeah, I would say Europe probably about 5 weeks at this point. And John, we are already seeing cancellations of flights. It's relatively small at the moment, but it's going to start growing into the summer, because one of the challenges here is that we are going to peak demand season in the next 5 or 6 weeks. And once we get into June, it's going to be complicated. So it's not just about locking in your fare, locking in your flight, is that flight just might be canceled.
Francisco, is this just a European issue, or when you have certain regions that no longer have availability of jet fuel, does that torpedo a lot of international travel more broadly?
Well, it does, because remember, the only product globally that has the same specifications across the oil complex is actually jet fuel, for the obvious reasons that the Boeings and Airbuses that fly around the world have to be filled with the exact same specifications. So there is that challenge. You might be able to fly out of North America, which is sitting long product, generally on long crude oil, but can you get back? I don't know. And I think the other issue that's important to think about here, when it comes to the petroleum product complex, is that perhaps you were talking all about gasoline, but gasoline, there's some flexibility there. We could see more butane blending into summer gasoline, which would shave off some of the prices. You could see the relaxation of other fuel specifications into the summer. And then also, again, gasoline, it's a lot harder to make under summer spec, but then winter spec is generally easier to meet, and demand tends to be lower. So I am perhaps a little more bearish on gasoline relative to other products. Once we pass this summer, I do think it's easier to get gasoline lower relative to other petroleum products.
Francisco, a lot of people have commented that they take some comfort in the back end of the curve for oil prices. You do have this unprecedented backwardation, that the front end, that current price is incredibly high, and you see at the long end, or just in December, you see about $80 a barrel when you look at Brent crude. You think it's the opposite. You think that's a warning sign. Why?
Well, we do think that the conflict, first of all, is still far from over, as we've seen over the weekend. Only about 20 vessels passed through on Saturday, and you know, frankly, we need to see what the final negotiations yield. We know it took about 20 months to negotiate the JCPOA. This negotiations can be complex. And I realize that all parties want to get to a quick resolution here, but this takes time, and we need to see the flows occurring in the meantime. If they're not, the flows are not moving, that's a big problem for the market. But also importantly, we do think that, as I pointed out earlier, there's a lot of potential facilities that may not be able to come back in full force. Even if we get back to 85% in the next 2-3 months, we're still going to need another 6+ months to get to the last 10-15% of oil flowing through Hormuz. That's 2 to 3 million barrels a day that the market will be short into the end of the year. So, you know, while we are, you know, we're hoping that there's a resolution soon, we will still likely miss a fair amount of energy for the foreseeable future in global oil markets, and that will keep prices high into the year end, in our view.
Francisco, last week we saw the U.S. Treasury Department basically flip-flop. On Wednesday, the Treasury Secretary said he will not renew the general license on Russian crude, and then Friday, very late at night, they decided to extend that waiver. How much is that cushioning the market right now?
Well, there is definitely a little bit of cushion. I mean, the Russian crude and product markets are pretty large. Russia is the world's, depending on the day, second or third largest crude oil producer, and the second largest petroleum product exporter. So that is a fair amount of cushion. But then again, remember, there's been reports of strikes in different Russian ports, both in the Baltic as well as, more importantly, in the Black Sea. We've seen impacts on Tuapse and Novorossiysk, and so it's not easy for Russia to export oil either, because Obviously, we've seen news of Ukraine trying to attack those facilities. So, I mean, energy assets are just generally have become targets in military conflict, and that's one of the most difficult parts about forecasting where supply and demand are going to be, particularly supply, given that it's become very much right front and center of both policy action, to your point, on the U.S. Treasury decision, but also military action. And so I do think I mean, Russian flows are very important to keep the market in relative order. And that's why I think that decision was made at the end of last week.
Francisco, enjoyed the note. Thanks for carving out some time for us this morning. Appreciate it, sir. Francisco Blanch there of Bank of America. Some geopolitical gymnastics taking place in the Treasury over the past few weeks.
Yeah, within 48 hours. I mean, the Treasury Secretary had a press conference with Caroline Leavitt in the briefing room and said, we will not be extending these general license and these waivers. And then 48 hours later, they extended it. And Chris Wright, the Energy Secretary, was asked about this over the weekend, and he said there's just a groundswell of push from G20 countries, especially from Asia, that were like, we need your help. All this energy will already be going to China anyway. Please let it come to us.
Brent crude around 95 this morning. WTI in the high 80s, about 88.60. Let's give you an update on stories worldwide this morning with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. Chinese President Xi Jinping says normal passage through the Strait of Hormuz should be maintained. In a call with the Saudi Crown Prince, Xi also said Beijing is advocating for an immediate and comprehensive ceasefire between the U.S. and Iran. A bipartisan group of senators reportedly warned United Airlines and American Airlines that a merger could hurt travelers. The Wall Street Journal reporting the lawmakers raised concerns about higher airfares and fewer flights. American Airlines said last week it is not interested in a merger. And Meta is planning to lay off around 10% of its global workforce in late May. Reuters is reporting the company is also planning further cuts in the second half of the year. The move could help offset some of its massive spending, Meta's massive spending on AI infrastructure. That's your Bloomberg brief, John.
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, confirming Kevin Walsh.
I think it's time to move on from the case and put our attention around getting Kevin Walsh confirmed by the United States Senate. Let President Trump have a new partner at the Fed. It's time.
That hearing of the Senate just a day away. A preview with Claudia Sam of New Century Advisors. Up next from New York City, this is Bloomberg TV.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Over at HSBC just publishing a great piece about the pushback as an equity market bull that he's getting right now. I'm sure these questions are very familiar. This doesn't make sense. Risk assets are detached from reality. The worst is still to come. We've all heard that kind of pushback over the past few weeks. This is his pushback, the counter-argument to the pushback. This is what he got to say this morning. Financial conditions have eased significantly in the last 3 weeks. At least so far, oil futures prices haven't converged higher to Middle East grades and dated prices, but rather the opposite has taken place. High-frequency U.S. consumption and aggregate growth proxies have accelerated since March, not fallen. And most importantly, the S&P 500 is not heavy in consumer cyclicals anyway. That's the bull case this Monday morning.
Yes, Max Ketzner says that all of the pushback only makes him more bullish because when people say this time is different, he kind of laughs to himself thinking, oh yeah. He also points to the fact that the rate of change for news is generally positive and the actual technicals look pretty good. So in short, be quick. These are the dips you want to buy.
The resilience of this equity market is anchored by, right now, some of the themes that Max Kettner was going through. And it speaks to this move here. Got a breakdown of the weekend and the effort, the diplomatic effort between the US and Iran. And the drawdown you see in the equity market, I don't even think you can call it a drawdown. We're down by 0.5% on the S&P, on the Nasdaq down by 0.5. Also, a bit of weakness down the Russell. You anticipated that, I'm sure. In the commodity market, maybe we're looking for a bigger bounce in crude. 4 to 5%. Is that big? Probably not, given the moves we've seen recently. Brent crude at about 95. WTI around 89. Under surveillance this morning, a change of course. We're going to focus on the Federal Reserve, confirming Kevin Walsh.
It's time to move on from this. The petitions to the court have been rejected, and I think it's time to move on from the case and put our attention around getting Kevin Walsh confirmed by the United States Senate. Let President Trump have a new partner at the Fed. Let Treasury Secretary Bessent have a new partner in bank supervision and monetary policy. It's time, and I think it's important to move.
So here's the latest this morning. Kevin Walsh's confirmation hearing facing headwinds. Senator Tom Tillis still vowing to block the nomination until the DOJ ends its probe into the central bank. Joining us now is Claudia Sam of New Century Advisors. Claudia, thanks for making some time for us today once again. Yeah. Ahead of an important hearing, I have to say, but are you anticipating more theatre than signal and insight in the next 24 hours?
Right, well, confirmation hearings always have an aspect of political theater to them. But this one, frankly, I think Kevin Walsh might almost be a sideshow at his own confirmation hearing. President Trump is going to loom very large in these hearings tomorrow and the pressure campaign he's put on the Fed. And we might learn not so much about Kevin Walsh and his views on monetary policy.
That said, Claudia, it feels like people are on tenterhooks waiting for him to give some signal of how high the bar is for him to cut rates and exactly what he plans to do with the balance sheet. Are you expecting no signal from him with respect to cutting rates at this moment, given the fact that Treasury Secretary Scott Bessent essentially gave him a green light to be a little more hawkish than perhaps President Trump would like?
Well, first of all, somebody's got to ask him about it. Right. Again, that's where I mean him not being part of the center of focus. If a lot of the questions are about President Trump and Fed independence and like that just wouldn't get to what's Kevin Walsh's reaction function? Like, how does he think about what the federal funds rate should be? What is he balancing? And it is difficult over his career it's a bit of an enigma what his reaction function is. So I think that's absolutely what we should be learning about tomorrow. I hope we get more guidance from him on this. But again, senators have got to ask him about it and really push him on how does he think about setting the federal funds rate. We might get some of that tomorrow, but I suspect we're not going to get as much as we really should be getting to kind of think about him as a candidate.
Claudia, are you surprised that the market's been relatively sanguine in the face of some real drama and real questions around A, who's going to be atop the Federal Reserve, and B, what will the composition look like given some of the drama with current Fed Chair Jay Powell?
So there has been absolutely nothing normal about this transition in leadership at the Fed. And again, that doesn't go back to Kevin Warsh. President Trump has chosen to run the vetting process in a certain way, being very clear that he's only putting someone in place that wants low interest rates like he does. The fact that we have an open criminal investigation against the current Fed chair that's holding up the confirmation vote. We have another governor whose job is before the Supreme Court because the president's trying to remove him. Like, nothing about this is normal. I mean, I think it will be good. There's a potential for Kevin Warsh to come in and kind of set the tone about how he's going to smooth out this leadership transition, because right now it's quite chaotic.
If Senators Jack Reed or Mark Warner or Cynthia Lummis are watching this morning, what would you ask them to ask Kevin Warsh?
So again, I think it's really important to help us understand how does Kevin Warsh think about rates policy? There's been a lot of times where he's talked about the balance sheet. We understand that he doesn't like the tool of the balance sheet. He wants a smaller balance sheet. One thing that I've been concerned about is often he said, well, as we shrink the balance sheet, that's going to give us space to lower interest rates. Okay, his agenda to shrink the Fed's balance sheet requires a real change to the framework. That is going to take a lot of time. Okay, say he doesn't get that. Is that what rate policy is tied to? Is him getting a smaller balance sheet? If not, what is it that rate policy is tied to? And how is he going to make these arguments? Because again, he's had very hawkish positions in the past, and now he has very dovish positions. And he's just trying to make sense of it. Like, what is his path? And I think for the Republican senators as well, they need to understand who is this person that they are elevating to Fed chair? How does he really process information about the economy? And there's a lot of question marks. A confirmation hearing is where question marks should get resolved.
Claudia, just a final question from us. In your opinion, what is the most convincing argument right now for lower interest rates?
Like right today, there isn't a convincing argument. There really is too much uncertainty about what's happening with the conflict in the Middle East. We still haven't had the tariff effects roll off. I think we can still build a case for the next move as a rate cut. I think that is still appropriate. I'd like to hear how Kevin Warsh builds that, because I would build that with some weakness in the labor market potential. That's not something we've ever heard from him per se on this. But there's a case for the next move as a rate cut, but it's really hard to say that should be happening right now and these should be big cuts. And that's where I think, if he wants to make that case, it would be really interesting to hear him make it.
Claudia, wonderful to hear from you. As always, Claudia Sam there of New Century Advisors. I think we're all with Claudia right now, that we want this to be insightful. It will be box office regardless, but we want it to be insightful. Unfortunately, it risks not being very insightful at all.
I was thinking, can we send Claudia a costume to sneak into the hearings to ask some questions that we actually want answered? Because ultimately it's going to be political theater, and all of us actually want the meat. So Claudia, if you're looking for costume ideas, let us know.
Futures right now down by 0.5% on the S&P 500. Coming up next, we'll catch up with Mark Lehman of Citizens, Henrietta Trades of Vader Partners, Ellen Wald of the Atlantic Council, plus Vishal Kanduja of Morgan Stanley. The second hour of Bloomberg Surveillance up next.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up.
I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to Bloomberg This Weekend. I'm David Herrera.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We're caught in a tug of war between two profound and opposing forces.
The bombs aren't dropping, and things are calming down.
Both sides don't want a deal that makes it look like, we lost.
We came into this with a pretty strong economy.
There is significant pressure on the global economy.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Pulling back from all-time highs on the S&P 500. The S&P on a 5-day winning run. The Nasdaq on a 13-day winning stretch. This morning down by just 0.5%. Here's the bouncing crude, WTI and Brent. The diplomatic effort breaking down over the weekend. The Strait still largely closed. Brent crude bouncing 5%. WTI up by 6%, but still trading south of 90 at 88.82.
And really what you can see right now is just resilience in terms of the market mood. And you can see that when it comes to U.S. equities, but you can also see that, to your point, with the bounce in crude. People expect this to be resolved, tied up by the end of May. And right now, that is thought to be a palatable outcome, at least for the United States and for U.S. companies that are heavily tech influenced. That said, should this be prolonged, how big is the downside, given the fact that people are not pricing in that tail risk?
There is what you might call an uneasy calm in this equity market going into this ceasefire deadline just a few days away. Will that ceasefire deadline be extended? It's self-imposed. Will we get an extension, or will hostilities resume?
I think everyone's looking for some clarity on whether or not even the talks take place tomorrow in Islamabad. You know, the White House is saying that J.D. Vance, along with Steve Witkoff and the president's son-in-law, Jared Kushner, are set to go. They would have to leave this evening from Washington to get there in time. We have not had official confirmation from Iran. And I talked to a Pakistani official that said it's true. There is still no official confirmation. Norm Rule said, though, they wouldn't be making these plans if they didn't think those talks were going to happen. So potentially we'll see that. But we had a weekend where it wasn't just the Strait wasn't open. We had actual movement in terms of a U.S. Navy shooting at and boarding an Iranian vessel. We have not seen that since this crisis started and we had that blockade.
So on the calendar this week, and check it out, we've got possible, and I stress possible, talks between the U.S. and Iran ahead of that ceasefire deadline headline. We've also got this, and we need to talk about it some more. Kevin Walsh is finally getting a hearing down in Washington, D.C. Now, the Federal Reserve meeting is a week and a few days away, but increasingly the focus will be on a change of leadership. When that change of leadership happens, I don't know, and that's the elephant in the room coming up tomorrow.
Especially given that Tom Tillis, the senator, has said that he's going to block any confirmation. So yes, this hearing might begin in the Senate Banking Committee. Can it be completed with a vote is going to be a key question. Ultimately, I keep going back to this hope that maybe Claudia Sahm can sneak into the actual hearings because we want questions answered that will actually give us a sense of what his reaction function is, not political questions around, housing or whatever else.
Who would you like it to be disguised as? Pick a senator.
I'm actually thinking, I went there for a second in my head, then I was like, no, I'm not going to do there. So I decided, a sort of neutral, like a banker from like the 1920s.
Okay. That's the disguise.
That's the disguise.
Maybe Tina Smith, Cynthia Loomis.
Like big hat, top hat.
Good save, Ramo.
I know, maybe like a fake mustache.
Are you worried about upsetting Claudia if you pick the wrong senator?
Well, I just think that it would be, the whole point is I don't want it to be polarized. I don't want this to be a political point. I want this to be a markets-based point, so I'm going to just punch.
Unfortunately, that's tomorrow. It is a political event.
Correct.
Full of theatre.
Which we don't want, because ultimately we want to understand how high is the bar for him to cut rates, and what does he want to do with the balance sheet. That's what I would like.
What did the president ask you, and have you committed to cutting interest rates? Are you loyal to the president? How many times are they going to ask that in 25 different ways on the Democratic side?
Yeah, and it's going to be, I don't pre-commit to any kind of ongoing path, and I'm not going to disclose private conversations with the president on repeat.
No doubt there'll be a couple of senators asking about his personal wealth.
Exactly.
In which case he should have a list of everyone on the Senate Banking Committee and their net worth.
Exactly,
and just trades. Respond one by one how much money they've made since they've been down in Washington, D.C.
Are you trying to telegraph this?
I'm just,
Here, cheat sheet for both sides.
I'm saying what I would do. All right, coming up, Mark Lehman of Citizens Commercial Bank, his equities drift lower. Henrietta Trays of Vader Partners as attacks in Hormuz complicate peace talks. And Adam Wald of the Atlantic Council with crude spiking on the standoff in the Strait. We begin this hour with stocks holding near record highs following a tech-fueled rally. Mark Lehman of Citizens Commercial Bank writing, AI demand is still the gravitational force in this market. Uncertainty hasn't disappeared, but confidence is rebuilding. Mark joins us now for more. Mark, welcome and good morning.
Thanks, Jonathan.
Confidence rebuilding in software as well. Software just had the best week in 25 years on the S&P 500. What's driving that rebound?
It starts with one of the worst 3 months they've ever had. That doesn't hurt, but obviously it was time for a bounce. I think the noise got too loud in terms of how bad it's going to be for software. Some of the CEOs have started to pick up the narrative that part of this may be a winners and losers, and some of the winners are going to do a lot better. Some of the losers, like all cycles, are going to have a tough time. The narrative for data centers has exploded in the last couple, 3 weeks. You've seen some big offerings. You've seen some narratives. And I've been saying for a long time about what this time in our life cycle of the market is. Is this the late 90s? Is this, what period are we in? And I've been kind of honing in on this narrative. It is the late 90s, but it's the 1890s when we're building the railroads, and it's that big. And I think that narrative has come back to the markets, and that's what the market took advantage of.
Do you think there are enough good things happening in this sector now to ignore the bad things happening abroad?
The market thinks so. It also thinks it's going to be tempered, meaning it's going to be over by the end of May, like you just said. It's probably priced in too much optimism for that narrative. But on the other side of this, Jonathan, and I hate to be repetitive, it's that big. And I think what people pay for it is the bigger question, and how big it's going to be and who the winners and losers are. It's not a question of if, it's when.
Is the U.S. still winning the tech race? And I ask this because I was reading a Stanford paper over the weekend about how China is quickly catching up and really is neck and neck when it comes to a lot of AI capabilities. And you're seeing this in the performance of some of those companies, but from your vantage point, how real is that?
I think the U.S. is still ahead. I think the world is catching up. And when I say the world, is Asia. I think we haven't seen a lot elsewhere. But the U.S. is still ahead. It is really, and I hate the term given what's going on in the Middle East, it's an arms race, and it's a war for talent, and it's a war for speed. And the leaps are so fast. But yes, I think we're still leading, but I would not discount how much is going on in Asia. I've got friends who have visited there recently and have said this exact same thing. China and Hong Kong and a lot of places are catching up.
So there's an existential feeling behind this, which is the reason why all of the capital expenditures seem to be ongoing and accelerating, because ultimately no one wants to lose what does seem like it's fundamentally reshaping the way we understand work. That said, No company has come out and said, this is a return on investment when it comes to AI. In fact, they can't even give a sense of when they will be able to materially monetize this. At what point will that disconnect start to really bite?
I think that's partially true. I mean, we're seeing that at Citizens, where we've got this Reimagine the Bank, and we've given use cases that have shown the kind of return internally that we see is justified. The big companies, the big AI players, with how much capital they're soaking up and how much capital they're spending, I think see that, and I think they do see the use cases. I'm a little less, I'm sanguine about that, Lisa. I think there is that kind of possibility for the companies, but we're in a moment in time where people are throwing resources as fast as they can, thinking that return will come. Not everybody will do that. But I think when you see the kind of returns that companies like ours are getting really rapidly, just in terms of call center optimization, just in terms of customer experience, just in terms of what our junior analysts are seeing when they're doing their work, there's that kind of productivity gains that we're seeing. We're seeing it, and it will allow a diminution in terms of the number of people. People are going to have to work harder and better and faster and smarter. But I think there will be that kind of return that we would hope we were going to get, and the AI companies are offering to everybody.
Meaning companies, maybe even yours, might have to lay off some people?
Well, I think it will be less so in terms of the layoffs and more so in terms of how many people do we need going forward. I think it's the nature of work has changed all the time. I say that constantly to myself and my kids. We all have to reinvent ourselves. AI is requiring people to reinvent themselves. The job that people are going to do is being reinvented. The resources they have are also going to be so much grander that it's going to make your job better. And for those who don't adapt, it's going to be really tough.
Given you said that this is so big, what's going on in the Middle East especially can't derail it, especially if it ends at the end of May. What if it doesn't? What if this goes on for months? Could anything really actually derail the story you're seeing right now?
Yeah, I mean, I don't think the AI narrative is going to get derailed. I don't think the data center narrative is going to get derailed. I think the cost of it, but they have the capital, right? There's an insatiable amount of capital that wants to play this. A, the people who've already done it. B, the people feel like they missed it.
What about the capital from the Middle East coming in?
I think, listen, you're going to see probably some announcements from some of the expenditures the Middle East has made in terms of other forays that they probably have not seen that kind of return. I don't think they feel like this is one they want to avoid. I really don't. I think that's just high on the totem pole.
Mike, do you think the industry, the tech industry, needs a new PR firm? Because the PR right now that is coming from the leaders of OpenAI and Anthropic, whenever those guys speak, they seem to say the wrong things all the time.
It's funny, they've hired the best PR people in the world to work for them.
And yet they're getting it wrong.
And they are getting it wrong. Listen, it's really tough. I think this is a narrative. The masses out there feel like this is being thrown at them and they're not ready for it. I think if you talk to the electorate, and that's always the case with technology, Jonathan. It's going to happen, and people feel and fear it, and they want to go back because nostalgia is a wonderful thing. But you're right. I think the narrative is very difficult. They got the congressmen and women who don't want to hear what's coming. You got the electorate who fears it because of the jobs and what it's going to do to their lives. And then you got this overarching surveillance, no pun intended, that they feel like is going to inhabit their lives. So it's a really tough putt, as we like to say.
The pushback is immense. And I understand why. When you have one leader coming out and saying intelligence is something you'll have to pay for. What? And then another leader coming out and saying that we're going to wipe out half of white-collar jobs. Again, what? And you're just going from one media outlet to the other saying the same thing. Are you hearing the kind of pushback you're getting, not just from Congress, but the pushback from the electorate as well? People don't want to hear that. They don't want to support companies that want to achieve those things.
Ultimately, if they want to raise money and they do want to IPO this year, maybe it's good for the roadshow that you can't have, if you don't have us, then you're going to be sunk. But it is terrible when it comes to convincing people that this is going to be a beneficial tool for their life to work better, because life is going to be harder for a lot of people. And frankly, there are going to be a lot of people who are displaced in the process. It is an uncomfortable message. They are not delivering it in perhaps the way that a lot of people would like. What is the right message right now, though? Because when you read these studies, it is a little petrifying when you know you've got to completely reshape who you are and what you're doing and how you work. And then you've got kids, and my goodness.
Mark, what do you think the right message is? What is the message that they should be driving home at the moment? Is there a good message to drive home?
It's such a good question. It's so hard to imagine when you repeat what Lisa just said and say, but this is going to be good for you.
Get on board.
Yeah, get on board because it's going to happen. I don't think that's the message. I think there's a real subtle shift that they have to make about how our lives and how it's going to improve your life is tough. Whether, I don't know if that's because your health care is going to be better. I don't know if you're going to be more productive. It's because it's going to make you a better citizen, a better parent. I don't really know, but what they're doing is not working.
Mark, appreciate your time. As always, it's good to see you. Thanks for being here. Thank you. Mark Lehman there of Citizens Commercial Bank. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. The White House saying Vice President J.D. Vance is heading to Islamabad tonight to lead a second round of talks along with envoys Steve Witkoff and Jared Kushner, while the Iranians are denying they will participate in those talks with the U.S. A 14-day ceasefire is set to expire tomorrow. ExxonMobil, Chevron, and other energy companies are speeding up their searches for new oil and gas prospects away from the Middle East. The Wall Street Journal reporting they're exploring new drilling candidates in Africa, South America, and the Eastern Mediterranean. And in sports, the race for the Premier League title is neck and neck after Manchester City beats Arsenal 2-1. The two teams now sit just 3 points apart, with City having a game in hand. Erling Haaland scored his league-leading 23rd goal in the 65th minute for the win. That's Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Spurs. Mark, Spurs. Can you imagine Spurs getting relegated with that stadium?
It's not okay. It's too bad. But boy, the Premier League is on fire.
We're right down the brink of that happening. Very close to it.
Yeah, try being a Mets fan. I'm sorry. My sympathy.
How much worse is it as a Mets fan right now?
Yeah, terrible. 0-11.
Isn't there the good news for you, there isn't another division beneath you for you to fall into.
No, but just it's utter humiliation.
So you get to play Major League
I
Baseball
mean,
all the
it's
time.
just depression. I mean, honestly, relegate it and just end it already and sort of put them out of their misery.
We got Spurs fans in our midst. It's not pleasant.
It's not pleasant.
It's not pleasant. I feel bad.
TK's a Spurs fan too.
Well, hopefully he's not a Mets fan too.
No, he's not.
He's a Red Sox fan.
Red Sox fan.
Yeah,
that's right.
So they're doing
Boston
okay.
sports. Anyway, up next on the program, standing firm against Iran.
They wanted to close up the strait again, as they've been doing for years, and they can't blackmail us. We're taking a tough stand. They've gotten away with murder for 47 years. They're not getting away with it anymore.
Up next, we'll catch up with Henrietta Trace of Vader Partners, live from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Stocks right now negative by 0.5% on the S&P. Similar move on the Nasdaq, pulling back on a Russell by 0.9, but incredibly robust over the past 3 weeks. 3 weeks of 3% plus gains on the S&P 500. That is very, very rare. On the Nasdaq 100 this morning, down by 0.5, but coming off the back of a 13-day winning streak. Big turnaround for the tech story. That's helped EM as well. Check out the MSCI EM stock index. We have erased the war gap lower. We filled the gap. Why? Because this index is not the economy. The number one weighting on that index is Taiwan Semi. Number 2 is Samsung. 3 is Tencent. 4 is SK Hynix. That's the big tech story driving EM stocks higher as well.
Yeah, with this belief that China and frankly Asian tech in general is catching up very quickly to the United States, with also a backdrop of potentially a weakening dollar. So once again, people saying that could take hold should this crisis abate, giving fuel to this ongoing trend that we've seen in the tech space.
That's the tech story. Let's turn to the commodity market moves. Brent and WTI higher this morning by 5 to 6%. WTI crude at 89. Brent crude around 95. Under surveillance this morning, standing firm against Iran.
We'll be talking about Iran later. We have very good conversations going on. It's working out very well. They got a little cute, as they have been doing for 47 years. Nobody ever took them on. We took them on. They wanted to close up the strait again, you know, as they've been doing for years. And they can't blackmail us. We're taking a tough stand. They've gotten away with murder for 47 years. They're not getting away with it anymore.
So here's the latest this morning. The U.S. seizing an Iranian ship near the Strait of Hormuz. Tehran vowing to respond with a fragile ceasefire set to expire in the coming days. Bloomberg's Tyler Kendall joins us now for more. Good morning, Tyler.
Hey, John, good morning. Well, there seems to be risk of escalation on multiple fronts, but still the White House maintains that diplomacy is still a viable option ahead of tomorrow's ceasefire deadline. But at the moment, Iran is wavering on whether or not it will send any diplomats to Pakistan for another round of peace talks. And at least for now, publicly, Iranian officials have denied making any concessions to the U.S. when it comes to their nuclear program. Plus, as you just mentioned, we really saw tensions flare in the Strait of Hormuz as Iran moved to reimpose restrictions on traffic, and the U.S. for the first time seized an Iranian tanker since the blockade began. Now, CENTCOM did put out a statement saying that this happened because the vessel failed to comply with military instructions over a 6-hour period. But despite all of this, President Trump still took to Truth Social and said that he sees a path forward for talks to progress, but importantly reiterated a threat to hit Iranian civilian infrastructure if a deal is not made in time. We're going to have to watch where this goes because the White House is pursuing that diplomatic route for now. The White House saying that Vice President J.D. Vance, alongside Special Envoy Steve Witkoff and the president's son-in-law Jared Kushner, are set to depart tonight for Islamabad. And John, at this point, other countries are also ramping up the pressure. New this morning, Chinese President Xi Jinping saying in a phone call with the Saudi Crown Prince that it is imperative for the Strait of Hormuz to reopen. We should point out Bloomberg News reported last week that Gulf, Arab, and European leaders are estimating it could take up to 6 months for a fuller term deal to be reached as we tick closer to tomorrow's deadline.
It's Tyler Kendall down in Washington. Tyler, thank you. You can sense the fatigue. Another Monday morning to start on Sunday evening, waiting for that gap lower in risk and that bouncing crude off some tough words over the weekend, and then anticipating that any moment now, as we get closer and closer to the cash open stateside, you'll get a warm, fuzzy social media post about the prospect of talks and extending the ceasefire. That's been the rhythm, the pattern of things that this market has become exhausted and fatigued by over the past, let's call it 2 months now.
It feels like you're dealing with a friend who's a complete drama queen, and they keep coming to you with a crisis that they're going to resolve in a couple hours, and you stop paying attention to and stop caring about, and that's ultimately how the market seems to be responding.
I think it's the boy that cried wolf, right, when it comes to some of these proclamations, but actually tangible, nothing is changing at the moment on the ground. The idea, though, that this market has is at least they're talking or talking about talking. For the moment, seems to be good news.
Henrietta Trace of Veda Partners writing the following: anticipating higher crude prices, understanding basic supply and demand realities can be undercut in an instant by a presidential tweet. Henrietta joins us now for more. Henrietta, welcome to the program. Let's talk about those talks. Who is the U.S. negotiating with? Who is in charge in Iran? And are they the same people?
That's the perfect question. I mean, I don't think that J.D. Vance is headed over there knowing exactly who's in charge. You can see disparate indications from across Iran, different directives, different statements about whether or not the Ayatollah is still being collected, whether or not you can use certain shipping lanes, who needs to turn around and when and why. The confusion is rampant. And I think the lack of a stable negotiating platform is really pointing to, maybe at best, from the market's perspective, a continuation of the ceasefire, maybe for another 14 days, another couple weeks, but no clear, definitive end to any of this.
I know you've done a lot of Hill checks. What are they saying about the ceasefire? Do they want to see that be extended?
It depends who you ask. So there is some indication from some of the members. I would say Lindsey Graham, for example, who's chairman of the Budget Committee, and we should watch him really closely because he's going to have a lot to say about how we provide additional funding for the Pentagon, or whether or not we stimulate the U.S. consumer to offset gas prices in the forthcoming budget reconciliation bill. He's been pretty aggressive behind the scenes, calling for the president to continue taking a very hard tact. But even the most concerned senators, I would say those who are up for election this cycle, are not pressing the president to just completely end this. If anything, they're more responsive to the president's tweets about, being Christ the healer and combative with the Pope. That stuff really doesn't play well with the American electorate. And so there's been a lot more opposition to that kind of dynamic than there has been to the decision now that it's been made to go into Iran. And now the strait is closed, and that's obviously a problem.
We're seeing in polling that Americans are frustrated with higher gasoline prices, but we're just over $4 a gallon on the national average. You say the line in the sand for Congress is $5 a gallon. Ahead of the midterm elections, if we hit $5, what's going to be the response?
There's two things at play here. So first, we've seen $4 gas before. We're at $4.08 or whatever right now. So the American consumer doesn't like this. It's not enjoyable, obviously, but it's not the worst thing they've ever seen. We've been through the Arab Spring. We've been through the pandemic. Staff on Capitol Hill really tells me that $5 is more the inflection point. As we get into the $4.50, $4.75, $4.85 range, we start talking about suspending the federal gas tax, which Canada has already done, and Georgia in the United States has already done. So there's room to run on that front. But really, for the election, it's the volatility. There have been some analyses done historically over how voters respond to higher gas prices, and it's not the price, it's the chaos. It's the extreme swings that voters don't like. That's what they pay attention to, and that's what Republicans have to worry about going into November.
Henrietta, what's your sense of the willingness to increase funding to the Defense Department going forward, especially should this start to spiral and the hot war begin to reassert itself?
There's definitely appetite for more defense spending amongst the Republican conference. I mean, there's no problem really with Lindsey Graham adding a $200 billion, maybe let's say $100 billion Pentagon plus up to their forthcoming reconciliation bill. It's shocking to me that they're only going to put a bill out that's maybe in the $75 billion range. This thing could be $700 billion if they wanted it to. The last time we passed a proactive fiscal stimulus bill, let alone under reconciliation, it was $3.5 trillion. So to get something with not even 3 digits is wild to me. I understand my perspective is biased since I deal with like hundreds of billions and trillions more normally than millions, but $75 billion is nothing. If they wanted to tack on additional funding for the Pentagon, they easily could and get this through the Republican conference. Democrats are not going to provide any votes for it. So if Hegseth needs money before, I don't know, a couple months from now, before September 30th, when the fiscal year ends, they're going to do it in this reconciliation bill.
Henrietta, good to see you, as always. Henrietta Trace there of Fader Partners. Lockheed has sold off over the past 2 months or so, but year to date still higher by more than 20%.
This is one of the key trades for so many different investors. Go into defense spending because even Germany now, their sovereign wealth fund opening the doors to investing in these kinds of companies.
Up next on the program, we'll catch up with Adam Wold of the Atlantic Council with tensions in the Strait of Hormuz sending crude higher. Plus, Danny, has your morning movers, senators reportedly warning United and American that a merger would hurt travelers.
Thank you. At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Last week, the biggest weekly gain since May on the S&P 500. Equities up for 5 consecutive days. Struggling to make it day 6. We're pulling back by 0.5%. Talked a lot about that 13-day winning run on the Nasdaq 100, the longest since 2013. On the Nasdaq 100, we're down by 0.5% this morning. Within the tech sector, software. Software stocks just had their best week since 2001. That's a part of this equity market, a pocket of it, that's had some real pain for much of the year.
People were worried, especially with the private credit woes. We haven't said private credit in a while in redemptions, but that happened this year too. And there was this fear that maybe people got over their skis with trying to predict their future revenues, given the fact that they could be disruptible. Now people are saying, who cares? They're so undervalued, we can go back in. And it just gives you a sense of how much of a relief rally we really have seen.
Nasdaq futures inching lower, even as talks over the weekend between the US and Iran. The diplomatic effort appears to be breaking down going into that ceasefire deadline. Brent and WTI are bouncing by 5 to 6%. WTI is still south of 90 at the front end of the futures curve at 89 on WTI crude. Back-to-back weekly losses for the first time since February. And this morning, I have to say, relative to the moves we've seen more recently, muted moves.
I think it's because the market is pretty much expecting the ceasefire either to be extended or actually the Iranians to show up to those talks tomorrow. We do know that the United States is preparing the delegation to leave as soon as this evening. They would have to leave to make those talks. We're just waiting on the Iranians to confirm that they are going to be there. And even if the talks break down, they decide they're not going to meet tomorrow. Don't you expect the president to come out and say, I'm willing to give diplomacy a few more days? The issue, of course, is for the oil market is that not only is the Strait still shut, but this weekend, you had 2 ships in India that they were shooting at from the Iranians. You had the U.S. Navy fire upon and actually board an Iranian-flagged vessel. We haven't seen that since this blockade started. So the escalation we actually saw tick up this weekend, not wind down.
Brent crude at 95, WTI at 89. A few hours away from the cash open with your morning movers. Danny Berger has more. Hey, Danny.
Hey, John. Starting with some tech news, Marvell and Google reportedly, according to the information, reached an agreement in which Marvell would create custom AI chips, 2 different kinds of chips, but very specifically, they would only be for Alphabet. Alphabet shares a little bit lower in that agreement, but Marvell up 6.2%. Elsewhere, we learned over the weekend that American has said, no, thank you, United. We would not want to merge with you. This, of course, comes after reports that Scott Kirby from United went to the White House, went to this administration, and said that he was interested in a merger of the 2 potentially. It would create, of course, one of the largest airlines, United and American, down at least 3% this morning. Finally, in other deal news, QXO, the Brad Jacobs company, will be buying TopBuild, a $17 billion agreement that would see the purchase price be at about a $505 a share. So we're not quite at the deal price yet. Shares, though, are up about 18%. QXO, the acquirer, which, by the way, Brad Jacobs has been incredibly acquisitive over the past year. Those shares fall 4%. It would make QXO the largest building supply company listed. And, of course, this is an insulation company. And those are your movers. John.
Very cool. Thanks for the update. Danny, thank you. More from Danny in the next hour. On our radar this morning, the U.S. Navy seizing an Iranian cargo ship as Tehran closes the Strait of Hormuz once again. President Donald Trump threatening to strike Iran's Iran's power plants and bridges if a deal isn't reached before the ceasefire expires tomorrow. The UAE seeking a financial lifeline from the United States. The Wall Street Journal reporting Emirati officials are discussing a currency swap to protect their economy against potential impacts from the war. And finally, beginning today, businesses can claim refunds on the billions spent under President Trump's sweeping global tariffs. The Supreme Court striking them down in February, ruling the levies unconstitutional. Officials warning rebates could be months away.
So at 8 a.m., there is an online portal that people can submit their claims to. This is according to the U.S. Customs and Border Protection. And then the CBP will rule on said claims. It might take 60 to 90 days to get the rebate. Okay. We just all filed our taxes. We know how much we paid. I just wonder going forward what it's going to look like when suddenly you realize what the budget deficit looks like if they do give these refunds and then they put on additional tariffs. I mean, this sequence, I'm still trying to wrap my head around.
I want to know how much companies are paying to hire a team to do all this, because this is a baby step going on this portal and signing up. It's the first step to try to get the refund back. And there's going to be a few very annoying process underway to get these refunds back. And then to Lisa's point, this comes at a time when the administration says by this summer they want to get back to those same rates. So they're going to get a refund for last year, but then they're going to have to start paying tariffs yet once again after the administration goes through all the other avenues like 301s, 242s to get tariffs back in play.
We've introduced a lot of friction into the global economy in just 1 year. The trade story, the war in the Middle East. Can you imagine where the stock market would be if these two things hadn't happened?
I mean, honestly, this is what a lot of people talk about, that is putting such a damper. What we'd be talking about 10,000 on the S&P 500, not the Dow. I mean, we're talking about a market that has so many tailwinds that only is as high as it is at record highs because of how it's being held back by all of these other frictions. I think this is a side story. Question to me is, when does it become front and center once again when you start to see some of the additional tariffs put in place by this administration?
Certainly in the background right now, that's for sure. Front and center is this story at the moment. Crude climbing on renewed uncertainty through the Strait of Hormuz. Alan Wald of the Atlantic Council writing, instead of trying to jawbone markets with positive sentiment, the president should stick with messaging from a position of strength and no vacillation. Ellen joins us now for more. Ellen, welcome to the program. I was speaking to a market contact earlier who had a basic question. Is the worst of it behind us? Is this the post-Liberation Day picture of the market right now? Is it a similar story or is it different this time?
I'm not sure whether we're really whether the worst is past. I think that the U.S. actually commandeering or blockading these ships is pretty much an escalation of events. It depends, I guess, whether we see more active bombing and whether we see Iran responding to that by hitting its neighbors. I think that that's absolutely still in the cards, though the fact that the ceasefire is, I guess, technically still in place, though I'm not sure you can say it's still in place if we've had Iranian ships firing on ships trying to transit the strait and the U.S. firing on Iranian ships. I'm not sure we can really call that a ceasefire, but it does seem to still be in place. And so I wouldn't be too hesitant to say that the worst is past, but it could get worse very, very quickly.
Well, let me ask you what you think was more likely then in the next 24, 48 hours. An extension of the ceasefire or a resumption of hostilities?
I think an extension of the ceasefire is more likely, but only maybe a little over 50%, I would put it at.
So at this point, Ellen, how feasible do you see the outcome that the market is pricing in? This is sort of what we're trying to get our head around, because it seems like people come on this show who are in the equity space or who even trade oil, and they say, well, you know, this actually roughly games out what's probable. And then oil commodity strategists come on and they say, absolutely not. That seems highly unlikely. What's your take?
I think it's pretty unlikely right now. I think the market is over exuberant in terms of a fast fix to all of this. I think that despite what President Trump tweeted on Friday, Iran and the United States are leagues and leagues and worlds apart in terms of what they want. And Iran has absolutely no incentive to give in on anything at this point because, first of all, it doesn't see anything wrong with higher oil prices, whereas Trump keeps going back to these very positive statements to try to get prices down and get the Dow Jones up. And yet I think it's pretty clear at this point that once everything actually is resolved,
we're going to go back to where we were in a hurry. Oil prices will go down, equities will go up. And so it seems like it's kind of confusing to me as to why he keeps trying to make things seem better than they are, just to get things looking better at the beginning of the week or when markets open, when, let it be. Say your position, hold strong, because that's clearly what he wants to do, and then let it all, let the cards fall where they will when it ends.
Ellen, you wrote the book on Saudi Arabia, Saudi Inc., talking about how the kingdom really came to fruition and some of the monetary backing of the oil complex. Do you have a sense of how much Saudi Arabia and the other Gulf countries are shifting alliances, moving away from the U.S. maybe amid this conflict?
I do think that we're in a different paradigm than we used to be. Really, Asia is the most important customer now for Saudi Arabia and the UAE and other big oil exporters. It used to be that the U.S. was their most important customer. However, China and Asian countries are not big military suppliers. China's Navy is never going to go into the Persian Gulf, whereas the U.S. Navy, they're the ones that are there. So it's a slightly different dynamic in that the U.S. is still very important financially, very important as a military supplier and as a naval force and an air force in the region, but it's not that, it doesn't play that same role as buyer of oil. And so that means that these countries have a bit less leverage over the U.S. than they used to.
But at the same time, they're not going to want to create all this friction with their security blanket, are they?
Exactly. And so it is a bit of a careful line that they're walking, because they need the military protection, but they can't necessarily say to the U.S., hey, we're going to we're going to control oil supplies now, and to make sure we get that. It's not so much of a quid pro quo here, and I think that they do need to tread carefully, and we're seeing them tread carefully. They haven't been all that vocal about what's going on, and I think that's a sign that they know that their position is perhaps a little more precarious than it used to be.
Well, there were reports that Mohammed bin Salman had a phone call with Xi Jinping earlier today. Are the Gulf Arab partners, you think, pressing on China to put the thumb on the scale on Iran?
I think they absolutely could, because China is one partner of Iran that has that economic pull with Iran. On the other hand, I do think that these calls could be all about just maintaining maintaining the conversation about the fact that China has a lot of investments in Saudi Arabia that are not doing all that well right now because they can't get oil out, and there are issues with the petrochemicals. And so I wouldn't be surprised to see the Saudis and counterparts in the UAE reaching out to people in China to assure them that the relationship is strong, that once this is over, things are going to be repaired and go back to everyone making money the way it used to be.
Adam, what happened on Friday? Can we just finish on that? Between 8 and 9 a.m. Eastern Time on Friday, there was a series of messages from one delegate coming out of Iran and another in the US, making the case that the Strait of Hormuz had reopened. And we were sitting here thinking, maybe it has. Let's see, let's wait and find out. And then we found out pretty quickly it hasn't at all. What happened there? Was it something the US did? Or was it just that the Iranians committed to something that ultimately not all Iranians and all interested parties had agreed to?
Yeah, I think it's both. It's a bit of both here, because there's a bit of over exuberance on the part of Trump to say the Strait of Hormuz is open, Iran has agreed to everything we want. Let's move on now. I think there's a huge amount of pressure, particularly from Trump, for that to be the message. On Iran's part, on the other hand, remember, these parties are not talking to each other. They're talking to intermediaries who are then talking to each other, who are then going and talking to the other parties. So Iran and the U.S. are not communicating with each other. And so there's a bit of a dance in the wordplay that comes around. The U.S. may say, we want X, Y, and Z. And when that message gets to the Iranians, it's not the same as exactly what the U.S. said. And so when Iran agrees to something, they're agreeing to what they think they're agreeing to, which can fly with their people, which is not necessarily what Trump thinks they're agreeing to. And this happens a lot in diplomacy, particularly when the parties are not actually sitting down at the same table as each other and not speaking the same languages. And so I think this means there's a lot more to bridge. Iran also needs to message to its own people. And as you mentioned on the program earlier, we're not entirely sure exactly who we're speaking to with regards to Iran. There's the IRGC and there's the elected government, and those are not necessarily the same and don't have the same opinion and don't even necessarily have the same elements under their control in the country.
Alan Wald at the Atlantic Council. Alan, thank you. It's a question we asked earlier this hour. We've asked it repeatedly. Who is the US negotiating with? Who is in charge in Iran right now? And are they the same person?
Yeah, and are they going to be communicating with the interloper that's going to then be talking to the other mediator that's then going to be talking to the other side? And this is the reason why it's a big game of telephone, but you're not even sure who's initiating the message. It's a very difficult scenario, and the reason why people are ending up with the confusion of the strait's open, it's closed, it's open, it's closed.
Which is why I think some investors just choosing to look through the whole debacle.
It just seems like something you can't game out or get an edge on, so analyze what you can.
Futures right now down by 0.5% on the S&P, just pulling back from all-time highs with an update on stories elsewhere this morning. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. Tensions rising in the Middle East after the U.S. Navy boarded an Iranian-flagged ship in the Gulf of Oman. President Donald Trump also threatening to destroy every power plant and bridge in Iran if negotiations fail, as peace talks are expected to resume tomorrow. U.S. Energy Secretary Chris Wright saying gas prices may not dip back below $3 until next year.
I don't know. That could happen later this year. That might not happen until next year. But prices have likely peaked, and they'll start going down. Certainly with a resolution of this conflict, you'll see prices go down. Prices across the board on energy prices will go down.
The national average for a gallon of regular gasoline remains above $4, the highest since August 2022. And the Senate Banking Committee is set to hold a confirmation hearing for Fed Chair nominee Kevin Warsh tomorrow at 10 a.m. Eastern. Warsh's confirmation is in question, with Republican Senator Tom Tillis vowing to block any Fed nominations until the DOJ wraps up its current probe into Chair Jay Powell. That's your Bloomberg brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. I'm next on the program, pushing back on rate cuts.
The Fed has to get the rate down. I still think you'll get a couple of cuts. Do you push it back a little bit? Yeah, maybe. The 10-year part of the curve, it's pretty unbelievably stable.
Up next, we'll catch up with Vishal Kanduja of Morgan Stanley from New York City. You're watching Bloomberg TV.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Good
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslada Amin in Davos, Switzerland, and this is Bloomberg.
Futures slightly negative, pulling back from all-time highs that we posted going into the weekend on the S&P, the Nasdaq, and the Russell. We're down by 0.4% on the S&P, underperforming on the Russell. Small caps down by 0.8%. Under surveillance this morning, pushing back on rate cuts.
The Fed has to get the rate down. I still think you'll get a couple of cuts. Do you push it back a little bit? Yeah, maybe, but you're talking about a very two-speed economy where interest rates really affects things. The 10-year part of the curve, it's pretty unbelievably stable. I do think when Kevin Warsh is confirmed, I do think you'll see a dynamic where can you contain the 10-year point of the curve.
So here's the latest this morning. Investors hedging against stubborn inflation, reversing rate cut bets as yields rise on the ongoing war in the Middle East. Vishal Kanduja of Morgan Stanley writing rates in the curve will adjust on a transitory inflation shock, not to a material or prolonged growth downturn. Vishal joins us now for more. Vishal, welcome to the program. I was going through your note. A couple of lines jumped out to me. I just want to pick out one just to start. The perceived disconnect between rates and risk assets. You've highlighted that. What do you mean by it?
Yeah, good morning, John. Thanks for having me on. So very clearly, I think we have seen this massive disconnect, I think, since the first 2 weeks of the conflict, where you saw a massive repricing in the front end. Overall rates go up in countries or regions where we import a lot of that commodity. You've seen a much more, almost like a 10x standard deviation move on the other side. So the market is saying that the central banks need to step in. Instead of pricing in cuts, now we have to price in 3 to 4 hikes to slow down growth and eventually then slow down inflation to avoid a pseudo 2022 type scenario. But the growth assets, risk assets on the other side, are completely ignoring the growth shock or the bumpiness from growth that we might get as central banks get less accommodative or more restrictive on that end. So that disconnect between the macro side of the market or the rates and much more liquid side of the markets presenting a scenario of significant inflation, which needs growth to be slowed down and then inflation coming down. And then the risk assets just ignoring all of that, saying economies are just fine. And even with that restriction, we'll be okay to price in much tighter spreads. So that disconnect is unwarranted in our opinion, and has to do a little bit with positioning of how we came into this conflict into March, and that's why it allowed us to reposition portfolios.
Vishal, not to take you too far away from fixed income, but do you think the cyclical tailwinds in the AI ecosystem go some way to explaining that performance in risk assets?
I agree. I think the two biggest parts, and I think if you just myopically just focus on the US, the two biggest growth drivers here, AI infrastructure spend, we are coming up with numbers 3.5 to 5.5 trillion over the next 24 months that the economy will see the boost from, is undeterred. And also the second part, which is the upper end of the K-shaped economy, consumer that is spending, again, undeterred with that $3.5 or $4 gas price that you've seen. So there is definitely a little bit more of that pointing to that fact that certain strong drivers of the economy are still almost undeterred through this conflict, but that does not apply directly to the global economy. That does not apply directly to economies that are going to be importing a lot of the oil and have seen energy shocks in the past as well.
It's a confusing moment, and it's a confusing moment in fixed income as well. And Vishal, it almost underscores how confusing it is that you're long the 7 to 10 year part of the yield curve at the same time that you're adding high yield bond risk. I mean, how do you understand exactly why we can both gain confidence in pinned inflation expectations over the longer term and invest in some of the riskier parts of the market that will benefit from an expansionary economy at a moment where inflation is higher than target?
Fantastic, pinpoint there, and great question. I think high yield to us is, if you take a look at the 40-year spread chart for high yield, I think that spread chart makes a big assumption that today's quality of high yield market is similar to what it was in 2008, 2010, 2018, and so on and so forth. It makes a wrong assumption that the quality of the high yield market is not changed. But if you look through the details, it is the highest quality of high yield market that we've ever seen. Highest amount of double Bs, highest amount of secured bonds, lowest amount of duration that you've seen. So in fixed income terms, I think we are going after higher quality, higher fundamentals, higher yielding DXS type names or type allocation rather than actually buying a single A corporate on a 30-year or 40-year part, which is trading at 65 to 85 basis points over Treasury. So we think that the probability of excess returns in long spread duration bonds rather than short spreadier bonds is going to be very different, and the outcomes will be very different. But yes, security selection is significantly important as dispersion has picked up. I think a few of your guests talked about the software exposure, etc. That's just the tipping of the iceberg, in our opinion. And then the other part about duration, I think we go back to that disconnect that we talked about, where you're seeing market pricing in quite a bit of that inflation shock. And just over the last probably 6 trading sessions, you start to come back and ask questions about the growth shock. And we believe that 7 to 10 year part of the interest rate curve here in the US, even if cuts are pushed back, even if the dovishness is pushed back through the Fed, whether it's the leadership change, whether it's a wait and watch approaches, the inflation prints will be coming higher. We don't think that the terminal rate has come any higher from our perspective. So that gives us that growth protection if we are wrong and we are growing into a much major growth correction. And then the high yield bit on the shorter side gives us that high quality yield bias within the portfolio.
Vishal, always smart and great to get your opinion on things, your insight. Vishal Kanduja there of Morgan Stanley. A fixed income conversation with no conversation whatsoever about Kevin Walsh and the hearing tomorrow, which I think tells you a lot about how fixed income investors are thinking about what's to come in that hearing.
It tends to be those kinds of events, though, that are the most market moving because people aren't prepared for it. Maybe someone dressed as the banker from, some movie in the 1920s might come in and say, what is your risk tolerance going forward? At what point, how high is your bar to cut rates? And then everyone will actually sit up and pay attention in markets, and it might be an actual tradable moment.
I think we want an understanding of the individual's reaction function and what kind of committee he thinks he's going to be coming into. These are the kind of questions that I think we've all got about this leadership. How have Kevin Walsh's thoughts evolved since we last heard from him? What are his reflections on the war in the Middle East? The future of Fed policy and communication, all of those things. How much insight we get on those things tomorrow? My bar for expectations is pretty low.
I think a lot of people's are, which is the reason why they're focusing on other things.
Coming up tomorrow, Stephen Parker, or rather up next, we'll catch up with Stephen Parker of JP Morgan Private Bank, Sadek Waba of I-Squared Capital, Isabel Matez Ilago of BNP Paribas, and Mike Kontopoulos of Janus Henderson. That hearing, of course, is tomorrow. The third hour of Bloomberg Surveillance is up next.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We have 2 crises, 2 essential crises, and for both it's now or never, democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The market wants to be positive.
This is a market that is ready to rip.
We are long the equity market.
I'm comfortable with the way the market's behaving.
Heightened geopolitical risk, but also bullish markets. That is the prevailing mood right now.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your equity market looks like this, pulling back from all-time highs on the S&P. We're down by 0.4% following a 5-day winning streak into the weekend on the NASDAQ. You've heard about this a million times already this morning, I'm sure. 13-day winning run on the NASDAQ 100, pulling back just a touch. We take some weight off that recent rally. We're down by 0.4%. In the commodity market, an update on Brent and WTI crude. Some tension over the weekend between the US and Iran. Brent bouncing by 5%, WTI up by close to 6, 88 and 94 respectively.
I have great sympathy and respect for people trying to trade this oil market right now. Good luck, because ultimately it has been such a whipsaw, and it's the reason why markets are not paying as much attention. Initially, when the war in Iran started, you saw a real lockstep between equities and oil prices. Increasingly, people seem to be shrugging off some of the gyrations, focusing instead on earnings, and this comes with a slew of corporate earnings and the fact that ultimately the backbone of the U.S. economy still seems like it's very strong.
On the earnings front, you'll hear from United Airlines later this week, Tesla, IBM next week. The major tech firms all reporting around Wednesday, so look out for that. The only thing you can do is go to the calendar. Coming up tomorrow, potentially, talks between the US and Iran approaching that ceasefire deadline.
Potentially, Wolf Research, Tobin Marcus, who's a friend of the show, just put out a note talking about everyone wants a deal, but at what price? Even if the worst is behind us, we're back to two-sided risk. So potentially we're going to have those talks, or potentially we're not. And then what does that mean? Does the president offer a diplomatic roadmap, off-ramp of a little bit more time going past the April 22nd deadline? Or are we back to more escalation, which we did see this weekend in the Strait of Hormuz?
It's so difficult to predict those things, so what have you done? You've bought tech. So many people have been piling into the tech trade. We just had the biggest week of gains for software stocks since 2001. For the Nasdaq 100, the longest winning streak since 2013. And next week, earnings from Amazon, Microsoft, Meta, Alphabet, all coming up potentially on Wednesday.
Yeah, people have been focused on just how much cash they're earning and the fact that they've been derated in terms of multiple expansion, just simply because they have not kept pace with the rally earlier this year. Going forward, the key question is how much tolerance is there in the market for an ongoing acceleration of capital expenditures, given the fact that this is an existential race. That's going to be put to test next week. The fact that we were just speaking with a fixed income strategist who doesn't like investment grade debt as much gives you a sense of potential pushback, not necessarily on people not willing to buy the debt, but potentially offering, demanding a significantly higher premium for it to be sold.
A small dip this Monday morning in equities, at least. We're down by 0.4%. Coming up this hour, we'll catch up with Stephen Parker of JP Morgan Private Bank with a record-breaking rally on pause. Sadek Waba of I-Squared Capital on how the war in Iran is intensifying the need for infrastructure. And Isabel Mateus-Alago of BNP Paribas previewing tomorrow's confirmation hearing for Kevin Walsh. We begin this hour with stocks falling and crude rising. Stephen Parker of JP Morgan Private Bank writing, uncertainty remains elevated and downside risks related to higher energy prices must still be considered. Stephen joins us now for more. Stephen, good morning.
Good morning.
How are you framing this for clients? Do you see it as a sustained supply problem or a transient shock?
We think that it's, we're always careful about the word transient after the last couple of years,
course.
right? But I think that our base case is that oil prices are likely headed back to something like $75 to $80 a barrel over the next 3 to 6 months.
What informs that base case?
Our view is that we think that ultimately, while we're not trying to predict geopolitics, we look like we're headed towards an off-ramp solution to this conflict. We do think that supply, particularly here in the U.S., is well supported. And ultimately, we think that we're going to see a resumption of global oil supply in the near term.
So do you choose to ignore the incoming headlines as they whipsaw investors in one direction and the other?
Well, I think what you have to recognize is that markets are becoming a lot less responsive to these headlines, right? This type of move in energy prices a month ago would have caused a lot more of a reaction to equity markets than the 40 or 50 basis points that were down this morning. And I think that reflects a little bit of an assumption that we are headed towards a lower oil price environment, but two, a shift in focus, as Lisa said, to the earnings story, which remains very well supported.
And this idea that we already had multiple compression from the big tech space as they didn't keep up with some of the rallies since later last year. So there's a question here of how much of that catch-up trade already has been priced in and how much more there is potentially to go.
Yeah, I mean, the sell-off that we saw earlier this year was all sentiment-driven. It was all valuations because earnings revisions were actually moving higher. So the biggest concern that markets have had over the last couple of years, which was elevated valuations, concentration within the tech sector, as you said, now all of a sudden those valuations are a lot more compelling. Add on top of that what we think is going to be another double-digit quarter, another double-digit year for earnings growth, both this year and next year. That's a well-supported environment for equities.
What are you expecting to hear, and how do you expect markets to respond to some of the big tech players coming out saying they're expanding their spending plans dramatically, that much more because all the inputting commodities are increasing in cost? Right. At a time when people are already feeling like we're kind of getting to a place where you guys are looking a little bit like telecoms?
Well, it was interesting because last year, anybody who made an announcement related to AI capital spending saw a boom in their stock right away. That was the great stories what everyone wanted to focus on. Towards the end of last year and early into this year, particularly as you started seeing these hyperscalers turn to debt markets, markets became a little bit more selective in terms of their response to some of these capital spending stories. I think that's likely to continue, but the good news is with earnings revisions moving up, valuations coming down, perhaps the bar, even after the rally in the last couple of weeks, is a bit more manageable in terms of how markets are going to react to some of this spending announcement.
Stephen, when it comes back to the war and how markets are dealing with that, you say the U.S. is not fully immune to what is going on. Yeah. It does feel like we are a little bit less vulnerable to the rest of the world. At what point do you think the U.S. really would start to feel the brunt?
When we do a scenario analysis, and this is one of the things that we put out in our recent publication, our base case is that $75 to $80 range. But we also look at a world in which oil stays here around $100 a barrel, or even perhaps spikes to $140. in the current sort of $100 level, you take a little bit of a hit to growth, you see a little bit of a spike in inflation. That's a bit of a challenging environment for both stocks and bonds. But from an economic perspective, it's something we think you can manage through. If you see a further spike, call it $120, $140 a barrel, then all of a sudden what is a kind of modest growth environment for now to the end of the year turns into something that looks more like potentially a mild recession.
But would that hurt the AI trade?
I don't think it will hurt the AI trade as much. I mean, when you look at the parts of the economy that are most vulnerable to the higher energy prices, it's the consumer, it's particularly the lower end consumer. I don't think the momentum that you're seeing in the tech story is going to be derailed by higher energy prices.
Have you got high hopes for some insight in the hearing tomorrow with Kevin Walsh?
No, I mean, I think that you're going to see some grandstanding. You're going to see some push to resolve the outstanding investigations. I think what's going to be more interesting is listening to what he has to say about the view on the Fed and the balance sheet. Are we going to see potentially quantitative tightening as a way to enter the story around lower rates? But I don't think we're going to see a lot of fireworks.
Do you think that's something that's needed?
No, our view is that right now we're sort of in a spot where the Fed probably should remain on hold. Our view coming into the year was one cut. The move higher in energy prices means that inflation becomes a bit more of a concern. But we actually think you're seeing some signs of stabilization in the labor market, and that allows the Fed just to kind of sit and watch for a little while.
One big feature of the rally that we've seen in risk assets has been utter stability in the rate side of the picture. And ultimately, this kind of pairs with the idea of these hearings. At what point can that not last, given the fact that we have drama that's almost unprecedented in terms of the race for the next Fed chair, and frankly, the composition of the board?
No, the interesting thing is the rates have been rather steady in the longer end of the curve. Shorter-term rates have actually moved a lot, right? And one of the things that we've been watching is the shift in expectations, not just for the Fed, where markets went from 2 to 3 cuts this year to on hold. And if you look at other central banks around the world, they're actually pricing in meaningful hikes over the back half of this year. That's where we're finding some more tactical opportunities within the rates market, getting clients to think about moving out of cash into short duration, either treasuries or investment grade debt, given that repricing.
At what point do you think that higher commodity prices paired with relatively resilient growth in the United States will lead to a creeping higher in long-term inflation expectations, especially if it seems like a Kevin Walsh Fed, should that occur, and as it will likely occur, is inclined to cut rates and is inclined to have a more accommodative policy?
Yeah, so we haven't seen it yet, right? If you look at the inflation expectations, both in terms of what the market is pricing as well as survey data, the view is that this is a short-term move and not a longer-term move. The longer we stay at potentially $100 plus in oil, the more you're going to start thinking about whether or not this is going to turn into a longer-term question. We're not there yet.
Stephen, it's good to see you. As always, thanks for dropping by. Stephen Parker there of JP Morgan Private Bank. I remember the days when people were uncomfortable with the prospect of this going on for months and not weeks, and it looks like it's going into month 2, maybe month 3.
People are relieved that betting markets now have a little bit more than a 60% chance of this resolving at the end of May. I mean, we're in April right now, if I do remember correctly, and if I'm actually getting my date correct, but it feels like the bar has shifted, and the real cannibalization in the physical market is making some people very concerned, while people in the market say, but look at tech.
I lost track of this year at some point in Q1. Because Q1 felt like a decade.
Yeah.
And then I've got no idea where we are from there. And every week right now just feels like one very long trading day that starts on a Sunday and ends on a Friday, then starts again on a Sunday and ends on a Friday.
I'm getting that feeling, though, from our guests as well. I'm just saying this. I don't want to put words in their mouths, but it feels like everyone is up late on a Sunday night, coming in on Monday saying, oh, my goodness, I'm going to do this again. It is a fatigue moment.
The fatigue is real, that's for sure. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. The White House saying Vice President J.D. Vance is heading to Islamabad tonight to lead a second round of talks, along with envoys Steve Witkoff and Jared Kushner. The Iranians are denying they will participate in those talks with the U.S. A 14-day ceasefire is set to expire tomorrow night. The Senate Banking Committee holding a confirmation hearing for Fed Chair nominee Kevin Walsh tomorrow at 10 a.m. Eastern. Walsh's confirmation has been in doubt, with Republican Senator Tom Tillis vowing to block any Fed nominations until the DOJ wraps up its probe into Jay Powell. And New York City Mayor Zohran Mamdani saying his plan to charge an annual surcharge on uber-wealthy owners of second homes is an important step in his pledge to raise taxes on the wealthy. Mamdani is framing the tax drive as a way to increase affordability and improve services for average New Yorkers. That's your Bloomberg Brief. John?
Yahira, thank you. More from Yahira in about 30 minutes' time. Up next, the morning calls. Plus, we'll catch up with Sadek Waba of I2 Capital on how the war in Iran is intensifying the need for infrastructure. Live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
You went from being deeply underweight just a couple weeks ago to very rapidly back up to neutral. And that kind of buying power has really been the fuel for why we've seen markets move up so far so fast. I think some of that is now behind us, which means we're far more sensitive to incoming news, meaning we need good news in the Middle East in order for this to continue.
That was Cameron Dawson of New Edge Wealth. No sign of good news over the weekend. Equities pulling back from all-time highs, but only a little bit. On the S&P 500, negative by 0.5. On the Nasdaq 100, down by 0.4. For the Nasdaq Composite, this from Jim Reed of Deutsche Bank. 13-day winning run. Only 4 longer streaks have occurred in the index's 55-year history. That's how unique this run has been.
Yeah, and this latest 13-day run for the NASDAQ Composite, the longest going back to 1992, at a time when people are saying this is a steal, that actually valuations have come in to such a degree that this is a screaming cheap buy, even though a lot of people are raising concerns about sort of the irrationality of risk on, given the fact that we're dealing with potentially a real stalemate.
The Nasdaq 100 right now, this morning at least, negative by just 0.4%. That's the price action. Let's get you some morning calls. First up, KeyBank raising its price target on Alphabet, calling its cloud momentum underappreciated. Your second call from Bank of America raising its target on Amazon, expecting first quarter revenue to exceed expectations. And your third and final call from the team at Stifel, raising its target on AMD, noting strong compute demand. Turning back to our top story, the war in Iran. President Donald Trump threatening to, quote, knock out every single power plant and every single bridge in Iran if a deal is not reached. While the war weighs on global infrastructure, Sadek Waba of I2 Capital is remaining positive on the sector, writing, quote, the fundamental need for infrastructure in this part of the world doesn't disappear because the environment is difficult. If anything, it intensifies. Sadek joins us now for more. Good morning, sir. It's good to see you.
Thank you.
Thank you very much for being here. So in your opinion, in your mind, the war of the last 2 months or so doesn't upend infrastructure. It might accelerate it.
Unfortunately, in that sense, yes. So 2 things. First, you're going to get at least $60 billion, probably more, in terms of direct infrastructure damage. The problem is that's the physical damage, but you have consequences in addition to that, meaning it will take you a couple of years to rebuild some of that infrastructure. You'll have to spend on defense. So overall, the governments of the GCC have probably another $100 billion that they need to spend over the coming years. What that will do, in my view, is it will push these governments into investing in these projects through direct government intervention and national oil companies, but then let the private sector focus on the remaining infrastructure over the course of the coming decade. If you look at the share, for example, in Saudi, of non-government oil, that's about 40%. What's that number in the US? About 15%. So that share of government expenditure needs to come down anyway over the coming years, and that, I think, will be accelerated because of what has happened.
What do you think the key priorities will be now?
I think there are two key priorities. One is redundancies, and the other one is accelerated growth. So redundancies, because we've seen that there's too much concentration in particular areas. So for example, 20% of the oil goes through the Strait of Hormuz, 20% of the LNG goes through the Strait of Hormuz. So what the GCC countries will need to do is to create redundancies, more pipelines, more storage facilities. And you're talking, by the way, they're already talking about that, right? It's not something that is speculative. What kind of pipeline do we need to build to remove that reliance on the Strait of Hormuz? What kind of storage facilities do we need to put in? So you're going to get a huge boost in investment in that kind of infrastructure to reduce that reliance. So that's one aspect. The second aspect of it is, if you look at the non-energy infrastructure, a lot of it has been concentrated in particular geographic areas. So for example, take data centers. One of the highest penetrations, by the way, of mobile phones. Fantastic. But the digital infrastructure is highly concentrated in a few hubs. So a few hubs, global cloud dependency, fiber optic comes in particular geographic areas, which we don't need to mention, so all concentrated in those areas. So that will have to change over the coming years. So one is data center. Another one is water resources. 67% of the population in the GCC relies exclusively on desal water. And all the desal plants are along that coast, which is in the Gulf of Persia. So you'll need to create a new infrastructure for water reserves that need to be put in.
This is a lot of money, and it's even more money when you think about how much the commodity prices are increasing as a result of all of this infrastructure build. Where is the money going to come from? Is it going to be diverted from other initiatives that these Middle East countries are now investing in, whether it's golf or whether it's the Premier League in football? Or is it going to be coming from outside investors?
I think it will come primarily from outside investors. So take a private equity firm like I2 Capital. We're looking to deploy easily over $2 billion in the coming years in the region, in that kind of infrastructure. It could be in water resources, data centers, which we're already doing, renewables. Renewables penetration in that area is 5 to 7%. US is 20%. Overall, globally, it's about 30%. Europe is 60%. So they're way behind in terms of integrating renewables power into their system. So I think you're going to get a lot of investments. It should come primarily from foreign direct investments, private capital, and that's already happened in the last couple of years.
Do you get the sense that there is an allegiance in terms of where the money comes from to go into some of these projects, the infrastructure projects? And I say this at a time where it seems like the world is kind of fracturing, and there's a real question about U.S. money going into the region, or is it Asian money that's going into the region, at a time when this used to be sort of the new financial capital that's kind of been called into question. I mean, do you have a sense of where the flows are going to be coming from?
I think, interestingly, the flows are going to continue to come from the U.S., because we are the largest, deepest capital markets in the world. There's no doubt about that. We tend to be sometimes short-term and forget about the long-term. Asia tends to be more longer-term. But you have a huge base of private equity investors in the US that is looking to invest in the region and will continue to invest in the region and are willing to take a longer-term view. I don't think that was the case 10 years ago, because you've seen fundamental changes in the region, notwithstanding the war. But Asia capital, your point, I think is going to be very aggressive, like it has been in Latin America, like it's been in Europe, through Belt and Road, through other mechanisms that China has developed. Absolutely.
Sometimes there's a habit to talk about the region as a monolith, but it's not. Who's hit the hardest right now? Is it Bahrain and Kuwait? Are they going to need the most money?
The truth is, the people think of these as different countries, which of course they are, but they all rely on that energy infrastructure, which has been hit. That, I think, will need to be rebuilt very quickly. Some of it will take years, as I said, because I'll give you an example. Today, I want to build in the US a power plant. We have huge needs for power plants, right? Because of data centers. For me to order a turbine from Siemens, Mitsubishi, GE, 5 to 7 years. So think about that region where they have to rebuild. It's not as much as the cost, it's as much as the time that's going by. So they will have to wait quite a bit to be able to rebuild that. So it's honestly across all of the energy sector. What has been most hit is, of course, anything that has to do with the US. So US bases, where US activities occurred, that was hit.
What about the trillions of dollars these countries have pledged to invest into the United States after the president made that huge foreign policy trip last year?
Yes, I was actually part of that trip with President Trump. I think those investments will happen, but maybe will happen over a longer period of time than expected. Let's put it that way.
That's what I heard. I heard all those investments are now getting kicked down the road. Just kick the can. But for the President of the United States, this was a huge foreign policy win.
Yes, you see, there's an irony to that. I think those economies are willing to invest in the US. The question is, in what sector? And are we able, do we have the mechanism to take on those investments? So it's easy to invest in the stock market. It's much more difficult to invest in a multi-billion-dollar pipeline that needs to be built. So ironically, it's the availability of projects in the US that is the challenge. The permitting, the regulatory frameworks, all that is effectively slowing down the ability to absorb that kind of capital.
Lisa tries to ask the question, do you think the Saudis will stick with Live Golf? Have you got an opinion on that, sir?
None, but I think they will stick, yes.
So I appreciate your time. Thank you, sir. Thank you very much. So well about that of I Squared Capital. You went there. I didn't go there. You went there.
I know. I did. Okay. I was like sort of, alluding to this because it's sort of some of the places that money has gone, and I know that you're kind of hoping one way or another in that particular area.
I don't think they stick with Live Golf. I think they wait until after the next tournament wraps up because it's going to be at Trump National in Washington, D.C.
Okay, there we go. Getting some headlines from Kevin Hassett, the NEC director. He's reflecting on that Wall Street Journal piece about a swap line for the UAE. Kevin Hassett calling the UAE a valuable ally, the best and would help if needed, but ultimately a UAE FX swap line probably won't be necessary.
Yeah, this is going to be a delicate dance as some of the relationships in the Middle East are fought for. I mean, the idea that Asia right now, in particular China, is being really aggressive in the region highlights the need for extreme diplomacy and the desire among some countries to be courted.
Well, swap lines usually happen through the Federal Reserve, and there's traditional ones like Canada, Japan, the UK. But last year, the Treasury Secretary did a swap line through Treasury, and it was through Argentina. So if there were to see one, it would probably be Besant, similar to what we saw in Argentina. But I also agree with Kevin Hassett. I don't really think the UAE needs one.
That's the latest from Kevin Hassett, the NEC director, speaking to the press just moments ago. Coming up on this programme, we'll catch up with Isabel Mateus-Alago of BNP Paribas, looking ahead to tomorrow's confirmation hearing with the Fed, potentially the next Fed chair, Kevin Walsh. That conversation just around the corner. From New York City, you're watching Bloomberg TV.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
The opening bounce about 60 minutes away. A record-breaking run of this equity market on the S&P. 5 days of gains on the S&P 500, 13 on the Nasdaq 100. This is the very, very small pullback this morning relative to a major bounce over the last 2 or 3 weeks. On the S&P, 3 consecutive weeks of 3% plus gains on the S&P 500. We're declining by just 0.4% following a weekend full of chaos and confusion.
Yeah, if you just woke up after being in a coma and suddenly you look at the fact that the U.S. was going and physically attacking a ship and boarding it that was Iranian and that the strait's now closed and there are questions around whether the talks will actually take place tomorrow, you'd think that oil would be up much more. You would think that stocks would be down much more. But at the same time, people have gotten used to this. This is our Sunday night drama. And so people say, okay, we kind of have gotten the story. This is going to get resolved one way or another. We're moving on. How do you get an edge at a time in an untradeable market in terms of headlines? You focus on something else, and that is right now what the market is doing.
And it definitely feels like this market is really holding on to the idea that the ceasefire either will be extended or those peace talks, the second round, will actually happen tomorrow in Islamabad. Right now, the White House is planning to send the Vice President, Steve Witkoff, and Jared Kushner. But we have not had clarity or confirmation on the Iranian side. So potentially we could see some serious escalation in the next 24 hours, but the market at the moment doesn't really seem to be pricing that in.
Like Lisa said, we've seen this movie before. Another Monday morning that started on Sunday evening, and a Monday morning full of fatigue and exhaustion.
And so people are just saying, look, you've done this every single night. I feel like it's like a parent talking to a young kid. It's like, you know, you said this every night. You're not going to go to school the next morning. You're going to go to school. And so at a certain point, people just sort of move on. This does feel slightly different because the physical world is being disrupted. And ultimately, at what point do we start to see that in the data? We're going to be getting some ISM data later this week, the PMI data, rather, not the ISM data, coming out. Do we get a sense of a slowdown in business sentiment, in particular in certain regions as a result?
If my football team lost, I did ask for the day off. That's what I'd ask for.
Really?
Yes, if the team lost, yeah.
Okay, but that was like consistent, right?
Sometimes it was granted.
But your team did. Your team did lose this year.
Well, I'm not 10 anymore.
Sorry.
So I'm not getting days off.
Yeah, I hope my kids aren't listening. Please don't listen to that. You're absolutely not getting the day off if the Mets lose, because the Mets lose every single time.
Then they get
You know the
day
last.
off.
You know the last time the Yankees lost, what the Mets are dealing with right now, 10 games, was 1913.
Oh, rub it in.
Embarrassing.
Where'd you find that stat?
Someone on Twitter posted
quite a stat.
and DraftKings, and then I did my own research, and it's accurate.
Okay.
I'm leaving.
Stay with us, Brammer. 28 more minutes to go. As we count you down to the opening bell, let's get you some single names, some morning movers. Danny Berger has more. Hey, Danny.
Hey, John, some deal news this morning. USA Rare Earths is going to be buying a Brazilian mining company called Salsa Verde for $2.8 billion. Shares of USA Rare Earths now up 8.5%, which is usually rare for the acquirer, but it just shows a lot of these American mineral and rare earth companies are looking to try to build up their stockpiles and a lesser reliance on China. Elsewhere, a satellite company, AST Space Mobile, they had a satellite that was aboard a Blue Origin rocket that was launched over the weekend. It was supposed to enter an orbit, but something went wrong. It basically detached from the rocket, but didn't enter the right orbit. In other words, this satellite was lost. It's going to come back down into the Earth. It's going to burn up in the atmosphere. So those shares down 13%. Finally, another little bit of deal news is coming from the information that Marvell will be building two distinct TPUs for Alphabet. One will be to accompany their own. Another one will be a separate one to run AI functions. Either way, it's just going to be purpose-built for Google. So those shares up 5 3/4%. Google slightly lower this morning. John.
Hey, Danny, thank you. Thanks for the update. More from Danny alongside Matt Miller in about 25 minutes' time. Let's go to the calendar. Tomorrow, Kevin Warsh set to face Capitol Hill investors. They're listening for any clues on where the Fed chair nominee stands on interest rates. Mike McKee has a preview now, and he joins us for more. Good morning, Mike.
Good morning, John. Well, it's important to recognize this is just a step along the way for Kevin Warsh because Senator Tillis is still determined not to vote one way or another until the administration drops the probe into Jay Powell and the Fed's remodeling. So it has some interest for the markets, but it's not going to tell us much about where we end up. Now, the questions for Warsh, the first and most important one, who does he work for? Does he work for the president and do what the president wants about interest rates? He will say no, but the question is how he will say no. Then if he's still interested in rate cuts, though, when and how much? That's going to be a major topic for people in the markets who think that the Fed is going to be cutting rates by the end of the year. The balance sheet, how small does he want it to be? Will they sell off mortgage bonds? He's suggested that they might want to do that. That could be very complicated. Also, does he want to go back to scarce reserves? And then communications. He thinks the Fed talks too much, and it would be better if especially the Fed bank presidents didn't speak as much about what their forecasts are because he doesn't believe in the idea of forward guidance working very well. We also have, as you were just talking about, some important economic data this week, also coming tomorrow, the biggest numbers of the week, retail sales. Are Americans hanging in there? We're going to see a big jump in retail sales because of gasoline prices, retail sales denominated in dollars. So it may or may not tell us a whole lot. There isn't much else this week. Thursday jobless claims, but those PMIs that Lisa was talking about will give us some indication of where we are because they are April data, preliminary data. So it'll be interesting to see. The forecasts are that they go up a little bit. And then we'll be looking at Michigan sentiment on Friday. And of course, that's the inflation expectations number that everybody's been watching all week long, the Fed blackout. So we won't have any Fed comment except for this. Tomorrow afternoon, Chris Waller is speaking about how he sees the Fed changing in the future. And that will be sort of at the same time as Kevin Warsh. So maybe we'll have dueling views of the Fed's outlook going forward.
So, Mike, how does Chris Waller do that, the governor of the Federal Reserve? Does he ignore current monetary policy and just focus on communication and those kind of things?
Yes. He can't talk about monetary policy, but maybe he's talking about bank regulation. Maybe he's talking about communications policy. He could even be talking about the balance sheet and scarce reserves versus ample reserves, just as long as he doesn't talk about interest rates.
There we go. Mike, thank you. Thanks for breaking it down. Mike McKee there with a preview of everything coming from the Federal Reserve. You mentioned the PMIs. You're right, too. Soft data has been okay. In fact, in many cases, better than okay.
Yeah, the global PMIs are going to be really interesting for April because we might see that things are okay in the United States. But if you're talking about jet fuel potentially running out in Europe in 5 weeks, things are not okay. And flights already getting canceled. Does that start to show up some of that data in those PMIs?
Let's build on some of these themes. Isabel Mateus-Zalago of BNP Paribas writing the following: markets will be on the lookout for hints of Warsh's policy reaction as well as elaboration of his plans for Fed reform. But it's possible we get little on either topic given all of the other issues in the air. I'm pleased to say that Isabel joins us in the studio. Isabel, good morning. Good to see you.
Good morning.
What's the best we can hope for tomorrow in that hearing?
Oh, the best we can hope for is a standard grilling about, what does Kevin Warsh mean by we need regime change at the Fed? How should the Fed respond to this stagflationary shock? And what does he have in mind for the balance sheet?
And what do you expect?
Well, I expect there will be other issues creating some noise, but I think it would be, this Senate confirmation process is a very important part of the process for getting it right at the Fed, and I'm sure a lot of senators, in fact, most senators involved, will want to make sure that they go through the full due process, and I'm sure Kevin Warsh himself, for his own sake, will want to address these policy issues rather than the political noise around this.
Right. right now, even some of the more dovish Fed members have expressed hesitation from cutting rates anytime soon, given the inflationary shock. There had been discussions about even rate hikes not so long ago. Do you think that the prospect of central bankers acting overly hawkish in the face of this oil price shock, that sort of faded away a bit in terms of likelihood, both in the U.S. as well as in Europe?
Yeah, so one thing that struck me out of all the pronouncements made at the IMF spring meetings last week by central bankers is how humble, in a way, they all were in accepting that we don't know where this is going, this being the situation in the Gulf and therefore the situation with energy prices, and we don't know how the economy will react. Therefore, let's really wait and see and not rush into action. So I think whereas initially there was a fear, and you saw this in market pricing, that certainly Bank of England, ECB might go in a very hawkish direction, I think they've pulled this back. And the Fed, interestingly, has gone a little bit in the other direction. I mean, obviously, the FOMC members who were hawkish to begin with, like Austin Goolsbee, have stayed hawkish. But very interesting, I thought, the speech by Governor Waller, where he set out that, look, this is not just another supply shock. This is one in a succession of supply shocks, and we need to be cautious. So I really saw a combination of patience and vigilance, and that seems to me exactly right. And we have to see how events pan out in the Gulf.
It does seem a little bit like we're dancing on the head of a pin.
Yep.
Because on one hand, growth and just the acceleration that you're seeing from corporations seems to be holding in. At the same time, the commodity prices are fundamentally and structurally potentially higher going forward. And yet people are expecting inflation to go back to where it is without necessarily the hikes from central bankers around the world that they previously had been thinking about. So can you square this circle with a peg in the middle?
So, no, I can't. But what's really interesting is, again, when you talk to central bankers and like, okay, we have our models, and the models, probably suggest that there will be some degree of second-round effects. On the other hand, we have no faith in our elasticities in our model. And this is not 2022. The economy is not overheating to begin with. Monetary policy is not overly accommodative. So we're in a different place. And let's see how this pans out. Having said all that, I think it's very clear there's a lot of resilience in the economy. And an economy that's resilient may well end up generating more second-round effects that you would like, or that central banks would be comfortable ignoring. So I think they're going to try to wait and see as long as possible. But the minute we start to see some pass-through, some inflection in wage setting, so the PMIs are going to be important for the extent to which we see an impact on activity. I'm not sure we're going to see much of a slowdown yet. But also the extent to which you see a pass-through from input prices to output prices. We didn't see that in the March PMIs. Let's see what happens this time. I think that's going to be really important.
How much more insulated is the Federal Reserve to deal with this than, say, the European Central Bank?
Well, it's not insulated. I mean, if anything...
well, we're a net energy exporter. That's what I mean.
Yeah, but that doesn't help deal with the energy, with the inflation angle. It helps cushion the shock on growth. Maybe that's also an issue for debate, because, frankly, the entire economy, the entire set of consumers are being hit now. And yes, being a net energy exporter might help if you start seeing more investment in energy production, and you're beginning to see that, but the timelines are not the same. But inflation shock is exactly similar. Now, Fed rate is either moderately restrictive or kind of around neutral. So again, this gives them time to wait and see. But the labor market is in balance, and the economy is not weak by any stretch of the imagination. So I think the Fed has to be cautious, and that's what we heard from Governor Waller and others last week.
Oh, looking forward to hearing from Mr. Walsh himself tomorrow in that hearing. Isabel, good to see you. Thanks for being here. Thank you very much. Isabel Matesa-Lago there of BNP Paribas. Let's give you an update on stories worldwide this morning with your Bloomberg Brief. I'm pleased to say Yahara's with us for more. Hey, Yahara.
Hi, John. President Donald Trump renewing his threat to attack civilian infrastructure in Iran. In a Truth Social post, the president vowing to, quote, knock out every single power plant and every single bridge if Tehran does not accept a U.S. deal. Meta is planning to lay off around 10% of its global workforce in late May. Reuters is reporting the company is also planning further cuts in the second half of the year. The move could help Meta offset some of its massive spending on AI infrastructure. And in sports, the NBA playoffs are underway with the Orlando Magic upsetting the Detroit Pistons in Game 1. The top overall seed, Oklahoma City Thunder, beating the Phoenix Suns, while the Boston Celtics taking down the Philadelphia 76ers. That's your Bloomberg Brief. John?
Yahara, thank you. Thank you for this morning. Up next on the program, we'll set you up for the day ahead. Plus, we'll catch up with Mike Kontopoulos of Janus Henderson with investors looking at stocks falling slightly and pulling back from all-time highs. Going into the opening bell, about 47 minutes away. From New York City this morning, good morning. You're watching Bloomberg TV.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
I think the noise got too loud in terms of how bad it's going to be for software. I've been kind of honing in on this narrative. It is the late 90s, but it's the 1890s when we're building the railroads, and it's that big. And I think that narrative has come back to the markets, and that's what the market took advantage of.
That was Mark Lehman there of Citizens Commercial Bank weighing in on a pretty epic rally for tech stocks. We've talked about the software sector a few times this morning. The best week since 2001. Microsoft with the best week in a decade plus. some big moves going into earnings next week. Equity futures this morning erasing the losses as we get closer and closer to the cash open. Bramo, we're down just 1/3 of 1% now on the S&P.
It seems like in overnight trading, things are, oh no, maybe this is something we should react to. And then as the morning gets closer to the U.S. Open, people say, but what about the tech names? Because they're doing great and so is everybody else. It seems like everyone is looking to what they can analyze, and that has been earnings coming out of all of the big companies. And frankly, we're seeing IPOs announced. Jersey Mike's actually filed confidentially for an IPO. We're seeing mergers and acquisitions. We're seeing high-yield bond deals getting announced. This is the capital markets that really just doesn't want to hear more about the Strait of Hormuz.
Deals and agreements getting done. Adobe teaming up with Microsoft, Anthropic, OpenAI, NVIDIA. That just crossed in from the Wall Street Journal. All these kind of things. That story continues.
Yeah, there's plenty of money out there, and their capital markets are wide open, and that enthusiasm for a technological revolution right now is triumphing over the what-ifs, as you do see the physical markets brought to a complete halt with this crucial waterway completely shuttered right now.
Adobe in the pre-market higher by some 4%. As we count you down to the opening bout, a few things to look out for over the coming days. Tomorrow, US-Iran talks could be on the schedule. They're possible. Let's see if they actually happen or not. Also, a Kevin Warsh hearing in front of the Senate Banking Committee taking place tomorrow, so look out for that too. As we work our way through the week, we'll get some earnings and some data, retail sales data coming up as well, United numbers too, plus results from Tesla and IBM. You're pretty focused on the airlines, aren't you, for the week?
To me, they are the key economic indicator, the real-time sense of just what the physical shortages are, as well as just how much consumers are willing to pay up for prices, given the fact that they have to compensate for the higher gasoline prices. How devoted are you to go to the south of Italy for summer?
Very.
And who cares?
But not this year.
Okay, good luck. But if you get stuck there, the issue isn't getting there, it's Europe.
I'm not too bothered about getting stuck there, to be honest with you. You know, pretty committed to that. You know? Anyway, but not this year. We'll talk about that another time, all right? Let's talk about corporate earnings boosting sentiment. The outlook for earnings pretty solid. S&P 500 companies reporting so far have seen profits come in 11% above expectations. Mike Kontopoulos of Janus Henderson writing the following: earnings continue to be strong globally, reinforcing that before the war, the economy was in a good place. Mike joins us now for more. Mike, good morning.
Good morning.
Congratulations as well on the recent combination. It's good to see you under the Janus Henderson tent now. Let's talk about the outlook. Is the outlook for earnings still good following this war?
So far, yeah. So far, the outlook does look pretty good. I mean, we haven't really seen yet any sort of collapse in earnings expectations. You know, estimate revision ratios still remain reasonably strong. And this isn't just a U.S. phenomenon. It's a global phenomenon. I mean, emerging markets continues to look good from an earnings perspective for now. Listen, we don't have enough data yet to know what's going to happen in Q2 and Q3 and beyond. And I think much of that will depend on how long oil prices stay high for and how that affects margins and ultimately consumption. But we came into the Iranian war in a really, really healthy spot. And I think that's what we're starting to see as earnings are rolling in for Q1.
When we say the outlook for earnings are good, are we talking about a handful of companies? You mentioned EM. You go through the list of EM equities in the MSCI index, and it's just Samsung, Taiwan Semi, SK Hynix, Tencent, Alibaba. Is it more than just tech?
We just named like 6 or 7 companies, but
which make up probably a quarter of the index.
They do. I mean, obviously, there's huge concentration in Taiwan, South Korea, and even in the China, markets. But yeah, I mean, you're starting to see a bit of a broadening, and I would argue that although higher oil prices may hurt emerging markets and nat gas prices and higher oil prices, European companies, of course, commodity-oriented companies in emerging markets should do quite well in this environment. I think will ultimately prove to do pretty well over the longer term. Yeah, but there's a broadening, and broadening just doesn't mean outside of U.S. tech. It does mean globally, even if it means technology globally, with, again, South Korea and Taiwan being kind of 2 of the key drivers there on the tech side. But yeah, there's a broadening. There's a broadening happening across markets.
Yeah, it was a broadening based on growth and based on this commodity cycle that we seem to be facing off with. And I'm going to trigger a bunch of people out there, but it kind of draws into question 60-40 composition, given the fact that ultimately you're going to be dealing with an inflationary push coming from the commodity side of things. Do you think right now certain equities are a better hedge than just full faith and credit government bonds?
So not because of any sort of default risk or anything on the U.S. government bond side, but certainly as inflation goes up, you're going to have higher interest rates. And I do think that we're going to be in an environment where it's going to be difficult outside of a recession to get below 4% on the 10-year and stay there. And in fact, the longer, stronger growth in inflation remains, I think you're probably going to trend more towards 5%. in that world, you know, energy and industrials, value, dividend-paying companies are all going to perform quite well. They'll do well in an environment where, you know, duration is basically no carry in corporates at the moment. And so why bother with high yield at, you know, 250 to 350 over? Let's just make a big range there, because that's kind of where it's been over the last, you know, several months. When I can go and buy, you know, mortgages, I can buy AAA CLOs, I can buy, you know, longer duration munis, which I know has the longer duration aspect to it, but in a balanced portfolio where the overall duration is low, at least you're picking up some spread and yield there as well.
Tomorrow we'll spend a lot of time on Kevin Warsh's hearing on Capitol Hill. How relevant is this Fed to your outlook at the moment?
So, you know, we try to navigate the noise, so to speak, and not pay too much attention to what's going on politically, which I view part of this theater as being somewhat political. At the end of the day, it depends on what the committee is going to do, not what Warsh is going to do. And if the Fed cuts interest rates in an environment where inflation is probably trending towards 4% and growth is reasonably strong, you're going to see significantly higher interest rates, and it's going to defeat the purpose of what the administration ultimately wants. The bond vigilantes will come out. It'll start to punish the bond market. You'll see huge selling, and that's when you get to 5%. If the Fed keeps rates where it is, or even hikes, which I think is entirely a possibility as we get later into this year and into 2027, that's when actually you slow growth and inflation. That's when rates fall. So it flips sort of the argument on its head, and it seems like that the administration is missing that point, but I don't think the Federal Reserve will miss that point.
You dropped a bomb at the end there. You think it's possible later this year?
Oh, yeah, for sure. I mean, listen, if let's say oil were to settle in that 70 to 80 range, something like that, and not slow growth too much, but contribute to inflation, and earnings growth remains robust, and the economy kind of, you know, hums along, absolutely, why not?
Mike, it's good to see you.
It's great to see you as well.
Thanks for dropping by. Mike Ontopoulos there of Janus Henderson Investors on the potential for a rate hike later this year.
Yeah, this is something that other economists have pointed out as well. The idea that the worst case scenario for the Fed is $80 to $100 a barrel, because that wouldn't slow growth so much that you would have sort of the natural tamping down of inflation, but you would have those inputs that would be increasing at a time where we still have not gotten down to 2% for more than 5 years. I mean, I just keep going back to that. You know, where we're starting is also in a more inflationary moment.
It's hard to communicate this to many a politician, but if you want lower interest rates, don't push for lower interest rates. Is usually the best way of getting lower interest rates.
Doesn't work. That's not a good pundit talking point. And honestly, on Instagram, that really just wouldn't fly, John.
You know?
He uses truth on Instagram.
They want to clip those little videos.
Yeah, exactly. They're not going to be like,
I get
if
it.
you want to hike, you lower rates. It doesn't really work.
Coming up tomorrow, Chris Ferrone of Strategas, Andrew Sheets of Morgan Stanley, Savita Subramaniam of Bank of America, and Dana Peterson at the Conference Board from New York City this morning. Good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, you know, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet, but there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. You know, stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Happy 420, 30 minutes until the start of trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, the U.S. seizes an Iranian ship and Tehran closes the Strait of Hormuz again, clouding prospects for peace talks.
And that chaotic weekend of gunfire, reversals, and threats sends oil prices higher and stocks slightly lower this morning.
Meanwhile, a big earnings week ahead. Wall Street is bullish, with strategists saying resilient results will continue to support equities.
And that's definitely what we're seeing. Stocks holding up relatively well, all things considered, and capital markets alive, open, and well. Matt, I'm looking at this morning, QXO. They're buying insulation company TopBuild. It's a $17 billion deal. It will make QXO the second largest publicly traded building products distributor in North America. So deals are happening. Jersey Mike's is going to IPO. Yes. Everything is fine and dandy with the world.
Yes, there is a lot going on today. Travel stocks are moving lower, though. American Airlines said it's not interested in a merger with United, citing competition, saying that would be hurt. It's interesting. We see, obviously, these stocks moving lower because the price of oil is rising amid renewed tensions in the Strait of Hormuz. But I think that adds to it to some extent, because American Airlines could have said anything else other than this will hurt competition. That basically ends the prospects of a deal happening because they can't turn around on that.
That is true, but maybe only with United. Maybe JetBlue is still in play, maybe other airlines, just not these two colossal ones. Now, let's get back to our top story of the morning. The U.S. is maintaining its Hormuz blockade and has seized an Iranian cargo ship. Tehran signals it may skip talks tomorrow as President Trump warns of strikes on infrastructure. He spoke Saturday.
We have very good conversations going on. It's working out very well. They got a little cute, as they have been doing for 47 years. Nobody ever took them on. We took them on. They have no Navy. They have no Air Force. They have no leaders. We're talking to them. They wanted to close up the strait again, as they've been doing for years, and they can't blackmail us.
Joining us now is Bloomberg Washington correspondent Tyler Kendall. Tyler, how's it feeling of 3 steps forward, 2 steps back at the moment? With the ceasefire set to expire at some point on Wednesday, where do things stand?
Hey, Danny. Well, at this point, there is risk of escalation on multiple fronts. Even as it feels like we are making progress, as you're outlining, we then see these other things start to happen. But at this point, the White House is still maintaining that diplomacy is a viable option ahead of tomorrow's ceasefire deadline. In fact, the White House says that Vice President J.D. Vance, alongside Special Envoy Steve Witkoff and the president's son-in-law Jared Kushner, are set to depart for Islamabad later tonight. But still, Iran is still wavering on whether or not they will send any many diplomats to Pakistan for another round of talks, and at least publicly this weekend denied that any sort of progress or concessions have been made related to its nuclear program. Then, of course, the escalation and tensions flaring when it comes to the Strait of Hormuz. As you outlined, we saw for the first time the U.S. sees an Iranian-linked tanker approaching the strait, as CENTCOM said that it did not obey military orders over a 6-hour stretch, and then Iran also moving to reimpose those restrictions on traffic. We're going to have to see where it goes from here, because President Trump still, after all of this, posted on Truth Social that he thinks that there is a path forward here for talks, but then also reiterated, importantly, that threat that he could hit Iranian civilian infrastructure if we don't get a deal in time. Matt and Danny, we'll see if maybe there's an extension, if maybe there's a deal, or if we revert back to escalation, because from Iran's side, we heard from Iran's foreign minister saying that they don't plan to attend these talks, but at the same time, Iranian state media also reported that the country's president has maintained that nobody has an appetite, in their words, to resume the fighting.
President Trump on Friday said that a deal is as good as done. He said that they're going to give up, I guess, their right to enrich uranium pretty much forever. He said they're going to open the strait and they're never going to close it again. Then, obviously, they did close it again. And I also noticed in that soundbite, he said they've been closing the Strait of Hormuz for years, which isn't true. Obviously, they only did it for the first time after Israel and the U.S. attacked them. Is this a negotiating tactic for him to just make things up and go out with information that isn't at all true? Is that sort of the Crazy Ivan thing?
It could be, Matt, at this point, though, of course, we don't know what's actually happening behind closed doors. But you're right. We heard President Trump on Friday set out that we have seen progress on those key sticking points that we know about, including Iran's nuclear enrichment levels, what is going to happen to the already enriched material, and then, of course, the Strait of Hormuz. Now, we know the White House wants to see other points put on the table, including, for example, Iran's support of proxy militia groups. But at this point, Iran is maintaining that they have not made any concessions when it comes to really any of these points. And perhaps most importantly, we saw the strongest statement when it comes to that already enriched material amid President Trump's comments and reporting that there could be some sort of deal underway, whether that included sending that material in exchange to the U.S. for some sort of unfreezing of Iranian assets. We're going to have to watch where it goes from here, because at this point we're taking the president's statements and the White House's line, but it's a little bit harder to read on the Iranian side because there are just so many factions at this point that are putting out statements through Iranian state media.
Yeah, it's a little bit confusing when the president says it's going very well. I'm not sure if it is. Tyler Kendall in Washington, thanks for your reporting. Let's get to oil right now. Brent trading back up over $90 at $94.86, as you can see. Bloomberg oil strategist Julian Lee has been reporting on the confusion in the Strait of Hormuz and digging very deep. Julian, what do we know about, ships that are making it through, about these cargoes that are so important to especially Asia and European infrastructure? Are we getting any oil?
Not really. There was one super tanker carrying about 2 million barrels of crude that managed to sneak out on Saturday during that brief period where the strait was apparently open. One much smaller tanker of crude, about 700,000 barrels, also made it out. Those are the only two cargoes of crude that have made it out in the past week, and there's no sign of anything moving at the moment. As you said, Iran has closed the strait again.
What would it take, Julian, even if that announcement on Friday were to have held, what would it take to give ships even the confidence to get through the Strait of Hormuz?
Well, I think if you looked at what happened immediately after the statement was made by the Iranian foreign minister that ships would be allowed through the strait, there was a very significant movement of ships heading north from the United Arab Emirates into the Strait of Hormuz. But then everything changed, and they got to sort of the most northerly point in the strait, and they were halted and turned back by the Iranian military. So there clearly was enough comfort among a significant number of ship owners, probably not everybody. to start moving as soon as they were given the green light by Iran. And so I think if some kind of a deal could hold, we would start to see ships moving out of the Persian Gulf. How many we would see going back in again, I'm not sure. That would be, I think, an added degree of risk, because you're effectively taking your ship into a closed area of water on the assumption that it will still be able to get out again in 4 days, a week's time. And at the moment, the way everything is changing so quickly, nobody has that kind of confidence, I think.
Julian, thank you very much for joining us. Bloomberg's Julian Lee. And in the next hour, we're going to hear from Eurasia Group President Ian Bremmer. That will be at 10:30 a.m. New York time. So stay with us for that conversation. In the meantime, top strategists say that the market can keep rallying despite the geopolitical turmoil. JP Morgan says $100 oil will not be enough to derail earnings. Goldman sees revisions supporting a strong but narrow rally. Morgan Stanley says that the earnings recovery remains intact. Joining us now is Bloomberg Equities editor Elena Popina. I was also looking at Max Kettner from HSBC, who's like max bullish right now, saying buy every dip, despite the fact that oil prices are up and the Strait of Hormuz is still closed.
Yeah, the rule of the thumb was that Brent crude at $110 between now and the remainder of the year would slash 5% from the S&P 500 EPS growth. We don't see that right now. We see Brent at near $85 per barrel, and we see that earnings estimates are going up. The rule of the thumb is traders keep saying that, that will not impact, demand, that will not impact margins, and the 13% earnings growth estimate for the first quarter earnings of the S&P 500 would be the 6th consecutive quarter of double-digit gains. So we're talking about really strong fundamentals and really strong corporate America.
So basically, oil doesn't start to break the bull case until it's over 110.
For the remainder of the year.
Right. So significantly over, or over for a much longer period of time. Are we seeing repositioning, though? I mean, are traders really going into, there's a great story on the Bloomberg today about that we need to be positioning into energy, into defense, into like these prosec trades, as Peter Cheer calls them from Academy Securities. Are you seeing that?
Yeah, absolutely. We're seeing the MSCI global equity indexes. The sectors that are up the most this year are related to energy, are related to natural metals. So yes, AI becomes, this front and center as, earnings estimates are going up. At the same time, we're seeing traders repositioning, because it's not all just about the AI trade. It's about national defense. It's about security. The aerospace and defense sectors are going up. So it's a double-edged sword at this point. Yes, AI and tech is still the game of the town, but also some of the neglected areas are doing really well right now.
All right, Elena, thanks very much for joining us. Elena Popina runs our stocks team for Bloomberg News in this building. Check on markets right now. We're looking at S&P futures that are lower, but only about 0.3% after a pretty massive rally on Friday. Interesting that investors were willing to hold risk through the weekend. You would have thought they would be concerned that something bad would happen, and something bad did happen, and yet it's not really hurting futures much at all.
It's not. I was on Bloomberg this past weekend, and I was speaking with Christina Ruffini, and she was like, stocks have gone up so much, and now we have this news about the Strait of Hormuz being closed in. We're probably going to get a massive sell-off on Monday, right? And I was like, I doubt it. I doubt it. We're pricing in the path to peace. That's enough, not actual peace itself.
Yeah, traders clearly looking through this. You have, again, the rally in oil, but it's not really huge compared to what we've seen of late, right? We had seen at one point Brent go to 120 in the depth of this crisis, and we're only trading at less than 95 right now. Let's get a look at some of the individual stocks on our radar. Adobe will team up with Microsoft, Anthropic, OpenAI, and NVIDIA to power an AI agent for business. They're all going to work together.
I don't think they left off a single name in AI. Some other deal news. Eli Lilly is buying Kelonia Therapeutics, I believe that's how you say it, for as much as $7 billion to advance its T-cell therapies.
And Marvell is climbing on a report. It's in discussions with Google to develop 2 new AI chips. As a result, Marvell is up 5%. Traders want to buy AI stuff.
Yes, that's evergreen at this point. Elsewhere, AST Space Mobile, it's a satellite company. It's plunging. So Blue Origin had a rocket that they sent off into space this weekend, and they were supposed to deploy one of their satellites. Apparently, it still detaches. The orbit isn't right or something like this. We have to ask Ed Ludlow when he comes back on. And AST says, oops, we've lost a thing. It's just going to burn up in Earth's atmosphere.
All right, we'll talk to Ed about that. He is coming on later in the program. We're also going to talk about traders piling into defense stocks as countries prepare to spend more on national security. It's still globalization. It's just a lot more serious. We'll discuss with Jefferies analyst Sheila Kahyaoglu. This is Bloomberg Open Interest.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox. That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Bringing you up to the minute geopolitical news whenever and wherever it's happening. I'm Anne Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Let's get a look at high interest, what's making headlines around the world. Hedge funds are in a talent war so intense, traders are quitting before day one. Millennium lost a top hire who jumped back to his old firm despite penalties, and pay is exploding with packages topping $50 million, even $120 million guaranteed. The downside is that clients may be footing the bill through rising fees, but they make that decision. Jersey Mike's is moving towards an IPO. The Blackstone-backed sandwich chain confidentially filed for the IPO with the SEC, also maybe confidently, targeting a valuation of at least $12 billion and potentially raising over $1 billion in proceeds. With over 3,300 locations, the company is expanding overseas and could go public as soon as the third quarter. American Airlines shuts down merger talks with United, saying it's not interested and warning that a tie-up would hurt competition and consumers. The idea surfaced after United's CEO floated it to President Trump. Any deal would face major antitrust hurdles as the two giants already control over a third of the U.S. market. Danny?
Let's talk more about this story and the wider industry. Joining us now is Jefferies Senior Equity Research Analyst Sheila Kahyaoglu. Sheila, great to see you. Thanks for stopping by. What do you make of this? Not only the fact that it was apparently floated by the United CEO, but that American felt the need to basically bat it down.
No, I think consolidation is a theme that's going to happen in the industry.
Delta CEO was on its earnings call last week speaking about that. With jet fuel where it is, it'll force weaker competitors to either consolidate or eliminate themselves out of the game. We don't necessarily see a United and American Airlines merger happening, including Delta and Southwest. Those 4 carriers have 75% of air traffic in the U.S., and it would put a combined United and American at #1 globally and #1 in the U.S., which would make it tough competitively from an antitrust perspective. So we don't see the deal happening, but we could see additional merger talks.
I mean, especially if American comes out of the gate and says this would hurt competition, it would hurt consumers. That's like a poison pill. You can't turn that around later on if Delta makes or if United makes a good offer.
Yeah, and where we see jet fuel, for airlines to go back to where their profit levels were at the start of the year, we need to see 30% fare increases. Imagine that in one less large carrier. I think it's going to be a tough deal to pass through.
Where do airlines stand? And we can separate, U.S. from European ones, but in their ability to absorb the higher jet fuel prices, and have those higher prices fully hit the carriers yet?
We heard that scare the market last week, at the end of last week, where the IAE came out and said there could be jet fuel shortages. And when Bloomberg posted the article Saturday morning, I had a few friends emailing me, is this true? And what's going to happen with rising oil is airlines are going to force to cut capacity, as we saw Lufthansa do last week. Older aircraft are going to have to retire, whether it's their CIRJs, their A340s, their 757s, and it's going to limit the number of flights, forcing prices up. So that's what we're going to see if jet fuel stays where it is.
Let's shift gears and talk about defense and aerospace more than just commercial airliners. Are you seeing a shift? Are your clients putting a lot more money into security globally, into energy globally, into infrastructure globally? Because it seems that that's where we're headed, every man for himself, kind of, in terms of national infrastructure.
Defense is very hot right now. I think we saw 10 defense and aerospace IPOs last year. SpaceX is likely coming to market this week, starting its IPO process. So there's been additional demand, whether it's from tech investors, global investors, all putting money into U.S. defense contractors and European ones as well. We're seeing upticks in defense. The presidential budget is for $1.5 trillion. We probably won't get that, but we'll see at least a 10 to 20% increase with the base budget. So U.S. defense spending is hot. With that said, defense stocks peaked at the start of the war, at the end of February, which is very interesting. Even though they'll see EPS revisions, their multiples peak because investors are unsure, especially for the larger contractors like Lockheed and Northrop that report this week. Will they actually see EPS revisions, or everything the government gives them on the top line will be taken away on the bottom line, either through lower profits or lower share buybacks, which they're not technically allowed to do with the executive order put in.
I was going to say, how much of that political pressure are they still working through, and how much are they actually enacting, again, some of what that executive order said? To what degree do they have to comply with that?
They haven't been explicit in terms of cutting their buybacks, but we haven't seen any major share repurchases. So it'll be interesting as Defense Primes report Q1, did they actually repurchase shares? Also, what's constricting their share buybacks is the budget is so large that there's framework agreements put into place, boosting missile programs like PAC-3, LTAMDS, et cetera. And so what that's doing is that's driving additional CapEx, therefore limiting their share buybacks unless they want to lever up.
Sheila, do you go as far as thinking about how a breakup of NATO would affect these companies? Because I imagine if that were to happen, then the Germans may be reluctant. They're spending $500 billion on defense. They might be reluctant to spend it at U.S. manufacturers and only look to spend it, in Germany or in the EU.
Yeah, we've seen European contractors do very, very well, especially in 25. Their share prices have been soft this year. But, as we see NATO spending, maybe $280 billion additional spending, historically 50% of that has come to U.S. contractors. Maybe we see that cut in half because even the U.S. contractors can't fill U.S. capacity, let alone, international ones fulfilling their own. So I think it'll be a mix of both. It'll certainly be a benefit to the U.S.
By the way,
contractors.
is capacity a real concern for you now?
Yes, capacity. We're seeing large CapEx programs across the defense primes, even the smaller defense tech names. Everybody's talking about dual sourcing, affordability, scalability, smaller drones, more scalable. There's just a lot of talk about who can actually fulfill this capacity.
It does feel like a lot of those smaller startups are like increasingly trying to come in the territory. Sheila, we're going to have to leave it there. Thank you so much for joining us. It's Jefferies Senior Equity Research Analyst Sheila Kiaglu. And stay with us for the next hour for a conversation about leverage in the Iran war. Your Asia Group's Ian Bremmer will be joining us, and you are watching Bloomberg Open Interest.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Quick check on futures ahead of the opening bell. We're looking at losses, but only slight after the S&P 500 and the cash trade added almost 100 points on Friday. Right now you can see futures down about 0.3% NASDAQ futures as well. Crude is rising, but NYMEX is holding under $90 a barrel at 87.76. Brent is now under 94 at 93.81. Less than 4 minutes to go until the opening bell. We begin the trading day with PNC's Amanda Agati next. This is Bloomberg Open Interest.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. Let's take a look at futures down just about 0.2, even less on the NASDAQ. So not seeing big drops here after the massive rally that we saw on Friday, spurred by a deal is pretty much done, according to President Trump, has not really been derailed after we found out the deal is not done after the U.S. shot at and boarded an Iranian ship in the Strait of Hormuz. You see the Securities Exchange Commission ring the opening bell. Paul Atkins, the Honorable Paul Atkins, here, top cop on Wall Street. So I'm sure traders on the floor are a little bit nervous. And Notable Capital, which is a venture capital fund that invests in AI startups, AI native companies like Allbirds.
Probably some notable things they invest in.
Yes, indeed. What are you watching that's notable?
I am watching deals, of course. And QXO, it was down pretty significantly in the pre-market, now unchanged, is going to be buying a building insulation company, TopBuild. It's a $17 billion deal. It will make QXO the second largest publicly traded building products distributor in North America. So those shares go up 18.5%. But with all the fears, stocks are at all-time highs, and deals are getting done, Matt.
Brad Jacobs is so acquisitive.
He's incredibly acquisitive.
Yeah, I hope to see him at some point on the Deal Show.
You and me both, Matt. He has an open invitation to join.
Wednesdays at noon. Airlines and travel stocks are moving lower as oil moves higher. American Airlines also said it's not interested in a merger with United, and it said that would hurt competition. So you can see it's taking a bigger hit than other stocks right now, down almost 4%. Joining us now is PNC Chief Investment Officer Amanda Agati. And Amanda, those drops in airlines notwithstanding, we're seeing a market that is pretty much trading on we have peace. Maybe we never went into Iran and they didn't close the Strait of Hormuz in the first place. Why is that?
It's a great question. Good morning. It's always great to be with you. This market is getting, I think, conditioned to the playbook that is geopolitical purple haze, right? We've been sort of dealing with the purple haze of policy uncertainty, and in this case, for this year, certainly geopolitical purple haze for quite some time now. And so I think the market is getting conditioned to this idea that we are going to move on from it. And that is very much a function of what you've seen in terms of the news flow and also the price action. Today, we'll see what happens between today and tomorrow. The market is clearly not priced for for an extended conflict here or a major escalation, so that the market may get caught a little bit flat-footed here. But I mean,
it doesn't even seem very hazy, Amanda. Like it doesn't even seem very hazy. We can see directly through this. All right, we're at 71.12 on the S&P 500. Pretty much at all-time highs here. Like, where's the concern? Where are people hedging? Where are people being defensive?
Well, I think the concern is that, this may go on for an extended period of time. I've been saying for a while, if we're talking about this conflict in June, we have much bigger problems on our hands as it relates to the impact on energy prices and what that does to the economy, and certainly what it does to a big chunk of the consumer base, which continues to keep the lights on the economic growth story in the U.S. So I think that's where some of the haze is coming in. Time is not really on our side. Market moving well past it. Good thing, because the market is focusing on Q1 earnings season, which is looking really good so far. So I think the market is focused on the right thing in the very short run, but there is always that risk that we could get caught a little bit flat-footed.
Yeah, I hate to just hammer in on this, Amanda, but it does just feel like a disconnect, to Matt's point, even if we are concentrated on earnings. If you look at economic uncertainty, there's an index that tracks that versus the VIX. I think we have this chart. Usually the two are very closely correlated. You can see that there. They'll follow each other. The white line is economic uncertainty, but since Trump's election, and it happened his first term too, but it's even more extreme this time around, economic policy uncertainty remains really elevated while the VIX does not. Is there an element of this, Amanda, where the uncertainty is just hard to interpret, it's hard to price in, so it's just easier for investors to look through it versus the fear of getting burned if they were to not participate in this rally?
Well, there's absolutely an element of that, right? I mean, even just last year when we were talking about tariffs and trade uncertainty, pretty unprecedented policy changes. Market could not figure out how to assign a forward PE multiple to what was going to happen. And then the story changed a lot. It didn't go away, but we walked it back pretty significantly from the brink. And so I think the market is trying to work through this idea that the headlines may sound really scary and severe, but that ultimately the path forward will be towards peace and a faster resolution. And so this is the market that wants to grind higher. Earnings expectations for this year all the way up to 17% on the S&P 500 after clocking 12 last year. That's a really strong result. I don't want to bet against that to the extent that we get a quicker resolution. I think the market's going to rally a lot harder from here, again, to the extent that the conflict resolves.
So how much are those earnings worth? Like, are you willing to pay 20 times or 21 or 22? Because that's where we're trading right now.
Well, we were paying 23 at the beginning of the year. So, and now we're down to about 20, bouncing around a little bit. So yes, I think investors are very willing to pay up for earnings in this environment. We certainly have tech back in the driver's seat, comm services back in the driver's seat again, some of the more inflation resistant business models and in the midst of some of this inflation concern here in the short run. So I think investors are very much willing to pay up for it after a little bit of a reset and all things AI, automation, robotics, software, et cetera. So I think the path forward is certainly positive, though I think it's going to be a choppy one. And of course, we have the midterms coming in just 6 short months. So no shortage of things for investors to position around.
On the point of software, they've had a really good run. Software IGV, the biggest ETF that tracks it, has been up for the past 6 consecutive days for 15%. That's its biggest rally over a similar time period since April of 2020. Amanda, what's going on?
Well, the AI story, I think, was a bit overblown, in the last couple of months, that AI was going to completely eliminate all things software. That's a pretty extreme statement. We know there's going to be winners and losers. There always are winners and losers as a function of innovation here. And so I think, valuations got really, really cheap, if not dirt cheap. And so I think it created an opportunity for investors to start nibbling at the margin. And then as you start to see some of these other concerns and headwinds kind of settle down here, it just paved a path for a significant rally. And of course, fundamentals look pretty strong as a function of Q1 earnings season. We'll see, but they look well positioned.
Amanda, great to get some time with you as usual. PNC Chief Investment Officer Amanda Agati joining us on this rally, which I guess the rally's not continuing
No,
today.
but it's certainly not undoing itself.
Exactly.
I mean, again, 13 straight days of gains for the NASDAQ, 5 for the S&P. Let's see where things stand at the moment, because we're only down 0.1%. That is nothing, considering everything that happened over the weekend between firing and seizing an Iranian ship, the Strait of Hormuz being closed again, because that's why we had this big rally on Friday, that the Strait was open. It's not open, and yet we have little movement. Software is having another really good day. Salesforce is one of the top gainers. I saw ServiceNow was in there too. Apple, JP Morgan, AMD, Tesla, all of those in the top gainer, along with oil and energy stocks, considering that that's rallying. Some big tech names, though, are losing this morning. NVIDIA, Meta, Microsoft, all of those are down. Alphabet is down. It has a new deal reportedly with Marvell to develop custom chips for it. Looking at the individual sectors now this morning, communications and consumer discretionary. Consumer discretionary has a lot of the airlines that are down and a lot of the cruise stocks that are down as the price of oil moves higher. And then it stands to reason that energy would do well, too. That sector is up 0.5% for the best performer this morning, Matt.
Yeah, energy, also the best performer for the year, up that index up 23%. Coming up, Google reportedly tapping Marvell to design more AI chips for it. We'll discuss that and Tesla earnings. Plus, we promised we'd ask you what happened to the satellite. Did it fail to launch? Is it in the wrong orbit? We've got an expert joining us next. Bloomberg Tech's Ed Ludlow. This is Bloomberg Open Interest.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1, this is putting the between the rice air. Then make the 4 fingers curl, make sushi shape. Then touch this. 2. Then turn. Now that these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Let's get you some top calls. The analyst action we're watching this morning. First up, Barclays cuts Avis Budget Group to sell, saying the stock looks distorted after a nearly vertical rally. The firm set a $150 price target, signaling major downside risk from here because it's trading at $484. Shares down 2%. Next up, Jefferies is raising Ulta Beauty to buy, saying its sales look more stable as the beauty market picks up and makeup demand comes back. Shares up 0.8%. And finally, Wells Fargo, they downgrade NXP Semis, saying that there's not much that could push the stock higher anytime soon, as weaker auto demand tied to the Iran conflict makes its revenue goals harder to hit. Matt.
All right, let's stick with tech here because Marvell is climbing after The Information reported that Google is in discussions with the company to develop 2 new chips to run AI models more efficiently. Joining us is someone who knows a lot about that, Bloomberg Tech co-host Ed Ludlow. And Ed, this is interesting because, you know, we've been hearing about a shift from training to inference.
Exactly right.
The guys at Samba Nova have been talking about that with me for a long time, but now we're seeing it in the big leagues.
Yeah, Bloomberg's also reporting that Google has a plan in the works to make an inference-specific TPU. TPU stands for Tensor Processing Unit. But basically, to this point,
and we should explain inference versus training.
Yeah, so inference is where you're running the model. You're tasking the model to generate tokens that are either text or you're asking it a prompt and it gives a response. That is inference. Training is the development of the model, the building of the model, teaching it. And so we talked a lot about the TPU, and to this point, Google owns the TPU. They own the design, the architecture, but they need a chip company to basically bring it to life for them. And that, so far, has been Broadcom. What is new in the information report is that Marvell is involved as the partner to bring an inference-specific TPU to life. And that's really important, right? Generally speaking, the TPU is a generalized accelerator. It could do both training and inference. But if you have one that's just for inference, it's much more economical, efficient, et cetera.
Given that Google has its own, what is sort of the difference, the line at which Google can build, Alphabet can build internally versus needs to outsource to Marvell?
Well, so here's the thing. Google owns the TPU. Irrespective of which chip maker is attached to the project, it is Google's to do with as Google pleases. And like when I've spoken to sources at Broadcom, that's like very much the message. So internally, they use it for the development of Google's own AI models. But as you guys know, and we've reported a lot on this, there's a lot of attraction from the frontier labs. So Anthropic, for example, is a great user of the TPU, and there's a financial relationship between Google and Anthropic as a result of that. But it's basically a very good chip that does the same thing to all intents and purposes as an NVIDIA GPU does.
Does it kind of level the playing field, this move to inference? Because NVIDIA's technology has been lauded for its training capabilities, right?
Yes.
And inference chips, as you say, are much more efficient, less expensive to do the job that we now need to do.
Yeah, to this point, the market for training was dominated by NVIDIA, and just because all of that infrastructure existed, and NVIDIA's chips can do both, many people carried over their inference work using the same NVIDIA tech. The point of having a specialized inference chip is money. How many dollars does it take you to generate a token? Obviously, the lower that dollar figure, the more economical it is. You want to do this profitably. And that is why, in terms of leveling the playing field, to your question, that Google would put such effort into developing something specific for that, either for themselves or for a third-party customer.
Ed, also over the weekend, you were very busy. You interviewed Blue Origin along with being on Bloomberg this past weekend. And AST Space Mobile loses a satellite. How does that happen, Ed?
Yeah, so basically this was the third time only that New Glenn, which is Blue Origin's bigger rocket, has flown. And it's the first time they've ever reused the booster, the big primary rockety stage thing, which had flown in November on New Glenn 2. It all went absolutely perfectly in the sense that it deployed. It launched from the pad in Florida, and the booster landed back on Earth. So everyone in Blue Origin's side was celebrating, and the news we broke from the interview is that launch system may do 8 to 12 launches this year, which from 2 last year is big success. But then the actual payload, which think about it as a very big cell tower in space for AST Space Mobile, it was put in the wrong place. And on board that satellite, it doesn't have the power or the thrusters to put it in the right orbit. So sadly, it will be deorbited, decommissioned. And the net result of it is that AST will go to its insurance company and they'll say, oh, didn't work, insurance company covers the cost.
Which I imagine is fairly high.
Well, you know, the thing is, AST has a very small constellation of satellites relative to like a Starlink by SpaceX. They really do need this to work. And also, like, Blue Origin needs to prove it can serve customers. So Blue Origin did celebrate this as a success. The New Glenn is critical to their future, that the launch system works and that it's reusable by landing on Earth. But if they can't put their paying customers' payload into the right orbit, that's a bit of a black eye for their reputation.
It's crazy that Ensure would agree to that. There's so many risks.
Matt's question is this common in space? Nothing is that common in what's a nascent industry.
Right.
But yes, of course, there is always risk that the mission carries, and so you insure against it.
I mean, they had to pay for that, so right? The insurer...
Right, yes, but
they'll,
I mean,
they'll insure anything if you pay the right
it
price.
Must be a very high price to pay for something like that.
By the way, I just realized that Blue Origin's naming strategy is after former astronauts.
Yes,
so
correct.
John Glenn and then Alan Shepard was that their first rocket?
Yeah,
New
the
Shepard?
smaller form factor, New Shepard, which is now, by the way, on hold for 2 years, so they can focus on the big one.
It makes a huge difference to me as I'm from the great state of Ohio.
Of course.
As was Commander Glenn. Ed, great to have you on the program. Look forward to your show. Bloomberg Tech kicks off in just about an hour and 12 minutes. Coming up, QXO, the building products company put together by serial dealmaker Brad Jacobs, is buying another one. Top build this time for $17 billion. We'll talk about it next. This is Open Interest.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We are risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on stocks that are coming off just slightly an all-time high. Still over 7,100 on the S&P 500, 71.11 here, down 0.2%. The NASDAQ is down a little bit more than 1/3%, but still solidly over 26.5. Take a look at what's going on with crude. We're seeing gains, but they're just slight. So Brent only up to 93.66 and WTI gaining to 87.67. So not even $90 a barrel for West Texas Intermediate. NVIDIA is down, so that doesn't help any of the major indexes as it's such a heavy weighting. Adobe is gaining. This is just because it's part of the AI deal with like every AI player in the world. United and American are both down on A, higher crude prices, so higher jet fuel, and B, American coming out and saying any tie-up between the two would be anti-competitive. So it's off the table, basically down 5%. QXO, Brad Jacobs making another big acquisition, and he has been massively acquisitive with Beacon to kick it off, and now with Top Build. I think they make insulation. $17 billion, they're up 17%, Danny.
Indeed they do, and joining us now to talk more about it is Liana Baker, Bloomberg U.S. Deals Managing Editor. To Matt's point, Brad Jacobs has been extremely busy, and it's just turning QXO into this behemoth.
For those of us who've been following Brad Jacobs' career, this isn't surprising. He's an absolute deal machine. This is the third industry that he's trying to roll up. He's done it in waste management, he's done it in logistics, and now in 2024, he kicked off QXO. This is now its third acquisition, its largest to date, and they want to do more. He wants to get to $50 billion in revenue over 10 years.
So what else is he going to do? I mean, is there another one after this, or can he clinch that with the acquisitions that he's made so far? Because they've both been huge.
So $17 billion, this is the largest, and he's definitely consolidating this, insulation space, roofing.
What was Beacon, like an $11 billion?
It was, and that one, he had to actually go hostile at one point. There's a little bidding war there. Where this one, it seems like from what we know, he just sort of swooped in and bought it. But I think there's plenty more to do. He's done hundreds of deals. This is the biggest to date, but there's so many companies in the home building product space. Some targets he's tried to go after, like GMS, he wasn't able to. Home Depot came in on that. But he also likes private equity companies. So Kodiak, another company that he bought, that was a $2 or $3 billion company. So he's looking big, he's looking small, and he's definitely one to watch. QXO is just going to be a huge player in M&A and in home building products.
I say, how do financing terms look for this? How does getting the money and the capital to continue to buy up all of these companies, is everyone pretty happy, all the big major banks happy to get in on this?
So the banks are, but also private equity. So you might remember that earlier this year, Apollo and other names, Temasek, Iconic Capital, they did this interesting arrangement where they basically were funding him to do acquisitions. So he has great connections all across Wall Street, and he's doing all sorts of creative things to get these deals done. So
this is interesting, and I wonder what we can do to get Brad on Danny's Deals show, right? Because
that's not the question you're asking, Liana.
You're on that. He is a great guest for that show, right? I mean, it seems to fit perfectly. He's built his business model on buying stuff.
He's done Bloomberg TV before, and he is just really well known.
He's just written a book.
It's not his first book.
Yeah.
So he's definitely a big promoter of his philosophies, but advisors love to work with him because, he's paying to do deals.
Hey, Liana, thank you so much for joining us. That is Liana Baker, and Brad Jacobs will be on Bloomberg TV 3 p.m. You want to catch that interview. And by the way, catch Bloomberg Deals every Wednesday at 12 p.m. New York time. In the meantime, Matt, it's a market that is clearly open for deals. We've gotten a lot today between Eli Lilly, and an IPO from Jersey Mike's, and stocks are barely off this morning.
Yeah, a confidential filing, which I always find interesting. Like, is it really confidential? Because we report on them every time. Coming up in the next hour, Nancy Tangler's top picks for this earnings season. Todd Miller of Jefferies on the secondaries market. That's pretty niche. And Ian Bremmer of Eurasia Group on the leverage over the Strait of Hormuz. Plus, it's 420, folks. So we have Green Thumb's CEO talking cannabis sales and regulation as President Trump looks to reclassify drugs, reschedule drugs. It'll be cool. We're talking psychedelics, cool. But he's also made that move on weed. This is Bloomberg Open Interest.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Iran says it has no plans for another round of talks with the U.S. as long as the U.S. continues to blockade Iran. That's put the prospect of talks in Pakistan between the two sides in doubt. ABC's Rachel Scott has more.
The president renewing his threat to attack the country's infrastructure, writing on social media, if Iran doesn't make a deal, the United States is going to knock out every single power plant and every single bridge in Iran, adding no more Mr. Nice Guy. But experts warn those attacks could amount to war crimes, violating international law.
It's now week 8 of the war, and oil prices once again climbing after weekend conflicts at sea. The U.S. seized an Iranian-flagged cargo vessel. Iran fired on 2 ships trying to transit the Strait of Hormuz. American businesses and importers who paid tariffs as part of President Trump's tariff policy before it was struck down by the Supreme Court can begin applying for refunds today, says ABC's Selena Wang.
Businesses have to opt in for refunds, and even for valid claims, it'll take 60 to 90 days to see the money and longer if there are any issues with the application.
Officials in Michigan State say they received a letter from the Justice Department demanding voter records and ballots from the 2024 election from Wayne County. The Justice Department said that was based on past violations of law. Michigan's Attorney General says this is an example of President Trump weaponizing the democratic process. Why is the question in Shreveport, Louisiana, where authorities say a 31-year-old man killed 8 children, 7 were his own.
The murders of 8 children, ages 3 to 11, marks the deadliest mass shooting in the United States since 2024.
It's going to be a while for this community to get back on its feet.
Shreveport City Council member Alan Jackson Jr.
It's the worst probably in Shreveport history, definitely the worst in my 43 years of being alive.
31-year-old Shamar Elkins was the father of 7 of the victims. The 8th was a cousin.
You're listening to ABC News. Prosecutors in Los Angeles today are expected to give an update on the case against singer-songwriter David, who was arrested in connection with the death of Celeste Rivas. Her body was found in the trunk of his car last year. ABC's Trevor Alt has more.
David is a stage name. He's a very popular performer, real name David Burke. He canceled his world tour after Celeste Rivas was found dead. He still has tens of millions of monthly listeners on Spotify. In a statement, his attorney says the actual evidence in this case will show that David Burke did not murder Celeste Rivas Hernandez, and he was not the cause of her death.
Authorities in Japan have downgraded tsunami warnings after a magnitude 7.5 earthquake, but they still advise a 1% chance of a mega quake on the northern coast over the next week. The backlash against FIFA in this summer's World Cup is growing as fans find out how much tickets, parking, and transportation are going to cost.
FIFA had to add $60 tickets when fans cried foul at the $140 to $900 price range, but finding those $60 tickets is nearly impossible when you add in a minimum $75 charge to park your car at MetLife Stadium or more than $100 ticket to get back and forth by train. That's unfair, says New York Senator Chuck Schumer.
FIFA is set to rake in $11 billion in revenue from this World Cup. $11 billion.
More of that money should go to lower ticket prices, subsidize train rides, and help with other costs, he says. Sherry Preston, ABC News, New York.
I'm Brian Clark, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube, streaming live on Bloomberg.com/video. That's where you'll find us. It's Scarlett Fu, Paul Sweeney. This is the Bloomberg Intelligence program. Stocks are mixed today. We've got some news coming out of the White House that the Vice President Vance is on his way to Islamabad. So hopefully drive that process forward. Coming up, we're going to check in with Golar Montevelli, Bloomberg News Iran reporter on the latest news coming out of that part of the world. Phil Orlando, Chief Equity Market Strategist at Federated Hermes, will give us his thoughts on these markets. Leanna Baker, Bloomberg News Managing Editor for Deals. We've got Honeywell selling its productivity businesses in a $1.4 billion deal. Lots of M&A out today because it is M&A Monday. Scott Howe, CEO of LiveRamp, that's a New York Stock Exchange listed company, on how brands should be thinking about AI readiness today. And Stuart Paul, U.S. economist, is going to preview Warsh testimony, which I believe is happening tomorrow, and we'll get his thoughts on the economy as well. So a lot coming up over the next couple hours. Let's kick it off with John Tucker and a Bloomberg News.
All right, guys, this Bloomberg Business Flash brought to you by Eisner Amber. Most advisors tell you what happened. Eisner Amber tells you what to do about it. Assurance, tax, outsourcing, and advisory services built for businesses that can't afford to guess. EisnerAmber.com. After Friday's risk-on rally, the major averages right now, they have turned mixed, even after the weekend Strait of Hormuz turmoil. And as you pointed out, Paul, the news that Vice President Vance is headed to Pakistan, that has lifted sentiment for stocks and pared some of the earlier losses. In the S&P 500 right now, you have 6 of the 11 major index groups higher. The biggest drag that right now is coming from consumer discretionary and communication services, and energy is in the lead as we look to the commodity space. Brent, the active contract, 4% higher right now, 94.13. And American crude, West Texas, that is up close to 5%, 87.75 right now. Eli Lilly, you mentioned deal news, agreeing to buy Colonia Therapeutics in Boston for as much as $7 billion, gaining access to a potential cutting-edge treatment for blood cancer. This is a privately held company. They're developing a novel type of technology, you know, as CAR T therapy. The lead drug they have aims to treat patients who have a form of blood cancer, multiple myeloma, and aren't responding to treatment. And Honeywell International agreeing to sell its productivity solutions and services business to the industrial manufacturer Brady of Connecticut. Brady's going to pay $1.4 billion in cash for the business. And QXO has agreed, actually QXO is based in Connecticut, not Brady. QXO has agreed to acquire insulation products company Top Build, cash and stock deal worth roughly $17 billion. The roofing products distributor aims to expand its building products portfolio. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business. And I didn't even mention Jersey Mike's, Scarlett.
There's going to be an IPO.
It looks that way. We're trying to figure out what the ticker symbol is going to be.
Ooh.
Yeah.
JZY?
That's what I was thinking.
I like that.
Yep.
Or JRZ? Yeah.
Could be.
I thought sub, but that's taken apparently.
Oh, too bad.
All I know is they're going to value this thing at $12 billion. They bought it about a year ago for $8 billion. That's a nice return there. That's what private equity does for you there. John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Market Drivers today is brought to you by IBKR. In 2025, IBKR retail clients average a 19.2% return, beating the S&P 500 17.9%. The broker you choose matters. Visit ibkr.com/2025. We've got kind of a little bit of red on the screen here, kind of red and green here, but a little bit of losses right now. Let's see where the action is. Stock movers today. We can do that with Bloomberg's Christine Aquino. Christine, what are you looking at?
All right, Paul, let's kick it off with the Magnificent Seven this Monday morning. So Alphabet, ticker GOOG. So currently shares down about 0.5% here, but it is the parent company of Google, and apparently Google is planning to announce its new generation of custom designed chips known as Tensor Processing Units, or TPUs, at the Google Cloud Next conference in Las Vegas this week. So these new chips will apparently be dedicated to inference, which that means that they're going to be running AI models after these models have been trained. So separately, also, we have the information reporting that Google has assembled a, quote, strike team of researchers and engineers to improve its AI coding models, supposedly in response partly to Anthropic's recent AI model releases. So lots of stuff going on at Google, but not doing too much for its shares at the moment, since they're down a little.
It takes a lot to move a company's stock like Google, right? You need more than just, strike team.
Exactly.
Let's stay with the AI theme. What else do you have?
Yeah, let's take a look at Adobe as well, Scar, this morning. So that's doing quite well this morning. So ticker ADBE, and those shares are up more than 2.8% right now. And this is because we did get Adobe saying that it will expand its agentic ecosystem across leading technology companies. It's partnering with companies including AWS, Anthropic, Google Cloud, IBM, Microsoft, NVIDIA, OpenAI, the whole suite of hyperscalers. And Wall Street Journal also reporting on this move with the additional detail that its AI agents could apparently help enterprise customers automate functions such as digital marketing. So this is quite a gamble for them, presumably, because the stock has fallen 30% this year. They've definitely been caught up in the AI disruption narrative that has plagued a lot of software stocks. So we'll see if this new agentic ecosystem is the answer to its worries.
All right, lastly, we got Compass Pathways.
Compass Pathways, that's right, Paul. So Compass Pathways, it is a PLC. It's a UK company, but it has ADRs. That ticker is CMPS. It is a pharmaceutical company, and it develops the active substance psilocybin for treatment of patients with depression, amongst other ailments. And it is roaring at the moment. Shares are up 39%, at least the ADRs are. And that is because President Trump signed an executive order to expedite research and access in psychedelics. So the new order will direct the FDA. They're going to expedite review vouchers to psychedelics with a so-called breakthrough designation. That means it shortens the review time to 1 to 2 months from 6 to 10 months. So that's quite a leap there, and potentially some potential breakthroughs for these companies.
Absolutely.
If that comes to pass.
Christine, thank you so much. We appreciate that. Bloomberg's Christine Aquino. For more conversations like this, subscribe to our Stock Movers Report. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen here. Got a lot of stuff going on out there on the geopolitical front. News as we speak. I believe Vice President J.D. Vance is in the air, will land in Pakistan in a moment, in terms of hours. So hopefully maybe get the...
There is a deadline coming up.
There is a deadline coming up. And so let's maybe get something done, because it was a tense weekend
It was,
on the
because we
Strait
were
of
supposed
Hormuz.
to have talks this
Yes.
weekend. That didn't pan out.
Yep.
And supposedly the Strait of Hormuz was open, but it may have been open for less than a day before Iran closed it once again.
Let's check in with Golnar Mohtavali, Iran reporter for Bloomberg News. Golnar, what's the latest in your part of the world? Uh-oh. Golnar.
We've had quite a few statements from the Iranians today, this morning. We've heard that kind of two different messages coming in. One, that the Iranians want to keep the door open for diplomacy. We had the President Pezeshkian say that Iran still believes that diplomacy is the only effective solution to the crisis and the conflict that's going on. At the same time, we've had a lot of pushback against any talk of the Iranians possibly joining these new round of talks in Islamabad. For the time being, we don't really know. We don't know whether the Iranians are going to turn up for those talks, but we just have to wait and see. Things are changing every day with this story, as you know, and we just have to watch the rhetoric very closely,
right,
hour by hour even.
Yeah, the rhetoric from the U.S., as Paul mentioned, is that J.D. Vance, the vice president, is on his way, along with what people are calling Witkush, which is Steve Witkoff and Jared Kushner, the other representatives speaking on behalf of the U.S., while Iran has not yet committed to any discussions. In terms of who... Golnar, my question is, when it comes to Iran, who is calling the shots there? Is it the parliament speaker? Is it the foreign minister, who I believe on Friday posted on social media that the Strait of Hormuz was effectively open? Is it the IRGC, which controls the missiles and security forces and is patrolling the Strait of Hormuz?
I think there's a lot of discussion right now about, who's really making the decisions, whether there are rifts at the top of the leadership. I think there was a piece in The Economist that kind of tried to kind of flesh out this idea. And I think there's a danger of kind of simplifying what's happening at the very top of the leadership structure. We know that there's been a lot of reorganization, not just since this war started, when Ayatollah Khamenei, the supreme leader, was killed in the first Israeli airstrike on February 28th, but going back to the June war last year, that 12-day war. Because so many of Iran's top military commanders and also several of its senior officials connected to security were killed, both in June and in this latest war, Iran had to kind of very quickly readjust command and control and also the civilian government leadership infrastructure. And what happened in that restructuring was that there was a kind of compression, and there has been a compression of the military apparatus together with the civilian government, And so I think there's actually much more confluence between the IRGC and those senior officials who have been in civilian government for a long time. For instance, Mohammad Bagher Ghalibaf, much more than we think. So I think there is a danger of separating these two things out too much and trying to find rifts where they may not exist at the very high chain. But I think what we can say is that we've definitely seen amongst regime supporters within the hardline political faction disagreement over whether to agree to a ceasefire and in the more medium to longer term, a permanent agreement or some kind of deal, a peace deal with the US, or whether to continue prosecuting a conflict with the United States and trying to take the war basically to the next level. But I think that's a separate issue from decisions made on a policy level at the top.
Golnar, you really laid out for us. Golnar Mohtavali is Bloomberg News Iran reporter based in London for us. And, there's the matter of personnel, Paul, and then there's a matter of what is at stake here. And there are real issues in terms of Iran wants real concessions and guarantees from the U.S. The U.S., of course, wants the Strait of Hormuz open, and it wants Iran to end its nuclear program, hand over its enriched uranium. These have been sticking points from the beginning, and they remain sticking points.
Yep, and a lot of folks know is before this war, the Strait was open. Now it's not, and so that is now very much on the front burner. All right, we're looking at the markets here. Red and green on the screen here. The S&P is down 10 points. The Dow's up 2 points. The Nasdaq's down 88 points. WTI crude oil up $4.13, just under $88 per barrel. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg News with this Bloomberg Business Flash. So the news that Vice President Vance is on his way to Pakistan for peace talks with Iran, that has led to stocks pairing some of the earlier losses. Any gain today for the S&P 500 and the Nasdaq, that would be a record. The Dow Jones Industrial Average barely moving, just down 6 points, 49,438. The S&P 500 just about 10 points lower, and the Nasdaq is down 82 points. The small caps, let me give some love to the Russell 2000. That's actually up 0.2% right now. And always following oil, Brent, the active contract 4% higher right now, 94.18. And West Texas American crude, that's up 4.5% right now, 87.65. The family that owns the maker of Jack Daniel's whiskey favors a potential sale to the French distiller Pernod Ricard over an alternative proposal from one of its closely held American rivals, Cesaric. I've never even heard of that, but Brown-Forman sees Pernod as the better fit. The French would own Jack Daniels. Donald Trump's choice to run the world's most important central bank about to begin his audition. Tomorrow, the Senate Banking Committee is going to have hearings to confirm Kevin Warsh as the chair of the U.S. Federal Reserve. But Warsh has been, he actually has a long paper trail of being hawkish on interest rates.
Until last year.
Until last year. So who knows if he's completely changed his tune. And of course, you throw the war in there, and that's a monkey wrench. 2026, this is a fascinating story on the Bloomberg, is the year that batteries are becoming influential in the global energy system. A wave of mega installations of batteries lining up to be connected to the grid this year for the first time, from solar hubs in Texas to grasslands in Inner Mongolia and the site of a former coal plant north of Sydney. You know, a lot of the analysts have said, you know, Tesla, car business, no, focus on their battery business.
Their stored energy business.
Because that could be the future. And, you know, where I live, electricity prices are higher, but at night they are not. So why not take the electricity from the grid when it's much less pricey, put them into batteries, and then run off the batteries during the day when
So the prices vary during the day, electricity?
Oh, absolutely. Well, nobody uses electricity at, not nobody, but it's, you know, comparatively little at night, and the rates change.
Lucky you, though. You work an overnight shift, so you could get lots of stuff done at night.
Oh, and I put lights on at night, and the things I have running, the dishwasher. We check the markets for you all day long right here on Bloomberg Radio. Yeah, I'm a real animal after midnight. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Scarlett.
All right, good stuff. Thank you so much, John Tucker. As he mentioned, stocks are not doing a whole lot right now. The Dow is flat. The S&P 500 has pared its losses and is only lower by 0.1%. Oil prices are rising, really recouping some of Friday's losses. Let's bring in Phil Orlando. He's speaking with Paul Sweeney and myself. Phil is Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes. And Phil, I look at what's happening in the markets, and it feels like it's a very muted reaction, even though we are as uncertain as we were before last Friday. Why do you think it is that investors have seemingly gotten more comfortable with the uncertainty and are no longer driving prices, whether it's oil, whether it's equities, or whether it's treasuries, to such extremes?
So first of all, Scarlett, good morning. Thank you very much for having me back on the program. I think it's the same rationale that we've been talking about for the better part of the last fortnight. The potential of an Iranian deal collapsing has certainly been out there at any point over the last 2 weeks, yet the stock market has just undergone a record-breaking run. Over the course of the last 75 years, from a decline of 8% or more, the stock market has never had a rally this powerful, and the S&P's up, 12 or 13% over the last 11 or 12 trading days. Over that period of time, there have been lots of points where we can say, well, the deal's not going to happen. We're not going to be able to come to a fruition here. Yet the stock market, in my view at least, is looking through the fog of war and is saying, you know what, the Israelis and the United States have done a terrific job from a military standpoint. The Iranians don't have another alternative other than to try to negotiate some sort of a peaceful settlement. And I think even though results over the last 48 hours, the news coming out of Iran hasn't been particularly good, I think investors are looking through that news just as they have over the last 2 weeks.
So to the extent the market can look through this or past this, Phil, talk to us about kind of the earnings power in this market. We're just getting into the teeth of this earnings cycle with, I guess, about 20% of the S&P 500 reporting this week. What have you seen? What do you think this market needs to see?
The earnings season's been nothing short of phenomenal. You know, as you said, Paul, we're relatively early into the earnings season. When I put my note together on Friday, I guess we were only about 10% of the way through the earnings season. Revenues are running up about 10% over year. The earnings, frankly, have been running up 30 to 35%. And we're not going to end up 30 to 35%, but we could very well end up 15 to 20% by the end of the earnings season, and that's terrific. And the full year numbers are moving up as well, despite the significant spike in energy prices and the negative deleterious impact that that's going to have on inflation. So the earnings portion of the equation's in great shape. Stocks were down pretty significantly. So you look at that combination of increased earnings and multiple compression, and that frankly just made stocks more attractive. And so that to some degree has been the rocket fuel that's allowed this rally to play out over the last couple of weeks.
As much as we've seen stocks make a comeback and oil prices move as well, we haven't really seen treasuries respond in a similar way. And I guess for the U.S. Treasury market, the next big catalyst is the Kevin Warsh Fed confirmation hearing, which is scheduled to start tomorrow. The only problem is we know that there's going to be a hearing. We just don't know whether there's going to be a vote, because Tom Tillis has committed to not vote until that investigation, the DOJ investigation into the Fed's renovation efforts is resolved completely. So how does this set things up? You know, Kevin Warsh might be talking about his take on monetary policy, but investors don't really have a sense of when that will be implemented.
No, your point is very well taken, and separate and apart from the noise and the nonsense associated with Iran, we went into this year expecting that there would be two significant hurdles that the equity market would have to get over. One was the leadership transition and the monetary policy transition in the Federal Reserve, and the second was the fact that we're in the midst of a midterm election year. Historically, there's a lot of volatility in the market associated with those two events. So the fact of the matter is that the market, has rallied really strong here. We're in an overbought position. And so depending upon how well or how poorly tomorrow's hearings go and what the status of Jeanine Pirro's investigation is in terms of the renovation program at the Fed, which Jay Powell is overseeing, and then the mortgage fraud or the alleged mortgage fraud of Lisa Cook, we may not actually get a vote from the Senate Banking Committee or the full Senate on Warsh's candidacy, in which case Jay Powell stays as the chairman or on a pro tem basis of the Fed past his retirement date of May 15th. So there's a lot of volatility here that the market is going to have to come to grips with at some point.
All right, Phil, thanks so much for laying that out for us. Phil Orlando, Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes, giving us that rundown of this market here. Got a little bit of red on the screen here today. It is Monday, which means it's M&A Monday, kids. Lots of deals crossing the Bloomberg tape, including Honeywell to sell productivity business in a $1.4 billion deal. To break that down for us, Leanna Baker from Bloomberg News joins us here. Leanna, talk to us about Honeywell here, because I'm looking at this stock's off just a couple of, about a buck and a half here today, but it's up 19% year to date. What's Honeywell doing with this transaction?
Honeywell has been for years now trying to, reshape its portfolio. They've never met a spin-off they don't like. They're spinning off their aerospace division. They've already spun off their chemicals unit. That's a whole separate company called Solstice. So they love doing deals. They also, do acquire things. But in this one, it's been a long simmering situation. They announced last July that they were exploring options for this unit along with another unit that they haven't sold yet. And we had been tracking this one for months. We thought private equity would come in, but ultimately Brady Corporation, another public company based in Milwaukee, is swooping in for this, and it's going to make it a much larger company.
And it's not just Honeywell either. 3M has looked into selling assets too. What is it about these big industrials that at one point like to be big, like to be diversified, are now in love with the idea of slimming down, realigning their portfolios, divesting assets? What happened in the thinking?
We're seeing it across industries, not just in the industrial space. For whatever reason, every few years, diversification becomes popular with investors, and we see, GE buying NBC and those types of things to look back at history. And then eventually we get into spin-offs, which are now investor friendly, and it doesn't take much to, boost your stock if you say you're going to sell units or spin off into public companies. Some public companies are now have turned into a dozen companies. It's quite amazing to watch.
So it looks like, I'm just looking at the PGEO function on the Bloomberg terminal. Honeywell's down to kind of 4 lines of business: aerospace technologies, building automation, industrial automation, and energy and sustainability. Are they comfortable with their portfolio, generally speaking, now, or do you think we'll get more deals here?
I wouldn't rule them out for doing more M&A to actually, as they reshape their portfolio, think what makes sense. We've definitely seen industrial companies get more into software. I know software has kind of fallen out of favor right now, but there's definitely these sort of big hardware, software products that might be hard to disintermediate with AI. So that's one area to look. They've also invested in quantum computing. Quantinium, a company that Honeywell owns, they've been trying to take that one public. That's another one to watch. But we'll see. Under their CEO, Vimal Kapoor, they've definitely been making a lot of moves to just reimagine what Honeywell is.
And what about Brady? Is Brady looking to get bigger? I mean, it's buying this business from Honeywell, but can we expect more deal making from Brady?
They'll definitely get bigger. Before this deal, they had about a $3.9 billion market cap, and they're paying $1.4 billion cash. So this is by far the largest deal ever for Brady, a Midwest company founded in 1914. They make some of these products already, so this will help them maybe corner the market in this sort of industrial barcode, logistics scanning type stuff.
All right, Leanna, thank you so much. Appreciate that. Leanna Baker, managing editor of the Deals team for Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. And again, lots of deals out there, not just AI, so you can do some stuff outside of AI.
The old economy, the real economy, the industrials are certainly physical things, not stuff in the cyberspace.
Absolutely. Coming up, we're going to check in with Scott Howell, the CEO of Live Ramp. So that should be interesting here as we move along here. We got green. Actually, now we've turned red here. We got the S&P down 17 points. That's 1/4%. The Dow's off 78 points. That's 1/10 of 1%. And the NASDAQ leading it lower, down to 105 points. That's 0.4 of 1% here. WTI crude oil up just about $4, right below $88 per barrel. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, 4 of the 11 major industry groups in the S&P 500 are actually higher, and energy that's in the lead as crude oil is climbing today. Brent up 5%, 94.88 a barrel. West Texas Intermediate 5% higher. That's at 88.17 a barrel. Marvell Technology shares, ticker symbol MRVL. They are over 4% after the information reported Google is in discussions with a semiconductor company to develop 2 new chips that run AI models more efficiently. Top Build, the ticker symbol there, BLD, that is up right now 16.5%. QXO said it's acquiring the insulation company for about $17 billion. This acquisition is going to make QXO the second largest publicly traded building products distributor in North America. And we're saving this one for Paul. Jersey Mike subs confidently confidentially and confidently, I'm sure, submitting a draft registration statement for a proposed initial public offering. The number of shares in the price range not determined. Our sources earlier told us that Jersey Mike's is seeking a valuation of at least $12 billion. It's a sandwich shop. And the IPO is anticipated to raise more than $1 billion. Blackstone did acquire the company early last year for about $8 billion, including debt. They're looking for an exit now with this offering. So Peter Cancro, he founded Jersey Mike Subs back in 1975 at the age of 17 in Pleasant, New Jersey. What was I doing at the age of 17?
He grew the company for almost 50 years, and then he transitioned to chairman, and soon he will be very, very set for life.
Yeah, I guess so. And they're also expanding into Europe as well, with, I think, 400 stores there. So it's a real success story, a real New Jersey success story.
I know. The New Jersey pride is coming through in every way, John Tucker.
Yes. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Paul and Scarlett.
I'm sure one of the things that Blackstone is banking on is this idea that everyone can understand Jersey Mike's business model. It's so clear. It's not going to be disrupted by AI, right? Like, this is going to go on. People need their sandwiches. They need their subs. But speaking of AI, at a time when every industry is navigating rapid change driven by this technology, one company is focused on helping them unlock better performance through data collaboration. So I want to bring in now Scott Howe. He is CEO of LiveRamp. And Scott, before we get into exactly how your company does what it does, just explain what LiveRamp does. What's the mission behind LiveRamp? What problems are you trying to solve?
Sure. You just talked about how fuel stocks are up today, and data is the fuel for the future in a technology world. What LiveRamp does is it makes data safe and easy for companies to use. We manage their integrations, their security, their permissions, and their acceptable uses through our data collaboration platform.
So to what extent are retailers, brands embracing AI? Because it feels like we're super, super early innings here. And I think companies, by and large, across all industry types, are trying to figure out what this thing is. Is it friend or foe? What are you finding?
Yeah, well, I'll tell you, retailers are going to follow consumers, and consumers are embracing AI. Search is being replaced by AI in terms of discovery. And if you've done any kind of AI-driven commerce where you're looking for products, you know it's just a transformational experience. So companies have to move. They have to stay current. And so for the next 5 years, AI is going to be probably the only thing retailers are talking about.
So when you talk to brands right now, how AI ready are they? How do you assess their level of readiness?
Well, I'd say it's early stages. But that said, we don't work with a company that isn't collecting information, creating a value exchange for consumers, and doing things with that information to give their customers a better experience. Items that they might like, different value propositions, access to unique content. And so they're getting increasingly sophisticated about how to have the conversation with consumers. And, you know, every company in the world is looking at who the winners have been in the stock market for the last 20, 30 years. And the winners have been companies that are really sophisticated with data. And so if you want to be a winner in the stock market, you have to be more sophisticated. So I think consumers and the market forces, both of those things are driving adoption.
What is data collaboration?
Yeah, it's a great question, because what companies have realized is they can't go it alone. It's really hard to out Amazon. Amazon has so much information. But when a company like Nike gets together with its retailers, or a company like Disney gets together with its advertisers, and they start to collaborate on the data that they have, they can actually out Amazon, out Google, and create really interesting insights that drive better value to their customers.
That all sounds great, but how do they, I guess, maintain control, ensure privacy, and really have a handle over governance over their own data? Because they're collaborating with other partners and they're sharing this information.
Yeah, so 2 words, LiveRamp. That's why we exist. Rather than a big company having to go secure hundreds, if not thousands, eventually, of one-off business development agreements governing how data can be utilized, instead they can just use LiveRamp. We manage all those things for them. Any participant can set their permissions and their acceptable use, so that they know that their partners are respecting their data. And ultimately, we think there's a big role for consumers to play in this long term as well. AI means that the power of data eventually swings to consumers. And as a consumer, I would want my data to be portable, and I'd want it to be very transparent. If I go surf on, say, I watch programming on Netflix, shouldn't I be able to download my viewing history and use it next time I'm on Prime to get similar recommendations of shows that might matter to me?
I know we're early innings, Scott. How are consumers using AI in just kind of their shopping behavior and now, and maybe how do you think that's going to evolve?
Yeah, it is early. But I would say, particularly amongst the younger generation, folks that are, up to age 30, it is absolutely essential because you're using it to help you do the research on what products that you might want to buy, gather testimonials, and increasingly, say like through Google AI shopping, you can actually consummate a purchase within the AI browser that you're using.
I can understand brands and consumer brands in particular really embracing this. How are you seeing this show up among companies and industries that are also consumer facing but maybe have not had to go out and chase consumers in quite the same way? Healthcare companies, for instance.
Yeah, it's interesting. Probably the proudest moment I've had in one of our town halls is we had a company called Truth Social, that's the settlement of big tobacco, come in and speak to our folks a few years ago. And they talked about how they're using technology, how they're using data, how they're using LiveRamp. And the punchline was, it's saving lives. And they shared how many lives they think that they've saved by applying data, helping to market to young people about the dangers of tobacco and drugs. So I think, data has such an important role to play in perhaps industries we don't even think about, because wherever we can bring information to bear to make a better decision, whether it be for a business or for a consumer, should we want to do that? Of course, but always within the control of those that are being affected by that decision.
All right, Scott, thanks so much. Appreciate it. Scott Howe, CEO of LiveRamp, joining us here. AI, advertising, brands, why not? Some new reporting here from CNN. Vance is expected, Vice President Vance is expected to depart D.C. on Tuesday for Pakistan. Talks are scheduled for Wednesday in Pakistan. This contradicts earlier reporting from the New York Post. So this
but will Iran show up for these talks?
That's right. That's a good pick. So that is scheduled for Wednesday.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
This is Bloomberg Intelligence. Paul Sweeney and Scarlett Fu here in our Bloomberg Interactive Brokers studio, and we're looking at some headlines just crossing. President Trump says it is highly unlikely that he extends the ceasefire with Iran, and he also says that this ceasefire, this temporary ceasefire that they announced, expires Wednesday evening Washington time. Paul, I had thought it was late Tuesday, but now the president is saying Wednesday evening.
I thought it was Wednesday, but that just goes to show you the lack of clarity out there.
That's right. That's a really good point.
Yep.
I mean, as long as it keeps moving forward, right now there is a ceasefire, and our understanding is that J.D. Vance, the vice president, will leave for Pakistan later today on Monday. This is according to President Trump. And President Trump also says that he or the Strait of Hormuz will not open until a deal is signed.
CNN is reporting that Vance expected to depart D.C. on Tuesday.
Okay, so there you go.
So there's this.
Vance will at some point make his way over to Pakistan to hold peace talks with Iran, but we don't know whether Iran will show up because up until now, there's been no confirmation that they will show up. This is not necessarily moving markets a whole lot. You do have equity indexes, the S&P, NASDAQ, and Dow in the red, but not by a whole lot. And oil prices are higher, but given the kinds of swings we've seen in the past, it's just a 6% advance.
Yeah, it's, the lack of clarity is something we should be used to, I guess.
Yeah,
And
this
I
is our
think
new normal.
I think the markets probably are. We also have some news tomorrow, presumably Kevin Warsh confirmation hearing.
Mhm.
That's going to be interesting. We'll take that as well tomorrow.
But are they going to actually vote on anything?
I don't know. There's still this holdup. So let's go to somebody whose job it is to know this stuff. Stuart Paul, he's a U.S. economist for Bloomberg Economics. So what are we going to hear? What do you think the hearing is going to be like tomorrow for Kevin Warsh to be Fed chair?
It'll be interesting. Fortunately, I spent 4 or 5 years under the learning tree in Washington with some of the best in the business, learning from Joe Lieber at Capital Policy Partners about how to predict what's going to happen when you have such unpredictable senators up on the dais and you have somebody that's been radio silent for months, in this case, Kevin Warsh. What are they going to say? So we know that Democrats on the committee are going to be entirely focused on the Fed's independence, and they absolutely will press Warsh to say that the DOJ investigation is inappropriate. I don't think that he's going to comment on it. He's going to say it's not appropriate as a candidate for me to comment on it, but the Fed's independence is absolutely paramount. Dems on the committee are absolutely going to focus on whether the Fed is focused on things like inclusive growth, and they're going to question whether Warsh, as somebody who's exceptionally wealthy, is going to be able to understand economic issues along the income distribution. Republicans on the committee are going to just be focused on giving Warsh an easy time. They're probably going to ask reasonably easy questions about the Fed's independence. Senator Tillis is going to stay focused on the Fed's independence, and he's going to say, look, I'm not going to vote for you, even though you're eminently qualified from my perspective. I'm not going to vote for you until the DOJ investigation is wrapped up. But that's going to be the general shape of the committee hearing tomorrow.
President Trump, if he has time, will be listening in and making sure that Kevin Warsh toes his line of easier monetary policy, because that is what the president is seeking. However, Kevin Warsh has long been hawkish. He's, talked about needing to raise rates or making sure that rates are tighter before he changed his tune last year. How do we understand his shift in thinking?
Look, it'll be difficult. He is generally of a hawkish inclination. He has that hawkish bent. I think that to sort of placate the administration, he's going to point to a few structural items that are generally disinflationary, like returns from AI, right? If AI makes everybody so much more productive, it's going to have this disinflationary effect. And so the Fed's going to be able to lower interest rates as we see more productivity gains. I think that it is going to be difficult for him to perfectly thread that needle, but he's had about 4 months to practice that line to this point. I think that he's actually going to use maybe his hawkish past and a lot of his hawkish comments to say that he is independent. The president wants whatever interest rate policy he wants, but Kevin Warsh, nominee sitting before the Senate Banking Committee, I've always been independent in my thinking, and I'll deliver the policy that I think serves the U.S. economy and the general public.
Who was Kevin Warsh? Where did he come from?
Kevin Warsh, it's a good question. So Kevin Warsh is currently at Stanford. He's currently also an advisor to folks like Stan Druckenmiller and other major folks in finance. He had previously been a governor on the Fed board particularly through the financial crisis. And that's really where he gained a lot of notoriety. He had previously been an economic advisor during the Bush administration. He's been mostly out of politics, out of policy making for the last 20 years nearly, but his name has always come up as a perennial nominee to be the next chair of the board of the Fed and the FOMC.
Stuart?
Because he's relatively young, he's relatively hawkish. He has this view that the Fed should have a shrinking footprint. And that's really what a lot of folks on the GOP's side of the aisle want to see. They see the Fed as very powerful, both as a banking regulator, as a policymaker, and its influence over the economy is just obviously massive. And I think that folks on the GOP side would like to see the Fed's footprint shrink. That's something that Warsh has always been very amenable to. And if we're looking for anything of economic substance tomorrow, it's going to be his comments about the Fed's balance sheet, the Fed's footprint, and about banking regulation. That's what I'm going to be most focused on tomorrow.
Stuart, thank you so much. Appreciate that. Stuart Paul, U.S. economist for Bloomberg Economics, joining us live here in our Bloomberg Interactive Broker Studio. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Pressed Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment. The S&P down 32, the Dow minus 140, the NASDAQ down 186. Stocks taking a turn lower as oil pushes higher. Mr. Vance is not in Pakistan yet.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Monday morning. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu, as well as Charlie Pellet. And we are keeping an eye on what's happening with oil prices. They are marching higher right now, as President Trump says it is highly unlikely he would extend the 2-week ceasefire with Iran if a deal is not reached before that expires. So, of course, we're going to get all into that with Mike McGlone on the move higher in oil prices. He'll be joining us. We'll also check in with Jason Schenker, Prestige Economics president, on the economic impact of the Middle East. We're definitely feeling it in Asia. How long before it spills over to the U.S.? Does it spill over into the U.S.? Terry Spath will join us to talk about the markets. She's the founder and CIO at Zuma Wealth, to talk about where we should be investing as we get deeper into earnings season. The big tech companies will be reporting soon. So where does that turn our focus? Richard Bork will be joining us to talk about Cleveland-Cliffs latest earnings report. Its first quarter revenue beating analyst estimates. All of that is coming up on Bloomberg Intelligence. First, though, let's bring in Charlie Pellet for our Bloomberg Business Flash.
Hi, thank you very much, Scarlett. Paul, you mentioned oil. That is the big story this morning. Got to begin there because Friday we had West Texas Intermediate crude trading in the low 80s. Right now we are very close to $90 a barrel on WTI, just above 89 right now. West Texas Intermediate crude up 6.2%. We've got Brent crude at 95.57 a barrel, up now by 5.7%. You heard the headlines here on Bloomberg. President Trump says an Iran truce extension is unlikely, and the Strait of Hormuz will stay blocked until an agreement is finalized. Equities lower. S&P right now down 32, drop there of just about 0.5%. The S&P now at 7,093. You run the GIP screen on the S&P 500 index, and you can see that right now we are trading very close to session lows. Dow Industrials down 123 for the Dow, drop now of 0.2%. We've got the NASDAQ Composite Index down 183, drop there of 0.7. The NASDAQ 100 Index down 0.7. Both the S&P and the NASDAQ 100 Index at records on Friday. Today a retreat. Russell 2000 Index of small cap shares, however, trading higher, up 0.1%. The VIX just below 20 with a 10-year 4.26%, the 2-year 3.72%. Gold right now down $27 the ounce. Spot gold 48.03, down 0.6%. And again, West Texas Intermediate crude bears repeating. WTI up 6.2%, 89.04 a barrel. Well, as for markets, Phil Orlando is chief equity strategist at Federated Hermes, and right here on Bloomberg Intelligence, he told us earnings have been nothing short of phenomenal.
Revenues are running up about 10% over year. The earnings, frankly, have been running up 30 to 35%. And we're not going to end up 30 to 35%, but we could very well end up 15 to 20% by the end of the earnings season, and that's terrific.
Federated's Phil Orlando interviewed right here on Bloomberg Intelligence. Oil majors pushing higher along with the price of crude. ExxonMobil up 1.8%, Chevron up 0.7%, ConocoPhillips right now up by 1.5%. Again, the oil quote does bear repeating. WTI up 6.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pella, thank you so much. We appreciate that. As Charlie was just reporting, we got some red on the screen here. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Natalia Knežević. Natalia, what are you looking at today?
Let's start with Eli Lilly. The ticker is LLY. Shares are flat actually right now, but there's a big announcement. So Eli Lilly agreed to buy Kelonia Therapeutics for about $7 billion. As a result, it can get access to cutting-edge treatment for blood cancer. So Kelonia's main drug aims to treat patients who have a form of blood cancer called multiple myeloma. Now the company is enrolling patients in early stage of this trial of this drug. So we know that Eli Lilly is mostly famous for weight loss drugs, but it is a big player in cancer space as well after it bought a company called Loxa Oncology for about $8 billion in 2019. But I have to point out, shares are still, no, actually, it is a pretty good performance. If we look at a 12-month basis, up 14%, but on a year-to-date, there are some losses.
Yep.
All right, let's stay with the pharmaceutical space. What else do you have?
Yeah, so I'm watching shares of psychedelic-related companies. One of them, Compass Pathways, the ticker is CMPS. Shares are down by almost by almost 40%. It came after President Donald Trump signed an executive order to expedite research and access to different substances used outside the U.S. to treat post-traumatic stress disorder. So this applies to psychedelics with the so-called breakthrough designation. So typically when a company does research, trials, then it applies for FDA for an approval. The typical process is about 6 to 10 months. Now it's going to be 1 to 2 months, and analysts, of course, see that as a big positive signal for those stocks.
Okay, one more. What do you got?
One more. Let's switch to AI space. I'm watching shares of Fermi. The ticker is FRMI. Shares are down by more than 20% today because we got news that CEO and CFO are stepping down. So Fermi is a developer of nuclear power for data centers. It is building a massive data center capacity in Texas. It wants to power it with nuclear capacity, but there is a problem. So the company went public last September. Since then, the stock dropped by more than 70%. And the biggest concern for investors or analysts is that it still doesn't have enough tenants. And as a result, it also lost one of the key anchor tenants. So lots of concerns.
All right, good stuff. Natalia, thank you so much. Natalia Knežević joining us for our Market Movers. She is our Bloomberg Equities reporter. And for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer you 5-minute audio reports on the biggest winners and losers in the stock market. You can do that on Apple Podcasts, Spotify, or anywhere you listen. Oil prices have reversed Friday's declines. They're marching higher, with Brent now up about 5.7%, WTI gaining more than 6%, just below $89 a barrel here in the U.S. Mike McClone is our senior commodity strategist joining us from Miami. So, Mike, I'm trying to understand these latest headlines from President Trump saying that he is not going to open up the Strait of Hormuz, even though Iran desperately wants him to do so. That presupposes that the U.S. is the one that's blocking the Strait of Hormuz and Iran is not playing a role.
Yeah.
But I want to get from you a sense of what is actually moving oil prices right now, these days. Is it an opening of the Strait of Hormuz?
It definitely is, Scarlett. I think the market's getting past that a little bit and realizing it's a bit of a battle of the bulge. It'll figure it out. It'll be opening up. It's a question how you do it. I think the ideal way Mr. Trump wanted was to repress the offensive abilities of Iran to close this strait, which they still have. But from a crude oil standpoint, the rest of the world is breaking and breaking hard. Pretty severe demand destruction, and the U.S. so far is okay. Now, right now, WTI is around $89 a barrel. I think that high at 120 isn't as enduring as that peak in 2020 at 130 was, and now it's probably stuck between $80 and $100 a barrel. And there's one key thing I reiterated today, wanted to point out, is if prices don't go down, that surplus of supply versus demand in the U.S. and Canada, which is running around 8 million barrels a day, it's going to go to 10 million barrels a day by 2028. So I look at this as this is a market, it's a bear market that's bounced, much more likely to go down. And the key thing that might make it go down to that level by the end of the year is the stock market dropping a bit.
So, Mike, when you talk to people, traders that trade this commodity here, the oil and gas, are they factoring in supply coming from other parts of the world coming into the marketplace, or maybe even Saudi crude or Mideast crude finding other ways to get out to the marketplace?
Yeah. So people keep using that narrative, 20% of world supply from the Gulf. It's really probably dropping closer to 10% now as Saudi Arabia has found ways to get its pipelines through the Red Sea and out in other ways, and they're finding other ways we'll get it. The key theme, I think, is people remember what happened in 2022 when crude oil popped to 130, and the thing that led us back down was natural gas, and that's done the same thing again this year. It was up 100%, and now it's down almost 20% on the year. It's already done what I think crude oil is going to do, and it's seen what's really happening on a global basis. That price maker status has switched from the Gulf to the Western Hemisphere, led by the U.S., from Canada, Venezuela, all the way down to Argentina, and that's the key theme that's been pressuring prices forever, and that, I think, is what's accelerating. I think people are also realizing if natural gas is a guy and corn peaking, and soybean peaking, this is I think just a dump that's ready. A pump that's ready to dump. Again, it's all of your things predicated on that wealth effect continuing in the U.S.
Okay, so there's U.S. nat gas futures, which you highlighted, and then there's European gas futures, which have not fallen in quite the same way because they do depend on the Strait of Hormuz. How is that looking, and how does that compare to what we saw in 2022?
Scarlett's not nearly as high, but it's the demand destruction I'm worried about. Typically, these kind of things, as you're seeing, and not only is it psychological, makes people cut off their consumer spending, but it's actual physical now. Prices have pumped up so much, particularly in gas oil and diesel, in this country, diesel, but in the rest of the world, most notably in Asia, maybe not so much China, so much in Europe, that you can't help but not cut your capital budgeting decisions, certainly from a personal consumer standpoint. And that's the stuff that's not really coming out yet. And it's one key theme that Anna Wong pointed out in our morning meeting, our chief economist, is you're not seeing that top 20 percentile of wage earners yet because the stock market's still doing well. That's why, unfortunately, as a commodity guy, I look at the stock markets, everything now, most notably from things like industrial metals and even crude oil. It could push things lower.
All right, Mike, thanks so much for joining us as always. Mike McGlone, Senior Commodity Strategist from Bloomberg Intelligence. He's based down there in Miami because why not Miami? Let's get back on the economic front here. The concern, obviously, for this war in Iran with higher energy prices is to what extent does higher energy for longer impact economic growth? How does it impact inflation? How does that differ across the globe? Our next guest can help us out there. Jason Schenker, president of Prestige Economics. Jason, thanks so much for joining us here. Have you guys at Prestige Economics altered your GDP outlook, your inflation outlook, given what we've seen come out of Iran?
Yeah, we've raised up our inflation forecast. We produce our forecast at the end of each month, and at the end of March, we raised both our inflation forecast and lowered our growth forecast. So We now think we could see headline CPI around 3.5% this year, and Q1 GDP we're expecting now closer to 1%, with annual GDP closer to 1.5% for 2026.
What does it look like for Asia and for Europe, particularly for Asia? Smaller countries like Vietnam, they're starting to really reduce economic activity because oil and gas is difficult for them to access and they need to conserve. And I'm guessing that because of their role in the global supply chain, that is going to start having ripple effects on bigger Asian countries and eventually the U.S.
This is, of course, an evolving situation. The longer it goes on, the higher oil prices, energy prices could remain. The longer the scarring effect on inflation, keeping those prices high, could be in place, and the greater the potential for a scarring effect on growth. Obviously, some economies are more exposed, right? A lot of energy goes into Asia, and that's true for smaller emerging markets, or as well as for larger Asian economies like Japan or Korea. Energy is the lifeblood of a lot of economies, right? You don't have it, there are no low energy consumption, high GDP economies. So the duration is really what I think is going to be the most important thing here. And then the question of how long would there still be price scarring impacted by damage to and destruction of oil and gas production, as well as infrastructure assets due to the war with Iran. And all of that is still very much in the air right now. The one thing is, none of this looks great from a growth perspective or inflation. Some economies are more insulated from it if they have energy commodities as a core pillar of their economy, but if you're a net importer, this is going to be a challenging period as we navigate what those impacts look like.
Realistically, Jason, what can the Federal Reserve do with that backdrop there, with inflation concerns and just growth concerns?
You know, for the Fed, they're in a bit of a pickle, right? Because you've got still elevated inflation, although core CPI is still only at 2.6% in the latest report. So, you know, that means they might have leeway if U.S. growth were to crater. You know, of course, given where we are with the federal funds rate, they have room to cut. And of course, energy is more important for total inflation than for the more important core, which strips out energy and food prices. So I think, though, right now the Fed's got to be paying very close attention to the jobs numbers and the GDP report, right? Because that Q4 GDP number in the third estimate was only 0.5%. And if Q1 is weak, if it does come in at 1%, that'd be quite a tepid report. And the Fed may then, be in a position where cutting rates would be something they normally consider doing. And now they're going to have to take a close look at core inflation to see when that might be even an option. But it's wildly unlikely they'll change policy this month. But June, depending on the data, could still be a quarter point cut. And that's right now, that is our estimate, that we'd get a quarter point cut.
Depending on the personnel as well. We have a hearing from the Senate Banking Committee tomorrow on Kevin Warsh, President Trump's nominee as Fed chair. We know that there's going to be a hearing. We don't know if there's going to be a vote, and indications are right now that there won't be. But what will you be listening for, Jason, at tomorrow's hearing?
I think the most important thing is going to be the perspective on the Fed's dual mandate. But at the end of the day, these decisions aren't made by one person, right? The FOMC functions as a committee. And so, even though we've heard a lot of rhetoric over the last 16 months about where rates should be, could be, out of the executive branch of government, what's really interesting is if you look at the voting pattern of the members of the FOMC, they're almost all aligned on right? I mean, there have been at times one or two dissents, but the dissents are usually a quarter point lower, right? We're not talking about 100 basis points one way or the other. And again, there's still very broad consensus, right? Almost unanimity consistently among Fed members. So I think a change of Fed chair isn't necessarily going to change how the Fed functions, which direction the Fed's bias is. You know, if someone were to view Fed policies more accommodative, again, it's at the margin.
Jason, always appreciate your joining us. Jason Schenker is president of Prestige Economics right here on Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Gold and Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. President Trump says it is highly unlikely likely he will extend the 2-week ceasefire with Iran if a deal is not reached before it ends. We've got stocks selling off. Oil is surging. S&P right now down 27 to 7,098. And recall we hit a record on Friday, down right now by 0.4%. The Dow down 93, decline there of 0.2%. Nasdaq Composite Index also retreating from a record, down 157, down 0.6%. Nasdaq 100 Index also down 0.6%. But interestingly, the Russell 2000 Index of small cap shares is holding on to a gain of 0.3%. The VIX just below 20 now. The 10-year 4.26%, with the 2-year 3.72%. West Texas Intermediate crude continues to push higher. WTI up by 5.3%, 88.28 a barrel. A barrel of Brent crude, 95.21, up now by just about 5.4%. A $7 billion deal in the pharma industry this morning, with Eli Lilly buying privately held Colonia Therapeutics for as much as $7 billion. Lilly gains access to a potential cutting-edge approach to treating blood cancer. Lilly shares little changed, higher by under 0.1%. So again, recapping, stocks lower, oil higher, S&P down 0.4%, West Texas Intermediate crude up 5.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Looking at these markets being whipsawed once again by the news flow led by oil, as Charlie was just reporting across the board here. Let's go to somebody who does this stuff for a living. Terry Spath, founder and CIO of Zuma Wealth, joining us via Zoom from Malibu, California. Terry, what's the message you have for your clients trying to deal with the day-to-day headlines which seem to be whipsawing markets around?
Yeah, I mean, I think despite the red that we're seeing on the screen today, you know, what the market is showing is underlying resilience, even in the face of that spike in oil prices. And we don't think it's too early to declare victory over these war jitters. I think what's standing out most, again, is the market's resilience, despite this sharp risk-off move. These risk-off moves, supply shocks, they tend to be temporary. And by temporary, I mean a couple days, couple weeks, a couple months. But markets often recover once that shock is absorbed. And what's noticeable here is that the reaction has really been relatively contained. And I think the fundamentals are still intact. Growth is holding up. Earnings are holding up. I mean, don't ask me, ask the banks, which all reported last week and had really decent earnings. So valuations have come in a bit from their earlier highs. And even with that real potential risk to inflation that the energy shock presented and the recession concerns that it, injected into the market, I think we're really starting to look through it. So we're waiting for complete clarity on inflation or earnings is, going to miss the move. So the resilience in prices that we're seeing in the market, despite today's, relative weakness, I think that points to underlying strength and a market that's really likely to continue to move higher from here through the rest of the year.
And to your point about that resilience, we've seen the S&P 500 rebound almost 12% from its low in late March. You had sort of mentioned this, valuations have come down. Are stocks cheap? And how do you go about answering that based on what we've seen so far this earnings season?
Well, I'm a traditional Warren Buffett trained investor at my core, so I can't say that the market is cheap. However, one of the most encouraging shifts in the market is that we do see that it's stronger than when the highs were hit earlier this year. And that's because multiples are lower than they were earlier this year. That shows that this rally that we've seen recently isn't just valuation driven, it's driven by fundamentals. But at the same time, I think something that's important to notice is that leadership has broadened out, and we're not just sort of saying a couple few names. Small caps are outperforming large caps this year by something like 600 basis points or more. Wow. That kind of participation is really something that we pay attention to. It reduces concentration risk. It shows that investors aren't just overly focused on a couple few names, but buying a lot more broadly. And again, if you look at earnings, the message is consistent. So when you put it all together, lower valuations, broader participation, solid earnings, we see this market as one that's a bit stronger than it was when we hit highs earlier this year in January. And to us, that's a kind of setup, again, that supports further upside from here. So that's how we're positioning right now.
What role, Terry, is fixed income playing in your clients' portfolios these days?
Yeah, I think you're bringing up a good point. One of the risks that we're watching is this Fed transition and the uncertainty around leadership and policy direction. And in the near term, we still look at that as a bit of noise rather than something that's moving the bond markets in a meaningful way or the stock market. What we're really focused on for this Fed transition and the uncertainty that I think is getting a little bit of attention, but maybe not a ton. What we're looking for is something that would show up in treasuries first, not necessarily in stock volatility. Right now, we think the Fed transition is headline risk, not a market driver, but we are monitoring the bond market and the interest rate market for signs that something that might come out of the sidelines and shock the market could occur if there's something strange or uncertain or unclear that comes with this transition of leadership of the Fed.
All right, good stuff. Terry, really appreciate you joining us. As always, Terry Spath, founder and CIO of Zuma Wealth and a friend of Bloomberg Intelligence. We got some headlines at the end of last hour, Paul. The president speaking to Bloomberg News saying that he will not open the Strait of Hormuz until a peace deal is signed between the U.S. and Iran. And among other headlines that we got from this conversation, let's bring in Wendy Benjaminson. She is our senior editor at Bloomberg News in Washington, D.C. And Wendy, I don't know whether I'm more confused after seeing these headlines from President Trump. He also said that the expiration date for this 2-week ceasefire is Wednesday evening. I had thought it was Tuesday night. Can you just clarify for us what we learned from this conversation?
Well, I join you in my increasing confusion over what is going on. And I do believe we are also joined by the Iranians, the Israelis, and all the negotiators in this, and not to mention the Pakistanis. What we now know, which could change, is that the deadline is not Tuesday, as we all thought. It is Wednesday night. We know that Vice President J.D. Vance and the negotiators, global envoys, I think they're called, Steve Witkoff and his son-in-law Jared Kushner, are going to Pakistan, and they're going to see if the Iranians decide to show up for talks. The problem is there has been so much confusion this weekend. The strait was open, the strait was closed. Trump was going to bomb them back to the Stone Age, and then a deal was right around the corner. So there has been this conflicting rhetoric back and forth for days now. And obviously, as I think your last guest was talking about, and we have in our stories, that the markets are just getting whipsawed by this. They don't know whether to go up or go down, whether the war is over or not. It looked like there were going to be peace talks yesterday. And then the U.S. Navy fired on a ship that wouldn't stop trying to go through the blockade. No one was hurt. They did it in a very sort of, just disabled the ship and, in fact, told people to get out of the way before they fired on them. But that ship is now in our possession. And at this point, the Iranians are like, so why are we talking? Mm-hmm. So that's sort of where we are right now.
So, Wendy, if I were the vice president of the United States and my president was sending me for negotiations, I think I'd want to have some things firmed up, like, will the other party be there? What are the parameters of these talks? Do we have any indication that there's any foresight going into this?
Well, I'm sure there is. I would hope there is, but no public indication of such. I mean, there was even a moment on the 7 Point over the weekend when Trump said that J.D. Vance was not going, and then somebody else said he was, and then Trump said he was going, and somebody else said he wasn't. And finally, the White House just sent us a statement that said J.D. Vance is going, and when we said why, they said things change. So, we're getting that kind of explanations from the White House. I think J.D. Vance is going, though, with a to-do list, which are things we already know the Iranians don't want to agree to, like giving up their enrichment program of uranium for nuclear use. They don't want to do that. From their position, they opened the strait, hoping that would call off the blockade that the U.S. is doing on the other end of the strait, on the open end of the strait. And when the blockade didn't end, then they thought they had been disrespected, or that wasn't part of the deal. And so, they started threatening violence again, which made Trump threaten violence again. So, it's really, we just have to follow this moment by moment, and we'll know what happens when it happens, which is unusual.
Unusual to say the least. If Iran shows up in Islamabad, in Pakistan, Wednesday to discuss things, who from Iran speaks on behalf of the government? Is it the foreign minister who was the one who posted on social media that the Strait of Hormuz was open on Friday? Is it the IRGC, which actually controls the missiles and security forces and is, kind of overseeing the Strait of Hormuz? Who do we look for?
Well, we're not sure. The last time they had the talks, which was not this past weekend, but the previous weekend, they sent a delegation of 71 people, which I think was for two reasons. One, it gave the Iranian government a chance to hold a meeting without fear of, now that we're all in one place, an Israeli or an American bomb being dropped on their heads. They know they're safe in Islamabad, so a lot of people went so that they could just have a meeting in person about this. But they also bring their nuclear experts. They bring physicists, they bring scientists, they bring military people to discuss details. And we are not clear how many people are there from the American side. We know of only 3, none of whom at my last check were nuclear physicists. And so, we're not sure who will be at the head of the table for the Iranian government. It's not the Ayatollah Khamenei. It's probably the head of the parliament or an IRGC leader or, as you said, the foreign minister, but we just don't know.
All right, Terry, we will, like you, we will try to follow this as best we can. Wendy Benjaminson from Bloomberg News. Wendy, we'll try to follow it as long as you do and your team there in Washington, D.C. Wendy Benjaminson down in Washington, D.C. I'm trying to just stay with the headlines, I guess is probably the best we can do.
The headlines keep changing. The deadlines keep changing. Who's controlling the Strait of Hormuz keeps changing. I mean, we know the president says things that he wants to see happen. And he did that on Friday when he said that there were going to be peace talks. And he said that, in the past. But as for what's actually happening on the ground, it remains unclear. And investors seem to be looking past it all with the S&P lower by a hair, a third of 1%. Oil prices are higher, but they've remained fairly high through this period.
Yep, absolutely. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower. Oil is jumping on doubts over a peace deal. S&P 500 index right at 7,100, down 0.3%. We've got the Dow lower by 72 right now, a decline there of 0.1%. We're off session lows. NASDAQ also retreating from a record, down 137 now, drop there of 0.6%. NASDAQ 100 index also down 0.6%. But on a down day for much of the market, the Russell 2000 index of small cap shares is higher. The index up now by just about 0.5%. The VIX above 19. The 10-year, 4.25%, with the 2-year, 3.71%. Gold right now is down $26 the ounce to $48.03, a decline there of 0.5%. Crude continues to be closely watched, and the big story, WTI, $88.75 a barrel, up 5.8%. Barrel of Brent, the global benchmark, $95.40, up now by 5.6%. Oil higher, stocks lower. As for the market backdrop, Terry Spath is Chief Investment Officer and founder of Zuma Wealth. She was a guest moments ago right here on Bloomberg Intelligence.
I think what's standing out most is the market's resilience despite this sharp risk-off move. These risk-off moves, supply shocks, they tend to be temporary. And by temporary, I mean a couple days, couple weeks, a couple months. But markets often recover once that shock is absorbed.
Terry Spath of Zuma Wealth interviewed right here on Bloomberg Intelligence. Shares of companies involved in psychedelic-related therapies are surging today after President Trump over the weekend signed an executive order to expedite research and access. Now, a company called Compass Pathways is up by 40.6%. We've got shares of GH Research, they're out of Dublin, up 18.5%, and Definium Therapeutics up now by just about 2.4%. Again, recapping, stocks lower, oil higher, S&P down 0.3%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet. Scarlett and Paul, that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. As Charlie was telling us, we're looking at equities not doing a whole lot. They're down marginally, but really this undersells how much of a recovery they've made since late March. They are at record highs. The S&P 500 up about 12%. The interesting thing, of course, is that the bond market has not recovered in quite the same way. Right. Long-term yields, for instance, still fairly elevated. The 10-year yield stuck in this range of about 4.25%. I want to bring in Uma Moriarty. She's senior investment strategist over at Center Square. And Uma, when you look at something like long-term yields remaining stuck in a range and concerns about inflation, what does that mean for your space, for real estate?
Great to be here. And that's a great question to start this conversation with. I think we've been talking about the 10-year Treasury yield, long-term rates being in this 4 to 4.5% range for several years now. And that's really because of the underlying components of that, right? So when I think about the 10-year Treasury yield, I'm really decomposing that into three kind of main categories. One being nominal growth, one being inflation, and then one being the term premium. And I think from an inflation perspective, obviously we have a little bit of a shock here, but there have been other things that are structurally driving inflation a little bit higher. Think about what's happening from a deglobalization perspective. For a long time, the U.S. was really importing deflation as a lot of manufacturing was happening elsewhere. But as we start to think about more nearshoring, onshoring, this deglobalization phenomenon, that's going to be driving interest rates a little bit higher. AI should be net deflationary, I think, long term. But in the meantime, we're spending a lot of capital building this out. We've now got geopolitical conflicts as well. They are expensive. So we have a lot of things that are driving up the deficit, for example, driving into that term premium as well. And so all of these things really compounding is creating this 10-year Treasury yield, which is somewhat range bound. When we think about this from the real estate perspective, I think it really helps to underscore the fact that we are in a new interest rate era, right? And real estate really has to think about operating in this new regime. For a long time, a lot of real estate owners and operators were really hesitant to accept the fact that we were structurally in a higher interest rate phenomenon this period. Now that we've had kind of consistent couple years of remaining in this range, I think you're going to get a lot more acceptance from the broader marketplace, which should also mean that transaction activities should start to pick back up again because that bid-ask spread is narrowing as sellers are accepting the fact that interest rates will be higher for longer here.
Uma, what sectors in the real estate business are attractive to you guys these days?
You know, from the perspective of what we're doing here at Center Square, we're focused on a couple specific areas where we think that demand is really strong and also a place where supply doesn't really exist. And so that supply-demand imbalance is creating really strong fundamentals. One of those areas happens to be what we call essential service retail. These are unanchored neighborhood shopping centers where we just have not seen new construction. And at the same time, retailers have really evolved between the growth of e-commerce, between what happened during COVID. You've now seen retailers really come to embrace an omni-channel retail strategy where that physical real estate footprint for them is really critical to drive brand recognition, to really drive loyalty for their customers, and also deliver goods at the place where the customers want at the right time. And so from that perspective, we're really seeing retail real estate getting a moment in the sun here. Another great area from a supply-demand imbalance perspective, we see really is senior housing. A lot of the senior housing space, especially within listed real estate space, is really compelling today. The healthcare sector has had a bit of a pullback in the last couple of days, and so that's an interesting opportunity for investors to maybe add in a little bit there. And then it would be remiss to not mention an area like data centers within the real estate space that's seeing so much demand that is somewhat insatiable as we continue to build out not only AI, but really just the global digitalization that we're seeing across companies across the board.
Yeah, that is a secular growth story on its own that's kind of separate from everything else. Uma, what about residential? And here I'm really focused on multifamily because that's where a lot of the institutional money has been.
That's a great question. So multifamily is an area where I think there's a little bit of a mismatch from a valuation perspective between the public markets versus the private markets. If you take a big step back, really what's happening from a multifamily perspective is that over the last couple of years, we've had an enormous amount of supply that has delivered into the marketplace. And we're still absorbing that supply. But one of the things that really shifted last year was that demand became a big question mark. We've really shut off immigration as a demand driver for multifamily. And we've also had a bit of a question mark in terms of what's happening from a labor growth perspective, both in terms of companies really trying to maintain their margins as we see inflation picking back up again, but also in terms of what AI means for the workforce, right? So I think from a labor market perspective, we've seen this malaise, which also means that demand for new multifamily renters is a little bit low. You've heard a lot about college grads having a hard time finding new jobs. I mean, they are graduating in the spring and coming into the rental marketplace. And so there are a lot of question marks from a demand perspective. Meantime, supply still keeps coming, right? And so the listed real estate market has really discounted what's happening here from a fundamental perspective. And so you're seeing the listed REITs trading at a pretty material discount to what you're seeing in the private marketplace. And so if I'm thinking about deploying new capital today in multifamily, I'm really doing that in the listed real estate space if I'm deploying equity. But what's really interesting in the private markets is that you are seeing a lot of existing capital stacks for multifamily for really great assets, but that have a hiccup from an operational perspective because of the supply-demand mismatch that really just needs a little bit of structured capital to get to the other side. And so when we're thinking about deploying capital in multifamily in the private markets, that's really through kind of a structured equity, pref equity space within the capital stack to provide a little bit more risk protection for us and the capital stack there. And if we're looking at deploying equity, really doing that through the listed real estate marketplace where we do see the REITs are being discounted for the supply-demand mismatch that's creating a bit of a hiccup from an operational perspective for the sector right now.
All right, Uma, thank you so much. Really appreciate it. Uma Moriarty, Senior Investment Strategist and Global ESG Lead at Center Square, joining us from downtown Philadelphia via Zoom. She's a proud graduate of Penn State University, so I'm a big fan of Penn State, so that's all a good thing. Kind of got a little bit of a downward move slightly here to the market. The S&P is off 25 points. That's about 0.3%. But remember, put that in context of the big move we had last week, particularly on Friday. Dow off 40 points. And the NASDAQ off 150.6.
Still very much near record highs, and earnings will really determine the trajectory going forward here, because it's clear that the headlines coming out on Iran are conflicting and all over the place. So investors focus on what they know rather than what could be.
And we'll have more coming up. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. WTI crude oil, it's up about almost $5 here, just below $89 a barrel. Here's an industry that really is sensitive to energy costs globally, and that's the aviation industry. Alaska Airlines, they're the next airline. They're slated to report after the close today. We'll hear what they have to say about the cost of jet fuel. We heard from some of the other players as well. It is starting to really pinch, and they're trying to pass along as much of that as they can. But let's see what's happening with Alaska Airlines and with Sid Phillip. He's Deputy Team Leader for Global Aviation, Bloomberg News. My Alaska Airlines story is, up until very recently, I thought that image that is on the tail of the Alaska Airlines planes, I thought it was Jerry Garcia. Not kidding. Until I was informed by an Alaskan Airlines pilot, no, knucklehead, it's not Jerry Garcia, it's an Eskimo.
It is.
So for Alaska, I was like, oh, now I get it. I used to think Alaska Airlines was like the coolest airlines because they would put Jerry Garcia on their tail, but apparently that's not the case. Sid, thanks so much for joining us here. What do you expect to hear from Alaska Airlines? These regional, lower-cost airlines are really struggling.
Absolutely. I mean, all the airlines are struggling with higher jet fuel prices. I mean, the prices doubled in March, and they've sort of continued to go up. And so we're looking to see what sort of indication the airlines are talking about this summer. both on the demand front as well as how they're going to manage those costs, because fuel is the most expensive, the biggest cost for an airline. And when you've got that jet fuel rising, you've got to be able to balance out demand and supply, because when prices go up too much, then people hold off on booking holidays.
If fuel is such a big part of their cost structure, why don't these airlines hedge? Because as I understand it, they do not hedge their fuel.
So U.S. airlines typically do not hedge fuel, because that's been something that they did post-pandemic, because back in the pandemic, you had lots of people losing money when they hedge fuel. And so airlines in the U.S. broadly moved to not hedging fuel. And that's been something that's caught them unawares, because, I mean, we had oil sort of relatively stable for the last 2-3 years. And then with this conflict, oil prices surged and airlines were caught unawares. I mean, European players tend to be much better hedged, and they sort of are better able to withstand those shocks. But then on the other hand, in Europe, you also have the question of availability, and airlines are talking about how airports in Europe are running out of fuel.
So what is the expectation there? Just go to that point. When does the global aviation system really become at risk here?
I mean, the global aviation system is already sort of significantly looking at significant risk as they go into the busy summer season. Yeah. Summer is basically when airlines across the world make most of their money, and the rest of the time they're trying not to lose money. And so if the airlines start sort of struggling in terms of finding ways to actually get fuel and get those planes on the ground, and having to sort of cut routes, we're already seeing airlines talking about cutting capacity. We're seeing airlines talking about reducing some routes, taking off destinations. I mean, we've seen European carriers pull out of West Coast flights, for instance. So when that starts happening, people sort of tend to also sort of shy away from booking, because they're sort of uncertain whether the holiday that they're spending more money on this year will actually take place or not. And so it sort of becomes a chicken and egg situation for the airlines, where you want to make sure your network is preserved. You want to make sure that you're operating the flights you're selling. At the same time, you're sort of struggling with fuel availability and also fuel costs.
What are the airlines saying about customer demand these days? Is that being challenged?
So we will be looking at Alaska to see what the low-cost demand's done, because Delta Airlines has talked about how demand continues to hold up, but then Delta and United tend to go after the higher-end passengers, those who are not as affected by rising ticket prices and those sort of rising business class fares.
All right, I want to get back to an airline story that just fascinated me, because it just came out of left field to me, at least. United Chief Executive Officer Scott Kirby had floated the possible combination with American Airlines. He talked to the President Donald Trump about that in February. Where did that come from? Because I would have thought that there's no way the regulators would allow this transaction, but maybe it's possibly a thing. But I know American Airlines is saying no.
So American Airlines has said no. They said that they're not interested in it, and it would not pass muster with antitrust authorities. But at the same time, United Airlines has been looking for ways to sort of grow and cement its position. Like, I mean, Delta Airlines is bigger than United in terms of profitability and market cap, but United has talked about its aspirations of growing, and this would be one way of sort of cementing that lead on the U.S. customer. On the other hand, also sort of the backstory is that Scott Kirby, the United CEO, used to be at American Airlines, as was once seen as the heir apparent at American Airlines, and then he departed in 2016 when he realized he was not going to get that job. And so there may be some personal motive to it as well.
I mean, I guess 30 seconds. Could they buy like a JetBlue or something?
They could. I mean, at the moment, consolidation seems to be a theme in the industry. Everyone's sort of looking at various options. And especially for the carriers that are struggling, it is an opportunity for the bigger carriers to absorb them at a time when both you get the advantage of the fleet, when fleet is in short supply, and also you get sort of slots and routes that you can sort of otherwise not be able to get.
The airline business, that's a tough business, man. I'm not sure I'd want to go into that business, but maybe the bigger is better strategy works. Sid Phillip, thanks so much for joining us there. Sid Phillip, he's Deputy Team Leader for Global Aviation, Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Got Alaska Airlines, the Jerry Garcia airline, reporting after the close today. S&P down 26, the Dow's down 34, and the NASDAQ down 150 points. That's 0.6%. We got oil higher. For our listeners in the U.S., reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metal. Stay tuned for the latest market news. We got more coming up right now.
News. I'm Michelle Franzen. More mixed signals on a second round of talks between the U.S. and Iran. The White House says Vice President J.D. Vance is ready to lead a U.S. delegation, but Iran making it clear talks are not happening yet, and the temporary ceasefire runs out Wednesday. ABC's Ian Panel has more.
The Iranian regime is playing hardball. It's saying that the U.S. naval blockade of the country is a violation of the ceasefire and is threatening to retaliate for that attack on an Iranian-flagged vessel. Remember, Iran also attacked 2 ships over the weekend, but beyond that, it doesn't appear ready to make any of the major concessions President Trump's been demanding. And there still seems to be no agreement on the main issue of Iran's highly enriched uranium or its nuclear program, which of course has long been the stated reason for the war in the first place.
U.S. businesses who had to pay more for imported goods under President Trump's tariffs can begin to apply for refunds starting today. The U.S. Supreme Court struck down most of the tariffs imposed last year, saying the president did not have the authority to issue the broad tariffs without Congress. A new portal set up under Customs and Border Protection. FBI Director Kash Patel suing The Atlantic for defamation and demanding $250,000 in damages.
The Atlantic cover story published last Friday alleges that FBI Director Kash Patel is a heavy drinker who frequents private clubs in Washington, D.C. and Las Vegas, something Patel expressly denies, telling ABC News the story is, quote, a lie. In court filings, Patel says The Atlantic and author Sarah Fitzpatrick knowingly published defamatory information. In responding to the $250 million lawsuit, The Atlantic says in a statement, we stand by our reporting and will vigorously defend The Atlantic and our journalists against this meritless lawsuit. Sherry Preston, ABC News.
In Japan, tsunami advisories have been canceled following a 7.4 magnitude earthquake off northeast Japan. Reports that people felt the quake as far away as Tokyo. So far, no reports of damage or injuries. You're listening to ABC News. Cleanup is underway in the Midwest after a series of severe storms and reports of dozens of tornadoes. The storms stretching from Texas to Minnesota over the past weekend. ABC's Morgan Norwood is in the hard-hit community of Lena, Illinois.
The EF2 twister with winds peaking at about 130 miles per hour, sweeping through quickly. Reports of school children trapped inside a locker room as the tornado roared through. At a nearby nursing home, part of the roof torn off, debris scattered everywhere.
There were 50 confirmed tornadoes across 12 states. In Louisiana, grief counselors are at the schools in Shreveport where 8 children who were killed over the weekend attended. Police call it an act of domestic terrorism and say the suspect is the father.
The murders of 8 children ages 3 to 11 marks the deadliest mass shooting in the United States since 2024.
It's going to be a while for this community to get back on its feet.
Shreveport City Council member Alan Jackson Jr.
It's the worst probably in Shreveport history, definitely the worst in my 43 years of being alive.
31-year-old Shamar Elkins was the father of 7 of the victims. The 8th was a cousin. Elkins was killed by police after a car chase. Jim Ryan, ABC News.
People in San Francisco are expected to gather in Hippie Hill and Golden Gate Park today in honor of 420, the unofficial holiday in celebration of cannabis. It is one of the number of similar events held around the country. I'm Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Markets wait for signals. Welcome to the Monday edition as President Trump tells Bloomberg it is highly unlikely he would extend the 2-week ceasefire if a real peace deal is not reached. We're going to get the latest from the man on the other end of the line with the president today. That would be Bloomberg White House correspondent Jeff Mason. With J.D. Vance reportedly on the way to Pakistan for talks and the U.S. seizing an Iranian-flagged cargo ship in the Strait of Hormuz. We'll talk to Becca Wasser at Bloomberg Economics about how they did it. And as tariff refunds go hot today, it's time to get in line. We'll walk through the process with Nathan Dean at Bloomberg Intelligence. I started by mentioning the markets, and we go there right now with Charlie Pellet. Before we go anywhere else, he's got the latest on Wall Street from World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Happy Monday. Right now, we have got the Dow, the S&P, NASDAQ all trading lower. Oil is surging once again. Stocks are selling off. This after a turbulent weekend in the Middle East cast doubt on the prospects for peace talks between the U.S. and Iran. So here's where we stand. S&P just below 7,100. The S&P is down 27 right now, down 0.4%, standing at 7,098. Dow Industrials down 68 for the Dow, a decline of 0.1%, while the NASDAQ Composite Index lower now by 0.6%. On a down day for much of the equity market, the Russell 2000 Index of small cap shares does remain higher by 0.4%. The VIX just above 19 with the 10-year at 4.26%. Gold, meanwhile, down $33 the ounce, down 0.7%, 47.96 on the precious metal, while crude WTI 88.98 a barrel, up now by 6.1%. Barrel of Brent up by 5.4%. President Trump's pick to lead the Fed, Kevin Warsh, gears up for his Senate confirmation hearing tomorrow. Stephen Parker is co-head of global investment strategy at J.P. Morgan Chase Bank. And on Bloomberg's surveillance this morning, he was asked what he's expecting tomorrow.
You're going to see some grandstanding. You're going to see some push to resolve the outstanding investigations. I think what's going to be more interesting is listening to what he has to say about the view on the Fed and the balance sheet. Are we going to see potentially quantitative tightening as a way to enter the story around lower rates?
Stephen Parker of J.P. Morgan Chase interviewed on surveillance. Meantime, Politico says Warsh is set to tell lawmakers he commits to, quote, ensuring that the conduct of monetary policy remains strictly independent, citing Warsh's prepared opening statement. Recapping the Dow, the S&P, NASDAQ all in the red. We've got crude oil pushing higher. WTI up 6.2%, 89.03 a barrel. S&P down 0.4%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, many thanks. A market that is waiting for direction, clearly. And we're glad you're with us on the Monday edition of Balance of Power. We left here Friday not knowing where we were going to be, having that Bafo rally on Wall Street, talk of peace. Remember, we woke up Friday morning, war is over, happy Christmas. We heard a lot of voices throughout the day on Friday, contrarian voices who pointed us in the direction that we were really going. So I hope you heard those conversations as we rejoin here on a new week in Washington with huge questions about what is going to happen next in Iran. We're live on Bloomberg Radio, streaming live on YouTube. Search Bloomberg Business News Live if you want to find us on YouTube now or at any time throughout the day. All of our programs up and down the Amtrak corridor coming to you, and from San Francisco for that matter, live here on YouTube where you can pause things, back them up. Did you not hear that quite right? It's one of the best things we have going, along with the podcast, which you can always find at Apple and Spotify. Huge questions about what will happen in a round of talks we're told could be about to kick off here in Pakistan. J.D. Vance is in the air, we're told. We're also told the president not too interested in extending the ceasefire. In fact, he says it's highly unlikely. Now that Jeff Mason is dialing him up on the cell phone. Breaking news, and we're going to talk to Jeff in a bit. With the president telling us on Friday about his intentions and motivations in Iran. Let's just go back a couple of days to remember what he said behind the desk in the Oval Office. Listen.
We'll be talking about Iran later. We have very good conversations going on. It's working out very well. They got a little cute, as they have been doing for 47 years. Nobody ever took them on. We took them on. They wanted to close up the strait again, as they've been doing for years. And they can't blackmail us. We're taking a tough stand. They've gotten away with murder for 47 years. They're not getting away with it anymore.
They're not getting away with it anymore. with an Iranian delegation planning to travel to Islamabad tomorrow, according to the New York Times, citing 2 senior unidentified Iranian officials. Everybody's been playing coy here. Just earlier today, this morning, the Iranians said they weren't going. That was the latest. As of right now, we have no plans for the next round of negotiations, and no decision has been made in this regard, a spokesperson for Iran's foreign ministry said. So it's really difficult to even know if you can believe what you're seeing or reading on a moment-by-moment basis. What we do know is we did seize a cargo vessel, and to be clear, this was not an oil tanker. Remarkable reporting in the New York Times on how this went. Remember, we got a blockade on the strait, and we are enforcing it. When the captain of the Iranian vessel, the Tuska, ignored multiple radio and American warnings, the guided missile destroyer Spruance, one of more than a dozen Navy ships enforcing the blockade, ordered the Tuska's crew to evacuate its engine room. This is pretty dramatic stuff, and CENTCOM put out video of it. This is what I want to talk to Becca Wasser about, because this is quite an interesting operation. Spruance fired several rounds from an MK-47 gun into the boat's engine room, into the propulsion system. So you said, what the heck is an MK-45? It's this big gun that's on the deck here. It can shoot 60 to 20 rounds per minute. These rounds are 5-inch diameter projectiles. They weigh 70 pounds each and contain the equivalent of 10 pounds of TNT. Can you imagine this thing coming through the engine room while you're working on the boat? That's why we told them they might want to leave. I don't know how it didn't sink the boat. The 31st Marine Expeditionary Unit got on the vessel. They were searching it. It is now in our custody. This is what Becca Wasser does for a living. So we thought we'd pull somebody in who knew the ins and outs of an operation like this, leads our defense coverage at Bloomberg Economics. I just love the fact, people ask me, how does Bloomberg Economics have defense coverage? It might not seem obvious to everybody watching or listening, but your analysis helps economic forecasters do their jobs when it comes right down to it, right?
Absolutely. It's trying to understand what might happen in various times where there's conflict, or even if something is going to tip over into a conflict. And I spent years and years studying all of this, working very closely with the Pentagon, doing war games with the Pentagon and with allies to actually learn, what does all of this mean? What are some of the indications and warnings that we see when conflict is imminent, but also when operations are ongoing? What does that actually entail? What is the further risk, and what might it mean more broadly? So this is why we're doing this kind of work.
Well, we're so lucky to have you here. Tell us how important this particular operation was, and how is that boat not at the bottom of the Gulf?
Well, I think first and foremost, this was the first real demonstration of the U.S. enforcing the blockade. Sure, it has redirected vessels in the past, largely by radioing them and telling them it's not a great idea for you to keep going, and they've all turned around. And I think CENTCOM said today it's up to 27 vessels that have been redirected. But this is the first example of the U.S. fully enforcing it by actually taking action. And we saw this being done in a very responsible way. You know, first there was the radioed warnings, and then after no response and no, redirection of the ship, actually taking action. And here, the crew used the deck guns to great degree. What they purposely did was try and disable the ship, try and take out the engine, rather than trying to blast, a hole through the hull. In a way that could actually have it sink,
and they
or
can
have
be
it
that
listing.
precise.
They can be that
We're
precise.
showing video of this for those of you on YouTube. This is the actual firing of the gun. They were pretty far off there. When they're warning, Becca, this is like, how do we know that they're actually hearing the warning?
So you can definitely hear, and a lot of times you have had responses. And I think looking at what we've seen already with another 26 vessels hearing warnings and turning around, it would be a little bit, it would be, hard to believe that there's only one vessel that wouldn't hear those warnings. And so some of it's being radioed, but, there's also other ways of signaling at the same time. And so I think that there's a few different
We're on the radio,
fallbacks.
we're probably flashing lights, we're getting on the horn, maybe a couple warning shots.
Maybe even some flags if you want to go old school.
So we put a hole in the engine room, maybe a couple of holes. We fired several of these, as it turns out. I can't imagine this projectile and what takes place inside the ship when that happens. Then the 31st shows up. They board the vessel. Do they seize the crew? What happens to the people on board this boat?
Yeah, so they essentially fast roped onto the vessel from helicopters. And this is something that, myself and my colleagues in Bloomberg Intelligence have been saying for a while, that we might see the 31st Marine Expeditionary Unit used to interdict and board and seize vessels. So, we saw that come to fruition. And here, they board it, they take over. A lot of times, they talk to the crew, usually round them up in a certain area, but what you've definitely heard already is there is a focus on maintaining human life, right? Which is why they said please vacate the engine room before they fired, to try and preserve life, and same way that any crew would definitely be taken care of at this juncture in time.
One ping only, please. So we're told there could be hundreds of these gunboats, these fast boats that Iran has planted in caves and in various places around the Strait, around the Gulf. That threat remains real, as does the threat of mines, right? What are we doing about both?
So there's threats of mines, there's threats of missiles, and there's threats of drones on top of all of that.
Wow.
So it's a pretty multidimensional threat.
Sure is.
In terms of what the U.S. is trying to do with mines, you do have one littoral combat ship, the USS Canberra, that has been outfitted in a minesweeper role, and that happens to be located in the Middle East. But there's also reports that the U.S. is going to be deploying drones, undersea drones, to try and identify where the mines are and help with their basic removal. So that's what they're doing.
Would that be a first for us?
I think that would be a first, but I think there it really becomes a question of how much is it actually the underwater vessels, the underwater drones that are actually doing the work, or is it also corroborated by other means? There's been a lot of firsts already in this conflict with the use of different technology, but you have seen it used in conjunction with more traditional forms of capabilities. So I think we're likely to see something like that here.
Do we have assets in theater if we wanted to seize Karg Island right now? We've got everyone and everything we need?
Well, it would still be a pretty major undertaking. Sure. And right now it seems as though the Marine Expeditionary Unit is tied up doing other things,
because
helping
the 31st
enforce
would be working on that.
They would definitely be working on that. So you see them being tied up with the blockade. So there would probably need to be some additional ground forces. And also the president has been very reticent to commit ground troops to be on the ground, to be boots on the ground in Iran in any form. And so I think we've seen a shift away from trying to do a highly risky Karg Island scenario, in part because U.S. forces would likely be sitting ducks on that island.
Wow. We're going to talk to Jeff Mason next about the political side of all of this. Becca, we're in the 8th week now. We're entering the 8th week of this war. At one time, the president said it would be 2 or 3 days. Then it was 4 to 6 weeks. We're on week 8 now, and the market is wondering what's different. On Friday, it looked like we might really be seeing the gears turn on peace. We don't know where we are today. To what extent can we claim to have debilitated or obliterated, as the president says, Iran's military capability after 8 weeks of war?
There's been degradation of Iran's military capability, but that doesn't mean that Iran's capabilities are entirely, decimated, as the president has claimed. I think there's still a sizable number of drones, missiles. Iran is currently trying to dig out additional missile launchers. So, if the ceasefire were to fall apart and there would be a full resumption of conflict, it doesn't mean that Iran doesn't have any capabilities left to prosecute this fight. So that puts us in a really dangerous place. And that's one of the reasons why our Bloomberg Economics base case for what might happen next is a longer term, low intensity, protracted conflict, which means that this goes on longer for the 4 to 6 to 8 weeks that have been mentioned.
Well, we're glad you're back in the United States. Thank you, as always, for your expertise. She's the best at this, Becca Wasser, straight from her perch at Bloomberg Economics, where she leads our defense coverage. Thank you for the analysis, Becca. The real thing, as I like to say. You know who else is the real thing? Jeff Mason. He just got off the phone with the president. And I'm delighted to say that our White House correspondent at Bloomberg is with us right now. Let's just keep driving through the hour here in the conversation that Jeff had with President Trump himself. Welcome back, Jeff. It's great to see you. I hope you had a good weekend. I know you were working, and you're still working it right now. The president telling you on the line that he's not interested in extending this ceasefire. What do we make of that?
Thank you, Joe, and back at you. A couple things. I think one of the takeaways was certainly that he said it was unlikely that he would extend the ceasefire. That seems to be his way of maintaining leverage and holding leverage over Iran. He also said he was not in a hurry to get a deal because he didn't want to rush into a bad deal, and he was critical of people in Congress for what he considered pressure to do that. So I thought that was interesting. He also had a bit of an optimistic note when he said that the deal or that the talks could work out well for everyone. And he talked about the fact that it'll be Vice President Vance along with Jared Kushner and Steve Witkoff who are going to Islamabad for those talks. But the broad sense, Joe, that I got from him based on what he said is that he's not in a hurry. And that's a shift from the sentiment that he was sharing last week, which really seemed to be, I'm ready to be done with this war.
All right. How many rings, Jeff? What was his mood when he answered?
There were several rings, but he was, he picked up and he talked about how he liked having a direct line like this. So I thought that was interesting for somebody who essentially serves as his own chief of staff, his own press secretary. Having a direct line with reporters is appealing.
It's amazing, actually. I mean, we can digress on this for a moment. You've been covering the White House for some time, Jeff. This is remarkable that it has evolved into the primary method of disseminating news from the President of the United States is people like you getting his cell phone number. What do you think of this?
I will say that it is certainly unusual. There's not another president that I have covered who I have gotten directly on the phone for an interview. So that is unusual. But President Trump is an unusual president and certainly running as an untraditional White House. So it is in line with how he likes to govern and how he likes to communicate.
Did he talk about the operation seizing this cargo ship? Jeff, did you guys have time to get into that?
He didn't talk specifically about that, but I will tell you, and this didn't make it into the Bloomberg story that we have on the wire yet. I asked him if he thought that Iran had leverage, and that question really got under his skin, really bothered him. and I was just asking, obviously, if he thought that, and he said, "No, I have all the leverage. They don't have leverage. I've got another 5 ships that I can take if I have to." So that was the reference to the ship that you were just referring to. It definitely doesn't land well with him if there's any suggestion, even in a question like I was asking, that Iran has leverage. And the truth is it does. And that leverage is related to the Strait of Hormuz. So, the president is trying to take over that leverage with the U.S. blockade, which he also said would not be lifted until there's a deal. But Iran certainly does have power there, and that's power that they've exerted during this war for the first time.
Imagine if LBJ had a cell phone. Like, this could have been wild. Did he add a day, Jeff? He says it's Wednesday evening, Washington time, the end of the ceasefire. I thought it was Tuesday.
It does seem like he added a day. And the way that part of the conversation went, I asked him if he was going to lift the ceasefire, and he said no. And I said, that's tomorrow night, right? And he started by saying, yes, tomorrow night. And then he stopped and he said, no, it's Wednesday night. Please get that out there and make that clear that it's Wednesday night, Washington time. So that is a slight extension from what people assumed was a 2-week deadline that would have ended tomorrow. It also gives just a little bit of wiggle room for the negotiators who are set to meet supposedly on Tuesday night or Wednesday morning, he said. So that would give them a day. Again, another fact check, Joe. The last time there was a major peace agreement on Iran's nuclear capabilities was hashed out during the Obama administration, and that agreement took a year and a half. So this is a pretty short timeline, if in fact the president is serious about that, for them to get an agreement done before fighting could start again.
Did you guys all hear what Jeff Mason just said? The president, Donald Trump, told Jeff Mason on the phone today, I need you to get this out. The deadline is the end of the day, Wednesday. That could be its own headline in another world, Jeff. President adds 1 day to ceasefire. Does that tell us that he does not want to escalate militarily?
What I would say to that is, again, mixed messages. He both does not want to lift the ceasefire and wants there to be at least a little bit of time for talks to happen. He spoke a little bit positively about saying this could be good for all parties involved, and he said specifically he hoped that I would report that. So, yes, it could be good for all parties involved if they receive a deal, according to the president, if they get to a deal. And yet the president is also saying, again, he's not willing to or not likely to lift that ceasefire, and that fighting could resume right as soon as that deadline expires. And the deadline that he described is now Wednesday night.
Incredible. This is incredible. We're giving you a direct line of the President of the United States with the help of Bloomberg's Jeff Mason. On Friday, it was Kate Sullivan. It's an amazing world that we're in and a remarkable moment in geopolitics. Jeff, thank you so much for joining us. We're so lucky to have Jeff Mason as part of our team here in Washington. I'm Joe Matthew. We're also lucky to have Nathan Dean. He's going to be back in here in just a moment as we keep tabs on what's happening on Capitol Hill and beyond. FISA still in the balance with only a 10-day extension last week, and we're counting the days here. Wall Street is holding its breath through all of this. I know you love it when I say that. Charlie Pellet joins us from World Headquarters in New York with a look at the markets before we get down to business with Nathan. Charlie, how's it going?
Right now we are looking lower across the board for the Dow, the S&P, NASDAQ 100 index, Russell 2000 index holding on to a gain up by about 0.3%. All of this as crude oil surges here in New York, also Brent crude rallying as well. Right to the numbers, S&P at 7,100, down 25 today, down 0.3%. This after the U.S. equity market surged for 3 weeks in a row. Dow Industrials down now by 68 points, a drop there of 0.1%. NASDAQ down 0.6%. And again, the Russell 2000 index is up 0.3%. The VIX just above 19 with a 10-year at 4.26%. We do have spot gold down $31 the ounce, down 0.6%. Crude, the big story, 88.89 on WTI, up 6%. Barrel of Brent, 95.21, up by 5.3%. The source tells Bloomberg the family that owns the maker of Jack Daniel's whiskey, Brown-Forman, favors a potential sale to the French distiller Pernod Ricard over an alternative proposal from its closely held American rival Sazerac. Brown-Forman is said, according to the sources, as seeing Pernod as the better fit because the combined company will be diversified across geographies and types of spirits. Pernod's are ADRs today. Right now, they are trading lower by 0.1%. Brown-Forman down 0.8%. Pernod's brands, by the way, include 200-plus brands such as Absolute, Beefeater, and Perrier Jouet. Recapping here, S&P 500 index down 26, down 0.3%. That, Joe Matthew, is a Bloomberg Business Flash.
You a martini guy, Charlie Pellet?
I'm not. I'm a beer guy. But, Joe, I'm a simple guy. Beer, wine, cheap wine at that.
Okay. You like the cheap stuff. I'm with you. That's the right answer, Charlie. How do you think this guy is so wealthy? Charlie Pellet will be back in about 20 minutes' time with the latest on the markets. Well, actually, that might not happen because we have something special for you that's coming up. And Charlie, of course, is always standing by to update the markets for us. Our friend from Peer to Peer, David Rubenstein, has a great conversation coming up with the chairman CEO of Wells Fargo. Charlie Scharf will be holding forth here, and that's going to probably start in the next 10 minutes or so, as we spend a little bit of time with Nathan Dean on a day that this, again, would be the lead story in any other world. If Jeff Mason weren't calling Donald Trump right now about the war in Iran, we'd be talking about refunds. Yes, the program brought to you in part by the word refund, with a new system for businesses that paid the tariffs. This is kind of an amazing thing that I'm amazed it isn't being fronted by more news organizations with so many questions about what the Supreme Court was going to do over the last year. Remember Liberation Day, whether this was legal or not. And if not, would people get their money back? Well, someone is. Importers and their brokers, as of this morning at 8 a.m., able to begin claiming refunds through an online portal that was set up here. According to U.S. Customs and Border Protection, that is the agency administering the system. It's the first step in the process here for a lot of companies, thousands of them, including Costco, who had sued in advance of this. We talked about this on Friday. Kaylee had the presence of mind to bring it up with Neil Bradley, who runs the U.S. Chamber of Commerce and obviously has some skin in the game. Here's what he said.
This is a kind of an unprecedented scale. You're talking about something like 58 million entries. Wow. If you tried to do them one by one, 58 million refunds, that's not going to be possible. What they figured out is, we're about 300,000 importers who are due refunds. They're allowing them to consolidate all of their imports into kind of one submission. They're doing it kind of in a step-by-step process. Yeah, there's going to be a lot of people going online Monday, beginning to upload their forms. I'm sure there are going to be some bumps in the road in figuring that out.
I can't believe we don't have stories already of that website, with the spinning wheel or whatever. I guess it's working because we haven't been hearing complaints about it. CBP says over 330,000 importers paid a total of $166 billion, over 53 million shipments. That's what we have to show for it. Nathan Dean is with us now from Bloomberg Intelligence, senior U.S. policy analyst. This is one of the many stories, but he's got his eyes on. You're a martini guy?
No, I'm with Charlie. I'm a beer guy.
Beer guy, yeah. I'm surrounded by beer drinkers here. We can fix that. Cece will meet me for a martini a little bit later on. So is this going to work? These guys get their money back, and if it goes to the company, it's kind of weird here the way this is going to work. The importer and the broker, how does it get to Costco?
So it's just a matter of time, and like we just saw from from the comments, there's going to be a bumpy road. I mean, Bloomberg News has been coining this refund chaos, and look, it's gotten better than when Bloomberg News put that article out. Right. But you have a website, and it's very similar to what happened what we saw earlier this year with the Farm Aid program, where they went to the farmers and said, "Look, you tell us what it was," and it's not like this money can come out fairly quickly. I mean, there is a process. So in this case, it's very fortunate that you don't have to do it by line by line. I mean, there would be millions. If anybody's been to the harmonization of trade schedule online, it is very intense.
And of course you have.
But, if you are able to roll this up and to get to the point where there's 300,000 entries, it makes it a little bit more manageable. But from us that are looking at this in terms of the market, we've just been estimating that these monies will start coming back over the next few quarters. We're not saying like one lump sum here or anything like that. So for a firm like Costco, you can put it into your forecasts, but it is going to be something that you just can't really predict which quarter it's going to hit.
I understand. So we've got 60 to 90 days, they say, for a refund to be issued. Next earnings season, this is going to be part of the conference calls we're listening to, right? Are traders asking you about this?
It's sort of yes and no. I mean, it's already a lot of it's already priced in.
Okay.
The biggest question that the traders are asking us, and I got this last week on fertilizer, is that Secretary Rollins was out there saying tariffs are going to pay for this, meaning that they're going to reallocate tariffs into something else to pay for additional aid related to fertilizer. Now, the question is, okay, if we've received so much, $180 billion under IEEPA, and $166 billion of that has to be refunded, well, you get 220, you get the rest. How are you going to reallocate it? Especially when President Trump is out there saying that we're going to use this for tariffs, use this for tariffs. So a lot of traders are asking, okay, when the administration comes out and says that we're going to give you relief, where is that money coming from? Now, a lot of it is coming from the One Big Beautiful Bill. I mean, there is reallocations of the One Big Beautiful Bill, but there's a lot of promises being asked out to industry at the moment, and a lot of the traders want to know where that money is.
Well, we'll stick with the alcohol theme here for a moment. What if somebody bought a bunch of wine tariff price? This is a consumer now, and says, "Hey, where's my refund?" Are they supposed to go to the liquor store? They go to the importer, or they're not even part of this conversation?
Well, I can tell you anecdotally, I'm still trying to figure that out because I purchased some stuff from Finland over the summer.
Yeah.
And on that list that I got from DHL, it said, this is your tariff endpoint. So I'm trying to go back to the importer and trying to figure out, okay, do I go back to the company that I bought it from, or do I go back to the importer? And both sides are telling me it's the other. So there's going to be some angry, individuals with this. But I will say is that, thinking about it politically, it's not so much what's already occurred, it's about what's about to occur. Because Jameson Greer, the U.S. Trade Representative, is testifying on Congress this week, and we have Section 232 tariff investigations, 338 investigations. Those are going to wrap up around Memorial Day. And so the question here is, are you going to go from these emergency 122 tariffs that are at 10%, capped at 15%? Remember, they said within days we'd be at 15%, and that was weeks ago.
Right.
But are they going to convert us over to a 232 or a Section 338 tariff right before the election, right before the midterms, when tariffs are not popular with the American populace?
Wow, boy, I'll tell you what. So as of April 14th, this is the most recent number that that we have seen 56,497 importers had completed registration to get on this electronic payment system, eligible for refunds totaling $127 billion. That does include interest, right? You're getting interest on this from the United States government, so this number is just going to keep going higher.
I'm not even sure about the interest.
As I understand it, that is the case.
Okay.
You're getting interest. We need to turn to Capitol Hill before we get to David Rubenstein. FISA is still in the balance. I don't know if this makes your phone ring. This is not something that we're trading off of necessarily, but it's an incredibly important policy. Warrantless spying powers, FISA 702. President of the United States likes to say he has been the greatest victim of FISA in American history, but even he is endorsing its renewal. They were looking at the potential for an 18-month extension. They got 10 days last week because nobody can agree on this. Jim McGovern's head is exploding as the ranking member on the Rules Committee. They were trying to get this to the floor. Here's Jim McGovern.
A 5-year reauthorization, 5 years, and Republicans threw it together on the back of a napkin in a back room in the middle of the night. There have been real bipartisan discussions about adding civil liberties and safeguards. Some members support them, some oppose them, but just about everyone agrees that this is serious stuff, the kind of debate that Congress ought to have in the open. Instead, Republican leadership just jammed us.
Well, that's, I guess, true in a way. The fact of the matter is there are conservatives and progressives who agree that reforms are required here, and there's been a reluctance to put amendments on this. What's going to happen with FISA 702?
You know, I think it's one of those situations where we're just going to kick the can and kick the can and kick the can. And eventually, Speaker Johnson's going to be able to figure out something, whether it includes warrants or whether it includes not, still to be determined. But the one thing that, you mentioned the traders. I had a client come to me and say, look, they should just rename the FISA bill, the pass it, whatever you can do to pass it, and turn to crypto bill. Because every single time that you're looking at FISA, especially in the Senate here, that's time. You're not looking at clarity. You're not looking at the housing bill. A conference committee with the housing bill, and you're not looking at reconciliation. And where I'm going with this is that we are now really in a time crunch. In Project Hail Mary, they say it's time go. It's go time. Because you have the crypto bill, you have the housing bill, you have DHS. We started to get questions on appropriations and highway authorization for this autumn. You have a little bit of April, a little bit of May, a little bit of June, a little bit of July, and then that's essentially it. And so, every time that they're spending time on FISA and they're about to go into a very intense vote-a-rama later this week or early next week, they're not focused on the other things. And so that's why I think from the market's perspective, the longer the FISA debate goes, the more difficult it is going to be to get other things done.
We're standing by for a conversation with Charlie Scharf, the boss at Wells Fargo, who's going to be sitting down with our own David Rubenstein right here at the Economic Club of Washington. That could start at any moment. I think they're just getting seated and getting themselves together, which gives me time to ask you about DHS and reconciliation. Indeed, we've got a vote-a-rama coming up here and a very tight timeline to get this to the president's desk by the beginning of June. Not to mention funding DHS, which is 60-plus days in the dark. How's this going to get done?
So I think if we see Lindsey Graham, the chairman of the Senate Budget Committee, come out with instructions for about a $75 billion deal, that's what's being reported right now. $75 billion for DHS, funds it for 3 years, gets it past the presidential election, so President Trump and the Democrats don't have this fight in the second half of his administration. If you can keep it short and tight and narrow to $75 billion, I think it passes. Okay. If you balloon it up, and Senator Kennedy said this last week, if you allow somebody else to attach something, I'm going to insist on my attachment. $20 billion aid for farmer aid, $350 billion for defense contracting. Right. Jason Smith over at House Ways and Means has already said that, look, if you're going to be talking about this, I want to be involved here. If this balloons up, then obviously there's a problem. Now, in the past, I've said $500 billion or less. I'm actually going a little bit lower now. I think if you're seeing this around the $100 to $200 billion level, maybe that can get through. But look, they have a very tight window. And also, we haven't even talked about Save America Act. We haven't talked about all those other priorities for the second or third reconciliation bill, if you will, that would probably come up in the lame duck period if they're planning it that way. So I think it's very small, tight DHS. It passes, but it's not all that exciting for those of us in the markets.
Who gets the assignment of telling the president, Save America Act? is not happening.
Well, right now, Senator Graham is exploring this idea of grants for the Save America Act.
Okay.
So rather than taking, this is how, in order to get it past the Senate parliamentarian for the bird bowl, is that if you actually give grants to states that embrace some form of this, it's a budgetary item.
Okay.
But I would say is that, look, it's going to be very difficult to get the Save America Act passed.
Yeah.
Senator Mike Lee has already said, on Twitter, or X, that, this doesn't going to fly through the Senate parliamentarian here. But, I would just go back to this idea of that, like, we are going into appropriations process. Sounds like the committees are struggling right now, as they always do. I think they're not going to be able to get most of those 12 bills done by September 30th. There's going to be some form of continuing resolution, kick it they can, if you will, come September. But, there are a lot of contractors and there's a lot of companies out there that are relying on both appropriations and like the highway authorization bill. And normally that stuff doesn't really get to the, we don't really talk at all that much on the radio. But as long as this more macro level politics of Save America Act and reconciliation and DHS funding, as long as that continues, it makes it much more difficult to get that smaller, minute stuff done.
Well, it makes a lot of sense. I thought it was interesting that we could have an inflection point at the end of April here. There's a report that the Trump administration is telling congressional leaders they need DHS funded by the end of April because that is the next pay period. It ends Friday, the last that the administration feels it can handle in its executive authority, paying TSA workers and the rest through this, whatever this fund is in the big, beautiful bill. Should we be paying attention to that
Absolutely.
deadline?
I mean, so like right now, Secretary, I always want to say Senator, Secretary Mark Wayne Mullen is using money, we think, from the One Big Beautiful Bill to pay for DHS. If you remember, the Senate passed a bill that would actually extend the funding for DHS, minus ICE and Customs and Border Patrol. The House didn't take that up. They felt jammed. So as a result here, they're using executive authority to pay the DHS workers. Now, it's only a limited number of money that can come from the One Big Beautiful Bill. It's not like they're going to go around and take unallocated funds from other aspects of the government to try and pay for this. So it is going to put pressure to, A, get this reconciliation package done. But if not, if they can't get it done by June 1st, and May 1st is the ultimate deadline here, then maybe they're going to have to revisit that Senate passed legislation with the Democrats.
Well, I'm glad nothing's been solved since the last time we spoke. Nathan Dean, Bloomberg Intelligence, our senior U.S. policy analyst. Thank you so much, Nathan. Subscribe to the Balance of Power podcast to get Nathan's podcast as well from BI. And we bring you now to the Economic Club of New York. As mentioned, Bloomberg's David Rubenstein sitting down with Charlie Scharf, Wells Fargo chairman and CEO. This is live on Bloomberg.
Right now, the Federal Reserve has a chairman, Jay Powell, and obviously there's some dispute about whether he should be investigated or not, at least in the view of the president. What is the view of the banking community? Do you think the Fed's independence is being compromised? And are you worried that there won't be a chair of the Fed when May 15th rolls around?
Listen, I think the financial services industry is pretty consistent on the independence of the Fed is critically important, not just here in the U.S., but in other parts of the country. And when you think about just the way our governing system works, it's different than a place like China where there's long-term management, long-term goals, high coordination across all the different areas of government. Here we have, a political infrastructure that turns over, which has points of views, and we have a more long-term structure in place at the Fed that has people from different walks of life, and the committee vote is extremely important. And so, creating the right kind of balance between fiscal and monetary policy to get to the best outcome, given the political environment we have, is extremely important. Now, I should say, by the way, just to get a little controversial, because this always comes down to well, what should the president be able to say and what should the president be able to do? There's no reason, in my mind, why the president shouldn't have a point of view. All presidents have for a long period of time. They've done it in different ways. This president does it very vocally in terms of what his points of views are. But even as it comes to, who he's choosing to nominate for the Fed, in this case, he's chosen someone who has a point of view on what's going on in the world, AI, what it's going to mean for jobs, what it's going to mean for productivity, and that's his point of view, and it's got to be approved by Congress. But this idea that there's total separation is just not true, but it is true when it gets to the actual decision making, and that's really important.
Well, let's say eventually the person nominated by the president will be confirmed. Do you think it'd be difficult for him to lower interest rates at this point, given where the economy is? Wouldn't you think it might be hard to do that, given where we are?
Yeah, I think right now there's pretty clear consensus that it would be the wrong thing to do. You know, until the Iran conflict is, in terms of, you know, it's clear what the end is in sight, there's real risk out there. We don't know how significant it is. And I think as you hear voting committee members talk about it, there's a high degree of consistency, including, I think, from the Treasury Secretary, in terms of, you know, waiting to see how this all plays out. And that seems like the prudent thing to do.
So when somebody's the chair of the Fed, Jay Powell or his predecessor, Janet Yellen, do they ever call you up and say, what do you think about interest rates? What do you think about the economy? How do you give input to the Federal Reserve?
Listen, what I would say is that the members of the Federal Reserve at all levels, from governors on down, are very accessible. They always want to talk about things that we're seeing in our markets and our business because it informs what they do, and very often we have the data before they do. I've not been part of a conversation where they ask what we would do if we were in their shoes, and I think that's not the right conversation to have. I'm sure when you look across the different leaders, not just banks, but non-banks you talk to, and people have different varies of degrees that they share. But ultimately, they're going to make the decision based upon all the things that they see both in the physical data and all these conversations they have with folks like us.
What do you think the impact is on the economy of the war to date, the war in Iran? Yeah. What do you think it's been to date?
Yeah, I think, listen, I think, you know, separate out markets versus the economy. Right now, from everything that we see, the economy is still extremely strong. We all just reported our first quarter results in the banking space. Loan demand is decent. Delinquencies on the consumer side are extremely well controlled. Consumer spend is growing on a year-over-year basis, week over week, anywhere between 5 and 7%. They're spending more money on gas, but making adjustments in some of the other categories, which is what, you know, you would have expected. And so they're getting through it. Businesses have gone into this in strong financial shape. So those are all the good things. But then when you ask them how they feel, everyone's nervous. And so, you know, they're not laying off, but they're not hiring to the extent that they would hire. And so these, I would describe all these as, you know, neutral to just beginning to see some potential for some negative impacts. But it doesn't mean that these negative impacts are going to be really meaningful. The real question is going to be is how long do oil and gas prices stay high? I was with a client of ours who's a big, they make and sell retail apparel. And they were talking about the price of polyester and nylon going up 25%, which is a huge driver of their costs. And that doesn't even take into account transportation or the other knock-on effects that you have. People always think about, you know, the gas pump, but it's all these other things that matter. They're fine for a while because they have long-term contracts to buy some of these things, but that will come down the pike. And if the conflict ends, the straits open up, production returns in some reasonable period of time, there will be this impact on consumer spend on some of these other things. But in that kind of environment, it won't be damaging. If this goes on for a longer period of time, it can be more damaging.
So does the President of the United States, the current president, ever call major bank CEOs and ask them to come in and give advice about what he should be doing? Have you ever had that experience?
I would say, again, I think I'd broaden it to the administration, the White House, very, very accessible. And by the way, totally different than the last administration. Not to get political about it, but the last administration, no interest in engaging other than 1 or 2 people in that administration. It was almost like if you were business, you were by definition not good, and if you were bank, you were like the opposite, like just off the spectrum, not good. So this administration, listen, we don't agree with everything the administration is doing. They don't like everything about us. But it's a very, very open conversation about policies, about regulation, about things that we see. And I think there's always this open door to conversation.
recently, the concern has been in the financial community about something called private credit. So is that legitimate concern? Is private credit about to crumble in some way?
No, I don't think private credit's about to crumble. And when you look at private credit has grown dramatically. So if you just break it apart into its pieces, first thing people say, is it so big at this point, it's a systemic risk? And it's not today. When you just look at the size of private credit, it's not big enough to be a systemic risk broadly the way we think about systemic risks that have existed in the past. But it's credit. And there's been a huge amount of money that's flown into these products, both institutional and retail. And we've all seen this in the past when there's a lot of money that needs to get invested, because that's the only way that these firms get paid, is to actually invest. It doesn't always work out well. And, we're in an area where we've been in this bull market for a long period of time. We haven't seen any recession in over a decade. COVID doesn't count for this, because people haven't really lived through a real cycle. And so you will see credit deterioration at some point in time. And I wouldn't paint the picture of private credit separately from bank credit. I would say that in both instances, there are people that do it really well, that are really conservative in how they do it. They understand their companies. And there are those that have piled in that are just looking for growth, looking to deploy assets, and they'll have problems. But again, some of the big names out there that we all know, they do it really, really well. They're really smart.
All right. Now, 07, 08, we had the Great Recession. And where were you then?
I was at J.P. Morgan Chase.
J.P. Morgan. Were you worried that the entire financial system was going to crumble, or you didn't think that was a concern?
You didn't know. I think you were concerned about what you didn't know, what was going to come next, and that, and we'll never know, because I think the things that the government did, which in retrospect turned out to be somewhat controversial, whether it's some of the programs they put in place through the Fed, TARP and all these things, that took the question away.
But you don't see private credit being a problem?
Not even close.
Okay.
Not even close.
Now, another concern in the financial community lately has been the value of software companies. People think that AI is going to come along and, in effect, take away the value of the software companies that people have built into their large companies. What is your view on that?
Alex, I think the market's got it right and the market's got it wrong. It's one of these things where, and markets are very funny, right? They get it right over a long period of time, but over a short period of time, sometimes they miss things, then they catch up, sometimes they overcorrect. I mean, we see it in our own stock, right? Our stock one day can move, 8, 9, 10%. We're the same company we were the day before, and then 3 months later, we're back to where we started. And so you've got these anomalies that exist. And I think the reality is there is risk to not just software companies, but many other companies in terms of what AI allows the core users of it to do. And it's like the private credit discussion. Everyone's being painted with this broad brush of, their future is in doubt. And that's just not the case. I mean, I think about ourselves. Think about the core platforms we use that we use at Wells Fargo. It could be general ledger, HR systems, CRM systems. In the new world, theoretically, could we go out and recreate those platforms by using AI? Absolutely. The risk to do that is extraordinary. So what we'd rather have is partners who have great foundations to create their own AI models built on top of this, integrated with ours, and then we can go do other things. So I think those that use AI themselves, and you start to see that, will actually become more valuable, and others who aren't in a position to do that will suffer.
Has AI changed your job very much? Do you use AI in running Wells Fargo?
I personally do. We've enabled most of the company with some of the basic AI tools, but we're at the very beginning. And we're kind of going through pieces because we've got to monitor it in a couple of different ways. Number one is how we use the tools ourselves to either become more efficient or deliver differentiated products and services for our customers. Number two is we lend a lot of money to a lot of people, and so understanding how AI is going to impact their businesses matters a lot to us. And then we've got the question of just like how is AI going to change our business model? And those are the three different buckets that we think about it. We're most advanced in that order. But we're towards the beginning of it, but it's incredibly powerful, and we're going to see meaningful benefits.
Now, the other day, I interviewed at a different place the CEO and founder of Revolut. Revolut is a company with now a private market value of $75 billion, headquartered in the UK, and it basically is a fintech company that does a lot of what banks do here, but it doesn't have any offices, no bricks and mortar. And now they're trying to get a U.S. banking license. Does that worry you as a potential competitor to Wells Fargo and other banks like yourself, that they could build a whole banking system without any bricks and mortar?
No.
Okay, don't worry about it.
No, I mean, I would say, and I don't say that cavalierly, even though I came across cavalierly. We think about it a lot. We think about the competitive advantages that we have versus who we compete with, and huge amount of respect for them and the other fintechs that are out there. And I think, when you kind of step back and look over the last 10 or 15 years and say, what have the fintechs done to the banking space? I think first and foremost, it's made it very clear to people who run banks that the moats that have existed, that have allowed you to move slowly, are no longer going to protect you. In fact, you've got government and regulators that are telling you need to do more. So banks have woken up to the fact that you have to compete not just with regulated institutions, but non-regulated institutions. And we come at this with this great position of strength, which is we have trust. We have the FDIC insurance. We have a huge customer base. And, it really, I've lived in other worlds too. When you're at a big company, you sit and look at small companies and say, oh my God, look how quick they can move, the great products, they understand the customer, all those things are true. And then when you go to one of those companies, you look at a company like us and say they have 70 million customers. Wow. And if they were to get some of these things right, think about how hard it's going to be for us to compete with them. So it puts a huge amount of pressure on us to have to deliver things in different ways if we didn't have that kind of competition, but we know it's there.
I interviewed somebody here not long ago, Jeremy Allaire, who started a company called Circle. Yep. And they do stablecoin. Is that a concern of you, that they can basically do some of the things you do at less cost?
I think stablecoins it's not clear. I think stablecoins across the globe will have a meaningful place. I think when you get outside the U.S., there are real reasons why stablecoins are very attractive. When you go to places like, high inflationary places, Brazil, Venezuela, the rest of these places, where it's historically been very hard to keep and hold dollars, stablecoins solve that problem for them. And so if you had a choice of keeping your money in local currency or US-backed stablecoin, you'd prefer to do that. So the question is, what's the use case in the US? Because we don't have that problem. And so I think it's clear that cross-border payments are very inefficient today. They take too long, they're expensive. It's just not an easy experience. Stablecoins can make that look very different. So I think that is a real use case here in the US. Beyond that, it's not clear to me that there's a winning app there or winning edge. By the way, it doesn't mean that we're not going to partake in it. We're building stablecoin solutions both within the U.S. banks and more broadly, in case what I said is wrong, so that we'll have something in place and be able to compete with a very broad network of participants. But it's just not clear yet.
Now, for banks generally, if interest rates go up, I guess the theory has been that banks will make more money because they can charge more. Of course, it costs more for deposits. And if interest rates go down, it's easier for people to borrow, and therefore there might be more activity. Is it better for banks generally if interest rates go up or go down?
There's the short-term impact, and then there's the longer-term impact. We have a lot of money where we pay zero rates. And so when what we earn falls, then that squeezes our margins because we can't lower zero, what we pay customers, or 0.5 basis points. So, higher rates, rising rate environment is certainly helpful for something like that. But what's most important is, what are the reasons underlying it? Because the amount of money that we'll make in any given quarter from a favorable interest rate curve for us is de minimis compared to what it does to the underlying base of our customers. So if the economy is healthy, the economy is growing, inflation's under control, people are growing inventories, people are spending, That's what's going to really drive profitability of banks. And one of the things that I think it's something that we're very blessed with is we're so focused on the U.S. 95% of our revenues come from the U.S. We really live and breathe by the success of the U.S. customer and the U.S. business.
Well, let's talk about Wells Fargo specifically. Your symbol is a stagecoach. Remember stagecoach?
I do remember it. You see it less than you used to.
Why
but
is
it's
that?
Still there?
You don't like to use it that much?
No, I think well, let's be honest, right? If you're on the West Coast, the Stable Coast is iconic. Everyone on the West Coast knows the stagecoach because that's where the history of Wells Fargo was. You come to the East Coast, which was the old Wachovia set of banks. They don't know what the first thing about what the stagecoach is. And so it's an important part of our heritage. But then the other thing you think about is when you think about like what's going on in the world, the speed of change, the rapid movement, stagecoach,
you don't use it that much.
Isn't exactly there. So we still use it. It's kind of in the background a little bit because we don't want to disappear from who we are. But there's a right place for it.
Who was Mr. Wells and who was Mr. Fargo? They started Wells Fargo, I presume.
They did. Henry, I always get it wrong. Henry Fargo and William Wells. I think I got it right.
Basically, what was their business?
They started a business that did two things. It really was there to support everything that was going on with gold on the West Coast, and it was both it was to help with financial needs as well as travel and movement of things across country. And ultimately, those businesses, it's a little more complicated than that, but ultimately those businesses split. And when the bank became incorporated in California, that became Wells Fargo. And then the express business became American Express, which then ultimately transformed itself multiple times in the early 1900s.
So today, on Wells Fargo, what is the market capitalization, the market value today of Wells Fargo is what?
250, 260 billion.
Okay, and how many employees do you have?
200,000.
And today, what would you say the customer base is? How many customers do you have?
70 million.
How many?
70 million.
Wow, that's a lot. And what about credit cards? Do you have a big credit card
cards,
business?
20-something million cards.
Hey, have you ever used a credit card and had it denied?
You want to know the truth?
Yes, I assume you.
So I get to Wells, and first thing I want to do is get a Wells Fargo credit card. And so I get the new card, and I was out to dinner with some good friends who run some big companies, and I pull out my card, and I got denied.
Is that person in charge of that division still there?
We've learned an awful lot. It doesn't get denied anymore.
Right, but hasn't happened since.
Hasn't happened since.
Okay. What about the ATM business? Is that a profitable business for banks?
The ATM business, it's marginally profitable, but it's important. It's convenience. And, cash is becoming less important over a period of time. People are able to deposit checks on their phones and not having to go to ATMs anymore. But it's a little like branches. We can debate about, what the future is going to look like in 20 or 30 years, but customers tell you what they want and what they like. And they like convenience. There's still plenty of cash that circulates out there, especially in our customer base. And until they stop using ATMs, we're going to still have them for them. It's part of the value equation.
Yeah, before you came to Wells, they had a problem, and Wells was put under some constraints by the federal government.
Yeah.
What were those constraints?
Well, we had multiple constraints. The biggest one that people know about is there was an asset cap put in place. So at the time, I think it was 2018, we were told that our assets at the time were 1.952 trillion, and they couldn't go higher than that until the consent order work was done to their satisfaction. And in addition, by the way, when I got to the company, we had 13 public consent orders.
How do you grow the company?
That was one of them.
How do you grow the company if you can't grow your assets?
It's very, very hard. So there are things you can't do and there are things you can do. You've got to be, first of all, very selective in looking at your balance sheet and saying, okay, it's not the worst thing in the world to say we need to become more efficient on our balance sheet. What's less efficient? Where do we make less money? How do we reallocate that balance sheet usage? You then turn to certain things and say, We're just not going to be active about soliciting loans. We're not going to be active about soliciting deposits. We were very careful not to throttle consumer deposits, because you tell a consumer to please bring your deposit elsewhere, you've lost that relationship. Large corporates understand. They understand we have an asset cap. They understand we want to take their money, but we just can't right now. So we turned away massive amounts of deposits at the time. And we focused a lot on businesses that drove fee-based revenues. So we've grown our credit card business dramatically, which includes a significant portion of increasing the spend. We've grown our trading capabilities. We've grown our investment banking advisory capabilities. We have our fee-based treasury management businesses. And so, that along with our wealth management business, we get paid on fees. That's what we focused on. It wasn't the worst thing to do for us as a company because we were too reliant on net interest income. Our NII as a percentage of the total revenues of the company was much higher than everyone else. And so we created a little bit more balance in doing this. But it's very, very hard when you're in the marketplace competing with other banks, talking to the same shareholders. And we've got two hands tied behind our back because we can say all we want about growing these other businesses. The core thing of what we do is take deposits and make loans, and we couldn't make any more.
So,
by the way, for 7 years.
What led to these sanctions? Why did this happen?
It was the basics. It was, quite honestly, there were a series of individual things that the regulators identified. They were right about them. We can argue about whether the punishment fit the crime, whether an asset cap was the right thing to do for a company like ours, but they weren't wrong about the underlying issues. And what happens is you get to the point where if you're not resolving the issues quickly enough, they say, okay, we need to get your attention. We're not getting your attention, so the next step is you can't grow. And so that's what they did.
So why would you want to go to a bank? You were another bank. Yep. Why would you want to go to a bank that can't grow? How did they induce you to leave where you were?
Listen, first of all, it was very hard to leave because I was at Bank of New York Mellon, which I went in maybe a year and a half before I started these conversations, and I didn't intend to leave. I intended to stay there for the rest of my career if they would have had me. But I knew someone on the Wells Fargo board from another board that I'm on, and he was on me about you should engage, you should engage. You can be in New York. We have a lot more in New York than you think, which was important to me. And then you kind of go through what Wells is, and I competed against them for years. And I believed, and I believe today more than ever, it's an incredibly important, amazing financial institution in this country, which lost its way on a series of things. And if you sit there and say, if those things are all fixable and someone were to hand you the Wells Fargo franchise that had been underperforming, that had been restrained for so long, that's like a dream job. So, you got to take the risk that you believe you can get through these problems with the government, by the way, in a difficult environment with the Biden administration. But if you come out on the other side, it's incredibly exciting. And we're lucky enough that that's where we are.
Your constraints have now been lifted, is that right?
Yes.
So now, if you don't grow and do well, you have nobody to blame, right? You can't say it's the federal government, right?
There's no question it's on us.
So let's talk about, for a moment, the fact that there are 4 gigantic banks in the United States. J.P. Morgan, Citi, Bank of America, and Wells Fargo. Do you think only having 4 gigantic banks is the right number? Is it too concentrated, or it works out okay?
Well, I think, first of all, you got to start with, we have 4,000 banks in the country. And when we think about financial services, you really do have to think beyond banks these days, right? You talked about private credit. $1.7 trillion of lending is now done away from banks. You've got all of the different things that are being done in the private equity space. And so, the definition of, what's done in the banking sphere has changed very dramatically. There's no, in my opinion, I think most of the large banks would say this, we need banks of all sizes. Like we do. And so, Rob's here from the CBA, and when we look at the smaller banks in this country, like they do things that we can't do. We're not going to have branches in every location. We don't have the relationships that they have. The standards that we have to live with under when it comes to lending are different than small banks do. If you're in a small bank in a local community, I'll make a loan to you based upon what I know about you. I knew you as a kid. I knew your parents. I know you're going to pay me back. I know exactly what you're going through. We can't do that. The OCC is going to come in and they're going to say, "What, are you crazy?" No way. Downgrade it. They're going to give us all these MRA. I mean, that's what would happen. So we need a broad cross-section of banks to serve people locally. But we need big banks. We have big companies in this country, and we need big banks to do things for those companies. I mean, examples more recently, we have a middle market client. Okay, this is not one of our large corporate clients. We have a middle market client called QuickRete. They make the the powder that you go buy if you're doing your own work at your home, where it turns into concrete. QuickRete's been a client of ours for 40 or 50 years. We've been their sole bank. They've wanted to do everything for us. They just went and did the biggest deal they ever did. They only wanted to use us because they trusted us. And it was a $7 billion non-investment grade underwriting commitment, the largest ever done. Like, if you're small, you can't do that. Netflix decides that it wants to enter the bidding fray for Time Warner. And so, they called us in. We were involved in the transaction. We made a $30 billion commitment to that transaction. Those things have to get done if we're going to continue to see the capital markets activity. And you need big banks to do that. And if it's not us, it's going to be the Europeans, it's going to be the Japanese who are coming back, ultimately the Chinese. And so, our banks do have to scale with the growth in the economy. It doesn't mean that big versus small. Both are necessary. We do different things, and we try and support small banks because we know they play an incredibly important role.
So what is the most profitable part of the business for big banks? Is it lending money to corporate customers, lending money to smaller individuals, home mortgages, credit cards? Where's the big profit? ATMs?
Well, let me go back for a second and say we have looked at all of the things we do within Wells. We've sold 22 businesses. We did it to eliminate hobbies, to get rid of things that we just weren't interested in investing in. Some were decent businesses, but weren't going to scale enough. So the things that we're left with, we have 4 big lines of businesses. We're incredibly excited about all 4. All 4 have really strong returns, have really great growth prospects. And it's our consumer deposit lending business. It's our wealth management business, where we have 12,000 some odd advisors across the country. It's our commercial bank, where we've got almost 15% share in a lot of the things that we do. And it's our corporate investment bank. And all of them have very strong returns and strong opportunities to grow. And they fit together inside the Wells Fargo franchise to allow us to have just a greater breadth and data and greater depth of what we can do for customers.
Somebody wants to make a big loan from you. Do they call you directly, or you don't take loan calls from your big customers? Do you make the decisions, or?
Senior people call people around the institution and say, who should you connect me with? Here's what I'm interested in doing. Okay.
Let's talk about your background. Where were you born?
I was born in Manhattan, raised in New Jersey.
Okay, and what did your parents do?
My dad was, what at the time was called a stockbroker. Now we call it a financial advisor. He was a stockbroker his entire life. He's still alive. He's 92. I just saw him yesterday. He worked till he was 77. Loved the markets, still loves the markets. My mom, when I was growing up, when my brother and I were growing up, was a teacher because she wanted to be able to be there when we came home from school. And then ultimately went to work at AT&T and went into technology.
So were you a good student, a good athlete when you were in high school?
I was a good student throughout high school. I was a good athlete throughout junior high school.
Okay. And where did you go to college?
Johns Hopkins.
Because you wanted to be a doctor or something? Or
I wanted to be a research chemist.
Really?
And I loved science in high school. I loved math and I loved science. There was always this business thing going on at the kitchen table. That was a lot of the conversation that happened. So business was always there, but my parents were always encouraging of learning broad things and trying to find what you wanted. And both my brother and I were both very much math and science people. And I go to Hopkins, and first semester I take organic chemistry, where you're in with all the Hopkins pre-meds, which was probably the worst experience of my life. The most uninteresting people, super competitive. Sole goal in life is to like beat everyone else out so they can get that spot in medical school. And then I took physical chemistry my second year, and you're just like, the last thing I want to do is spend my life in a lab for the rest of my life. I want to do something else.
All right, so you said I want to be the head of a bank, or what did you say?
No, so I actually at the time, no, banking was like was not there yet. I said I want like a better education. I want a much broader education. I talked to a whole bunch of people about, and I just got convinced in talking to people that college is this great opportunity to learn a broad set of things. I've got nothing against business schools or things like that, but you know, there's plenty of time to learn accounting. There's plenty of time to learn marketing. And by the way, most of that stuff you learn on the job anyway. Like college is a great example to learn about international relations, political science, psychology, sociology. So I changed my major to what Hopkins had this wonderful thing called Social and Behavioral Sciences Area Major, where you were allowed to take a broad set of classes in all those types of things that I just said. And I loved it. I loved the people. I loved the professors, the students. I loved the work. And I think I'm a better person for it. And then you get to the end of that and you say, okay, now what am I going to do with my life?
So you graduated what year?
I graduated college in '87.
And did you say, I want to go be a banker then? And how would you get a job?
So I thought about doing one of these programs like Cambridge or something in international studies. And I just kind of circled back to, you know, I need a job. It's just, that's what I want to do. I want to work. I worked all my life. Like I started, like probably most people did, I started with the paper route, you know, stuffing the papers into the newspapers on the rainy days, and worked as a locker room attendant in junior high and high school to earn money, to be able to do some things. The summers I had real jobs. I used to go into New York. I worked at my dad's brokerage firm, but I always had these jobs. So like work was always, like the idea of just continuing education without like a place to wind up was just not really in the prospects. And my parents were kind of serious too about like, you gotta, like you should do something, like work is work. So that's when I said, okay, it's business. And so I started going through all these interview programs, you know, the different investment banks up in New York, because I was from the New York area. And then something else came along.
So you got a job at a place called Commercial Credit. Was a young guy was working there then, Jamie Dimon, I think his name was. So was he as easy to deal with then as he is now? Always nice and always said this is what should happen? And
yeah, so it was, I mean, I was incredibly lucky. It was, so just back up, this is a company, it was a little crappy consumer finance company owned by Control Data, lost $100 million. It had 3,000 consumer finance branches, you know, what we call subprime lending now. And Sandy Weil had left American Express. Jamie went with him because Jamie was working with them at Amex, and they convinced Control Data to spin this company out. They took 80% of it public. They kept 20% for a period of time. Sandy brought in this whole management team, former president of Chemical Bank, the guy ran American Express Travel-Related Services, the treasurer of Merrill Lynch, all these very high-powered people for this little tiny company. So you knew there were big aspirations.
But Jamie is a pretty talented person. Did you think everybody was that talented who was a young person working there?
Well, there were no other young people at the time. Oh. All these other people were like much older. Jamie was the young kid. Jamie was 29, 30 years old at the time, was CFO, played a really important role. But he was one of like 6 or 7 really senior people. And it was really over the next, 3, 4, 5, 6 years that, Jamie asserted himself in terms of what his capabilities were.
So they basically, what happened was they ultimately, in effect, bought Travelers.
Well, first that company bought Primerica, which was Jerry Tsai's company, which went from cans and manufacturing into financial services. They bought Smith Barney right before the '87 crash, a bunch of life insurance companies. So Commercial Credit bought Primerica, changed its name to Primerica. The key businesses were the consumer finance company, Smith Barney, and the life insurance companies. That company then bought initially 27% of Travelers when they went through their real estate problems, then bought the rest of Travelers, changed its name to Travelers Group, Smith Barney bought Shearson from American Express, then bought Salomon Brothers, and there were a whole bunch of other deals. So by the time that all happened, by 1998, Travelers was the same size as Citi and did a merger of equals with Citi.
So you were there the whole time?
Yes.
All right, so one day, Sandy Weil calls in Jamie Dimon and says, "You're fired." So what happened to you?
It was a little surreal. It was, because everyone saw that it wasn't exactly working out. And so they invited us up to, we had a facility up in Westchester, and you get invited on Sunday at 7 o'clock, show up, and you walk, and I was the last one to walk in for some reason, and it was like a morgue. Everyone's just kind of sitting around the room, and they just tell you, we've decided to reorganize the company, this person's gonna do this person's gonna do this, and Jamie's gonna leave the company. And Jamie was sitting there, and Jamie stands up, says a bunch of really nice things, and walks out the door. And then...
Well, you didn't go to him and say, "What about me?" or "What happened to me?"
Nope. No, I wound up working, I stayed. I was at the time I was the co-CFO of the combined corporate investment bank. Like most things after the Citi Travelers merger, totally dysfunctional. Everyone was a co-head or triad. The deal was you couldn't have a Travelers person in charge. You had to have a Citi person in charge. There had to be co. And so I had a co-head with the Citi person, which never quite worked out all that well. I wound up staying. I was nervous because I was working for a guy named Mike Carpenter, who I knew, but he and Jamie didn't have a great relationship, so I was nervous about it. It turned out to be a great experience for me.
How long did you stay before you...
I stayed another 2 years. I learned an incredible amount from Mike. It's one of those things in life, one of the things when I talk to younger people all the time, I say, they always ask about, who you role models and who you learn the most from. And like for me, it's just being able to see, you think you can learn a whole lot from someone who's the most successful, but in reality, you learn bits and pieces from different people and figure out how it works for you. And Jamie is amazing. He was amazing with me, but I learned Mike thought strategically about things differently. He had a different temperament. I worked with a guy named Bob Lipp, who went on to run Travelers Insurance. I learned a huge amount from him. I learned a lot from just watching Sandy. And so you put all those things together, and it was, to me, this experience of, as traumatic as it was, and you thought the world was coming to an end, and how could everything continue? But for you personally, it turns out to be a growing experience. It didn't turn out great for the company.
When did you leave the company?
I left in May of 2000. Jamie became CEO of Bank One in at the very end of March of 2000. I joined as the CFO in June of 2000. Moved to Chicago.
And did you think that you were then going to move back to New York with J.P. Morgan?
There was no plan. There was no view that we were coming back. It was a decent-sized company, had a bunch of issues, thought we could do some interesting things with it, assumed we could buy things over a period of time. And the move to Chicago was like the move to Chicago.
So when ultimately there was the merger, J.P. Morgan bought, or Bank One merged into J.P. Morgan, you moved back to New York?
Yes.
And how long were you at J.P. Morgan before you left?
I was there until 2012. So I got to Bank One in 2000. I started out as CFO, wound up running the retail businesses for a couple of years. When we sold Bank One to J.P. Morgan, I ran the retail businesses until 2011. Then I had a year in the private equity business, and then I went to run Visa.
Okay, so you left, and what was it like telling Jamie, basically, goodbye, I'm going to go run a credit card company?
It was great. It was a non-event.
All right, and did that credit card company ever deny you?
But can I tell you why? Because I think why it was a non-event?
Why?
Because, and this is also, I think, a lesson in life. I had known Jamie at that point for, 20 years, 23 years or something. We had very open conversations about what do I want to do, who can do what in the company, and you just kind of came to this conclusion that, if I got a great opportunity outside, it's probably the right thing. So when I was being interviewed for Visa, Jamie was my biggest and most important reference. And again, I was lucky enough with him that he really, and this is not supposed to be about Jamie, but he cares about people. And so, again, even just as a leader, you learn that, and that does matter. And so he was extremely supportive. He realized what a great opportunity it was for me. And
so you went to Visa, but Visa's headquartered in San Francisco, and your family's in New York. So what did you do?
So for the first 3 years, I went back and forth every weekend because my older daughter went off to college, and my younger daughter had just started a new high school, and she was doing great. And we didn't want to, and we gave her the choice, and she didn't want to go. I was traveling all the time. You and I were talking about this earlier. I mean, I was on a plane 400 or 500 hours a year. And at Visa, you're out of the country 2 or 3 weeks a month, very often for some of those weekends. And so, you know, the idea of forcing them to move out to California when I'm never going to be there didn't make the most sense. And you get entrenched in what you do, so it turned out to be okay.
Okay, so you did it for a while, but then Bank of New York came calling?
No.
What happened?
No. I got to the point where in 2016, it became clear to so my wife eventually moved out to California. Our kids were on the East Coast.
You say moved out. She moved with you.
She moved.
She didn't move out. She moved with you.
She came to join me.
Right, okay.
With the dog.
Okay.
She brought the dog, and we were all reunited in San Francisco. And then it just became very clear for personal reasons with one of my kids that we just couldn't be that far away.
Okay, so you moved back to the East Coast.
So I left Visa without a job and moved back to New York. And the idea was I was going to figure out what I was going to do.
What did your wife say about that? Just leaving without a job?
Well, I wasn't exactly poor. We were going to do okay. And, you know, I don't know. I hear all these stories from people about spouses. And I've got a very good friend. I remember years ago, he said to me something like, oh, you know, being married, it's tough. It's like, I don't find it tough. Like we do, like my wife and I love each other. We love being around each other. And so I hear all these stories about people say, you know, what's the thing, you know, you can be home, but as long as you're not home for lunch or something. Like spouses don't really want you home. Like my wife was thrilled to have me home.
Where'd you meet your wife?
College.
And how long have you been married?
We have been married 34 years.
Okay. Well, that's pretty good for the banking financial service industry.
Yes.
All right.
We're as happy as can be. She's upstairs.
Really?
Yeah. We were...
She didn't want to come down and watch this?
She's actually meeting a friend from Hopkins who lives here.
Okay.
And we were together over the weekend, and we were flying by, and she's like, "We'll just come to me." Like she likes being together. I mean, we like being. I mean, I'm incredibly lucky. We love being around each other. We're each other's best friends. We trust each other. We've got great kids. We're an extremely close family, not just with our 2 daughters, but with the extended family.
You shouldn't write a financial service book. You should write a marriage book.
Exactly. Incredibly lucky.
All right.
And by the way, it's more because she's such a good person as opposed to me, I think. She's the one. She's the good one.
And your father's alive?
Yes, both my father and mother. 92.
Do they give you advice now?
Yes.
Do you ever listen?
Yes, it's kind of, they're probably watching this, so I gotta be careful. But I did TV a couple of weeks ago, and my mother said to me, "This one was better than your last."
Really? Wow. Now, can't help but notice that you have my favorite hair color. So when did your hair turn gray?
I started turning gray very young. I remember starting to see gray hairs in high school, and then it became kind of salt and pepperish through college. And then I remember it really hit me when I had kids, when I was filling out some application and my daughter was there, and it asked for hair color, and I put down brown, and my daughter was like, "Dad, it's not brown, it's gray. Like, it's done." So,
well, it's not the
I'd rather have it gray than not have it.
You ever a situation when you go to pick up your daughter at a hospital or something, and they say, "Hey, the grandfather's here." You never had that? Okay. So what do you do on the outside now? Are you an athlete anymore?
I try. I just had my shoulder replaced 3 months ago, so I love playing tennis. But I've been sidelined leading up to that, and then for this. But I'm told starting in the summer I'll be able to start playing again. I exercise. I do the Peloton. Now that I'm 60, I got to start doing weights. So I'm active, but not crazy active.
What is the biggest problem the United States is facing now in the financial service world? The biggest problem that banks have or financial service industry
Well, it's
has?
separated into kind of, two different periods, right? Number one is we have uncertainty with what's going on with the Iran conflict. The markets, it's been a bull market for a long time. There's a huge amount of liquidity in the system. There's this underlying current that things are going to be fine for a long period of time. I hate to sound like an old person, but there are a lot of people in the financial services space, in banks and outside of banks, that have never been through cycles, like a real cycle in terms of what that means. And there's a point at which that's going to turn, and that's going to have a whole bunch of impacts that I'm not sure we all really understand. Lloyd Blankfein always says, you can think all you want, and you have to think about these things. It's usually something that you didn't expect. So something's going to happen, but then more long-term, it's just the question of the deficit.
Are you worried about the value of the dollar? The dollar has gone down since President Trump has been in office. He doesn't seem to be saying, as many administrations say, we want a strong dollar. Or do you think the dollar will?
I think it's something you got to be conscious about. I think it's something we've got to be conscious about. The position the U.S. dollar has in the world. We can't assume that we just have this God-given right to be the reserve currency. But it's going to take a long time for people to get comfortable with something else other than the dollar, and it's in our control.
What about the U.S. debt? We have, $39 trillion of debt.
And that's one of the issues that's got to get solved. And that's just the hard one, because you've got people who were in office for 4 or 8 years. They've got their own agenda on what they want to accomplish. They're not going to be there to solve that problem. And they don't have the same kinds of immediate pressures that companies have when they become over-leveraged.
Now, you're in town, I guess, to meet regulators and to meet members of Congress. How do you find that? An uplifting experience when you're meeting with members of Congress? Or exciting?
I find, first of all, I think it's incredibly important. And I really dislike when people talk about lobbying like it's some awful, horrible thing, right? There's this, there's the idea of writing checks, which I do find to be an awful, horrible thing. Unfortunately, it's a reality of the system we have. So that's life. But my experience has been doing this now for a period of time, showing up and trying to convince a senator or a congressperson at the last minute that what I think is right, when it's clear that it's just going to benefit me, goes nowhere. What really matters is, over a period of time, building a relationship with members and their staffs where you're honest about what works, what doesn't work, what the risks are, and so that when they need to actually have a position on something, they're more educated. And sometimes we agree on those things. There are plenty of members who I've got a huge amount of respect for. We don't agree on something, but it doesn't mean I'm not going to talk to them, and it doesn't mean that we might not agree on the next thing.
I used to work for a man named Jimmy Carter, and from the age of 2 or 3, his name was Jimmy, although his real name was James. You're Charlie. At some point, didn't you ever think about going to Charles, or how come you became Charlie? Your entire life is still Charlie.
The only time, like most people, I think, the only time I get called Charles is when my mother's mad at me. Some of my high school friends called me Chuck, which was the other direction, which I never quite took to. Okay. They still do, by the way, but so otherwise I'm Charlie.
All right, well, look, I want to thank you for coming, Chuck, Charles, Charlie. Thank you for doing a good job for Wells Fargo and I guess the Financial Service Committee. And thank you for giving us your time today.
Glad to. Thank you for doing this, David. I appreciate it.
Okay. Little gift for you. This is a small version.
All right, Charlie, it is. Charlie Scharf, the CEO, Chairman, Wells Fargo, in an extended conversation with our own David Rubenstein, host here on Bloomberg, and of course, co-founder, co-chairman Carlyle at the Economic Club of Washington. A wide-ranging conversation, you might say, that went from personal to politics to business and back around again. The economy remains strong, but war makes clients nervous. The headline from Charlie Scharf Kaylee, that speaks for a lot of people in the marketplace, in a market today that is largely flattened out, simply waiting for signals from the White House, from Tehran, presumably, about what comes next with the war in Iran.
Yeah, knowing that we ended last trading week thinking that the Strait of Hormuz was open and markets celebrating that fact. Less than 24 hours later, of course, Iran redeclares the strait closed because the blockade is still in place. The blockade, of course, leading to the actual boarding of an Iranian-flagged vessel by the U.S. military. Vessels were fired on over the weekend, too, that had Indian flags. Of course, all of this beating the drum to potentially more talks between the U.S. and Iran taking place in Islamabad tomorrow, ahead of what President Trump says is a Wednesday evening Washington time deadline for this ceasefire. He told our colleague Jeff Mason that on the phone. It's a day later than most of us thought.
He's added a day again. This happened last time we had a deadline, an ultimatum like this, and in fact went so far as to tell Bloomberg's Jeff Mason, get the word out on this. We want people to know. It's not going to be tomorrow night. It's Wednesday night. J.D. Vance will presumably be in Pakistan. It is apparent that there will be an Iranian delegation there as well. Just not sure exactly who will be on the other side of the table.
Yeah, we have a lot of remaining questions, including can a deal actually be reached if they all do join together at the table? As President Trump also told Jeff, he is not intending on extending the ceasefire if a deal is not in place, knowing it was just yesterday he renewed his threats once again to bomb Iran's critical infrastructure if no agreement is made.
We're going to get an update from Kate Sullivan, who's standing by at the White House. You want to get a quick check on Wall Street? Is that the plan here? Charlie Pellet is standing by at World Headquarters in New York with his take on the markets. Charlie, how are we doing?
Right now, little change. Been that way really for the past hour or so, Joe Matthew. 7,100 where we stand right now on that index. The S&P down 25, drop there of 0.4%. We do have the Dow lower by 72, down 0.1%. NASDAQ Composite Index down 131 right now, drop of 0.5%. On a down day for much of the market, though, we are seeing the Russell 2000 index of small cap shares gaining now by 0.3%. The VIX right around 19 with a 10-year 4.25%. Spot gold down 0.5%, 48.06 the ounce. West Texas Intermediate Crude, major story, major move to the upside today, 89.63 where we stand on WTI, up now by about 6.9%. And Brent, the global benchmark, 95.85 a barrel, up now by 6%. So bottom line here, this rally in oil driving stocks. There's a turbulent weekend in the Middle East, cast doubt on prospects for peace talks between the U.S. and Iran. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. A turbulent weekend in the Middle East indeed, and we could be set for a very turbulent week as well, as we are dealing, as we've told you, with a Wednesday evening Washington time deadline for the ceasefire existing between the U.S. and Iran, at least according to President Trump, as he told our colleague Jeff Mason. He also said it's highly unlikely that he would extend that beyond its expiration if no deal is reached, which raises the stakes for the talks that we anticipate will happen in Islamabad, Pakistan tomorrow between the U.S. delegation and Iran, as we still had a question as to whether or not Iran was going to show up to those conversations. The New York Times is reporting that indeed a delegation will be headed there. But let's get the latest now as we turn to Bloomberg's Kate Sullivan, who covers the White House for us and is live there from the North Lawn. Thanks, Kate, as always, for joining us on Bloomberg TV and radio. We just got another True Social post from President Trump saying the deal that we are making with Iran will be far better than the JCPOA, which of course was the 2015 nuclear agreement. And this is a lengthy post, Kate, so bear with me, goes on essentially to renew some of his criticism of the JCPOA. And he says if a deal happens under Trump, it will guarantee peace, security, and safety, not only for Israel and the Middle East, but for Europe, America, and everywhere else. The operative word, of course, here, though, Kate, is if a deal is reached. Do we have any sense as to whether either of these two sides are backing away from some of their more maximalist demands of the other at this point?
We don't have any indication that anyone is backing down here, and I think it's a really delicate moment. There's a lot of confusion about what is actually happening, the public messaging. There's a lot of contradictory statements from, the president will say something in an interview or will post something, and then the Iranians will immediately refute it. There was a big question about whether these talks were even going to take place. Even as the president and the White House were signaling and saying that they were going to take place. There was my colleague Jeff Mason had a great interview with the president this morning. We learned more about, because we're in a moment where the ceasefire is set to expire in just a couple of days. And the thinking was that it was going to expire on Tuesday. The president is now making it clear that he thinks that it expires on Wednesday evening. He told my colleague Jeff that he thinks it's highly unlikely that he will be extending the ceasefire, which is very notable, of course. And it's coming at a time where the ceasefire is already very fragile. You know, the naval blockade that the president had put in place and that was there before the ceasefire, it continued through the ceasefire. He's made it clear that U.S. naval blockade will not be lifted unless there is an actual deal that is signed. So the president told Jeff that Vance is expected to leave later today for these talks. We don't know who's going to be represented on the Iranian side. Steve Witkoff and Jared Kushner will also be accompanying the vice president. They've been key parts of these negotiations. The president has been sounding very optimistic for quite a while now that he thinks that a deal can be reached, and we've heard for weeks now that we're close. On Friday, he was saying we'll get a deal in a day or two, but right now just things feel very up in the air and very uncertain, and it's unclear whether there will be a deal reached before this ceasefire is set to expire on Wednesday evening.
Really remarkable, Kate. Thank you for being here for us. It was, to your point, your conversation with the president by phone on Friday, Jeff's conversation by phone today, that gives us the real news that we've been looking for here. And J.D. Vance, the president mentioned quickly, will leave later today with that delegation, presumably to come together in Pakistan for the next round of talks. There seemed to be confusion on Sunday morning about whether J.D. Vance would even attend this session. Is he still in charge of this negotiation?
It's a great question. So I actually asked the president that when I spoke to him on the phone on Friday. I said, are these talks still going to take place? And he said they probably were. And then I said, do you want the vice president to lead these discussions? Because Vance, of course, had led the first round of negotiations in Islamabad. Those negotiations did not produce a deal. So I asked the president whether Vance would be leading them, and he said, I have not made that determination yet. He said, we'll send a team. I've not decided yet whether Vance will go. On Sunday, there was confusion. I believe he said that Vance would not be going, and then the White House said that he would be going. And so, again, I think it just speaks to the layer of sort of uncertainty and confusion here, especially as the president is getting his message out in various different ways, through conversations with reporters directly on the phone, and then, of course, through social posts, and then White House messaging as well on top of that.
Kate, thank you so much. Live from the White House, Bloomberg's Kate Sullivan, as we play this to the panel ahead of our conversation with Congresswoman Nicole Malliotakis, who's going to join us in studio in just a moment. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Our first chance to compare notes since the weekend. Rick is our Republican strategist partner at Stone Court Capital. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is joining us live from Casablanca, the other White House, and we appreciate that. Rick, I'm going to start with you this evening because it feels like we are ad-libbing here and the market is very desperate for a plan forward, although pretty optimistic considering the fact that we are not selling off on what appeared to be an open Strait of Hormuz on Friday. How important will it be for the president to telegraph clear directions to the American public and the marketplace in the next 24 hours?
Yeah, certainly people in Morocco are very concerned about where we go from here and not really confident as to what that path looks like. And look, I mean, to say we're even in a ceasefire is a little bit of a misnomer because we've been firing on Iranian ships. Iranian ships been firing on Americans. I mean, like all weekend, it didn't look like a truce to me. But at the end of the day, I actually think this device by President Trump may be useful. I mean, his optimism seems misplaced, seems unfounded, seems premature. But I think it's good to be optimistic, I guess. So I think as long as he continues on this track, saying he's confident he's going to get a deal and it's going to be a deal that Europe's going to love and the rest of the world will love, I guess that helps float the markets and keep people focused on a positive basis. But you certainly don't hear those same things coming from Tehran.
Well, we are hearing once again from President Trump on Truth Social, his latest post criticizing Democrats, who he says are doing everything possible to hurt the very strong position we are in with respect to Iran. But Jeannie, the mid portion of this post is what I find interesting. He says, I read the fake news saying that I am under pressure to make a deal. in all caps, "This is not true. I am under no pressure whatsoever, although it will all happen relatively quickly." The president says, "Time is not my adversary." Time may not be his adversary, Jeannie, as of course he can't run for re-election, but is time not the adversary of the other members of his party who are going to see their name on the ballot in November? Can they really afford for this to last much longer?
No, they can't. And quite frankly, Kaylee, neither can the president, and he knows that. And as usual, the president is saying out loud and trying to refute what is true. Time is on the side of Tehran. It is not on the side of Donald Trump. And, you know, I think when we think about these negotiations that may or may not happen in Islamabad in the next 24, 48 hours, I think we're going to look back at that first round of negotiations and say that the president's team missed. And I say that because that should have been a time to establish trust between the two sides that we could then build on to get to a deal. And even if they built a little trust during that first meeting, Donald Trump has done everything since to dismantle that trust. Beginning on Friday, when Tehran said, "We'll open the strait to commercial shipping," and the president said, "I'm going to continue the blockade." And it has been downhill from there. So the one thing that has to happen at this next meeting, if it does happen, is that they have to establish trust between these two sides. And there is very good reason for Iran not to trust the U.S. We had an agreement in 2015, the president backed out. We had a negotiation last June, he bombed them. We had a negotiation last February, he bombed them. And now we had a negotiation in Islamabad, and he wouldn't remove that blockade. So they have to work hard this time to establish trust. And I certainly think that's what we're hearing from Tehran. If we don't get that trust, they simply will not go to the negotiating table in good faith.
With so many questions about timeline, Rick, the president, in this very long post that he just put on Truth Social, lists the durations of the First and Second World Wars, the Vietnam War, Korea, and Iraq, not Afghanistan, America's longest war. But for a purpose here, he says, they like to say, "I promised 6 weeks to defeat Iran." And actually, from the military standpoint, it was far faster than that. The president had said at one point 2 to 3 days, then 4 to 6 weeks. He said that we have already won. Will he regret statements like these?
You know, I don't think he really regrets them, because at the time, I'm sure they served a useful purpose in his mind as to trying to influence what was happening in Iran. I would say, I don't disagree at all with Jeannie, but I would say probably the most disingenuous and non-trustworthy group of people who have ever negotiated a settlement to anything are the Iranians. So maybe it's just like they're all in the same hot water. But I do think that the president's tactic, is to basically increase pressure, make outlandish statements, claim that, he's going to unleash death and destruction, and then sort of back off of them. It seems to be mellowing out a little bit, and to the point where mostly what he's letting them do is the military take action and talk about how optimistic he is to get a settlement. At some point, you got to talk about Iran. They are vastly divided. They sent 80 people to the last negotiation, which tells you one thing, and the most important thing: they don't trust each other. And so if you have a counterparty who's looking over their shoulder as to who's going to survive to the next negotiating strategy, I think it's incredibly hard to think you're going to make fast progress.
Well, so clearly we're dealing with some trust issues on all sides, even perhaps inter-side trust issues. And there are some conflicting narratives emerging. Jeannie, on the subject of conflicting narratives, just quickly, we heard from the Energy Secretary, Chris Wright, on a Sunday morning interview yesterday that it's possible that gas won't be with a three-handle $3 gasoline once again until next year, as in beyond the midterms. President Trump told The Hill today that he thinks the Energy Secretary is wrong about that. And I wonder what you make of that insistence from the president when a man who used to be an energy executive, mind you, before the administration, is saying that's what he sees.
Yeah, and it was interesting because just last week, Donald Trump told Maria Bartiromo on Fox Business that it could be until November. I have some empathy for Chris Wright. He is probably correct when he says it's going to be slow coming down once this thing is over. But of course, that's not something the president or Republicans writ large want to hear. They need this to come down. They need it to come down quickly and certainly before the midterm. So the president is sort of on both sides of this. And I think Chris Wright is right, Kaylee. I'll end it like that.
All right, Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors, the both of them, thank you so much for joining us. And I'm pleased to say joining us next, right here in our Washington, D.C. studio, is Republican Congresswoman Nicole Malliotakis of New York, who is back with us here on Bloomberg TV and radio. Congresswoman, great to see you in person. Thanks, as always, for joining us. I would love to get your reaction, and I understand if you haven't read this whole thing, as it's lengthy and it just dropped from President Trump. But he says, in regard to making a deal with Iran, he is under no pressure whatsoever to make a deal, and that time is not his adversary. And I wonder if you also believe that there should be no time limit on how long this takes, given the especially economic ramifications we're seeing here at home.
Well, I think in terms of the negotiation, the United States does have the upper hand here. He does have the leverage. But yeah, there's the political pressure. I mean, I think that's two different things here. I think in terms of making a deal, when they go in there tomorrow, hopefully this meeting will happen. I think it is very high stakes. I think that there is a lot at stake for the global economy. You're seeing the numbers today that have come out. I mean, it's very volatile right now. And I think that the sooner we can get a deal and reopen the strait and allow for oil to be flowing, it's going to be, I think, very critical, and it'll really dictate where gas prices are going to be going. But the political reality at home, I think, is a different story, right? I think a lot of people, look, we all understand why he's doing this in terms of wanting to take a number one terrorist sponsor off the table. And I think that's critically important for the future, to make not just the Middle East, but the entire world, our military that's overseas, our embassies, here at home, making sure that we stop future terrorist attacks. And I understand that that's critically important, but I think when you look at the ground, right, like when we're here in the, we're in the district and you see gas prices increasing, that's at the end of the day, I think what a lot of constituents are paying attention to. How much is this costing me? And so, yes, it is an investment long term. It is important to get Iran's nuclear capability off the table. It is critically important that we help cripple them economically so they can't finance Hezbollah, Hamas, the Houthis, and these terrorist bad actors. But at the end of the day, what are constituents looking at? They're looking at gas prices, and that's what they see directly affecting them. And so, you always say, like, if you prevent a terrorist attack from happening, it didn't happen. So maybe you don't get so much credit for preventing it. It's only if it does occur, then you're to blame. And I think what the president's trying to do here is important, but we also have to be realistic about what people are feeling on the ground.
To that end, and it's good to see you, Congresswoman, we've got $4.04 a gallon for the national average. In your state of New York, it's $4.10, a little bit north of there. And of course, we're in the fives and in some cases sixes when you go out to California, states on the West Coast. Is this the cost of doing business then? The president has said he thought it would be even higher to think of going to war with Iran. But of course, you've got this kind of steady drip for people. If it's months like this, what will it mean for people in New York?
Look, I think you notice that in those blue states, the price is higher because of some of those state policies, those state taxes that are added. What I'll say is that, look, under Joe Biden, when Russia and Ukraine broke out, and we weren't even directly involved, you saw 5 months of high gas prices, and that it hit $5. And that was the national average. Right now, it's about $1 less than that. It's only been a few weeks into this. That's why I think the negotiations tomorrow are so critically important, and we'll see what happens if there could be an extension to that ceasefire, which is obviously very fragile. Then you have the parallel issue between Lebanon and Israel, which seems to also be holding for the moment. But there's a lot at play here, and I think that the bottom line here is the sooner you can get these gas prices down, the better it is. But in comparison to where we were with Joe Biden, it's still much lower and for a shorter period of time. But with that said, President Trump in his first term, as well as when he first came in here, gas prices plummeted. And we got to remember that he has the ability to lower these prices if we can resolve this conflict, because he's ramped up domestic energy production. We just broke ground on a pipeline that's going to go down from the East Coast, up the East Coast, I should say, to New York, right in Hakeem Jeffries' district in Brooklyn. Chris Wright was there breaking ground the other day. So there's a lot happening in terms of energy infrastructure, energy independence, ramping up that domestic production. That's all good. But again, this does have an impact. We need to get it under control, and I'm very hopeful in the next 48 hours we'll get a clear understanding of where we're going.
Well, speaking of understanding where we're going, I'd also like to ask you about FISA, because you were just speaking to the notion that it's incredibly important to stop terrorist threats abroad and here at home. And the administration would argue that Section 702 of the Foreign Intelligence Surveillance Act is critical in that aim. Clearly, there is some difficulty in the House around this issue, whether or not an amendment as it pertains to having warrants for this surveillance can pass. What is your expectation as to how this gets resolved, knowing the Speaker only bought himself 10 more days to figure this out?
Yeah, I mean, I've been stressing to my colleagues that this is not the area you want to mess around with. I mean, in a post 9/11 world, as a member from New York City, this is critically important. I mean, FISA has been responsible for stopping dozens of terrorist attacks and is a very critical tool. I understand some of the members that want to make sure that it's not being used inappropriately to target American citizens. There already were a number of reforms that were put in place last Congress that we addressed a lot of those changes. And that's why we got people like Jim Jordan on board and many members of the Judiciary Committee and many members of the Freedom Caucus as well. Now there's another round of reforms that the right wing want. They did add some amendments, actually. There were a lot of negotiations last week between members of the Freedom Caucus, the Speaker, and the White House, in which they added criminal penalties for the inappropriate use of FISA to spy or to leak information about American citizen. Requiring warrants are used, so if there's communication between someone, a foreign national, and out of the United States, but they're contacting, communicating with somebody in the United States that could be an American citizen, you have to go get a warrant to then conduct any type of surveillance or data collection. So those are, I think, good reforms, but I don't know what more they can give them. I mean, what more they want? And the thing is you really can't hinder this tool because it is so critical to our national security, and it makes me very concerned between FISA and the fight that we're having right now with the Democrats on funding the Department of Homeland Security. They don't want ICE funded. They don't want Border Protection funded. They just feel like we should have a free-for-all and allow people to come in the country not knowing who they are, where they are, or what their intentions are. I mean, who knows about the millions of people that did come in already under the Biden administration, and they had zero interaction with our law enforcement at the border. They snuck in, and they're here. What are they doing? We don't know. So FISA is just a critical tool, and we need to get this done as quickly as possible and not allow it to expire.
Making the case for FISA 702, Nicole Malliotakis. It's great to see you, and thanks for coming back on Balance of Power. Of course, the Republican Congresswoman from New York, the voice of Staten Island, with us here on the fastest show in politics. Brooklyn, too, we've got you covered, and we'll meet you back here on the late edition of Balance of Power, 5 p.m. Eastern, only on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Yes, indeed, everybody. We are across Bloomberg platforms. Welcome to Bloomberg Business Week Daily Radio, YouTube, TV, Bloomberg Originals.
We are everywhere. You cannot get away from us if you try.
I wanted to say Dailyo. I don't know why.
Hey, it's Monday, April 20th, 2026. I'm Tim Stenivek. That is Carol Masser. Kind of a little bit of a reversal from what we saw last week, Carol, with stocks down and oil higher.
Listen, we warned you on Friday, to be fair, that yes, indeed, it looked like there was progress between the United States and Iran. We thought talks maybe over the weekend, maybe talks Monday. Like there was a lot of stuff floating around, but that's not exactly how it played out. And so we're going to dig into that. And I've definitely seen a bit of a market reset. We're definitely off our best levels of this session, just slightly lower on both the S&P Dow and the NASDAQ 100. But it's a different tone, and I think it's a cautious one as we are waiting to see what happens next. The Strait of Hormuz, though, effectively cut off. The president saying, well, in a conversation with our own Jeff Mason, that it's highly unlikely he would extend the 2-week truce if an agreement is not reached before it ends. Iran saying some things too. So again, I think investors kind of in a wait and see mode here.
Yeah, Iran holding back on whether or not it will participate in any of those peace talks. You mentioned Jeff Mason and his conversation with President Trump. We're going to be speaking to Jeff Mason, our White House and Washington correspondent, in just a minute. Before that, though, a bounce back and records as of late. Questions remain, Carol. Rich Weiss from American Century Investments is going to be joining us on the bounce and also on the Fed and Kevin Warsh.
Yeah, so much coming at investors this week and what it might mean going forward. So he looks at all asset classes, so it'll be interesting to see what he has to say. Hey, a story that caught our attention, we talked about it a lot on our morning call, Google's challenge to NVIDIA as the big tech hyperscaler bets on new chips to boost AI results. So it's kind of like, hey, Google, hey, NVIDIA. Maybe we're coming for you.
Maybe.
I'm not quite sure what it means.
Maybe Jensen will talk about it at 5 o'clock today.
He is. He's at an event. So we got a lot coming your way, folks, over the next couple of hours.
First up, though, a check of the day's trade and top business stories. Charlie Pellet's got a close eye on everything happening. He joins us from the Bloomberg studio. Hey, Charlie.
Thank you very much. And here's what's going on. We have got the Dow, the S&P. They are all trading lower. Oil higher right now. Let us begin with what's going on with West Texas Intermediate Crude. 89.26, where we stand for a barrel of WTI, up now by 6.5%. We've got a barrel of Brent, the global benchmark, at 95.26, up 5.5%. So oil higher, stocks lower. The S&P 500 index just below 7,100 right now, down 26 points, a drop there of 0.4%. Dow Industrials down 115, decline there of 0.2%, while NASDAQ is lower by 116 points, down 0.5%, and the NASDAQ 100 index also lower by 0.5%. For the S&P, for NASDAQ, and the NASDAQ 100 index, all retreating from Friday's records. The Russell 2000 index of small cap shares on a down day for much of the market. It is up now by about 0.3%. The VIX just above 19 with the 10-year at 4.25%, the 2-year 3.71%. Gold is down $20 the ounce to $48.10, down 0.4%. And West Texas Intermediate Crude again up $5.50 a barrel, 89.36 on WTI. That is a gain now of just about 6.6%. The oil majors all advancing right now. ExxonMobil up 1.7%. Chevron little changed, up 0.1%. ConocoPhillips up by 1.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Tim and Carol, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So some of the headlines when it comes to the U.S. war with Iran, and we have U.S. seizing Iranian-flagged vessels by force in the Gulf of Oman. The vice president is said to lead a delegation for another round of Iran talks to happen tomorrow, although there's been some back and forth about what Iran says.
Iranian state TV said no plans for Tehran's negotiations to attend talks. As you mentioned earlier, Carol, the Strait of Hormuz effectively cut off for maritime traffic. So I think it's fair to say different signals than we got from the president last week about the strait being open.
Yeah, totally. All right. We also know President Trump has said it is highly unlikely he would extend the 2-week truce if an agreement is not reached before it ends. We want to get into it because the president said that to our own Bloomberg News, Washington and White House correspondent Jeff Mason. He caught up with the president earlier today. Jeff joining us right now from our bureau in Washington, D.C. Hey, Jeff. Good to have you here. Great to hear your reporting on all of this. Tell us about this conversation, how it went down.
So I gave him a call, and he picked up, and that's how it starts. And then we talked about the war. And the president said, I mean, I think the flashes, the news flashes or highlights from that conversation were, number one, he said he's not in a rush and won't be put into a rush to achieve a deal with Iran. And that's a little bit of a shift from the language that we were hearing from him last week, which was much more along the lines of, we're already there, the deal is pretty much done. But today he told me that he does not want to be pushed into a deal that ends up being a bad deal. He also said go ahead.
No, one thing I just want to say, this is the president, the art of the deal, right? He knows how to make deals. Does it feel like negotiating back and forth? Or does it feel like, I don't know. How do you describe it?
I think that's certainly part of it, that there's a negotiation tactic here. I think there's also just a deliberate choice to send mixed signals, and that's what he's done really since the beginning of the war. And he did that really in our phone conversation as well, because in addition to saying he was unlikely to extend the ceasefire, he also said he thought that the talks could work out well for all parties. And he said to me he hoped that I would report that. So both of those angles are in the story because it's our job to get in the reporting out there of what he said. But the larger, I think, part of the message that he was giving when we spoke is that he's not ready to just agree to any deal, and he's not willing right now to give additional breathing room other than saying that the ceasefire expires on Wednesday night, Washington time, which is actually a day later than most people assumed. Most people assumed that it was expiring on Tuesday night.
At the same time, Jeff, the president also renewing his threats on civilian infrastructure in the region. What can you tell us about the messaging there and how it worked last time to get Iran to the table, and whether or not the United States could actually end up attacking that type of infrastructure?
Well, I think he's certainly wanting to leave that option on the table. And I asked him about that again today, too. And he said he didn't need to repeat that threat, but Iran would be hit very hard if there's not a deal. So, and we also know, of course, Tim, that there are lots of U.S. assets still in the region. He did not remove those assets during the ceasefire period. So he's got the ability and the military assets to do additional strikes and to start up the fighting right away if he wants to. And I did ask him about that in terms of if the ceasefire does not get extended. I said, would you expect the fighting to start then right away afterwards? And he said, if there's not a deal, I would expect that.
How it went down, how much time did you have? Did you feel like it was open-ended, that you could talk longer if you wanted? And I am curious if there's stuff, and maybe you don't want to go into it, but questions he didn't want to answer.
You never know how much time you're going to get. Our call was about 7 minutes long, which is pretty lengthy, actually. Yeah. And what I will tell you in terms of some color from the conversation is I got under his skin without meaning to by asking him whether he thought Iran had any leverage, or whether Iran had leverage really because of the Strait of Hormuz. Totally legitimate question. Also, I think the answer is pretty clear to that, that they do, because they've been using that leverage. But that upset him, and he went off on a little bit of a tirade against me and said that Iran doesn't have leverage, that he has all the leverage. He referenced the last 24 hours and said that there are another 5 boats or 5 ships that he could take over if he needed to. So there were ups and downs in the call in terms of tone, but the newsy bits are the ones that we already discussed.
Yeah, and I will say, in terms of leverage, everybody who comes in and sits around this table, I mean, the Strait of Hormuz is huge leverage, right?
Yeah,
like we all know it, right? I think it's fair to say.
Yeah, Jeff.
And he may just not want to acknowledge that because he doesn't like to give any suggestion that anyone aside from he himself has leverage, but it's true. Iran obviously does, and in fact, they've been using that leverage in a way that they hadn't before prior to this war.
We are set to hear potentially from J.D. Vance post-negotiation, potentially. He's leaving later on Monday to resume negotiations, either Tuesday night or Wednesday morning, the president told you. He's expected to be joined by Trump's son-in-law, Jared Kushner, Special Envoy Steve Witkoff, as you reported. Do we have any inclination of what a deal could look like in terms of uranium enrichment, a pause there, 5 years, 20 years? What's the latest reporting around that?
Well, the president has said before that he doesn't want any time frame on that, even though at the last round of talks, I believe it was Vice President Vance who proposed or talked about a 20-year essential moratorium. That's not something that the president was happy about, and he reiterated today to me, as he has in multiple other public statements, that Iran cannot have a nuclear weapon in any way, shape, or form. So that's going to be the main goal, is to find a way to address that. I did ask if there would be surveillance, which was a part of the JCPOA, the agreement, the Iran nuclear agreement that was put together under President Obama's administration, and he said we're going to have everything we need. So it wasn't entirely a yes to surveillance, but he suggested that they would have everything that they needed. That will be a big question, is whether or not international monitors will have the opportunity or the ability to go in and check, which is something that they did have under that last agreement, which President Trump pulled the United States out of and has been very critical of.
All right, great stuff. And I know we're going to be coming back to you over the next couple of hours. Look forward to it. Jeff Mason, thank you so much. Jeff, of course, Washington and White House correspondent at Bloomberg News, joining us from our bureau in the nation's capital. All right, everybody, from the U.S. war in Iran, what the president is saying, and the latest on Washington, to possible battles up on Capitol Hill this week. Maybe.
Perhaps.
We'll see. Yeah.
As President Trump's pick to be the next chair of the Federal Reserve, Kevin Warsh, we got a preview of what Kevin Warsh plans to say. Here to explain what to watch out for as he heads to the Hill. Bloomberg Economics U.S. and Canada economist StartupPal joins us here in the Bloomberg Business Week studio. You got our attention earlier today when you sent us this appeared to be early draft or potentially what the Fed chair nominee will say to Congress tomorrow. First of all, it's surprising to get that out there ahead of time. What was in it, and why do you think this saw the light of day?
It's interesting. I'm not entirely sure why his prepared remarks were released before the actual testimony takes place tomorrow. What is interesting is that I'm already getting ahead of myself, Chairman designate or nominee to be the next chairman of the Fed, Kevin Warsh, focused entirely on the Fed's monetary independence. That's to say that the Fed is responsible for any inflation that occurs in the economy and so needs to set interest rate policy accordingly. But he specified that the Fed is responsible to both the executive branch and the Congress in any additional responsibilities that it takes on, including bank regulation and any other attention that it gives to issues basically beyond setting monetary policy.
So the Fed is responsible for any inflation? So even a supply shock, such as what we're seeing right now with the Strait of Hormuz being effectively closed and an increase in energy prices, that could be, in his view, attributed to the Fed?
That's the line in his prepared remarks, and it struck me as shockingly hawkish, especially for somebody who's being appointed to the role with the expectation from the president that he's going to deliver interest rate cuts. Now, the political mind that I have, or my political brain, kicks in and says that he needs to assert some degree of independence. He needs to sound somewhat hawkish if he is going to appear politically independent. So this could all just be political rhetoric. It could be a little bit of theater. But this is also very reminiscent of the Kevin Warsh that we knew when he was a governor 20 years ago.
I want to dig into that, but it also gets to so many members of this administration. I don't think I'm speaking out of turn, but if you go and watch some of those confirmation hearings, they seem to toe the line and kind of say what they should or what they expect members of Congress to hear, that, you know, we're going to do the right thing, I'm going to take my job seriously. And then once they get into the job, they kind of do the president's bidding. I don't think I'm speaking out of turn. Do you feel like Kevin Warsh could possibly be doing that? He knows to get the job, he probably has to say certain things, no?
I think there are three certain truths that we need to keep in mind. as we head into tomorrow and tomorrow's hearing. The first is that this is all political theater. So you're exactly right there. He's going to say what you expect him to say. He's going to sound reasonably hawkish. We know the Democrats on the committee are going to really ask him his opinion about the DOJ's investigation of the Fed and the Fed's independence. They're going to say that he's perhaps unaware of what's going on the lower end of the income distribution. The Fed needs to deliver economic outcomes for a broad swath of Americans. We know in advance that that's what's going to take place. The other two truths that are equally important and perhaps most important for markets are he doesn't have the votes to get through committee. Tom Tillis, Republican senator from North Carolina, is not going to allow him to move through committee. And then even if he does move through committee, he's not going to have the votes on the FOMC to deliver big interest rate cuts. So we need to keep all three of those facts in mind as we head into tomorrow.
There's a checks and balance on that Fed board, right?
That's right. There is a certain degree of checks and balances when it comes to who gets to set monetary policy and who gets to decide on the path of interest rates. And the Fed chairman alone, the chairman of the board of the Federal Reserve System, does not have the single vote that decides. Instead, he needs to really build a coalition. And right now, it's a hawkish committee.
Yeah.
So let me present you with a hypothetical then, Stuart, if we're going to play this out. And if Kevin Warsh gets approval, and if, let's say, Senator Tillis drops, his opposition, Fed Chair Jay Powell actually ends up stepping down, and there is some sort of transition here. Does the path for Federal Reserve rates this year change when that happens?
Probably not very much. Okay. Probably not very much. The first thing that we need to keep in mind as we count votes is that if we were to end up seeing Kevin Warsh ascending to the Fed, which is a big if, he would take Myron's seat. So the most dovish person on the committee ends up leaving. You then end up having someone who's basically a moderate in Chairman Powell stepping down for the sake of tradition, effectively. And the real swing votes, the people who are probably most important right now in setting the thematic trajectory of interest rates, of policy rates, are regional Fed branch presidents who are hawkish. And so he's just not going, even if he were to ascend to the chairmanship, even if everything evolves as it typically does, he's probably not going to have the votes on the committee to deliver the sort of interest rate cuts the president wants or that Stephen Myron says that he wants right now. And he's not going to be able to make it through committee as long as the DOJ investigation is going on and Republican Senator Tom Tillis from North Carolina has his foot firmly down. He is not going to allow any Fed nominee to move through while the DOJ investigation is ongoing. So my motto has really been for the president, he gets to decide, investigate or interest rate. And even if he chooses to have his Fed nominee move through by dropping the investigation, he still might not get that interest rate cut that he's hoping for.
Right. So can one assume that if Kevin Warsh is his own man and he gets this position, that we then will continue to see for the next couple of years or 2.5 years a president that puts pressure on the U.S. Central Bank? And that's not a good thing for anybody.
It's not a good thing for anybody. I think that if we were to see Kevin Warsh ascending to the chairmanship of the Fed, I think that he would focus on some of the other initiatives that might matter for the administration. He might focus on shrinking the Fed's footprint, the Fed's balance sheet, shrinking the degree to which the Fed interacts with shrinking the extent to which the Fed is participating in bank regulation, and even instead focusing on deregulation and reining in the Fed's interest in other things, let's say, climate policy and encouragement of reductions in banks lending to fossil fuels and other sort of energy producers. I think that those are ways that he could placate the administration without truly delivering the interest rate cuts that he needs. And I think that he has somebody in Secretary Bessent that understands that swift interest rate cuts wouldn't necessarily be great for long-term financing costs anyway.
Global markets and global investors have a way of reacting when they feel like the policy's wrong. We all know that. Hey, Stuart Paul, thank you so much. Bloomberg Economics, U.S. and Canada economist. When we come back, we continue to talk about what's going on in the markets. We do that with Rich Weiss of American Century.
It's 2:22 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all trading lower. This is oil advances. West Texas Intermediate crude up 6.7% right now. WTI just below $90 a barrel. Brent crude, the global benchmark, 95.18. Barrel of Brent up by 5.3%. A rally in oil is driving stocks lower as that turbulent weekend for the Middle East casts doubt on prospects for peace talks between the U.S. and Iran. S&P right now down 18 at 7107, a drop there of 0.3%. We do have the Dow Industrials down 22, little change, down now by under 0.1%. And NASDAQ down 88 for the NASDAQ Composite Index, a drop there of 0.4%. An update for the Russell 2000 Index. Small cap shares are gaining. The Russell 2000 up by 0.5%. The 10-year 4.24%. The 2-year 3.71%. Spot gold is down $16 the ounce to $48.13, down 0.3. And West Texas Intermediate crude 89.50 a barrel, up by 6.6%. Eli Lilly shares little change now, down under 0.1%. A $7 billion deal in the pharma industry, with Eli Lilly buying privately held Colonia Therapeutics for as much as $7 billion. Lilly gains access to a potential cutting-edge approach to treating blood cancer. Again, Eli Lilly shares down under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And that, Carol and Tim, is a Bloomberg Business Flash.
It is indeed. Thank you so much, Charlie Pellet, really setting us well for our next guest, talking about this rally that we're seeing. But we're off our highs of the session. I mean, the rally we're talking about, last week's rally where we saw several records taken out on those major equity averages. We do have stocks a little bit lower. You've got oil higher. Not the weekend that we thought it was going to be, Tim, when it comes to the U.S. war in Iran. I think we thought there were going to be talks, some progress. It didn't exactly play out that way.
But it kind of reminds us that things can change in a minute.
Absolutely. Exactly. And that's kind of where we are.
In fact, I'm surprised we're not seeing a bigger market reaction.
Yeah. Well, I think, it's an environment we keep talking about that investors look kind of for a reason to buy, certainly on the equity side of things. But let's see what our next guest has to say. In fact, looking through his notes, he points out that repositioning now depends on as much as your personal situation as it does on the macroeconomic and geopolitical environment. Great to have back with us. It's been a while. Rich Weiss, he's Chief Investment Officer of Multi-Asset Strategies at American Century Investments, which has about $330 billion in assets under management. He's back here in our studio. Hello. It is good to have you here.
It's great to be back. Good to see you both.
Tell me about this environment and how you see it and how you keep thinking about the war. Do you feel like we should be looking through it at this point?
I'd say the market's looking through it pretty clearly. And, as far as the war is concerned, if someone's looking to bet on the war, its duration or severity, or bet on oil prices, go to Kalshi or Polymarket and make your bet there. Don't rejigger your longer-term investment strategy on that kind of element. But I think there's one explanation for why the market is hitting new highs despite low consumer confidence, inflation expectations up, inflation up. Most economists are ratcheting their expectations for real GDP this year downward. How could the stock market be hitting new highs? The one explanation is politics. It's the midterm elections. I mean, if there's one thing they're concerned about, they have to get this war resolved in order to keep at least one house, if not two. I'm talking about the Republicans. So I think that's paramount here. That's what the market is looking at. That also explains why Fed funds futures can't seem to decide whether rates are going up or down. They're clearly going to go down.
So let's start with the markets, because in other words, you're saying that investors are betting that Republicans will end the war ASAP, get energy prices down so the inflation expectations come down ahead of those November polls?
Well, it'll take a little while for oil prices to come down, maybe weeks, months, right, just to get production ramped up.
Pretty risky politically.
But to get an end to this or some kind of truce in place, because as it keeps going, it's just a debacle.
One thing on that, though, is that I think that it's challenging because, as Iran has indicated, giving up enrichment doesn't seem like it's going to be one of the concessions that the country would offer. And it seems like the president doesn't want anything short of that. We just spoke with Jeff Mason in Washington, who said the president wasn't a fan of any timeline delaying or stopping enrichment for 5 years, 20 years. He wants to see forever.
And with all due respect, the president says a lot of things which then reverse the next day. So the president said he's under no pressure. I'm not sure that's the case. I think the Republican Party, the White House, the administration is under quite a bit of pressure to get this result by their own party. For real humanitarian reasons, but also for political reasons.
Rich, I think it's interesting because I think there's an expectation. There's a lot of folks, some momentum based on some of these, elections that we've seen in different states and different areas around the country where Democrats have either won or put in a strong showing. And I think there is a line that's being pulled through to November in the midterms thinking that, okay, that the Democrats are going to be back in power. That's not a given in your view. And you think equities, let's go to the equity markets first, that they're rallying on those expectations that Republicans will be back or can maintain power.
Right, at least one of the houses, right, that they won't lose both. And that's the imperative there is that to find some resolution, short-term or otherwise, for this conflict in the Middle East. Yeah.
So let's go to, you said clearly rates are going to go down. Why? Why do you say that?
Well,
because of the growth slowdown, or what?
A combination.
Okay.
But I believe one, again, political pressure. Bringing rates down lowers borrowing costs. It gooses the economic growth. Potentially gets the housing market restarted. So it's good for Americans to get interest rates down for business investment, et cetera. So it'd be a great thing if they could do it. I believe the administration, the president, wants that to happen. I assume Kevin Walsh will be placed.
But that's not what the Fed chair's, responsibility is, right? It's to look at inflation, look at employment. That's the dual mandate, right? And then figure out the right policy. And it's not only always comfortable. Just go back to Paul Volcker and ask him. It's not always comfortable what you have to do as Fed chair. So, what is more important, to have a Fed chair that looks at the data and does the right policy, or succumbs to the White House?
I believe he can do both.
Why?
Because you can come up with a viable economic rationale for lowering rates, which is what his mandate is going to be from this president who handpicked him. He's at a central casting. I think the president said that himself.
Yeah.
And the economic rationale is inflation is an existential threat and it is causing demand destruction. I think that's the phrase to look for or listen for. Demand destruction, you already see it happening. Economists are lowering their GDP forecasts for this year now to somewhere around 2% real GDP and maybe even lower as this conflict continues. So there is a viable economic rationale for lowering rates despite inflation being problematic at the current time.
But then don't you worry that by lowering rates and creating even more liquidity in the market that you drive inflation even higher? And so you get to that point where we have stagflation of lower growth and higher inflation, which is not anything that anybody wants.
Well, the hope there is you'll spur economic growth, right? And so inflation then is a secondary effect which you'll take care of afterwards. That's one hypothesis. I firmly believe rates are coming down with this new Fed.
Well, that's the Fed side of this. What about the Treasury side of this and yield curve controls?
Yeah, I think, there's, I describe, the Fed is the left hand of the president, and then Treasury's the right hand, right? And president's a good fighter, and a 1-2 punch. Secretary Bessent, when he came out a while ago, he referred to the U.S., I think it was, as insolvent, which I'm not sure. That's a pretty strong word. I mean, we're not bankrupt, right? But I think he was referring to the fact that interest expense now is at a level where we can't support it with current annual revenues. So it's a fair definition. But Secretary Bessent may come out and could pair with Kevin Walsh or the Fed and implement what's known as full yield curve control. It's something we've done before where you pull down not only short-term rates, but long-term rates. We did it in World War II. It helps spur the economy. It lowers your debt expense, your interest expense. It's a wartime maneuver. Japan did it. I think Australia did it recently. It's problematic when you do it when you already have inflation because it can be inflationary. Again, back to that problem. But it's very likely or possible, Secretary Bessent will also move to lower rates to help the economy lower the debt burden, and that it's good.
How about not spending much? How about spending less?
Why does this always come up, Carol?
I mean, no offense, but I mean,
right, you are.
You do a lot of deep dives. Hank Paulson, David
We talked
Weston,
about this last week.
doing a great interview with him. You know, saying you have to have
shatter glass.
like program
broken glass. Yeah.
To deal with where we are headed. This is not a new problem, but it does look like it's getting unsustainable, and especially when you look at the president's planned spending of was it 2.2 trillion, I think it is, and about 1.5 on defense.
Yes.
Are we a war economy now? You're cutting on all the other programs. Is this America today?
Well, I am afraid so. You know, it's a tough. I'm glad it's not my job to figure it out. But I think.
But you know what I'm saying? When you're spending on so much of that, and you're not spending on some other programs that are important for many citizens.
This is for
social programs, but also, that feeds back into the economy.
Certainly, and this is the old defense versus social
Guns
programs.
versus butter,
This is the old red-blue debate, right?
Yeah.
And far be it from me to solve that one. So I think the numbers I saw were something like 25% of Social Security and or Medicare would have to be cut in order to get the debt burden and the deficit back in line. Now, that's a non-starter, right? No,
You know who votes? Because you know who really votes? People who get Medicare.
Well, there's the other side.
Folks.
But the other side of the equation is taxing. And that's also
that's true.
another political third rail.
Right.
You're not going to find anyone who's going to come in there and raise taxes, but there is the tax bill that the president passed through last year. And I'm wondering if the country will be able to pay for that with growth rather than through revenues.
That was certainly the hope at the time. I'm not sure it's coming out that way now, especially with the war and the oil prices now, which are essentially taxing Americans, even though they are getting refunds from the one big beautiful bill. So one's canceling the other out at this point.
Well, and the Secretary of Energy, Chris Wright, talked to, I believe it was CNN, and said that he kind of undercut President Trump's earlier claim that price increases in terms of gas prices would be short term. And he said that they may stay above $3 until 2027. I mean, that's something that certainly impacts a lot of Americans.
Yeah, well, oil price, again, if the Strait were closed tomorrow, right, it would still take weeks or months.
If it were open tomorrow.
Excuse me, open tomorrow. It would still take weeks or months
Yeah.
for production to really ramp back up. So, envisioning oil below $70, $80 a barrel, that's not happening for a while, no matter what happens politically.
So 30 seconds. I love this macro, deep thought. What do investors do here then?
Well,
just quickly.
Well, first of all, don't bet on when the war is going to end. That's not a smart move to make. Depending on where you are in your life cycle, what you're going to do. If you're a young investor, you have many years to put money in the stock market, you're earning, you buy on these dips. I mean, if you have a 20, 30-year horizon. On the other hand, you're a retiree or near retirement, and you're already maxed out in equities because the equity market's been so strong last few years. Good time to get out or move out because you can't suffer another 20% if that were to happen.
We've talked to Rick Wurster, Rick Wurster of Schwab, the CEO, and he has said that you do see the younger folks buying on the dips throughout this war. Rich Weiss, Chief Investment Officer of Multi-Asset Strategies at American Century Investments. When we come back, we're going to talk about Alphabet and chips.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks lower, oil higher. Let us begin with what's going on with crude. WTI West Texas Intermediate up now by 6.5%, back at 89.27 a barrel. Brent, the global benchmark, at 95.79, up now by 6%. S&P lower, stocks declining as oil rises. The S&P is at 71.03, down 22, a decline there of 0.3%. Dow Industrials down 0.8%, down by 74 points, down 0.1%. We do have NASDAQ down 93, drop there of 0.4%. The Russell 2000 index higher now by 0.5%. A 10-year at 4.25%, with the 2-year 3.71% on the 2-year, while gold is down 0.3%, 48.13 for an ounce of the precious metal. Spirit Aviation Holdings is floating, offering the U.S. government an equity stake to help stave off its potential liquidation. That, according to sources. Any proposed bailout, however, would be likely to get pushback from competitors that are also struggling with high fuel costs. And a source tells Bloomberg the family that owns the maker of Jack Daniel's whiskey, Brown-Forman, favors a potential sale to the French distiller Pernod Ricard over an alternative proposal from closely held American rival Sazerac. Again, recapping, stocks lower, S&P down 21, drop there of 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
All right, thank you so much, Charlie. Well, Charlie giving you a rundown of the markets. I want to just pull up shares of Marvell Technologies, because that stock has been on a bit of a rally today. Yeah, it's pretty much near its highs of the session, up about 6.4%. This after the information reported that Google is in discussions with this semiconductor company to develop 2 new chips to run AI models more efficiently. And then we have our own Dina Bass of Bloomberg reporting out that in a matter of months, Google's AI chips have become, Tim, one of the hottest commodities in the tech sector.
Yeah, this leading artificial intelligence developers, some of the firm's biggest rivals, are actually stocking up on them. I was also just looking at shares of Marvell this year.
Yeah,
up 75%.
Not too shabby.
Yeah,
right?
not too shabby.
A little outperformance there.
I think that's fair to say.
Let's get more, though. We're interested in what Google is up to and what they've been doing. It's not just recently, but for a while now. With us is Dina Bass, Bloomberg News AI infrastructure reporter. She joins us from Seattle. Hey, Dina, great reporting, interesting story. It does feel like, though, increasingly we're in this world where these big tech giants want to make and are making their own semiconductors. Tell us about Google, because they've been, designing chips for over a decade, but what's interesting about what they are doing right now?
So first of all, you've mentioned in a matter of months. Let's talk about what's likely to happen in a matter of days. Later this week is Google's next conference in Las Vegas, and as we reported in our story, they are likely to announce at that conference that they are releasing a version of their chip, a TPU, for inferencing workloads. So inferencing is when you've already got an AI model that's trained and you need to run it. You need to enable it to answer people's questions quickly. So we're reporting they're probably going to announce a TPU for inferencing. And that would sort of, as you mentioned, individual companies doing things, some of what's gone on in the last couple of months also is this focus on, low latency or very fast inferencing. So if we're getting into a world where people are looking at agents and things that need to be more conversational, you want to be able to answer those queries quickly. And so last month we had NVIDIA, which is obviously the giant, the dominant player, releasing a fast inference chip based on the technology they acquired from Grok. I know Cerebras just filed their IPO. They're also in this fast inferencing space. And so now we're expecting that Google is going to get more fully into that space with a chip that's specific for that task, whereas up until now, as NVIDIA had in the past, Google's been, using one set of TPU model for both training and inferencing. So that's what we're expecting, later this week. Google's chief scientist, Jeff Dean, told me in an interview, look, there's all this demand growing for fast inferencing. And he said, quote, it now becomes sensible to specialize chips more for training or more for inference workloads. That said, the head of their chip division, Amin Vedat, declined to say specifically what they're going to do later this week. But, he did say that more will be shared, quote, in the relatively near future.
Okay, so before we get to the relatively near future, we're here in the now, and we have what you've reported, which is just absolutely amazing. And I'm curious about NVIDIA and the competition that this could or potentially would pose to NVIDIA, which, as you mentioned, and we all know, is the market leader when it comes to this stuff.
So I think you have to remember that it's not just that NVIDIA is the market leader. Everyone uses NVIDIA. That everyone includes Google. Google's latest Gemini model, however, which has been very well reviewed and very successful, was trained and on TPU and uses TPU for inference. Now, last week, there was a podcast with NVIDIA CEO Jensen Huang and Dorkesh Patel, in which Jensen talked about the TPU threat and said, look, the growth in TPU is all Anthropic, which is a huge, obviously a huge Google TPU customer. But, Jensen's argument was, look, this is not a phenomenon. It's a one-off customer. I spoke to Demis, Google DeepMind CEO, and he pushed back on that. He said a lot of customers do want to do what Google does, which is use both GPU and TPU. And in fact, the problem for Google is that they don't quite have enough supply to meet that. We talk in the story about some other customers, about Meta, about Citadel Securities. But, Demis's comment is that they don't have enough supply to meet all the interest. And so for now, at least, they're prioritizing the really high-end, frontier model teams who he said really are, best able, best skilled to take advantage of the, the advantages that TPU brings. And then, we talked a lot about what those advantages are. I think from Google's point of view, what helps them is the fact that they co-design the TPU chips with both the hardware team and the folks at Google who work on those leading AI models. And that gives them a view into what you need to successfully, design a chip that trains and inferences great models. It also helps them see problems more quickly, they argued to me.
Does NVIDIA need to be worried here, Dina?
NVIDIA is still the dominant player. Everyone that I talk to expects them to be the dominant player for the foreseeable future. I don't know that I think there's a different metric of success for Google TPU and NVIDIA. NVIDIA success looks like continuing to dominate the market, starting to pick up some of these newer growing workloads in a significant way, such as the fast inference. TPU is coming from a place of being so much smaller in terms of share. It's really more a question of, can they pick up some share? But also even more than that, they have to decide what they want to do and what they want to be. NVIDIA sells chips for companies to use in their own data centers in whatever way that they want. Google has thus far almost exclusively focused on giving you access to TPUs through their own cloud. Now, they're starting to experiment with some other models. Anthropic, for example, has been able to, do with Google some experiments where they're running TPUs for Anthropic in data centers that Anthropic controls rather than through Google Cloud. But Google has to figure out, do they want to be a chip seller like NVIDIA that's not tied to their cloud? And then also with that limited supply, how do they allocate between customers who want a certain amount and not everyone can get what they want, as well as all of the Google workloads that are using the TPUs and, including Gemini, including Google Search. That's also a question. They sort of have to figure out where they want the business to go. It's not quite the same thing as NVIDIA.
Why, and we only have about 30 seconds left, Dina, but why sort of this identity question? Like, why wouldn't Google try to do both things really well?
I think it's just a question of where they want to go and where they want to invest. NVIDIA is, a chip company that also does some AI models, and they do some of NVIDIA's AI models are increasingly excellent. They're very open source focused, but they're a chip company coming at that space. Google is a company in a lot of different areas, including, cloud and search and AI models before they're a chip company. I think they have to figure out what the chip portion, where that fits in and how it helps them.
Sounds like TBD, and let's see what we get out of the announcement. What are your, just real quickly, 10 seconds, the announcement, so just the devil in the details, or what?
I think we'll have to see what they say and when they're available. And, again, this is, next starts on Wednesday. So keep your eyes peeled for what they say.
We certainly will, and we'll be looking out for your reporting as well. Dina Bash, she's Bloomberg News AI infrastructure reporter joining us from Seattle.
Hey, coming up next, we got stocks on the move on this day where oil is higher and stocks are lower. This is Bloomberg.
This is Bloomberg Business Week Daily.